देश का ध्यान बजट की तरफ होना बहुत स्वाभाविक है, लेकिन इस सरकार की ये पहचान रही है रिफॉर्म, परफॉर्म एंड ट्रांसफॉर्म।
The kind of performance we demand of our private sector has to have multifaceted criteria, not merely production.
It's D-Day, and in a few hours from now, Finance Minister Nirmala Sitharaman will become the first finance minister in India to present 9 consecutive union budgets. This amid current backdrop of downbeat equity sentiment, weakening rupee, but an improved sentiment in terms of consumption driven by GST cuts and income tax changes.
The finance minister is set to make changes to the traditional structure of the union budget presentation, with Part B of the budget speech expected to receive special attention. That's an exclusive.
Former policymakers expect overall capex hike in the 5 to 6% range and 15 to 20% growth in defense budget. They also expect the share of government borrowings in the overall budget to come down.
Former tax architects call for abolishing the securities transaction tax ahead of the union budget. Say it has outlived its purpose. Also calls for rationalizing the customs duty framework and slashing the number of slabs from 8 to 4.
Amidst all of this, the US President Trump has picked Kevin Warsh as the next chairman of the US Federal Reserve. 55-year-old Warsh is a former Fed governor who has aligned himself with Trump's criticism of the Fed.
Well, in a few hours from now, all eyes will be on Parliament as Finance Minister Nirmala Sitharaman presents the Union Budget 2026, her 9th consecutive one. Expectations are high that the government will double down on manufacturing push, giving a fresh impetus to Make in India vision, with an expansion of the PLI scheme very much likely on the cards. The budget is also expected to prioritize stronger health and education infrastructure with higher fund allocations, while continuing its big bet on capital expenditure to keep the growth engine running.
And a key focus area will be putting more money into the hands of people to boost consumption demand, even as the government looks at further rationalization of customs duties and capital gains tax to simplify the tax regime. The big question, however, will be whether this budget can strike the right balance, stimulating growth and supporting consumption along with investment while staying committed to fiscal discipline. Prime Minister Narendra Modi has stated that reform, perform and transform remain the key objectives of the union budget this year. So let's listen in to the Prime Minister's comments to kick off.
देश का ध्यान बजट की तरफ होना बहुत स्वाभाविक है, लेकिन इस सरकार की ये पहचान रही है रिफॉर्म, परफॉर्म एंड ट्रांसफॉर्म। और अब तो हम रिफॉर्म एक्सप्रेस पर चल पड़े हैं, बहुत तेजी से चल पड़े हैं। और मैं संसद के भी सभी साथियों का आभार व्यक्त करता हूं कि इस रिफॉर्म एक्सप्रेस को गति देने में वे भी अपनी सकारात्मक शक्ति को लगा रहे हैं।
Well, and let's tell you what we are picking up from sources ahead of the budget presentation. Finance Minister Nirmala Sitharaman is set to make changes to the traditional structure of the union budget presentation, with Part B of the budget speech expected to receive special attention. Earlier, budget speeches typically had a lot in detail in Part A, while Part B only consisted of a few announcements. This time, however, the Finance Minister is expected to speak in great detail on Part B.
And according to sources, Part B of the budget speech will place strong emphasis on both short-term and long-term goals, will reflect India's economic vision and priorities as the country enters the second quarter of this century. Part B of the budget will also offer the roadmap for showcasing India's local strengths on the global stage while highlighting India's current strengths and future potential.
All right, as we count down to the budget, in the next few hours, our colleague Timsi Jaipuria joins us straight from near Parliament to highlight the key expectations from budget today. Timsi, over to you.
Well, the Union Finance Minister is all set to table her 9th consecutive budget, a record that she'll be making. And this time the expectations are running high for the industry, what industry has been wanting. More measures to support Make in India, further expansion of PLI, more support on the PLI scheme. Also, on the other side, further boost to be given to the health and education infrastructure, more fund allocations on that side. The capex cycle needs to continue to boost the economy, and yes, not to forget, giving more money into the hands of the middle class and to the people so that the consumption cycle can see a boost, something that we'll have to wait and watch for. On the market side, well, investors are hoping that there could be some changes in the capital gains side. However, the government did make some changes in 2024 July budget itself. But yes, expectations are again running high. Whether these expectations are being met by the Union Finance Minister in her budget speech, that is something that we'll have to wait and watch for.
Indeed, MC, we will wait and watch for all of that. But amidst everything, rupee depreciation, that remains a big concern. Speaking on the currency fall, Chief Economic Advisor says the rupee is not an outlier. Here's what he had to say when asked on the impact of tax SOPs on rupee and the FPI flows.
Let's talk about the fact that, as you point out in the survey, the fundamentals of the economy continue to be strong, yet we've seen a significant depreciation of the rupee. You still believe that the rupee is not an outlier if you look at a longer-term horizon as far as the currency is concerned. But in your words, when we talk about investor reluctance and you call for an examination of that, is there anything in specific, any specific friction, pain point that we can address today to ensure that we start to see capital flows? FPIs, for instance, will it make sense to address tax-related issues at this point in time, or do you believe that that won't really move the needle much?
No, whether it will move the needle or not is not exactly in our control. But I would agree with the first part of your statement. We need to do whatever is in our limit, is in our capability to be able to do, which is to offer predictability, continuity, and stability of policies, whether it is tax or non-tax. And also, in terms of, we are doing that in terms of improving our geographical market access. If you locate in India, where all you can sell. I think we are expanding our geographical footprints by concluding free trade agreements. So whatever you mentioned with respect to policies, tax or non-tax, offering that predictability and continuity is desirable in and of itself. Now, whether that will guarantee an outcome, that is not in our hands. And that has never been the case, because a lot of other considerations influence investors' behavior. But if we keep doing whatever is in our remit to do so, I'm sure investors will take note of that. And in comparison to other nations, we will come out looking better, and naturally money flows will follow.
Well, and former policymakers expect defense capex to receive top priority when Finance Minister Nirmala Sitharaman presents the budget. The former budget architects told CNBC TV18 that while defense capex may see a hike of around 15 to around 20%, the overall capex growth may remain in single digits. Let's hear out those comments.
If you raise the total budget expenditure by 5 to 6%, and you have certain expenditures to take care in any case, like the interest, which grows at much more higher rate, and the Finance Commission recommendations would also be coming, which will require greater allocations for the state transfers, etc. In that situation, can you increase the capital expenditure as well as the other economic growth expenditure by a very large margin? I suspect that space is not there. So I would see that this, in my judgment, it will either be more or less at this level, or maybe a couple of percentage higher than that.
Okay, so single digit increase is what you're anticipating as far
lower
as...
single digit.
Lower single digit increase is what you're anticipating as...
The current year budget allocation is definitely going to be much higher than the previous years. And the growth in capex is definitely, in my understanding, going to be around 15 to 20%. And there is scope and potential to be a higher figure also.
Higher
However,
than 20%?
Yeah, because if the industry is ready, they are able to deliver what has already been ordered, the final expenditure outgo is going to be quite heavy, considering the type of platforms which are on order.
And that's not all. Former tax architects have called for abolishing the securities transaction tax ahead of the union budget. They say it has outlived its purpose. They've also called for a rationalization in the customs duty framework, as well as slashing the number of slabs from 8 to 4.
I think that is something that we can quite reasonably expect would happen in this budget. We are down to about 8 rates, not counting outliers. I mean, actually, there are outlying rates like 40, 70 and all, which I'm not taking into this reckoning. There would be moderation of rates. And my expectation is that the rates would come down to 4.
8 to 4.
8 to 4.
I believe that the STT must go. It is high time it should go because, let me explain that. We brought it in 2004 as a substitute for long-term capital gains tax on equities. We reintroduced long-term capital gains tax on equity in 2018.
Yeah.
2 years back, we enhanced the rate of tax out there. Now what we have is a situation where the long-term capital gains taxes are substantial, are fairly of a large amount. There doesn't seem to be any legitimacy remaining in continuing
STT.
with the STT any longer.
Meanwhile, Samir Arora from Helios Capital shares that he does not have any very high conviction expectations from the budget, while Nilesh Shah of Kotak AMC says that the budget will be positive if the government prioritizes on infra investment. Let's listen in.
No expectations. Maybe we keep hearing that they may do something on long-term capital gains for some FIIs, which may be defined as some endowments or universities or long-term, some X thing. So what happens is if I keep thinking myself that it's so logical that long-term capital gains should be reduced, then I start believing it myself. So mostly my thinking is they will not do it. Still for everybody. Don't do it only for FIs. Just reduce for everybody to 7.5 or ideally to 0. And you change STT a little bit because on the other hand, separately we keep saying, although we own all these exchange stocks, that the volumes are too high, speculation is too high. Just if you so want, or let it be for 5-7 years and then decide after that.
Do the trinity of impossible. Please continue to spend money on infrastructure because private investment is subdued. To fund that infrastructure spending and to maintain the fiscal deficit commitment which you have given, please raise money through non-tax revenue. It could be asset monetization, it could be strategic divestment, or it could be out-of-box idea like a gold disclosure, gold monetization scheme, which gives money to the government and brings gold, silver lying in the tijori into the bazaar.
All right, now you know what the street is expecting, what the policy makers are expecting, and at the same time what the experts are expecting as well. Take a short break, come back on the other side. We'll get you what the market is expecting and what the market setup is on the other side of this Budget Breakfast.
If you're watching the budget for the markets, start here.
You'll get the announcement everywhere. You'll get the meaning here.
We don't just give out numbers, we track what they change.
We don't cover just the budget, we cover the aftershocks as well.
From policy to portfolio, we connect the dots.
We turn budget noise into tradable clarity.
No heavy jargon, just what it means for you and your money.
Taxes, jobs, prices, decoded.
Your salary, your savings, your spends, all covered.
Reactions in real time, street, screens and sentiment.
Announcements are easy. Impact is the story.
One line in the budget can move a sector. We spot it fast.
Not just what's announced, but what's next.
Decades of budgets, one newsroom that never blinks.
And that is why CNBC TV18 is India's budget headquarters. This isn't just a union budget. This is India's investment signal to the world.
Because
Welcome back. You're tuned in to Budget Breakfast here on CNBC TV18. Well, as promised, let's get straight to trade setup. Well, Mangalam, the market mood has been a little bit subdued. Let's get straight to the action.
Let's get straight to the action. It's one of those days, where it hasn't been spoken about the budget so much this time around. And that's because the mood of the street is like that. If you look at it, the Nifty, yes, for all practical purposes, did hit a record high in January. But from there itself, it's down about 4%. The Nifty Bank, which has been doing well, is down just about 1.5%. The problem point of the market is the IT index, which is down about 17%, and the big weight Reliance as well, which is down about 13% from the highs. And that's not all. The rupee is something that we're looking at in the broader markets. The mid-cap index is 5% of its lifetime highs. The small-cap index in the Nifty Next 50 down 14 to 13%, with more stocks, way more stocks down anywhere between 20, 30 and some even 40%. Is the rupee, which is a problem. Since the last budget, the rupee is down 5.5%, and the Nifty in dollar terms is actually down 6%. So that is a worry that we need to monitor going forward. And what the budget will have in terms of stemming the FII outflows is something that we will track as well, because all of 2025, the FII sold nearly 3 lakh crore in the cash market, and in January itself, they've sold a tenth of that, a little more than that, 41,000 crores. So all these factors actually should play on the mind of the street and the budget makers.
Well, that's right, Mangalam. I'm looking at a couple of other factors that are playing out. So, if you just look at it, the kind of decline that we have seen in precious metals, well, that's actually not so bad, because over the weekend you had gold as well as silver that came off drastically. I say that it's not so bad because, in fact, we have been seeing that a lot of interest, and because of the recency bias, there's a lot of interest that's moved to gold as well as silver. So it may not be such a bad aspect. But the FIs, as you said, they have been underweight in the cash market, and in the future space, getting into the event, they've added short positions with, in percentage terms, the short positioning at around 88%. And if we pull up the absolute number, it's at around 1.9 lakh contracts on the short side. So FI is getting into this event extremely net short, while the clients there on the opposite side, they're net long at around 1.3 lakh contracts. Not just the futures market. If you look at the options data as well, that's telling you the kind of writing we have seen on calls in comparison to puts. So safe to say that the FIs, they're extremely defensive getting into this event. But Mangalam, tell us about some of the key market triggers that you're looking at.
Yeah, beyond the budget is something that we will be tracking very closely, right? All eyes will be on what the finance minister says. But if you look at, some of the big triggers for the market, so far the earnings season hasn't brought out big negative surprise. So there is a likely pickup that is expected in the second half of this earnings, and rural and urban consumption are at an inflection point. That's the sense that we get from all the numbers that have come by so far, and all the data points and all the actions that the government has taken as well. When there is this uncertainty around Trump, tariff and commodities, you did speak about how precious metals have come off the highs. So all these things will also weigh on the market, and above and beyond all of this, the very next week we will have the RBI policy. Is there a rate cut coming or not? And the strategy of the new Federal Reserve chairman. All these factors beyond the budget will be important triggers for the markets to watch. But all eyes on the FM now here.
Well, that's right. All eyes on the FM. And I'll tell you what, the street will be wanting this capital expenditure push to continue. So the ballpark range we're working with is around a 10 to around 11% increase in terms of capex expenditure. They'll want the finance minister to continue walking the talk and, in fact, going ahead with that. And also, the feedback that I've got is a little bit of a slip on the fiscal deficit. That'll be par for the course, given that we want to revive the nominal GDP. So that's going to be the important aspect with regard to the key number to track. Otherwise, something for the stock markets. Remember, Mangalam, as you said, they've been selling in the cash market, the FIs, they're net short in index futures as well. And India has underperformed in comparison to the globe. So something in there, some tinkering of LTCG, STCG, maybe STT, put in something out there that revives sentiment both on ground as well as for market enthusiasts. But let's get to the levels to track that, Mangalam.
Indeed, Nigel, the market enthusiasts will be very happy if there is some sort of sop given to them in the form of tax, because if you look at the Nifty itself, it's down about 1,000 points from its record high, but it's flitting between the 200-day moving average, the 20-day moving average. So all these factors we'll have to watch out for. 25,200 is an important support on the way down, and on the way up you have the 20-day moving average at 25,635, and beyond that is the 50-day moving average as well. The lows on the Nifty from Jan 21 and Jan 27, just shy of that 25,000 mark, extremely crucial to support if the market were to sell off post-budget. And were the markets to move higher post the budget and cross the 20 and the 50-day moving average, all eyes will be on the previous record high, which is about 1,000 points from here, 26,373. Is the market going to go there or not? Well, Nigel, you've done some interesting analysis on the Nifty and the budget.
Well, Mangalam, the mood is subdued, which actually may not be such a bad thing. Because in the past, when we have seen that the markets pull back close to around 3% getting into the event, it's not been such a bad thing, just going by the returns that we've seen 1 month later. So maybe not such a bad omen to go into this event, with the FI short, the FI selling in the cash market, and the mood rather subdued. This time around, we're down close to 3% a month ahead of the budget. What holds for us post? It's going to be interesting. But if the markets need to move around, you have the big boy ITC that's always on your radar. What are you expecting this time around?
Well, the budget has to boil down to one stock. It eventually ends up being ITC, and this time around more so because we know the price tax hike that has come by. The stock is down 20% in January due to the big tax hike announced in tobacco on January 1st itself. So whether that is we will be tracking very, very closely. Why? Because this is a stock that moves anywhere between 5 to 8 and sometimes 11% on budget day as well, between the highs and lows. So we'll be monitoring the fine print very closely on account of whether there is any sort of reversal or revision in tax. If not, then the stock continues to be unabated and go down. But if yes, then it could be a big, big positive. But that's about the trade setup that we're looking at in terms of going into the budget, what the market's expecting, what the finance minister is likely to do, and what the positioning of the FIIs are as well, Nigel.
What would you stick your neck out, Mangalam, and say that is it going to be a little bit of a positive surprise, or do you think it's not going to be a very big event?
Well, given the government's trajectory so far, no tinkering is something that the street would like. Maybe it could be a positive surprise, largely because everything else is so negative, right? Everyone's worried about the rupee, everyone's worried about the market, the FI selling, all these factors. So let's see. I'm keeping my fingers crossed, and I hope everyone who's watching CNBC TV18 and everywhere else, I don't think anyone's watching it anywhere else.
All right, Mangalam, but I think we have given market setup. Let's get in our very own Hormuz, who's joining in to help us out with a quick look at all those stocks that will be reacting to news today. Hormuz, let's get you in.
Well, it's the big day, right? And we'll be awaiting what the finance minister is going to announce. Right. But more than that, the usual suspects that should be on the radar as far the budget speech is concerned. And the fact is that you'll have to watch out for the big names, right? The defense space, of course, because of the defense allocation, the railway names are the kind of stocks that you'll be announcing there, and so on and so forth. But other than that, there are a lot of other announcements as well. There were earnings that came in, and look at Sun Pharma's numbers as well that came in on Friday. They were better than expectations. It was the India business that led the growth. The generic sales in the global markets were also better. They were in line with expectations. Margins expanded. So the stock did well. It should be in focus. Bajaj Auto's numbers were in line with expectations as well. The balance sheet continues to remain healthy. That's the big takeaway. The brokerages, though, continue to remain a little divided on the stock. Bank of Baroda's numbers, nothing much to write home about there. It was a subdued quarter for them. Asset quality has not seen any major significant improvement either on a sequential basis. Now, you take a look at a similar result from Cholamandalam as well. The core income was higher, 24% 3-4%, yes, but the asset quality has not seen any improvement. In fact, it has seen an even more deterioration, ever so slightly, but a deterioration nonetheless when compared to the September quarter. Even the provisions have gone up to as much as 3,000 crores for the ECL stage 3. Now, ESAF Small Finance Bank is one name. The stock had reported a loss of over 200 crores last time. They have turned a profit this time. And more importantly, the asset quality has seen a very significant improvement as well compared to the same quarter, compared to the sequential quarter as well. As you spoke about defense names, a couple of defense names, Bharat Dynamics is one name reacting to results. Profit has halved from last year. Margins have seen an even sharper deterioration, so keep that on your radar. Other reactions, of course, CDSL, GSPL and other names. Silver, Hindustan Zinc should be on your radar. And of course, Ola Electric, and keep an eye out on BSE as well after the clearance to the NSE IPO.
We take that point, Hormaz. Thanks a lot for that. Speaking about BSE and NSE, don't worry, we will be there. We're speaking to those decision makers out there. But before we do that, let's listen into Venugopal Gare, the Managing Director and India Head of Research at Bernstein. He lists out his expectations from the budget as well.
Certain tweaks, especially around LTCG, is probably warranted. It's not a very large quantum, especially the equity side of things. Probably government could have bans a couple of years down the line. So if you have more than 3-year hold or 4-year hold, maybe have the differential, taxes. I'm not expecting too much on consumption side of things. We've done a lot of things last year, and remember that GST impact of low collections will also be felt in this upcoming financial year as well. At this juncture, my thinking is that the government might want to bring it down by at least 10-15 basis points even this financial year. I'm basically saying that please don't cut it. Keep it at 4.4. If you were to just broadly look at the last 2 years, we've been doing sub 10% rate from a capex standpoint, because in 2024 we actually didn't grow at all. So anything above 10 in my view is still respectable.
All right, all set for the budget. With that, it's a wrap on this edition of Budget Breakfast. You know where to stay tuned. Stay tuned to CNBC TV18 for continued comprehensive coverage on the budget 2026. Thank you for watching. And
This isn't just a union budget. This is India's investment signal to the world.
Because one policy cue in New Delhi can shape decisions in New York and put India firmly on the global investment map.
We will track the ripple effect of the union budget, because even one major announcement can rewire the markets, reset sector bets and redraw global supply chains.
And we'll decode what Budget 2026 means for global confidence, capital flows, and India's investment horizon.
The Budget Central, igniting global investments, only on CNBC TV18 Prime.
If you're watching the budget for the markets, start here.
You'll get the announcement everywhere. You'll get the meaning here.
We don't just give out numbers, we track what they change.
We don't cover just the budget, we cover the aftershocks as well.
from policy to portfolio, we connect the dots.
We turn budget noise into tradable clarity.
No heavy jargon, just what it means for you and your money.
Taxes, jobs, prices, decoded.
Your salary, your savings, your spends, all covered.
Reactions in real time, street, screens, and sentiment.
Announcements are easy. Impact is the story.
One line in the budget can move a sector. We spot it fast.
Not just what's announced, but what's next.
Decades of budgets, one newsroom that never blinks.
And that is why CNBC TV18 is India's budget headquarters. This isn't just another budget. This is India picking up speed.
A rush to manufacture, a rush to modernize, a rush to lead.
The tax code is resetting, rules are simplifying, and friction is falling.
Capital is moving, markets are responding. The reform rush is real.
You don't just watch the budget, you live its impact.
With 25 years of budget expertise, we track the momentum as it unfolds for you in real time.
CNBC TV18 Budget 2026, the Reform Rush.
If you're watching the budget for the markets, start here.
You'll get the announcement everywhere. You'll get the meaning here.
We don't just give out numbers, we track what they change.
We don't cover just the budget, we cover the aftershocks as well.
From policy to portfolio, we connect the dots.
We turn budget noise into tradable clarity.
No heavy jargon, just what it means for you and your money.
Taxes, jobs, prices, decoded.
Your salary, your savings, your spends, all covered.
Reactions in real time, street, screens, and sentiment.
Announcements are easy. Impact is the story.
Record 9th consecutive time, Finance Minister Nirmala Sitharaman will rise to present the Union Budget in a few hours from now. India has just sealed a landmark trade deal with the European Union.
आज भारत ने अपने इतिहास का अब तक का सबसे बड़ा फ्री ट्रेड एग्रीमेंट संपन्न किया है। भारत और यूरोपियन यूनियन की साझेदारी अंतर्राष्ट्रीय सिस्टम में स्थिरता को मजबूती देगी।
We delivered the mother of all deals.
A trade pact with European Union comes as a relief for Indian exporters who are struggling with the 50% tariffs imposed by the US.
Trump said India is a dead economy. What is the central government saying? While the global growth is 3.2%, India is growing at 8.2% last quarter, becoming the fastest growing major economy.
From revamped income tax slabs to a brand new labor code, the government has unleashed a slew of reforms in the last year. So, what can we expect in this budget? Staying the course on fiscal discipline, sustained infrastructure spending, and boosting domestic manufacturing are the key market expectations. For the last 26 years, this has been your budget destination. The CNBC TV18 coverage of the Union Budget starts right now. Beaming live from the CNBC TV18 Motilal Oswal Budget Headquarters.
Welcome to the CNBC TV18 Motilal Oswal Budget Headquarters. In a little over 3 hours from now, Finance Minister Nirmala Sitharaman will deliver a record 9th consecutive budget as Finance Minister. I'm Lata Venkatesh and with me are my colleagues Prashant Nair and Nigel D'Souza. Hi guys.
Latha, good morning. Nigel, good morning. It's a Super Sunday.
Super Sunday.
Super Sunday with super colleagues and super budget maybe. well, okay, well, let's just, there's a lot at stake, right? And geopolitical worries persisting with a volatile West Asia, unpredictable Uncle Sam, if I can call it that. The economy has performed, but well, markets, as we all know, have not. As trade headwinds and relentless selling by foreign investors continues unabated. So what can we expect? Could the finance minister deliver something to ease the tax burden going forward? That's the sort of big question that we are grappling with, especially on the capital gains front. That is what markets most want. Will there be a further push on Atmanirbharta, perhaps in the form of more PLI schemes for customs duty cuts on the cards?
Yes, I agree, Prashant. These are the key questions. But I think the rupee, the falling rupee, is going to be a big worry. As the economic survey pointed out, a depreciating rupee does help to adjust for things like tariffs. But too rapid a fall can keep out capital flows. So, will the survey, drop some hint of more PLIs when it said that the government should provide protection to products like, say, fertilizers, APIs, industrial chemicals, even telecom equipment, where India is, too import dependent, and hence we may become vulnerable. But with a subdued nominal GDP growth and the need to lower fiscal deficit, how much space will the FM have? We will have to see. But beyond all this, Nigel, what are the markets' position?
Well, the market's positioning is definitely defensive, right? The FIs, they have been selling lock, stock and barrel. $14 billion of selling is what we have seen since last year's budget. And that's dwarfing that of other emerging markets as well. The Nifty coming into this weekend, in fact, has seen a bout of weakness, having declined close to around 3% in the last 1 month or so. But that may not be such a bad thing as per what data suggests.
Fair point. But let me welcome our editors first to lay down the agenda, as it were. Shireen will lay out the political setup, while Prashant gets us the market expectations. Nigel is here with the trade setup ahead of the budget weekend. And Rima is going to tell us about all the stocks that we should keep on our radar. So first, let me go over to Shireen Bhawan. Shireen, what's the buzz from North Block? Or I should say Kartavya Bhavan.
In a few hours from now, Finance Minister Nirmala Sitharaman will rise in the Lok Sabha to present her 9th consecutive budget, creating a new record. Now, what will Budget 2026 focus on? Let me start by picking up on a few themes. To start with, it will certainly paint India's growth story. Remember, the Economic Survey has projected the growth estimate of between 6.8 to 7.2%. The budget is likely to go with that. We will have to see. The Finance Minister will reiterate the message that India continues to be amongst the fastest growing large economies in the world, navigating a very volatile geopolitical climate in the midst of significant geo-economic fragmentation. The survey talks about the impact of things like tariffs and so on and so forth. But the fact that India has managed to stay resilient is certainly a message that the Finance Minister will push forward, including pushing out the message that India continues to be open for business and focused on reforms. In terms of themes, here's what I think the Finance Minister will focus on. Enhancing export competitiveness. Exports will be the big earners in terms of dollar earnings, and that is what the Economic Survey says we need to focus on. India's share of global trade still under 2%. We had a good year on exports despite all of the tariff turmoil. But a further acceleration is certainly needed. Will we see more PLI schemes? Will we see more cluster-based schemes, so on and so forth? That is going to be something to be watched for. Customs duty rationalization is certainly on the agenda, and we should expect customs duty rationalization, especially on inputs, to enhance competitiveness. That will be a big theme as far as this budget is concerned. Next up, and linked to that, fueling flows, FDI, FII. On a gross basis, FDI looking okay. On a net basis, not really, because we've actually seen people take money out of India, investors take money out of India. Will this investor reluctance be addressed in any form or fashion is the big question. Will we see any attempt to change taxation, especially when it comes to FPI flows? The consensus on the street is unlikely, but if it does happen, it will be a significant bonanza. But ensuring that we see adequate capital flows coming in so that we are not vulnerable to the global volatility and we don't see the rupee being even more vulnerable. That is going to be something that the finance minister may choose to address in her budget speech. Next up, and there is consensus on this one, defense will continue to be the big focus area. Remember, this is the first budget post Operation Sindoor, and everyone that we've spoken to, including the current defense secretary, believe that there is likely to be a higher allocation for defense. Indigenization program will be accelerated, as well as exports, which have already touched a record high of 23,000 crores. So watch out for defense. Could we see a 20 to 25% higher capex on defense will be the big question. And next up, the pivot from Swadeshi to self-reliance to self-sustainability or indispensability, strategic indispensability. That is going to be the pivot to watch. The economic survey highlights that we cannot obsess with being only focused on import substitution. We must build things that we become indispensable in. And so that pivot is going to be interesting to see what policy choices the government chooses to make. In all, one expects more of a reiteration, one expects more of a signaling from the government. Will the finance minister address that issue of the Supreme Court order that came in with respect to Tiger Global, which has certainly concerned investors, foreign investors specifically? Will any kind of messaging being held out to say that that's all going to be looked at prospectively and not retrospectively? We'll see. That's not a budget item. It's not part of the budget agenda. But should the finance minister choose to address that issue in her speech, it will certainly be good news as foreign investors are concerned. We're counting down. That's a quick snapshot of what I expect the finance ministers to talk about. But we'll be keeping you posted on all the fine print on Budget 2026 right here on CNBC TV18, your budget headquarters.
So what are the big numbers to watch in the budget? Markets and foreign investors will watch out for the fiscal deficit. The fiscal deficit is expected to come down to 4.3% in FY27 from 4.4% in the current year, FY26. That's according to our poll of 10 banks and brokerages. But this is 1 year's deficit. The government is now shifting its focus from targeting fiscal deficit to targeting total outstanding debt of the government. It wants to lower the debt to GDP from 56.1% this year to 50% by 2030. So in FY27 itself, it may target debt to GDP at 55%. For this, the primary deficit has to come down. This is deficit not counting interest payments. Now, primary deficit was 1.4% in FY25, down to 0.9% this year. Market hopes to see it at 0.8 to 0.7% in FY27, but it doesn't want it to be lower. The market's worry is that if to lower the primary deficit, the government may cut capital spending. Our poll says no. Government capex is seen rising by 10% to at least 12.4 trillion rupees in FY27 from 11.3 trillion rupees this year, FY26. Of this amount, defense spending is seen up by about 20% at least. Roads and railways are expected to get 10% more, and states are likely to be given 10 to 12% more to enable them to do more capacity expansion. Yet another very important number is the nominal GDP. This is real GDP plus inflation. Now, tax collections usually grow in sync with nominal GDP. They grow as much as nominal GDP. Our poll says government will assume nominal GDP to grow at 10.1% in FY27 versus only 8.2% in the current year. But let me warn you, post the economic survey, it looks the government may even assume nominal GDP at 10.5% since they have upped the real GDP forecast to 6.8 to 7.2% for next year. Okay, now let me come to taxes. As per our poll, direct taxes are seen growing by 11.7% in FY27 versus only 8.1% in FY26. That is below budget estimates. Indirect taxes will also do better next year, according to our poll, because credit is expected to fuel consumption. In non-tax revenues, the most important item is Reserve Bank dividend. This came at a massive 2.68 trillion this fiscal. This number is expected to be about 2.7, 2.8 trillion this year, in FY27. Now, disinvestments have not been a very big earner for the government. Our poll sees the government expecting, an amount of 38,000 crore rupees via disinvestment. It may not even achieve that. Fiscal deficit of 4.3%. Let me come back to it. In rupee terms, it means 16.8 trillion rupees versus 15.8 in FY26. Our poll says the government has to borrow this amount to bridge the deficit. The government may borrow a net 11.6 trillion rupees and gross, that is including repayments, 16.2 trillion rupees. Let me repeat, 16.2 trillion rupees of gross borrowing by issuing government securities. If the borrowing is more than this, the market will be troubled, bond yields will be pushed up, and this could push down bank stocks, NBFC stocks, real estate, consumption stocks, etc. Finally, a warning. While much hinges on what nominal GDP growth is assumed, 10% or 10.5%, this number itself may change drastically on February 28, when the new GDP series based on FY23 is announced. Okay, the bond market will keep that in mind while reacting to the borrowing number. Also, the economic survey proposes support for what it calls vulnerable and feasible, or what it calls indispensable categories, like APIs, power electronics, industrial chemicals, telecom equipment, magnets, battery cells and cathodes, solar wafers and cells. All these categories may bear watching because the market is expecting that some PLI-like policies could be announced, but let us see.
Markets are keeping their expectations low. After a volatile few weeks, investors aren't looking for big bang reforms. They're looking for stability. It's a classic defensive stance, setting the stage where even a little good news could trigger a relief rally. First on the agenda is the Atmanirbhar engine. The global backdrop is one of resource and capacity nationalism. Markets expect the government to double down on supporting local manufacturing, likely by expanding PLI schemes to more sectors. But it's not just about incentives. To truly make in India competitive globally, keep an eye out for customs duty cuts on raw materials and intermediate goods. The goal is simple enough: lower the cost of production and give local factories a fighting chance against global imports. If there's one sector everyone is betting on, it's defense. Clearly, we are looking at a strong capital expenditure spending growth in the defense space of 20%, some say even 25%. This isn't just about the border playbook. It's also about turning India into a global defense export hub. Beyond defense, we are seeing a pivot towards three high-growth areas. A, commercial shipping, boosting our maritime blue economy. B, aviation, commercial aviation, and nuclear energy, specifically a push for SMRs or small modular reactors. The FM is also expected to focus on select policy objectives to support the common man. Think bigger allocations for affordable housing and an expansion of the health insurance coverage. Well, let's now talk about the elephant in the room, taxes. While no one is seriously expecting changes to the STT and capital gains taxation regime, it is something which is likely to elicit a big reaction if something does happen. On the corporate side, watch out for changes to buyback and dividend taxation. Finally, let's look at the hard data in terms of what markets do, and this is something I've picked up from Zerodha. If you're feeling nervous, the numbers say you are right to be. Going into the budget, January returns have been negative in all 7 budgets, that is from 2019 to 2025. What about post-budget returns? The median return for the month after the budget, that is the month of February, is a sobering -2%. The day of the budget itself has been a roller coaster with an intraday range typically between 0.8 and an eye-popping 4.9%. One thing is almost certain though. The India Wix, our fear gauge, almost always closes lower once the FM finishes her speech. The uncertainty ends even if the budget math is tough. So low expectations, high volatility, but a history of clearing the air.
Budget 2026 comes at a very critical juncture. For market enthusiasts, the key question is, can it help India reverse its recent underperformance? And can it bring the foreign investors back? Well, since the last budget, the FIs have pulled out close on. And if you compare the outflows that India has seen with the other Asian markets as well, well, they have seen lower outflows in comparison to India's outflows. In short, India hasn't really been the pick of the pack. Well, in terms of market performance as well, the MSCI Emerging Market Index, that's up close to around 40%. The MSCI World Index, that's up close to around 18%. What about MSCI India? Well, the Nifty is up just around 2% or thereabouts. What about FI positioning? Well, the foreign investors have been fairly cautious. Their ownership in NSE-listed stocks is at a 15-year low, while the FI short positions on index futures, well, that's been very, very aggressive. It's holding at around 88%. The futures data also shows that getting into this big event, they've actually added short positions, both on the index as well as on stock futures. While the options activity is suggesting defensive positioning ahead of the budget, with them writing larger number of calls in comparison to puts. Well, you'll be asking then, what's helped hold out this market? Well, it's been you. You've been putting your money in mutual funds, and that's why mutual fund industry is sitting on ample cash. To put a number to it, it's at around 1.9 lakh crore, which is effectively 5% or thereabouts. That's been a real support for the Indian markets. The options data is also suggesting that markets are bracing for a bit of a wild swing. The highest open interest on the call side is at around the 26,000 call. The highest open interest on the put side is at around the 24,000 put. Technically as well, if you're looking at averages, well, the 20 DMA and the 200 DMA, they are the crucial levels that market watchers are looking at. And going by the lack of expectations, well, the hope is we actually visit the 20 DMA first rather than the 200 DMA. Interestingly, markets have gone weak into the budget many times before, but it's actually not been such a bad omen, because the market performance post the budget actually has been more often than not in the positive side when we go weak into the budget. So sentiment is cautious, positioning is defensive. Over to Budget 2026 to rebuild confidence and bring the FIs back.
Good morning. Here is a quick run-through of the budget stocks to watch. First, defense. It continues to remain a top priority for the government. While the overall capex growth is expected to be around 10%, defense spending could see a sharp increase of 15 to 20%. So in the event of a higher defense allocation, watch for names like an HAL, BEL, BDL, Garden Reach shipbuilders. Next, the textile, gems and jewelry sectors. They've been impacted by global trade tariffs and slowing export demand. So will the government look to announce supportive measures in the form of interest subvention, credit guarantees, or targeted incentives to protect employment? If yes, Gokuldas Exports, Wellspun Living should be tracked. Next, divestment. Divestment-related stocks should also be on your radar. For example, IDBI Bank, where the stake sale is in advanced stages, LIC, where the government holding stands at 96.5%, higher than the minimum shareholding norm of 90%. Then PSU banks like Central Bank of India, UCO Bank, Indian Overseas Bank, Punjab and Sindh Bank, where the government has already appointed bankers to sell minority stakes to comply with 75% public shareholding norms. This budget, we're also likely to see a shift and thrust towards high-growth, future-facing industries. So there could be targeted incentives to attract investments in areas like AI, data centers, semiconductors, robotics, nuclear energy, critical mineral mining. So there are not too many listed stocks to play here, but a Hitachi Energy, a CG Power for a semiconductor play, or a Lodha for data centers. The next one we should be tracking very closely is EMS. It's been a big beneficiary of the government's PLI scheme. But the mobile-related PLI scheme was rolled out in calendar year 2020 with a 6-year tenure, which means it expires this year. So will there be any announcement or an allocation increase or an extension? It will be a key trigger for a stock like Dixon. Renewable energy continues to remain a structural theme. There are schemes like PM Kusum scheme for solar-powered agricultural pumps that could see a spending increase from 2,600 to 10,000 according to Jefferies, or there could be an outlay on PM Surya Ghar, which is likely to continue, and therefore stocks like MV, Premier Energies will be tracked very closely. Next is oil marketing companies, and here there could be negative news because there is a possibility of a hike in excise duty on petrol and diesel. We've seen a fall in crude prices. Will the government look to tweak the excise duty to eat the excess profits of OMCs? If that happens, it's a negative for their marketing margins. Then comes affordable housing. It's been an ongoing theme, but this year there could be a focus on urban affordable housing. So will the government look to relax the definition whereby we see a higher ticket size increase for tier 1 homes? If that happens, it's positive for the lenders like an Aavas financiers and even for developers like Lodha Suntec. And finally, where we may not see big changes. One is ITC, because the major policy changes were already announced. And two is automobiles, where the GST cuts also happened last year. Well, that's the wish list as of now from the markets. But stay with CNBC TV18 as we get you the analysis in real time.
Decode Budget 2026 with India's biggest market minds. The most authoritative analysis with the biggest and influential voices. Market veterans Ramesh Damani, Ramdev Agarwal, Samir Arora, Mahesh Nandurkar and Nilesh Shah give their take on what Finance Minister Nirmala Sitharaman has to offer. It's been a weak start to 2026 for the Indian stock market. Can the budget allay concerns? Catch the most trusted market voices, Madhu Kela, Prashant Khemkar, Navneet Munot and Sandeep Bhatia as they tell us what D Street is expecting. Other market veterans Pankaj Tibrewal, Gautam Chachoria, Vikash Kumar Jain, Vikas Khemani and Nirmal Jain will tell us the way forward. Our budget editors this year are Ramesh Damani, Samir Arora, Sajid Chinoy as they decode the market and macros post the FM speech. We will also be joined by former government officials Debashish Panda, Giridhar Aramne, Tarun Bajaj and Vivek Johri for an incisive analysis of Budget 2026. And finally, the tax discussion with Dinesh Kanabar and Ashok Vadva. Foreign investors have been sellers in the Indian market. Some of the biggest Indian investors and watchers will talk to us about their take on the market. The budget could focus on fiscal consolidation, growth in times of geopolitical uncertainty, and government expenditure. We will discuss the macros with some of India's leading economists, Jahangir Aziz, Sajid Chinoy, and Samiran Chakrabarti. Industries, Cream de la Cream, will tell us how balance sheets are looking and what their wish list is from the finance minister. India Inc. wants bold reforms from Nirmala Sitharaman and her team at the North Block to fuel the next growth cycle. Tax is the other big factor to watch in this budget, for the salaried class and for the corporates in particular. We will be joined by top tax experts with their take on the tax angle. Voices from the North Block, Chief Economic Advisor V. Anantha Nageswaran, DEA Secretary, Finance Secretary, Expenditure Secretary, Deepam Secretary, Revenue Secretary will all join us to talk about the economic impact of FM's announcements. And in a very special segment this year, we will ring in the opening bell live from the NSE and the closing budget bell live from the Bombay Stock Exchange. Stay tuned for mega exclusives straight from the NSE and the BSE floor.
Oh, that's a breathless list of, outstanding experts. And the first of them is already with us, Jahangir Aziz, the head of emerging markets economic research at JP Morgan. In a bit, we are also going to be joined by Arvind Sanger. But Jahangir, deeply grateful to you for staying up the night and waiting patiently for us. Well, what would you like in the budget? It's difficult to now guess what they will do, but what would you like?
Look, Lata, what I would like has never happened, so might as well shift to what is expected.
Okay,
right?
Please.
So expected is basically what you laid out. So on the macro front, you're going to see continued consolidation. You have 4.4, you could see slightly less than 4.4 for this year. And next year, we expect it to be at least 2.2 percentage points down to about 4.2. So that sort of is the overall fiscal deficit. You also spoke about the key factor in all of this is what is the nominal GDP assumption that the government has. You're running at about 8% nominal GDP. You could go to 10.5% nominal GDP, but it would stretch credibility significantly. But if you don't go to 10.5% GDP, then the size of your expenditure envelope is very limited. There's not much you can do if you're going to meet a 4.2% fiscal deficit. So I would be looking at more on the assumptions behind the revenue numbers rather than, what exactly are the nitty-gritty. The last thing I would say is that I would also expect the 16th Finance Commission's recommendations to be incorporated in the budget. So how much does the states get? And that's really a point where we should be concerned given what's happening to state deficits and state debt.
Okay, Jahangir, just to add to what you're saying about the nominal GDP, the numbers are showing up as we now expect, from 358 trillion, it goes to 394 trillion types, 10.1% increase. We've got the new CPI series, some hint, which was disclosed on Jan 30th. It looks like the entire CPI series, even for the current year, is likely to be higher by about 30 basis points. Nomura is putting it at 50 basis points because less food and more core. So, with the deflator rising and the survey saying that they're expecting 6.8 to 7.2 real next year, maybe they will assume 400 trillion with good reason because the deflator could be higher.
You see, there's a problem with the arithmetic. The problem with the arithmetic is that if you look at the deflator, less than 30% is CPI and more than 70% is WPI.
That's right.
So if you really want to figure out the deflator, tell me what the oil prices are going to be. As far as our oil forecast is, it's actually trended much lower in 2026. So you could actually get a deflator that is either at the same level as last year or even lower, even with a higher CPI level or a higher CPI number. We expect CPI to go up. So I think much depends on, not CPI. I mean, it's WPI. I mean, we've gone through this discussion many, many times.
Fair point.
Jahangir, hi, morning. One more budget.
Hey.
And always good to see you. And we're working on a Sunday with no international markets, Jahangir. And a lot of our viewers have markets on their mind. I mean, budget, of course, we'll see what happens, right? Actually, it's a bad thing because I'll tell you, if international markets were trading, I think, you could have seen some recovery in precious metals, etc. But at least on that side, you're going to be trading in a bit of a vacuum. But just, is the US market itself starting to look a little toppish, heavyish? Warsh's nomination as the Fed chief and things like that. What do you make of it? Briefly, I know it's a lot of things in there, but your sense?
Look, for a longest period of time, people had been focusing on the Max 7, not only being the driver, but being, overvalued. We have seen that overvaluation continue for almost 24 months. Every passing day, the overvaluation comes and goes. So I think that, you can have concerns about the US market. There are clearly concerns about the non-Max 7 or the non-AI related stocks. They haven't done well. They've basically moved sideways. And that is the one that is driven almost exclusively by cyclicals and by interest rate. I don't really think that the AI related stocks are that influenced by whether Kevin Walsh is the Fed chair or someone else. The non-AI stocks will be affected if, Kevin Chair turns out to be more hawkish than what the market thinks.
You think he will be hawkish? You think he will get to reduce the size of the Fed balance sheet? That's the big fear. You think he'll get to do it even if he wants to?
Look, we don't know. He has talked about that, but he's also been much more hawkish on monetary policy, but then he's shifted his tune to become, much more dovish in recent months. So we really don't know. The nomination still has to go through, right? So we have to wait for that.
Hi, Jahangir. Good morning. Good to see you, Ben. Thanks a lot for staying up for us. But what about gold as an asset class? Because if I compare the gold market capitalization globally, it's much higher as a proportion of the bond market capitalization, if I put a number to it. And gold has been in a very, very big bull run. And sometimes periodically we do see some kind of pullbacks. But given that the dollar has been weak and there has been a shift to gold, do you expect gold to continue to remain an asset class that actually outperforms from here?
Right. So if you go back to when gold had been starting to rise for a long period of time, and that was driven by all sorts of geopolitical concerns, starting from the Ukraine war, et cetera, et cetera, et cetera. But if you look at the run in 2025, that's probably related to the rise in risk premium on US. Now, we never really talk about risk premium on US, But clearly the policy framework changes, the questions about independence of Fed, the institutional concerns about US, all of them together has risen the risk premium. The problem is that whereas foreign investors, particularly including domestic investors, would like to move away from the US to some other asset class in terms of diversifying their risk, the question is, where is the other risk asset other than the US? And if there is no other risk asset, you have to choose the only risk asset that you have, which is gold, that has the relative size. So I think most of the gold increase is a sign that there is a risk premium in the US economy, particularly in the policy making and institutional side. And of course, there are geopolitical risks. And as long as those continue, I really don't think, I know, we saw that 11-12% drop last week. But we really don't see gold actually not remaining the only instrument of hedging in these circumstances.
Okay, Jahangir, if you don't mind, please stay on. We are also joined by Arvind Sanger, Managing Partner at Geosphere Capital Management. Good evening to you, Arvind. Like I said to Jahangir, thank you so much for staying up for us on this important day, and it's a Sunday here. Arvind, what can make the FPIs come back to India? Is it just earnings growth and AI stocks, or is it something the budget can do?
Well, look, the budget has become way less important than it used to be. I mean, we got the excise duty increase on cigarettes a few weeks ago. We've got GST reform a few months ago. So I think the thing that we have to think about is more supply side support to the economy. Clearly, if you're talking about FIIs, one of the irritants for FIIs is this tax you get charged at the fund level, which is pretty unique to India. And if you have an investor who doesn't have a double tax treaty, US does, but other investors don't in all countries, then you end up paying taxes twice, once at the India fund level, and then secondly at your personal taxes at your country level. So there's a few minor things that I think India is uniquely punitive on. But I think, at the end of the day, India growth story, and India has become the anti-AI trade. And I think it's a very narrow space to occupy to be the anti-AI trade. Yes, there'll be times when the AI euphoria will pop and India may benefit, but till it becomes a growth story on its own feet. And the budget, I think, I would like to see continued supply side reform, even if that means slightly higher fiscal deficit short term, just like the GST cuts are maybe going to cause a little bit of a dip in short term GST collections. I think the only hope is a revival in economic activity, which eventually drives growth, rather than worrying too much about the short-term fisc. And I'm not saying blow out the fisc. I'm just saying you have to encourage growth, without which it's a vicious cycle which doesn't really get solved for FIIs.
Arvind, morning. I met a CEO of a large MNC bank, of course. I mean, the India CEO here, actually Southeast Asia. And we were just, he said this in jest, and we were kind of jousting. He said, well, equity walo, this was addressed to me. So I'm just relaying it. He said, well, equity walo ko lagta hai ki market is the biggest problem. But I think, it is earnings. It was just said in jest, and we were kind of sort of, going back and forth on this. But I think Arvind's point is absolutely bang on. Arvind, just a quick you think it can turn the mood, especially what's been talked about most is, sovereign funds, endowment funds, those kind of guys, right, who don't pay tax at home. And 2 years back, they were given exemption on investment in infrastructure projects. Maybe just exempt them from long-term capital gains tax. That's one view, because exempting FPIs overall, it's kind of hard to sell, right? Local investors are paying and foreign investors are not. Your thoughts, Arvind?
Well, look, I can't speak to local investors, but I don't know what they need to do for local investors. There's been talk about disadvantage to interest rates that banks bank savings receive. Maybe fixing that to make that equally attractive. There are many things that the government can do, but for an FII, there are many choices. and India is one of several. So when India is competing for foreign capital, the problem that happens in India is that when you get a few years of outperformance, Indian business, politicians, investors think there's no option but us. They have to come to us. And the reality, and I think that's been a little humbling maybe for Indian bulls, is to realize that there are many options. Korea, Taiwan, China, these are all AI beneficiaries. India is not seen as that. So, there are many things that will drive it. But at the end of the day, if the growth is not there, the fact that the FIs have no choice is not true. But I mean, I think, again, people were there before for growth. But, you had this recent Supreme Court decision on back taxes, which is another irritant for us watching foreign companies, foreign investors get rules changed on them retroactively. That is terrible. That is not the way that an economy of India's stature should be running. And I think these are the kind of things that create long-term doubt that you can't trust what the rules are today because the rules will be changed tomorrow retroactively on what you think you're doing.
Now, I'm given to understand the government is looking at, some legal route to ensure this doesn't happen prospectively. But Nigel.
Well, Arvind, took down a couple of points out there with regard to you don't mind a little bit of leeway on the fiscal deficit front, but you would like to see a bit of a push for better growth, better earnings as well out here. Given that sort of a scenario, suppose they go ahead and they stick to that capital expenditure spend of double digits, 10 to 12% or thereabouts. What are the sectors and themes that you're looking at? Defense is going to be one top priority sector that we're looking at. 20% odd is the spend as well. Some are expecting to increase. So give us a couple of themes that you'll be looking out for.
Well, look, India is going to need power needs that is going to grow if you're going to go data centers and that part of the economy. So, continuing to do some of the reforms and continuing to encourage that to build out. I think domestic consumption. I mean, we've seen a revival in the auto sector right after the GST reforms. It has taken off a little bit now. I don't know if this is just pent-up demand or this is long-term. But you want to see more rationalization, which encourages domestic consumption. India is not going to be an export-led economy. I mean, I know we want to provide manufacturing. We want to increase exports. But I'm looking at more things that cause animal spirits in the domestic economy to recover. Sure. And whether that is, infrastructure is good, but also getting corporate confidence back in terms of growth in domestic parts of the economy, cement, steel, and housing and all of these virtuous cycle autos. If that continues to revive and power demand, those are the things that I think are the building blocks of a strong domestic economy. FMCG, all of that will follow. So I think those are the parts that we will look. What are the things that can help create domestic consumer and investor confidence?
Okay, all right, got that, Arvind. Then you've been quite positive on that power theme as well. But Jahangir, coming across to you, we have been tracking the equity markets, but what slipped even more is the Indian rupee. Very, very swiftly from around 88 to around 92 or thereabouts. What's your view on the Indian rupee from your years? Do you believe that it's been stretched a little bit on the downside and we could see some kind of stabilization and then a pullback? Your take?
Look, I mean, when you have fundamentals, I'm going by official data, right? And, 7.5%, 8% growth rate, 3% inflation, below inflation after a very, very long time. A current account deficit of only 1% of GDP, and an oil, $55 a barrel of oil and heading down. And you ask the question, what is the rupee doing? Rupee shouldn't be at 92, right? So the question is, what really is driving the rupee down? And if you go back and look at past history, if India ever achieved 1% of GDP of current account deficit, that would have been seen as an exceedingly good year. Today, we can't fund 1% of GDP. Not too long ago, we were funding 2.5%, 3% of GDP. So clearly the problem is with capital flows, and within capital flows, it's both FDI and FPI. And the concern that, Arvind raised this point, but I would say that if you look at the FDI story is a bit more complicated. So if, there are no, I don't really have data, but when you talk to people in the market, etc., who are the people who are actually not reinvesting, which is where the biggest problem has been, reinvesting back in India, These are the private equity firms who came 5-6 years back, did successful IPOs, and now they're not reinvesting. So the question that you need to ask is, why are institutions or why are agencies, firms, whose only job is to take risk, no longer taking risk on India? I think that's the question to ask, not what generally FDI is doing. Generally, FDI has slowed down across the world, but general FDI, gross FDI is doing fine. It's the fact that those who used to reinvest are no longer reinvesting.
It's a good question, and I hope someone's listening out there. Thank you very much, Jahangir and Arvind, for joining us, staying up for us and setting this stage on what markets ought to look at and look for from the budget. Thanks a lot for that. Let's just get to the immediate ecosystem or ambience. Prashant, Kevin Walsh, big fall in gold, big fall in even the Magnificent Seven. Yeah. How is the setup?
Lata, this morning is going to be, I think, pretty consequential, not from an equity point of view, but gold and silver. Yeah. And I can't tell you how much interest and focus there is from people who are trading in this particular segment, right? So I just want to quickly put out, the way I see things this morning. Markets are trading, international markets are shut. So absolutely outright ugly price action in gold and silver, right? 27% sell-off in silver, gold down 10%. And I think it's the largest, biggest sell-off, daily sell-off we've seen, I think, going back decades, right? It's a fatal mix of liquidation because, positioning has been so extended. Internally we were discussing it. And actually 2 days back I said, you could get a 30% kind of a sell-off and people would not know what hit them. Because, it was just like going one way and perhaps it needed little. And that little turned out to be the Trump's nominee, that is Kevin Walsh, for the Fed chair. We highlighted this quite extensively during the closing session on Friday in terms of what he wants to do, what he stands for, et cetera, which is the fact that he doesn't want to use the Fed balance sheet. He doesn't think the Fed should have a balance sheet. He wants lower rates, no doubt, but the route he prefers is kind of seen as hawkish, right? So here, for viewers who are watching, what's going to happen this morning is that MCX, which is gold and silver trading on MCX, you just see the rupee equivalent of where we are on gold and silver, and because MCX closed and the correction happened on Friday night in COMEX, in the US market. So there is a very large adjustment, rupee wise, which has to happen this morning. So that's the thing. Now, one thing, right? There's widespread expectation. If you just look at, say, the futures on MCX, gold and silver, gold especially, it was trading at a 9% premium to spot prices. So people were building in an import duty hike, right? And that may still happen. But the point is the speech starts at 11. This may happen only whenever, the FM decides to announce it and maybe prices recover. But all of this liquidation will happen this morning because, and by the way, what I'm also given to understand is that MCX has raised margins from some 28% on Friday morning, and by close on Friday, they'd raised it to some 60% plus, 62, 63%. So suddenly what you need to bring to the table has also gone up. And that's the reason why I'm saying import duty, no import duty, and what happens later. But this morning, I think forced squaring, I think it'll be a bit of a painful session for those in the gold and silver market. I'll just quickly wrap out. S&P was down 1%. Dollar index was up 0.75%. I'll just give you one example. Dollar, by the way, made a very big move higher. And this is again going back to Walsh and what he wants to do, etc. So this one-way decline that we've been seeing in the dollar to 96 or so, it's kind of reversing, right? I think this is the biggest rally we've seen since July last year on the USD. And now I'll come to the global backdrop is also not that great, is all I'm saying, compared to where Wall Street left off on Friday. Now, last 7 budgets, and I put this data out earlier as well, Nifty is, it's been very volatile. 0.8% to 4.9%. So massive. And markets are expecting some kind of, we're all optimistic people. If you're an investor, you've got to be optimistic. There's no other way to do it. But keep expectations low because, as Lata has pointed out, the budget math is very, very tight. So there's little by way of leeway. And just the levels, right? Nifty broke above the channel, which is what we highlighted. 25,400, we broke above it, and then we closed and fell back within that channel by close. So around, I mean, we are essentially at a pivot kind of a level where we left off, 25,250, 25,300. So in that sense, it's a critical area. Nifty Bank is, again, at the 20-day moving average, which is 59,590. I think it's going to be kind of very, very stock specific. As I said, gold, silver, exchange stocks, this, that, the other, and of course, what is announced. So I guess the way to do it is to go in, watch what happens, and then take it slow in that sense. Lata.
You know, my fear is that for the MCX trader, you don't have a rupee index. Rupee is not trading. So I think that also with the dollar rising, even when dollar fell on Friday, we fell towards 92. So that will be a kind of trading with blindfold.
There is also one more thing. By this time, we are referring, Nigel, to the GIF Nifty, etc. There is no GIF Nifty in terms of the indications. So I mean, that's okay. That's okay. But the
playing
point
a bit blind.
That's the point. You're playing blind because international exchanges are closed. And that's what, if they were open, even commodity markets were open, gold, silver, etc., you would get a skew. You know, whether you can hold on, take that pain for one more day and things will come back. But you don't have that queue in that sense.
Okay, I have a minor positive from the data. You know, the government released the way in which the new CPI series will look. Okay, it's going to get revised. We will know it on Feb 12th. And that revision has put a 9 percentage point lower weightage for food. It was expected to be lower, but not 9 percentage points. And core has gone up by 10 percentage points, which again was not expected. Now, as of now, food is very low, and you're giving it a lower weightage, whereas core is rising at about 4%, and you're giving it a higher weightage. So last year's indexes, that is FY26 indices itself, will move up. You know, the GDP will look bigger because your real GDP into a slightly higher inflation number. The coming GDP will be also likely higher. All that will not be in the budget today because the revisions are going to be announced on Feb 12th inflation and Feb 28 GDP. But the point is they may have a slightly bigger pie to play with. Instead of, like I was telling Jahangir, instead of 394 trillion rupees overall nominal GDP, you may have 400 trillion rupees. So 4.2% of 400 trillion is a little more, 25,000 crores, 30,000 crores more. Maybe that will give them more leeway. So even if they assume, a slightly higher tax growth, the market may forgive it. The bond markets may not react too badly saying these are all unrealistic assumptions because the base itself may change on Feb 20. I just want to put that on the table. The bond markets are not there to react, but they may not react all that badly.
Okay, all right. Thanks a lot for that, Lata. Well, let's welcome our next guest. We have Neeraj Seth, founder and CIO at 3R Investment Management, who joins in on the show. Hi, Neeraj. Good morning. Thanks a lot for joining in. Well, nothing wrong in hoping, right? And there is some hope that there'll be something in this budget to spur sentiment in the stock exchanges and maybe bring the foreign investor back. How are you feeling in terms of expectations? Because India clearly has lacked with regard to those FI flows.
Me. Hopeful is being an important part of being an investor, so you can't let that go. But coming back to your point, I think there are certain aspects which one should expect from the budget, and specifically from a foreign portfolio investor perspective. If you are an equity investor, the rollback and the long-term capital gains, if it happens, will be a big actually boost immediately. But at the same time, I think the policy predictability has to be there. On the fixed income or the bond side, I do think the fiscal consolidation path will be important. The stabilization of INR will be critical. And at the same time, some potential levers to actually grow the participation in the corporate bond market. And I think that's one thing which has been missing for a number of years.
Right. Neeraj, just to focus on that deficit front, normally this government has stuck to fiscal prudence. However, this time around, there is a need to spur up the economy. So maybe, in fact, they go a little bit aggressive on the capital expenditure and maybe see that fiscal deficit number slip a little bit. Do you think that will be something that will be on the wish list? Because otherwise, in another scenario, you'd be hoping that they stick to fiscal prudence. However, this time around, you want the growth engines to fire. Is that the way you look at it?
So the main thing here is it's not a one-off fiscal deficit that matters, it's the path. So if the government has a clear path over the next 5 years in terms of the deleveraging with the fiscal consolidation, I don't think the markets will get spooked on the basis of slightly higher fiscal deficit in the current year to support growth. And specifically in a world from a geopolitical perspective where you do expect the defense spending to go up. I don't think that's a choice where the defense spending doesn't go up. So from that aspect, I think a little bit of increase in fiscal deficit this year with a further consolidation in coming years, I think that will be okay.
Good.
Okay, well, those were pictures of the FM leaving her home and perhaps going towards meeting the president. Neeraj, what sectors here? What do you bet on?
So I actually still very much like the financials because we've seen, and slight early days, but we're starting to see the uptick in the credit growth. So banks, non-banking financing corps, I still think are in a good place. The consumer is still okay. There's potential for consumer to actually pick up from here as we go into next year with all the tax cuts and the GST cut that have already happened. The corporate side, the earnings in the rest of the sectors like industrials and manufacturing, I do think the capex will start picking up this year. We haven't seen as much of capex in the corporate side where the balance has to come in between the government spending money and the corporates actually taking some of that capex started. So all in all, I think the consumer staples, discretionary financials, auto actually I think is on a positive footing, including the commercial vehicles. So you do have some sectors. IT services still remains, in my mind, a little bit of a mixed bag here with cheaper valuations, but still the pressure from AI and other restrictions possible.
Neeraj, 30-second response. Gold and silver international markets are on trading. We saw a big dump there on the US markets. And this morning there's going to be selling, etc. But any thoughts on how they'll open? Do you see stable? By the way, that's the convoy of the finance minister leaving for Kartavya Bhavan. And those are sort of, it's a foggy morning once again in New Delhi. And that's the FM's convoy, as we can show you visuals coming through this morning. Well, wide, nice, tree-lined streets of Delhi.
Less foggy.
It's a little foggy, it's a little wintry, but I think it's a good kind of feeling, right? I can tell you, Lata. I grew up in Delhi, so this is perhaps the best time in Delhi as well. Just in that sense, we'll of course get you the minute by minute update in terms of. I mean, there's that classic photo op as the finance minister will get out of the car and go into the Kartavya Bhavan. Then of course she will leave from Kartavya Bhavan to the Parliament, and there's a photo op there as well. So this is tradition, this is history, and we will keep that shots perhaps on the side of the screen there. Neeraj, so my question simply was, should we expect stability in gold and silver internationally? 30 seconds.
So short term, there can be more volatility given the positioning. Medium to long term, I remain positive on gold. I don't think the story of gold from the debasement of the global currencies is over.
The big theme, debasement does not change. Near-term volatility, be ready for more. Thank you very much, Neeraj. And we hope to see you and talk to you post the budget. Appreciate it. We'll just go into a quick commercial break here. On the other side, our list of top stocks lined up. Later, we'll be joined by Gurmeet Chadda. We'll talk about individual names and where there could be budget trades. Dharmesh Kant of Chola will also be with us. Mitesh Thakkar at Bonanza Portfolio will be also joining us with some technical trading ideas, and so will be Sudarshan Sukhani to set you up for trade.
those visuals coming in of our finance minister. All set. In the next couple of hours, we'll be hearing from her. 2 hours, 29 minutes to go. So we'll get to that in just a bit. For the time being, let's get our research team back. They're standing by with CNBC TV18's top list of stocks for the day. And let's start off with Ekta. Ekta, tell us, what about Sun Pharma? How are the numbers?
Thanks for that. Well, yes, it was a good set of numbers which came out for Sun Pharma on a Saturday. So the revenue was up around 13% better than expectations. The EBITDA also was up around 23% with margins of around 32% and a profit which came in higher than what the street was anticipating. What really led the growth this time was India, which was up 16%. Street was anticipating 9 to 10% growth. We had US, which was up around 6.2% year on year, and emerging markets, which was up 28%. Global Innovative Medicines, which basically has their branded portfolio, Q3 sales stood at around $423 million, included milestone income of $50 million. Even X of that, it was better than expectations. So I expect the stock to be in the green.
Oh, that's good to hear. That does look like a bright set of numbers. Vivek, how was NTPC?
Good morning. Well, NTPC, remember, FY26 has been a year of muted power demand, and in line with that, the weak power demand led to weak power PLF trends. On the back of that, revenues actually fell by almost 1.8% on a year-on-year basis. EBITDA managed to stay flattish. EBITDA margins inched higher by 60 basis points and profitability up by 5.5%. The good part is in the conference call, the management said that December and January, power trends are inching up higher. Key to watch out for today, of course, will be any details as far as the Shanti nuclear package is concerned, thermal power as well as the DISCOM package, if there is any commentary on that.
Okay, all right. Thanks a lot for that, Vivek. Hopping across to Gaurav. He's here to tell us about Chola Investment as well as IDFC First Bank. Gaurav, take it away.
Well, let's talk about Chola Investment. If you look at the numbers, inline set of numbers is what we saw. In fact, we saw loans growing at around 21% in line with the management guidance, and disbursements also grew at 16%, again in line with the management guidance of 15 to 20% growth in this year itself. Other than that, if you look at the net interest income, we saw 24% growth and profit that grew almost by 18.5%. When it comes to the ratios now, net interest margins, now that has expanded by 10 basis points, and this is because of the interest cost which is coming down, and at the same time asset quality also saw some kind of stability. Credit cost remains stable. Now, what is important is that the management con call, which is going to happen on Monday, so that is a key thing to watch out for. Other than that, when we look at IDFC First Bank, now the numbers look actually good. Net interest income grew by 12%, while profit increased almost by 48% on a year-on-year basis. Now, this translates the net interest margins growth of around 17 basis points. This was actually a positive surprise for the street because street was not expecting this kind of jump. Remember, this jump is coming up from 12 basis point of benefit coming up from the cost of funds itself. So it is a structural story. Other than that, ROAs now, they are also at 0.5%. Remember, the management is saying they will achieve 1% ROA by FY27. Loan book growth and deposit, that also remained healthy. A key thing to highlight is that the deposit growth was higher than the loan book growth, again in line with the management strategy. So all in all, good set of numbers, and the management's commentary also remains strong for IDFC First Bank.
Okay.
Well, actually, can we keep all our research team on air because they're looking so natty today? And the nattiest of them all is Nigel Jindal.
Well, that's right. Jindal Steel, that's the one, in fact, that I'm going to be keeping an eye out on. And the numbers looked a little bit softer in comparison to expectations because the top line, that was aided by better volumes. But the softer than expected operational performance. A couple of factors played out here. Production and sales number, well, it came in at around 2.5 million tons. That was up by close to around 22% on a sequential basis. But there was a margin miss because realizations were down by around 8% on a sequential basis. The raw material cost was effectively higher because of the iron ore that they purchased from Odisha, where prices were relatively higher. And the new blast furnace startup cost, well, that's what weighed as well. The profit number as well got weighed down because higher finance costs, higher depreciation costs, coupled with higher taxation. Yes, Q4 will be better, but I think for starters, the stock opens up in the red.
Ooh.
Let's hop across to Sudarshan Joe. He's joining in to tell us about Bajaj Auto. Sir, how are the numbers?
Good morning, Nigel. So for Bajaj Auto, you have to factor in two things. First, numbers, and second, outlook. So numbers were largely in line, except the margin which has come in sharply higher, 20.8% versus our expectation of around 20.5 to 20.6%. But if you take a look at the outlook is looking very strong. So overall, all the numbers, revenue has increased by 19%. EBITDA too has seen an increase of 23%. Now coming to the outlook, company is saying in Q4, domestic industry is likely to see a growth in the range of 12 to to 15%. And company is going to outpace the industry, especially in 125cc plus and 150cc plus segments. And how will it do that? It's likely to gain the market share by launching the new Pulsar. And there can be 7 variants of new Pulsar over the next 6 to 7 months. And now, if you go to export segment, company is saying that in FY26, exports top line is going to be the highest ever in dollar term. So considering both numbers and the outlook, I'm going with green for Bajaj Auto.
Indeed, Sudarshan, and congratulations on becoming a father yet again. 1 week ago, congrats to you, the entire family. Give that little one a big hug from all of us here on CNBC TV18. And great to see you back just 6 days after becoming a father. Wrap up today and then go back to the baby. Congrats, Sudarshan.
Thank you.
All right. Well, let's hop across to Sonal. She's here to tell us about GAIL. Sonal?
Well, weak numbers coming in from GAIL. It was a top-down miss. Their revenues declined. Even EBITDA was down 17% on a quarter-on-quarter basis, leading to a margin decline to 7.8%. Profits were down by 28% as well. And it was led by their gas marketing segment, which is the biggest segment for them, where it was a decline on a quarter-on-quarter to 853 crore rupees versus 1300 crore rupees. Petchem losses actually widened. This is at a time when the industry is seeing recovery in petchem margins. So going with the red on GAIL, they have a conference call tomorrow. So we'll get more details on what really went wrong this quarter.
Okay, well, that's as far as Sonal is concerned. Do we have Ekta again? Okay, we'll get back to all our guests in a bit. We have some more stocks to handle, but we will come back to it later. Mitesh is with us to tell us about how we're going to look at it technically. Mitesh, thank you very much indeed for joining us. We want technical help much earlier today. Well, what are the Nifty levels we should watch out for?
Good morning, Lata. So on the index, some kind of weakness came in when we started trading below 25,400, and on the last 2 occasions, we tried to give some kind of a bounce back. We got an intraday high of 25,435 on the 22nd of Jan, and then 25,450 on the 29th of Jan. So clearly 25,400, 25,450 is the zone to watch on the upside. Once the Nifty starts getting past that, I think expect some more short covering, and therefore this pullback will extend to about 25,700. And on the downside, there is the highest put built up around 24,900 in the near term, and that's also where we have had 2 intraday declines getting support and giving a bounce back from those levels. So 24,900, 24,950 is the zone on the downside.
Gentlemen, morning. Great to have both of you here. Sudarshan, what about you? How are you thinking about markets this morning? Okay, I think Mitesh is with us now. Mitesh, what are your trades, individual stocks?
So, Prashant, I'm going with 2 buys and 2 sells for the time being, given the fact that, there was some kind of strong correction in the commodity prices. I have Hindustan Zinc on the negative or the sell list. That's a sell with a stop just above levels of 650, 651 is what I recommend, and 590 could be the near-term target. Canara Bank is, a surprising case that it's the only stock in the PSU lot which is turning corrective. It's broken down below its short-term averages, and the indicator setup is quite negative. So sell in the range of 148 to about 149 here. Keep a stop at just about 152, and 142 is the target area. And on the buying side is HAL. Keep a stop below 45.80 for a near-term target of 4,700. And Aurobindo Pharma, a lot of pharma stocks has had some kind of a reversal on Friday. So Auro Pharma is a buy with a stop below 1189, and would look for targets of 1240.45.
Okay, all right. Thanks very much, Mitesh, for that. And we'll have you back again soon for more. Gurmeet Chadda is with us. He's managing partner, CIO, Complete Circle. And we have Dharmesh Kant, head of research, Chola Securities, joining in. Gentlemen, morning. Great to have both of you here. And it's a Sunday morning, so one of those rare occasions where we're all on air on a Sunday. Gurmeet and Dharmesh, so my question is very near-termish, so apologies for that straight at the outset, but people also want to know, right? I mean, and budget moves can be significant. It's not as if they're small, right? I mean, just Nifty historically has moved 0.5%, 0.8 to about 4.9%, and this is the last 7 budgets. So in terms of stocks to kind of focus on and keep on your checklist and radar, and as the budget speech goes on, what would they be? I mean, 3 from you, Gurmeet, and 3 from you, Dharmesh.
Hi, Vishal. I agree. I think the moves can be sharper considering that this time we are going with very low expectations, which is not a bad thing. I think the defense is one sector I would like to watch out for. I think there could be within the capex increase of, let's say, 10-12%. I think defense could get slightly more, maybe including public infrastructure. Second is the housing space. I think that this is one of the sector which is a force multiplier and has a ripple effect across sectors. I think something may come there, whether it's related to affordable housing, expanding limits as far as affordable housing is concerned, and obviously linked to the overall spend of the government. And third is on the consumption side, because government has given a big boost through taxation. Let's see if something comes more there. And in consumption, I include some of the capital market plays. My sense is, Prashant, and fingers crossed, I think something is coming related to the taxation on capital markets and FI outflows. In what form, which format, we'll come to know. But I think even the economic survey points to some concern on capital outflows, and it's a very systematic outflow. It's not that it just happened for a month. It's almost like, I jokingly call somebody like an SWP of 3,000-4,000 crores every day from FPIs. So I think something may come there. So these are the three pockets I am very, very keenly watching.
Okay, thanks for that, Gurmeet. Yes, if the FI thing comes, it will certainly be a domestic push today morning. We don't know how the FPIs react till tomorrow, so there could be, a positive reaction. Dharmesh, your stocks or your sectors?
Yeah, good morning, Lata. I mean, the sectors are more or less the same, and Gurmeet has actually detailed out the rationale behind each of them. So defense continues to be the favorite out there, and I think HAL is amidst the highest priority out there in the top ranking space. In the banking, we are also bullish because any benefit which goes to the economy, banks is a direct beneficiary of that. And there, I think I have a play on IndusInd Bank because most of the pain is through. Next 2 quarters to see the bottom of it, and then the traction should continue. And third is from the housing finance company. I think affordable housing should be in the focus. It has been laggard for last 2 years. So this time around, investor do well. Other housing finance is the topic out there. The only thing, Lada, I would like to point out here is we all focus on the capital expenditure and how much more allocation the government is going to do this time around. But to my mind, execution matters most. How much spending is happening? And last year we have seen, even grants to states lost by 90,000 odd crores, and the capex itself was low by 92,000 odd crores. So 8-9% is the fall in the actual execution. If that happens, it will take care of the growth itself.
Correct.
So my main focus is on spending rather than how much allocation is.
No, actually, you hit the nail on the head because this, they will recast last year's budget estimates to revised estimates, and the tax collection is between 2.7 to 3 trillion less. Because of tax giveaways and GST. So, we have to worry that therefore revenue expenditure will fall. And that is exactly addressing what Dharmesh is saying. I hope they spend what they say.
Okay, all right. Dharmesh, let me ask you about another stock that's normally in focus ahead of the budget. But this time around, the news came earlier. ITC, the hike in duties on cigarettes. Now the hope is there's a plea that's been made, that illicit cigarettes will be sold. And for them itself, tax collection will go down. What's the view on ITC? The stock that was 400 rupees just around 45 days ago is around 320 rupees. How much of the bad news is in the price? And do you think there'll be some tweaking, some kind of giveaway from the government?
Yeah, good morning, Nigel. Lata just pointed out there's already a deficit in the tax collection. And excise duty was one way to do some sort of, pull up. So I don't think that this plea will be, heard by the government. Anyways, it's the same duty. Globally, cigarettes are taxed at 75%. ITC is still paying 53% after this hike. So there's a huge difference to catch up. And even if, on news flow, there can be some, upside out there. But it has been compounding at 5 to 7% kind of a CAGR. And valuations are still high. So to my mind, trading losses can be there. But fundamentally, structural bet I won't be taking out.
Okay, got it. The problem is that at such high duties, actually the taxes, the sales itself will reduce for a player, an organized player. Anyway, let's see how that goes. Gurmeet, coming across to you. The other focus is going to be duties on oil, which could go up. In turn, OMCs will be in focus and it could be perceived negatively. Your view on the oil and gas space?
So, Nigel, there are some tactical plays and some more structural. I think refineries is a bit of a tactical play. We saw that with playing out with the likes of Chennai Petroleum. You had a lot of refiners, available at, let's say, 1/3 or 40-50% replacement cost. And there was a surge in margin. And now with frequent changes in oil makes, suddenly you have a Venezuelan oil coming, which is again much heavier and difficult to process. So I think that some of them could be tactically in focus because the valuations are still very reasonable and nobody's really added significant refining capacity. Then some of the, if I can stretch the discussion further on OMCs, etc. I think they would market would probably, because this time they want to have a part B of the budget, they want to detail a more medium-term, long-term vision, and anything to do with energy security would be welcome in terms of pricing and duty structure, as you pointed out. I would also be very much interested in the new energy space, if I can, broad the sector, what they do really in light of huge jump in underlying commodity prices, especially for the developers and the battery energy and storage system. Would like to see that. It may come outside the budget also in terms of PLI and etc. But these are the few spaces I would be very keenly watching. In fact, the numbers also, especially on transmission side, Nigel, this is one huge bottleneck. The private sector contribution in terms of transmission kilometers have been very, very low. The state and center is almost like 85-90%. And that really needs to be done. How do they integrate it? How they get some of the, the private developers employed is something I think the street would be watching.
Gurmeet, when you said that capital gains, something may happen, right? I mean, that'll be very meaningful. The most optimistic is, imagine they, for FPIs, there's one demand. From when we speak with FPIs, it's unfair and compared to other markets, it puts India to a competitive disadvantage. If you remove FPI for LTCG for FPIs, right? Theoretically, just purely math-wise, market should go up 10%. No, I mean, 10% is gone. I mean, it automatically adds, you add that to the return, whatever, minus something. So, but what are you saying when something may happen? What's on your mind? What kind of thing? Obviously, are you suggesting what I said, perhaps a possibility?
No, I think there is a possibility, Prashant, because first time I'm seeing a lot of, interest in terms of what is the data has been. If you look at the ex-RBI governor's letter, you look at this, the economic survey, it does point out to significant concerns on capital outflows and should be concerning for any economy, especially in an economy like us, which needs risk capital. So I think something can come in terms of withholding tax, which, and maybe, some tweak in terms of country of residence. That could be more from FPI perspective. I think also increasingly, and this is an open feedback as a market participant, the cost of doing transaction has gone up. Now, whether it is a stamp duty on something as basic as a mutual fund SIP, whether it is STT increases, constant changes in dividend, then buybacks, I think every year we have had some tinkering with the taxation. And I think the market would want, over the next few years, some more predictability and simple taxation. So also other than the tax slab, obviously it would be great if the tax slabs can be relooked at. Nothing like that. Because having both STT and LTCG, in my mind, is a bit of a higher taxation. So hopefully something will happen there. But I think which form, let's see.
Okay. Gurmeet, they just changed it from 10 to 12.5. To expect them to go back to 10 now is a bit difficult. Maybe for foreigners they might, because rupee is the big worry. And that's what you said, the survey alluded to.
What do you suspect, Lata? They bring out something new, or maybe for a sovereign fund, another slab or something like that?
There's something called a Swagat FIs. The Swagat FIs, FPIs identified by SEBI are those sovereign funds, etc. Maybe they'll show that
another.
But I don't know. See, that's one thing that can come.
Nothing wrong in hoping, right?
Yeah. Oh, no, absolutely not. And so that is a positive. Actually, can we show some pictures of what's happening in NSE? This time we are covering the budget from NSE as well, which is the heartbeat of the financial markets. And you may see, that's the NSE set. Can we see Nimesh and Mangalam there? I mean, they are the guys who...
Lata, I can see some, I think our guests are there, seated.
Oh,
there you go. Mangalam and Reema there, and we've got our crew there, and looking majestic. Yeah. Absolutely grand. That's the NSE.
They're going to have the opening bell from there.
Yeah.
Yes. As you can see, they're sitting near the bell, Reema and Mangalam.
Yeah.
And I think in a bit they'll be joined by Nimesh as well.
Yeah.
So we will have more guests.
And by the way, later in the evening, closing is from the Bombay Stock Exchange as well. So it's going to be interesting. It's going to be exciting. And let's hope it's a positive surprise in terms of the budget as well.
Okay. Well, Dharmesh, I just wanted to ask Dharmesh, if you looked at the numbers that were announced over the weekend, very, very short actually, on Friday, we are still in the weekend. Any of them that stood out, like Sun Pharma seemed very good, NTPC also had something positive to say, and it might even gain from the budget. Anything that moved you in terms of the numbers?
Yeah, Lata, I mean, Bajaj Auto came out with a very strong set of numbers with improvement in margins, though it's been aided by currency gains, and same is the case with Sun Pharma. So these two companies look pretty well placed. I think the momentum should carry on from here. And IDFC First Bank is getting its acts together. So I think the management guidance of reaching to 1% ROE is gettable, though it's fairly priced as of now. But I think the way the deposit growth has been there, though the CD ratio is still 100 plus. So if some tweaking out there, then again, that is the third company which is likely to do well. So these three counters we are keeping an eye on from short to medium term perspective.
Dharmesh and Gurmeet, thank you very much for joining us. Always a pleasure. And speak to you post the budget and the announcement and what's in the budget document. Sudarshan Sugani is with us. We couldn't go to him earlier. Sudarshan, good morning. Sunday morning, one of those rare occasions we are on air. But how to do this this morning? Markets are trading, international markets are shut, and budgets can be big intraday ranges. So what's the trade if there is one?
Yes, good morning. You're right. Budgets can be big ranges, and the early part of the budget is the best part to avoid the markets. Sometimes the Nifty can move 200-300 points up and down in minutes. But there are 2 points that are very significant when we enter this budget. The first is the Nifty is in a trading range. It's not shown any direction. That tells us it's willing to break out in either direction, down or up. We have 25,100 as some kind of a support. If eventually the Nifty breaks down below that level towards the end of the day, then we know that the budget has not worked out. But on the other hand, we are also entering this budget with a 1,000-point decline. That's very unusual. Usually, we all get hyped up before the budget, and then the budget, post-budget decline comes. It's the exact opposite this time. So any move above 25,400 towards the later part of the budget would be a buying opportunity.
Okay. Sudarshan, good morning. So good to speak to you after a long time. What stocks to watch today?
Yeah, good morning, Lata. It's a pleasure. PHL is a buy with a stop under 255. TVS Motor is a buying opportunity with a stop under 35.95. Indian Hotels is a buy with a stop under 660. LIC Housing Finance is a buying opportunity with a stop under 525. I have two sectors which I think viewers may like to focus on. The first is PSU banks and the second is metals.
Okay. Fair enough. Those definitely would be moved by global markets, but today we don't have the global markets to, get some kind of a direction. Thank you very much, Sudarshan and Mitesh. We will come to you after the pre-opening settles down. Well, on the other side, we will also be joined by the Managing Director and CEO of the NSE, that is Ashish Kumar Chauhan, Managing Director of Kotak Mahindra, AMC, Nilesh Shah, and Gautam Chowcharia of UBS. They all come to you live from NSE, from that brilliant set we showed you at the National Stock Exchange. Back in a jiffy.
Welcome back. You're with us here on CNBC TV18. Sunday morning, big Sunday with the budget announcement, budget speech due to start in about 2 hours' time. Typically around this time, we'd look at the GIFT Nifty. There's no GIFT Nifty. There's a pre-open, which will kick off in about 3 minutes' time or so. There is an international element, which, of course, we can't ignore on a day like today, which is, of course, important. Now, President Trump has claimed that India will be buying oil from Venezuela instead of oil from Iran. Shireen is joining in now. Shireen, good morning. This is important.
It is important, Prashant, but good morning to everybody, and thanks to all of our viewers who may be tuning into us on this Super Sunday. And if you're not glued to your television screens, then get onto your mobile phones, because you can catch us on YouTube. We're available across all platforms. But, you know, outside of the budget mix, the factors that we do need to contend with, this is important. It's coming from President Trump on board Air Force One, saying that a concept of a deal has been struck with India for India to buy Venezuelan oil. You know, India's imports of Iranian oil have anyway been declining, and they're pretty minuscule in the larger mix of things. So that's a separate story altogether. But this is a comment coming in from President Trump. Remember, a few days ago, we actually had a call between Delcy Rodriguez in Venezuela and Prime Minister Modi. Now, why this is significant is this another building block towards that India-US trade deal going through? So that's why this becomes more significant, it becomes more relevant. Remember, you heard Scott Bessent just a few days ago saying, look, they have, it was Jameson Greer saying India has made progress, but they still need to do more when it comes to Russian oil. So is this another way of putting another building block in place to that eventual US-India trade deal? That is the important issue to keep a watch on. But this is significant. Trump saying that there is a concept of a deal with India on Venezuelan crude. But, you know, let's go back to the budget, Prashant. And what we do now know is that Part B of the budget is going to be more significant, or is going to be equally significant. So, one, I imagine, or I assume that we're probably going to see a long budget. Is it going to be longer than usual? I'm not sure. But Part B is going to be important. It's going to lay out not just short-term objectives of the government, but a long-term vision. So perhaps high on intent, high on signaling and direction. That is what Part B is going to focus on. And here's my hunch. And again, you know, the evidence doesn't bear it out, especially if you look at the last few years. But my hunch is that maybe this is going to be the budget that the government's disinvestment spirits are revived. The economic survey certainly seemed to give that indication. And remember, the economic survey and the budget have seen a significant convergence in the last 2 years. Will this be a hat trick is the big question, Prashant.
Very good point to make, Shireen. Because I remember Pranab Mukherjee saying that he has nothing to do with the economic survey. That is the Economist's ideal vision of India. And we will keep that in mind as we go, you know, making long-term policies. But for the budget, you know, he has to stitch the expenses and the revenues. He almost said to that effect that I don't hold them at all back when they write the survey. Let them have that vision for India, which we will follow in course of time. But that's not the way, as you point out, the current dispensation has worked. They have worked in concert, and that's why this indispensability feasibility table, which the chief economic advisor put out on page 639 of the survey. I think that's very important. You know, it gives an idea of maybe APIs, maybe power, you know, nuclear products or ecosystem. All these telecom equipment for national security, all this could get some kind of a fillip. I take your point on that. We should be closely watching that. But Shireen, we'll come back to you. There's a guest waiting. Vikash Kumar Jain of CLSA joins us. Vikash, good morning. Market expectations from the budget are very low. Can the budget surprise positively, and in what way?
I have this proprietary investor sentiment gauge, and you're right. It was very close to hitting extreme bearish sentiment just last week, and that is which tells us that yes, sentiment, expectations are very low going into this budget. Can it really surprise? Yes. What will count as a surprise when expectations are so low is a discussion point. But can it really surprise in terms of being a significantly positive budget from the way the market looks at things, where the market at times is very impatient. It wants things to happen immediately. Honestly, I don't think that's how the government is looking at things. Maybe rightly so also. They would want to focus on a slightly more longer term approach to things. And that is where I believe it may not be able to surprise, kind of throw a very big surprise in a positive sense.
The big question, Vikash, good morning, is when FPIs will return, right? I think that's the number one question people are asking. And what will it take for them to return? Do you think easing, leveling off equity taxation, especially from an FPI point of view, will do it? Do you think we will see it? Your thoughts?
Let's take a step back on what are the things that we look for in a budget. There will be three, four broad ways in which we look into what the budget. First is, what is the longer term statement that the government is trying to make? Where would it lead India into in terms of capex, areas where that it wants to focus on? I think the budget needs to be more clear on that, on those answers, thinking about it more on a structural basis, because globally we are in the midst of this argument or this debate whether AI could be the most important technology we've ever seen, and how is India kind of dealing with that? I think that's one answer that we need to seek. Plus, also, where are we heading into in terms of, you asked about, taxation. I think it's not just taxation. It's basically how do we get sustainable higher levels of growth. Most countries in the world in their history have only got sustainable high level of growth by getting better access to foreign markets. When I say access to foreign markets, it's not just by being able to export, but also the fact that getting foreign capital to fund that growth and to generate that employment, to give that opportunity, to allow that profitability to kind of flow into our country is also something which is relevant. That is through the route of FDI as well as FPI. So can the government really further make a statement to make our ability to attract foreign markets and foreign inflows to fund our growth is something which will be watched out for. Specific questions on taxation, yes, I think this keeps coming up every time, and India has a different taxation than many other countries in terms of foreign investors investing into the market. And whether we can see a change, honestly, it's very tough to predict that, but that's been a demand for a while. And there are several complicated problems which foreign investors face in terms of NAV adjustments, in terms of when it is short term, when it becomes long term, because they have to report pre-tax, post-tax NAVs, have several other complications which are there, which makes it even more difficult. So it doesn't really help attracting long-term capital from outside, definitely. So it's still to be watched. I'm not great at guessing on this one, but this has been a demand for a while now.
Okay, well, there are more shots coming in of the finance minister entering Kartavya Bhavan with her entire team, finance secretary as well as revenue secretary, expenditure secretary, the CEAs just behind there, and of course the new DEA secretary. There's a lady there. So the entire team is here, and this is that Bahi Khata in which she carries the budget, the laptop. So all those in place. Sometime back we used to have a briefcase. Yeah. Now we have the Bahi Katha and a lovely sari. Oh, what a pretty sari that is. Actually, red and black, something like mine, isn't it?
Yeah, hopefully there's a bit of a surprise in there as well.
Positive, yes.
Yeah, positive surprise. Okay, we'll keep getting you visuals and, we'll get you the latest from there. For the time being, let's go back to our chat we're having with Vikas. Vikas, given the current geopolitical situation that we're seeing, the hope is that defense spend will go up. You think so?
Superb.
See, I prefer to answer a lot of these things by can, whether can or should is actually what is happening. And in fact, if we were to go into specific expectations for this budget from what I've been hearing from clients, defense capex seeing a reasonable growth of mid-teens is clearly something which people are gunning for. Defense stocks have been in action on a positive basis going into the budget. So that's something which will definitely be watched out very closely. The other thing which gets talked about is in terms of funding sources, the government will want to be focused on bringing down fiscal deficit further. They would want to look at more funding sources and maybe raising taxes for petroleum products and for auto fuels is the other expectation which the market is being talking about. So in terms of specific expectations, those are the two most popular ones that we've heard. So defense is pretty much something which kind of is part of it. Given the current geopolitical global setup, yes, I mean it's something which it is rightly to expect something like that that it should happen in terms of a significant growth.
Okay, Vikas, thanks a lot for that. We'll leave it at that. And I take everything on board that you have said, that, they may look for more funding sources. So additional cess on petroleum products, all that could be par for the course. As well, keeping an eye on defense. Vikas just said 15%, mid-teens, but I have heard people 20 to 25 higher on defense. But let's go to the experts. Our NSE team is waiting by Mangalam and Rima, and they have the big man with them, Ashish Kumar Chauhan, Managing Director and CEO of NSE, Nilesh Shah, our own Nilesh Shah of Kotak Mahindra AMC, and Gautam Chowcharya of UBS. They're all with them. Over to you, Mangalam.
Take that point, Lata. It's a special day, a special session, but more importantly, a special place with a special bunch of people as well. We'll ring the opening bell for the budget session from the NSE where it happens. And along with us, Mr. Ashish Kumar Chauhan, obviously Nilesh and Gautam as well. We'll start with you. What an auspicious morning this has been for you. More importantly, by the next budget, the NSE will also be listed. Is that your, promise?
Probably do better than that, but hopefully...
Diwali Muhurat trading, NSE will be listed?
Hopefully, yes.
Hopefully, yes. All right, so that will be good news, but...
Just one question on that, right? So already NSE's valuation is close to 5 trillion in the unlisted market, which is nearly 5x that of BSE. So what is your thought process on the valuation of NSE as you go to list?
Madam, actually, as frontline regulators, we don't worry too much about our own valuation. And fact is, none of the employees got any stock options, nor we can even buy our shares or other shares. So
but unlisted mein to pop ho gaya after the
generally we are immune to all this. I mean, of course, the outside people who actually invest money into NSE stocks, they would be having their own valuations. But broadly, our job is not to continue valuing anything.
Your job is to facilitate the business that happens. But Nilesh, what is it that you are looking forward to in this budget? Everything that could have been done from a consumption standpoint has happened, but FI is still not coming, rupees still weakening, the volatility that we saw in gold and silver. What's your wish list?
So one, in this budget, I want Honorable Finance Minister to do trinity of impossible. One, continue to spend money on infrastructure investment as private investment is subdued. Second, please honor your own commitment of reducing debt to GDP ratio to 50% by 2031, which means this year's fiscal deficit has to be lower than last year. And to do that, instead of raising tax, please raise non-tax revenue, asset monetization, divestment, or some out-of-box idea. And finally, Mangalam, I'll borrow from what you say. In this budget, let's create a DG Yatra for entrepreneurs, both local as well as global. DG Yatra allows us to enter airports very seamlessly, very fast. Can we create DG Yatra for investment, both foreign as well as local?
DG Yatra for foreign as well as local investment. That's the headline that you've given us out here.
I have borrowed from what you told me.
We'll give it to you. Gautam, what are the three key numbers that you're watching out for?
So one, no negative surprises.
Okay.
That's an opportune time to make sure we don't have some nuances here and there which creates an issue. Second is there's some media reports about the longer term plan. That will be useful to give that stability in the policy making. But longer term, not just in terms of aspiration, but backed by specific policies. Third is always hope for surprises, right? We always
what are you hoping for? What are you hoping for?
Some markets, people are talking about potential cuts in taxes,
for
FPIs, etc. So let's see. Fingers crossed.
But will there be enough in the budget to revive the animal spirits of the market? Because that growth impetus has been lacking.
So that the fiscal space is limited.
Yes.
So the debt to GDP does create some room for innovation, and specifically with a 3-year view, because debt to GDP gives us flexibility not for this year but for the next 3 years. So if you mix that up with a long-term plan and aspiration, really.
So give us one adventurous reform you think the budget can deliver this time.
I would go back to what Nilesh said. That will be brilliant. That will be brilliant.
What is the one thing that can bring the FPIs back, according to you?
So one, there are many FPIs who don't pay tax in their own country, endowment funds, pension funds. When they have to pay tax over here, obviously it hurts them. And while our returns could be higher on a post-tax basis, but there is a mindset issue where I don't pay tax in my country, how can I pay tax in other country? So I think we should rationalize that anomaly. Anyway, we give tax exemptions to sovereign funds, to citizens who are coming out of certain countries like Singapore and Middle East on capital gains. Extend it to the foreign portfolio investors who are tax exempt in their own country.
And broadly for me, I have been on a regulatory side, on the administrative side, and for me, the simplistic frameworks are easy to administer. And if a country, the companies are giving profits, and naturally if their prices are going to go up, people come. If the country has no taxes, but also the losses are going to be there, nobody comes, right? So it's always good to sort of say that they don't come this way, that way.
But who runs the business of an exchange, do you think reduction on STT and some people are even talking about abolishment of that because they believe that the role of STT has been done? Do you think that would be a positive?
Yeah, always Tobin tax has been kind of known to create friction and sort of irregularities, but in a way India has proved on many occasions the economic theory is wrong. So I would say government, it's almost 60,000-70,000 crore a year of STD. Government needs to figure out where the next sort of funds will come in case you give some relaxation here. So it is always about what you want to give vis-a-vis what you want to take, and that's where the balance will come.
Nilesh bhai, the budget priorities of... Sorry. Okay, we have time? All right, quickly. The budget priorities always determine the investment climate, right? So when the government was spending on capex, we saw the industrials, railway, defense, etc. do well. Then the pivot came to consumption. This time, sectorally, what are you watching?
Liberalization.
Liberalization.
Just liberalize entrepreneur, they'll figure out where to go.
We have 30 seconds left.
All right.
We have 25 seconds to go.
At 1 second, we will ring the bell.
About 30 seconds. This is a magical bell for today because you have to make a wish and then ring it.
Yes.
That's when all wishes will come.
I'm like a priest.
He will ring the temple bells before the IPO.
10,
No.
9, 8, 7, 6, 5, 4, 3, 2, 1. Yes. There goes the opening bell. Keep going for it. The harder you ring, the more reforms will come by. There goes the opening bell. Nice.
Look lovely, and I think we need some more ringing. We'll come back to you guys. Budget looks fantabulous from there. Ashish bhai, Gautam, Nilesh bhai, Nimesh, Reema, Mangalam. Thanks very much, guys, for that. We'll come back to you. I'll just quickly run through where the opening is at, right? Nifty is down, 65 points, 25,260 is where we're at. And right off the bat, look at what's happening with Hindustan Copper. Look at this, 13% down, 14% down on Hindustan Copper. We can just go straight down to stocks on your screen. Look at MCX, limit down 10%. Let's just show that, all right? Hindustan Zinc, the other one, 10% lower. Vedanta, 8% lower. Nalco, 10% lower. And this is all commodity. That is what I was talking about in the morning. By the way, gold and silver are the underlying commodities trading on MCX are themselves locked down on lower circuit. The circuits are 3%, 6%, and that's how they move. And we'll kind of sort of, because of course stocks are taking a cue from what's happening there. Equities like MCX were basically a proxy for what was happening in commodities, underlying commodities, and underlying commodities took a really large, downdrift on Friday, and I think we're seeing that here as well. So 50 points lower, but all attention, of course, on what's happening here. I'm just looking at maybe the huge volumes as well, right? The ETFs, by the way, are the other way to look at this. So look at gold Bs down 10%. I think silver ETF is also down about 10% or so. So here, unlike the actual commodity on MCX, and we'll have all these up as we always do at the bottom, the ETFs, the financial instruments, they're all down very, very sharply. What else? I mean, I think Hindalco is the other one I did not mention right in the top. It's down about 6% as well. So that's the start. We're down about 50 odd points at this stage. And it's 25,274 in a holding pattern, at least at the index level. And things will pick up as they always do. They kind of go quiet as we go closer to the 11 o'clock budget speech point, and then action starts to pick up as announcements start to come through. But there is a lot more happening as far as markets are concerned. And Nigel, you're going to walk across to the wall with to tell us what's happening.
Well, that's right, Prashant. You know, historic day, right? I don't think we've ever had a day when the markets have been open on a Sunday. Yeah. So in that case, in fact, it's rather historic. Just take a look at some of these rates that are flashing for you on the screen. You have the Nifty Bank, both of them have opened up on the back foot. But you pull up a few more indices as well. The mid-cap space, there was some pressure out there. However, the outperformer is continuing its winning ways. That's the Nifty Bank. That's holding more or less flattish. And that's giving some kind of hope out there. Metal index, that's getting absolutely slammed. So the sensitives to the metal index would obviously be the frontline names, stocks that have seen a big run. Hindustan Zinc and Vedanta top of mind. Remember, those stocks have rallied big time in the last month itself. Now with metals coming under pressure, both these two stocks in fact are seeing selling. Hindustan Zinc gap down 10%. This is following a 10% cut that we saw in Friday's trading session. Vedanta, that's the parent, so that as well is under some pressure. But it's not just the metals names. Some of these ancillaries, MCX went up one way, you know, in when this metal rally was taking place. So MCX is another stock. Let's get that one up for you. That's Vedanta. MCX as well should come up for you. That's under pressure. And pull up some of these gold financiers as well. Muthoot, Manappuram, as well as IIFL. All three of them actually have opened up well in the red. That's Muthoot down close to around 6%. These are stocks that have already seen a big run, so they are coming for some profit taking. A couple of notable names from the broader markets that are moving on very high volumes. IFCI, I'm not too sure whether or not they have a direct stake in NSE, but that's normally the stock that moves when you hear news about NSE listing. So IFCI is up close to around 10%. Cupid is another one that is moving on very high volumes in the initial part of trade. That as well is zooming away. So IFCI is running away. Cupid is up close to around 6%. Volumes are high on both those names. And in terms of losers, I was looking at a few stocks from the broader markets. You have Intellect Design. That's down close to around 6%. Big downtick is what you're seeing on that particular counter. Stovecraft is another stock that was reacting to its numbers. So that as well should come up for you on the screen. These are some of the big losers actually from the broader markets. The defense stocks will be in focus all through the trading sessions. And there was some mild green on stocks like BEL, HAL, as well as BDL. All of them should come up for you on the screen. Some green out there. And from the frontline names, you have Sun Pharma and Bajaj Auto. Both of them holding well in the green. So it's an interesting start to trade, Prashant as well as Lata. As I said, historic Sunday where you're tracking the markets and you have live rates on your screen.
Absolutely. I think we must give some credit to the greens as well today. And as you said, reacting to very good numbers, Bajaj Auto and Sun Pharma. And to your defense list, I will also add Paras Defense. That one also is doing reasonably well. The two big banks, HDFC Bank and Axis Bank, doing well. Expecting, I don't know whether the expectation that tax on deposits, fixed income, will be given a slightly kinder hand. Or generally, if economic growth is good, you know, banks tend to benefit. But private banks are doing very well at this point in time. Not the public sector banks, because their OFSs and divestment will be a kind of an overhang.
One quick word on Hindustan Zinc. Mr. Agarwal timing it perfectly.
Brilliantly.
You know, raising close to around 3,500 crores at around 685 rupees. Hindustan Zinc currently down big time. And in a matter of few trading sessions, Hormuz tells me it's lost close to around 60,000 crores of market capitalization. Not a stock for the faint-hearted.
Brilliant timing.
Thinking, right? We often talk about buying gold. And many people have said, and rightly so, there's no intrinsic value, although there is a lot of value in other ways. But it doesn't throw any cash flow out. But if you look at a stock, it does throw cash flow out. Names like Vedanta. So I mean, it's not now maybe because right now in the fear and the frenzy if everything is getting thrown out, but the differentiation will emerge as we go forward. Let's actually go back to our team at the NSE. They've got some super people with them to talk about what to expect from the budget and how markets will trade from here. Guys, over to you.
Well, you did speak about gold, so let's pose that question as well to Nilesh. Nilesh, you were saying that there is a fair amount of volatility, froth in the bullion market. And with the kind of decline that we've seen over the last 2 days, do you feel good that now people will come back to the equities saying that, okay, this is not as risky as the others?
So, I'll request everyone to follow asset allocation. But then we all know human minds do get driven by greed. But chances are that over next 2 to 3 years, if you take a call, Indian equity looks better poised vis-a-vis, let's say, precious metal. Both are different asset classes. Risk return profiles are different. But I think this is the time to have a look at Indian equity.
And in the equity, will it be the small, mid or large caps? Because large caps are very close to their all-time highs on the frontline index at least, not individual stocks, but mid and small caps, 15-17% at an index level away from their highs, with individual stocks down 30, 40, some even 50%.
So our view over next 12 to 18 months is that mid caps and large caps should outperform small cap. Large caps are at all-time high near, but their valuation are still around historical average. Small caps are down, but they are still at a premium to historical average.
Gautam, never before has this budget-making exercise been at a time when there's so much uncertainty on the geopolitical front. Fragmented trade, volatile commodities, the INR continues to hit record lows against the dollar. To your mind, what can we expect in the budget this time, which can bring back the growth impetus, apart from, of course, ease of doing business for all entrepreneurs? That's one big ask. But outside of that,
so I think going back to the 2 points, in the context of the global uncertainty, having no mistakes or no negatives, it's a big win to begin with. And in that context, to give a longer-term growth projection of plan, in the context of global uncertainty, like the finance minister saying that irrespective of the US trade deal, this is our policy-making path for the next 3 to 5 years. That does help a long way. Now, growth is an outcome ultimately. You can't, beyond a point, can't do much. The elements are already in place, the banking system, the macro stability. Animal spirits is spirit, right? It's not a mechanical thing. And it will happen. It will happen.
Do you think, given the economic survey's view that despite our macros being extremely strong, the rupee is weak, because now the reasons for that are not fundamental, it's more narrative based. So this budget will perhaps not look at fundamentals with such a tight grip, maybe slip a little on fiscal discipline for a bit, for bringing the narrative back to India. Do you think that's a possibility?
It's a possibility, but again, there should not be any panic around that. Look, even with the rupee move which we have seen, in the context of historical, like go back to 2013, we have far stronger macro environment stability right now. Okay? Rupee in this environment actually is helping to some extent. So we should not over panic around that. Some part of depreciation is fine. The context should be in the current context. We're seeing global uncertainty around all of us. So I won't panic too much about
CapEx that. Growth, fiscal discipline and net borrowing would be the 3 numbers that you would be comfortable with.
And again, that should be broadly in line, not too much of a negative surprise. That's the critical part.
10 to 11% CapEx growth will be good with you?
Second?
10 to 11%?
Yes. Yeah, in line with nominal GDP, maybe slightly uptick. That's what market is also hoping for.
and if we do get a thrust on defense spending, say the defense budget goes up by 15 to 20%, does that build an investment case to invest in defense stocks? How are the valuations right now?
So look, defense is a broad-based basket. There are pockets which are more richly valued than the rest. But as a fact, the market is expecting and pricing in that there will be increased spending. So spending going up by 15% will not be a positive surprise for the markets.
Ashish bhai, your last word on what is the biggest challenge that's facing Finance Minister as she presents her 9th budget right now, and what can she do? Your one, big wish list.
No, broadly, broad framework is when the world around you is so tumultuous. Everything is kind of going from their convention places everywhere else. You need to focus. And the BJP governments over the last 25 years have been very fiscally conservative governments. Broadly speaking, they have brought down the fiscal deficit, the revenue deficits. And for me, if you continue on what you can do, vis-a-vis what the rest of the world will do. So that's where I think they have focused over even during COVID, but even post-COVID, they have been focusing on few things like infrastructure, where the government is sort of pushing the infrastructure, and that's helping the rest of the economy to move on. ensuring that the tax structures are now rationalized, automated, with very little hands-on sort of personalized activities. And so for me, you have to create rails, and then many trains can run. And that's what they have been trying to do for last 11 years. And I would say if you continue on that, we have a good growth engine that has come up.
All right, continue on that path. Last ball of the innings. Nilesh bhai, you're on strike. Take it away.
So last time when I came on CNBC TV18, it was about precious metal, and I won an orange shirt. That was the closest color available. I just hope and pray Rina's dress is not indicating anything for today's market.
All right, with that, it's back to you guys in the studio. Nilesh bhai hopes that Rima's dress is not the indicator of
and the contra-indicator.
I'd look at my tie as a hot pink tie because it's in the pink of the health, the economy.
Yeah. Okay, all right, guys, thank you very much. It's a fun chat, it's a useful chat, and I think, we'll keep going back to the NSC, which is, of course, one of the headquarters where we are sort of, beaming out of to cover this particular union budget. So once again, thank you very much, all of you there. Well, we have the other Nilesh here in the studio as founder of Envision Capital. Nilesh, good morning. It's always good to see you on a budget morning, and this is a Sunday morning, so thank you for that as well. What's your sense, Nilesh? And I think let's just start with the one big elephant in the room, which is equity taxation. क्या हो सकता है आपके हिसाब से और realistically? I mean, do you have any belief that something will happen?
क्या हो सकता है वो पता नहीं, but क्या होना चाहिए is more the thing that I think over the years we've introduced taxes on long-term capital gains, on dividends, on buybacks. There's also the STT which exists. I think something has to be done about this. We ought to either rationalize this or we need to basically remove it or eliminate it. Because we need capital, undoubtedly. And if we need capital, we need to attract capital. And I think for that, we have to make it more efficient for investors to participate in India's long-term growth story.
This is a really top-down macro view, but specifically, what is something?
So, for example, I'm just saying is if you want to encourage long-term, let's assume you don't want speculators, traders, all of that. People have gone on to saying buying and selling shares doesn't create economies, rightly so. But investment does create an economy. So probably introduce a category saying is that up to 1 year is 20%, 1 to 3 years make it 12.5, above 3 years make it 0. So introduce that category, redefine what long-term is. Instead of 1 year, take it to 3 years and make that investments 3 years plus, eliminate
So under 1, over 1 remains, which is the intermediate.
Which is 12.5, so there's no going back. Just that 12.5 is basically you do it up to 3 years, above 3 years, remove it.
And if that were to happen, since you mentioned that specifically, what is the impact?
No, so I think there are two areas. One is I think domestic investors, for them who have found it difficult to kind of really have appreciation over the last year and a half, will be encouraged to basically stay on and maybe at some point of time increase allocations. That's one. Two is foreign investors who have been on a selling spree almost now for 5 years. It's not just a 1 year phenomena, but the sum total of 5 years is not encouraging. That's for a variety of reasons. We are not part of the AI trade, our valuations are relatively expensive. But the third area is that we are probably one of those few markets around the world which has a tax on foreigners. So maybe that's one. So if you basically introduce this category, I think it will at least induce them to kind of reduce their selling or at some point of time come in a big way. I think if you look at foreign investors, their positioning on India is a massive underweight. Okay. And there is huge room for them to allocate. I think it's just that you need to kind of give some carrot, some benefit, some inducement, which basically removes them from that inertia and starts allocating to India. So it's a combination, multifold impact which it can have.
No, that's a very big ask from the foreigners, especially sovereign wealth funds, who say we don't even have a tax set off because we don't pay any tax at all. And sometimes you're making gain on rupee terms because of the depreciation, but a loss in dollar terms, and still we have to pay a withholding capital gains tax.
And that tax is on the rupee gains.
Yes. So
and not the dollar.
So there is, there are a lot of complaints that have gone, but we have to see whether the finance minister is convinced. By the way, I just wanted to tell you that we saw the pictures of Nirmala Sitharaman, all of them trooping in to meet the president. The Indian constitution says the president causes the budget to be laid on parliament. So you would have the meeting with the president first because she lays the budget on the table and then it is read by the finance minister. We also saw Minister of State for Finance, Pankaj Chaudhary. We saw Anuradha Thakur some time back, the DEA secretary, and then of course the others, the revenue secretary and the expenditure secretary. Okay, Nilesh, coming down to brass tacks. Which sectors you think, she would encourage? I don't know how much you read of the survey. Any hints, any clues?
So clearly, what the survey clearly points to is basically manufacturing.
Yes.
Manufacturing is the need of the hour. That's our biggest hedge against maybe potential job losses in an AI-driven, AI-oriented world. There's lots which has already been done for services. It has to be manufacturing and trade. Which basically is the need of the hour, and whatever needs to be done for manufacturing and trade. I think the whole cut in GST rates, the free trade agreements, the positioning on customs duties, all of that essentially has been a great start. But probably you need to think beyond PLIs. We've got the production-linked incentives. Last year's budget had incentives for apprentice kind of a program. But maybe now you need to kind of have it more in terms of formal employment. So maybe convert the PLI to an ELI, which is an employment-linked incentive. And I think position yourself for the world market. I mean, I think the survey talks about entrepreneurial state.
Yes.
And entrepreneurs think in terms of TAM.
Yeah.
And when you're basically manufacturing for India, your TAM is relevant for 1 billion people. When you're looking essentially as manufacturing for the world, your TAM goes up 4x, 5x, 6x because you're catering to a market which potentially is of 5 to 6 billion people.
If I may persist, name some sectors.
No, I still believe it's going to be areas around defense, around electronics, around semiconductors. These are essentially, obviously, the relatively, if I may use the word, new age kind of manufacturing opportunities. And then there is the whole conventional pack like textiles, jewelry, etc., which will benefit through the free trade agreements. And then, of course, a lot to do. We talk about ease of doing business. I think we should change that to ease of doing manufacturing. Yeah. I think once we start to do that, I think it'll be a paradigm shift.
All right. And as we heard our Prime Minister say, reform, perform and transform. Hopefully, we'll see some measures in that direction. But let's welcome our other guest as well on the show. We have Mr. N. Venu, the MD and CEO at Hitachi Energy India, who joins us on the show. Good morning, Mr. Venu. Thanks a lot for speaking to us here on CNBC TV18. It's a big day and you definitely have a wish list because the last few days, there has been some kind of nervousness about imports coming in, about, loosening the leash a little bit, which could create for a business like yours. So tell us, what is on your wish list, sir?
Good morning, Nigel. First of all, thank you for having me in your show and really looking forward for the big day, not only for the 1 year, but we are really looking forward some kind of direction for a multi-year, a little bit of long-term views on the growth momentum, etc. in that. From our standpoint, is a very clean and clear expectations that, continuity on the CapEx spending. I expect, at least personally, at least high double-digit growth in the CapEx spending. That will create a huge amount of, opportunities and demand for various industries, including ours. And coming back to the sectoral side, I know that there will be a lot of focus on the AI, deep tech related things. That's absolutely important. But at the same time, to have a focus on the AI, you also need to have a lot of strategy and focus on the energy systems. And especially AI data centers, you need a robust, flexible power systems, and really looking forward, kind of whether it is a local manufacturing things, and those are the things we are looking forward into the budget.
Okay, that's well said, Mr. Venu. But we just had the India Energy Week. Mr. Hardeep Puri was available, for consultation. I'm sure all of you all have already sent your consultations in the entire power ecosystem, which, as you say, is needed for data centers. Which part do you think will or should or could get some benefit? Will it be the distribution piece? Will it be the transformers? Grids? Because there is a lot of kind of dysfunction when the grid has to adjust for solar and adjust for between thermal. What are you expecting at all?
No, I'm expecting 2-3 things. One thing, absolutely, we need a more manufacturing, local manufacturing, end-to-end manufacturing need to be there. At least 2 to 3 times more than what capacities we have, and that is what is required. And then we need a lot of, not only the PLI, but in a PLI 2.0 kind of things, where we really need to rapid productions, rapid manufacturing, rapid, skill sets. It's not only just, bring the technology and manufacturing it, but we need an end-to-end manufacturing focus is required. And that's number one I'm looking forward. Number two, on the discom side, because most of the data centers will be located in the states, and you need to have a very robust power, sanctions, power flexibility, and that needs to be done in that. So discoms has to be empowered. Discom need to be, create separate cells for the data centers, because the data center growth is going to be huge, and it's not like, normal industry will take 3 to 4 years. Some of the data centers are, we see in other parts of the world, they are building in less than 12 to 18 months time frame in that. So whole ecosystem has to adjust to this kind of time frames, including supply of transformer, for example.
Okay.
Yeah. No, I think 2 years back, they allowed sovereign wealth funds and, that category
to invest
in infrastructure. FDI infrastructure,
without
that was
tax.
tax-free. But the point is, Lata, that FDI, all these guys come in as FPIs. They're registered as FPIs. So if you want to do something for them, you'll have to just do something for the category as a whole.
Yeah.
And of course, AI is not just AI. It's not just roads and bridges. It's all kinds of infra. Now, AI is, of course, something which Mr. Venu said. Mr. Venu, we have more questions, but as always, on a day of the budget, we have limited time. And I request you come back once the budget speech is over to discuss this more. Thank you very much for joining us here on the program. Let's cut across to Shireen now. And she has the star-studded panel, former Revenue Secretary Tarun Bajaj, former Defence Secretary Mr. Aramne, and the former CBIC Chief and Senior Advisor at KPMG, Vivek Johri. Shireen, over to you.
Thanks very much, guys. The budget editors are here to decode what Finance Minister Nirmala Sitharaman is likely to deliver. And without further ado, let me get straight into the big issue that the market is hoping for and certainly waiting to hear the FM speak about. The former Revenue Secretary here with us, Mr. Bajaj, let me start by asking you, the big chatter that Digi Yatra for foreign investors and domestic investors, frictionless entry, that is what Nilesh Shah just told us on the channel. Do you expect any change at all on LTCG, any change at all from a FPI perspective? Are you working with that assumption, expectation at all?
I would say the way the numbers are coming for the current year, I would have my doubts if there's going to be any changes in LTCG and STCG. But you never know. The budget always gives surprises to the market. But my own view is that it is very unlikely that there would be any changes. And I think the changes having been made last year or last to last year. So I think stability is the theme of this government. So they would like it to continue for a few years. So I'll be very doubtful if they do.
You'll be surprised if at all it happens. So what do you believe the government could do by way of sending out a message to both FDI as well as FPI?
So I would say the first thing is we really need to analyze why the FDI and FPI thing is happening. The FPIs are taking money out. Though there is a good gross FDI, I think it is about $60 billion, but the net FDI is much lower. It has to happen that after a long period of time when the FDI was coming, some money would start going out. The Indian industrialists will also start investing outside. So I would say even if these little changes are made, which the market is anticipating or the Bombay is expecting that to happen, it may not change the way FDI and FPI will behave in the times to come. So the dollar is actually becoming stronger as compared to the Indian rupee. So it doesn't make sense for the FPIs to make investments. As soon as they make their investment, the very next year their investment goes down. So I would say it would need a different kind of a mindset rather than
any short-term fix, short-term fix at this point in time. Mr. Johri, the big story that's playing out on our screens right now is the crash in commodities that we've seen overnight. Silver, gold, all of the stocks reacting here in India as well. Do you believe that there could be the possibility of a higher duty, import duty imposition on gold and silver? Would it make sense at this point in time?
It's quite tempting to do that, but there's a downside to increasing duties on gold and silver. And in the past, our experience has been that if you increase duties beyond a certain threshold, they always lead to more smuggling and more, illegal, sort of illicit imports. So if at all there is an increase, I'm not putting any bets on it, but if at all there's an increase, it will be moderate.
Moderate.
Only from the point of view of raising revenue.
Will disinvestment be revived? That's my hunch. And I, as I said, the evidence shows that it's unlikely to, given that we've seen that it's been virtually dead over the last few years. Do you expect a revival on disinvestment, Mr. Bajaj?
So I'll answer that question by saying that I hope you're right. But the way things have happened in the past, I don't think it'll be a big bang. We are expecting IDBI to happen. I think I read it in the papers yesterday that would happen. And some small bits might happen here and there. But I don't expect that what was announced earlier, that one bank or two banks will go. I think it'll be slow and
steady. There is consensus, though, on just one item, that this is going to be a year for defense allocation, Mr. Ramne, to go up, if not by 15%, perhaps even higher, 20 to 25%. And that's the number that you're working with as well, correct?
Yes. In fact, defense capability improvement is most important at this juncture because of the regional conflicts and also global situation. So capex in defense is likely to go up. Whether it's 15% or 20% will solely depend on the readiness of the department and ministry to place the orders and also to take the delivery. The increases will be contingent upon the previous orders which were placed and which are ready to be delivered. So all in all, there is a scope for at least 15 to 20% increase because of huge orders placed over last 3 years, and they coming to maturity and fruition in the current year is likely to increase the budget by at least.
As well as the emergency procurement.
Yeah, the second important aspect is the emergency procurement. 2 tranches of emergency procurement are right now going on. If both of them mature into delivery or at least to come to certain stage, I am hopeful that capex will increase. Apart from capex, there will be huge increase in the non-salary revenue expenditure, which will basically help the services to shore up their inventories and other equipment.
Okay, so 15 to 20% higher allocation for defense. But, gentlemen, I want to understand from you, because both these individuals here have been part of the budget making process till very recently. Part B is likely to get more focus and attention is what we're given to understand. What would you read into that, Mr. Bajaj?
So, to answer your question very curtly, I would say I'd wait for another hour to see what it contains rather than speculating on national media as to what it would contain.
But I'm not asking what it would contain. I'm saying, what do you believe it signals the decision to focus more on Part B or give Part B as much focus as Part A?
The Part B always had more focus than Part A. I've done Part B and Part A separately, and I would say that most of the people, and especially your audience, would be more interested in Part B than Part A. But here I would say maybe the government wants to give a longer vision or medium-term vision, because there's always been this speculation by the foreign investors that there is no stability in tax systems in the country, and every now and then we get a surprise. So maybe something to that extent would happen, because I also see that the government has done enough on taxes. The GST thing has happened. On the personal income tax, it has happened. On corporate tax, it's already happened. And customs, Mr. Johri is here, and he will bear me out that this time we are expecting a lot to happen on the customs side.
Correct.
So I would say that is it.
Mr. Johri, what would you read into that? And customs, I think again there's consensus that import duty rationalization is going to be the big one. And you've told me as well, you expect, we've gone from what, 23 to 8, and now you expect 8 to 4 in terms of tariff lines.
So yes, it's quite fair to assume that there would be a big push on customs rate rationalization, like we did for GST. And I expect the number of rates to come down at least to 4. But more, other than that, I also expect Part B to delve deeper into ease of doing business. because there's a lot of concern. You talked about FDI and all that. There's a lot of concern about uncertainty in the current tax regime and, how investigations get taken up, interpretative issues get converted into disputes. So I think there will be some vision that will be laid out on how to deal with that. Maybe some immediate measures and maybe some medium-term measures, administrative and legal, on how we can deal better with disputes and closing disputes and so on.
Mr. Bajaj, before I hand it back to the markets, because the markets are also fairly volatile, the Nifty now moving into the green, as has the Sensex. But how much fiscal space, how much fiscal room does the finance minister have to maneuver? I mean, everybody has put out a wish list on what they want, but at the end of the day, you've got to balance all of those out. How much fiscal space does she have, you think?
So, what I would say is that over the past few years, the revenues showed a very good buoyancy, which has not been the case this year, especially after the relief given both on personal income tax and GST. So in that sense, the fiscal space would not be as much as it has been in the past. So I would say that the budget has been going up by almost 7, 8, 9% in terms of the total budget size. At the most, we can expect a similar increase in the current year, because there would also be a base effect, because the GST changes came up in September, October. Till September, we may not have that much of a rise in GST. So I would say that the space would definitely be lesser than what it has been in the past, looking at the trends that we have seen in the current year.
So that is the budget setup as we count down to Finance Minister Nirmala Sitharaman's 9th budget. Limited space, but do expect a lot as far as import rate rationalization is concerned, and perhaps even a longer term roadmap that the government may hold out as far as taxes are concerned. And defense, that's the big story there, that the defense sector allocation is going to be significantly higher. GST collections in 1.93 lakh crore rupees for January 2026. I remember we every month we would chat about GST collections. Are you missing doing that?
No, I'm missing teasing you, because you would every time ask me, when will you cross 1 lakh? And I said I'll stop that question.
We're almost at 2 lakh crore rupees now as far as GST collections are concerned. But Prashant, back to you guys. We'll have, of course, our budget editors with us through the course of the day. Back to you for the market.
Absolutely, Shireen. And there is a lot happening, right? And look at the Nifty, 15 points higher, which means it's come back into the green. And while underlying commodity prices on MCX have not recovered, and this is the point I was making earlier, stocks are a different matter. Stocks have recovered. Look at something like a Vedanta. Just look at the intraday of Vedanta. It's recovered 6% from the day's lowest point. And then maybe just look at Hindustan, steel stocks actually. Steel. Names like JSW, Tata Steel, I think those have also recovered. The pure play, Hindustan Copper, Silver, which is Hindustan Zinc, those have not recovered. MCX has come off about 4% off the lows. It was down 15%, MCX. A lot of brokers trading gold and silver for their clients would be out of margin. And I guess that is the reason why there's I think, no doubt, forced liquidation this morning, which is underway. There is, remember, expectation that perhaps import duty, and that is the reason why futures on MCX for both gold and silver were trading at an 8-9% premium. That may still happen, but that is only when the speech comes. So, but you got to live till then, and they will be, because of lack of margins, etc. And margins have gone up substantially from under 30% to 60, 63% on Friday evening. All that is kind of playing out this morning, as we have been highlighting from the word go. We'll take a quick commercial break here. Markets, of course, because of this commodity thing which is going on. Otherwise, going into the budget, especially till 11, it kind of goes flat, very, very quiet. And then things pick up. But because of all of what we've seen in commodities in international markets, and consequently here, there is all that activity. We'll be joined on the other side by Dinesh Kanabar of Dhruva Advisors, Sunil Badala of KPMG India. We'll start talking about, of course, the elephant in the room, if I can call it that, taxation. Stay with us.
Welcome back. The Nifty and the Sensex have just about moved up into the green. So clearly a lot of losses washed off. I guess early morning positions, especially on metal stocks, had to be corrected. Thereafter, there is a lot of optimism on defense stocks. Drone Chari is the one that's doing extremely well. BEL, of course, Paris Defense among the mid-caps. That is, mid-caps were at one point minus 0.7%, and now it's about 0.48%. Gokula's exports is up. That's indicating some hope.
Look at the Nifty, Lata, right?
I know.
This is the right state of the Nifty. 1 point change.
That's how it is.
It is usually very, very flat because, it's tentative, it's kind of,
And today being a Sunday, it ought to be, but we had a terrible Friday of metal
the
stocks.
only thing which is throwing everything off, as I said, is commodities and metals, right? What happened. And, it's a historic one for Friday. So obviously, without international prices and feedback loop functioning, what's happening is happening.
Absolutely. When would you have a backdrop where there is a 27% drop in silver?
Yeah.
So, there, and of course, other things, copper and gold have also had.
Just one more word from the broader markets. While we're talking about the frontline names, there are stocks that are moving high on very good volumes. IKEO Lightings, that's up 13%. Volumes very, very high out there. You have Euro Pratik as well, that's higher. Shilpa Medicare, that one as well. Volumes very, very high, for a few minutes into the trading session. All these stocks, I'm highlighting them because they're up more than 10%. So market is taking note of some of the earnings reaction and bidding up the stock. Aztec Life Sciences, that's another stock as well that's up and about. So select stocks, they continue to do a thing of their own. And it's good to see at least market is taking note of some of that good news.
Yeah. NTPC Green, Nigel, right? And NTPC Green is up 4%. I'm not sure.
They're expecting something on nuclear.
Exactly. So it's all, a little bit of, there is that budget element of, people can say that budget doesn't matter, importance is faded, but everybody before the budget or on the day of the budget.
For a trader,
it's very much
important.
Absolutely. Valchand Nagar Industries, right? It's a defense company out of Pune. It's up 4%. It's got volumes as well. There is IdeaForge, drones perhaps, right? Defense and drones. So 5% on IdeaForge at this point. Avanti Feed, there is always the seafood sector, shrimps, etc., which finds a mention in this speech. I remember going back many budgets. So Avanti is up 5%. Dredging Corp, shipping, commercial shipping. We were talking about. It's done very well, by the way. It's actually had a one-way rocket-like move, but 5.5% higher there. So you can kind of, look at this stuff. There is MTAR Tech, again, defense company, 5%. So a lot of stuff which is coming through is perhaps there is no other reason at this point in time except for expectations.
Just one point, Prashant, with regard to the metal index, which is down as we have been mentioning.
Yeah.
But I'm just wondering whether from here on, ferrous names could outperform the non-ferrous names.
Yeah.
The last 2 months, the non-ferrous names have done very, very well. Vedanta, Nalco, Hindalco, all of them because of the global factors. Because now there is a possibility that the dollar strengthens, because we've seen some kind of profit taking. Let's see whether or not the ferrous names, and if you just look at the screen, JSPL, Tata Steel, JSW Steel, all of them have gone bid up and they're on the verge of moving into the green. Yeah. Because Q4 will see good demand. Pricing has improved by 3,500 rupees per ton as well. So let's see whether or not the ferrous names can actually fight back and outperform the non-ferrous names.
Especially if it's going to be a manufacturer in India theme, then these could get a leg up. Though the survey very clearly mentioned don't give protection to upstream because downstream becomes expensive if the inputs are expensive. But let's see.
These guys have already got what they want. They shouldn't hope for anything more.
Okay. Well, actually, the elephant in the room, as we have been saying several times, too many elephants in the room. It's always tax. After all, that's what the government can do, isn't it? And therefore, to decode what we can realistically expect, we're joined by two stalwarts, Dinesh Kanabar of Dhruva Advisors and Sunil Badala of KPMG. Gentlemen, good morning and thank you very much for joining us on a Sunday and for your patience. Mr. Kanabar, what's your expectation list?
Couple of things. You rightly mentioned that what is it that the government can do having regard to wherever we are today. So you look at things. We want manufacture in India. I'm seeing the notes about Anand Goenka, for example, talking about how do we have a manufacturing push. Then we have global tailwinds, headwinds, whichever way you look at it, where people who have studied in USA might not be able to get an H-1B visa and might want to come back to the country. And then you are saying that India wants to make its mark, whether it is in the manufacture of semiconductor, whether it is in artificial intelligence. How will we achieve all of this? How do we connect these dots? And two things come in. One is that we need extremely more investment in research and development. That's what's going to keep us ahead. And Lata, whether we agree or not, the Indian corporate spend on R&D is a minuscule of global corporate spend on R&D. And we need to up it. And can the government do something which will allow that investment to happen? Remember that not all R&D is successful. It's a patience game. It's a deep pocket game. And if the government can incentivize this, and Lata, I had an occasion to discuss this with government at great length. And two responses come back. One is, give a proof that if we give this incentive, people will spend more. And second, there are people who abuse it. That cannot be the basis on which you get law. If there are people assuming you need to have guardrails to protect it. But I do hope and wish that the government does give a boost to R&D and thereby give a boost to local manufacture. That's one very important thing. The second important thing, Lata, which I'm looking to, and I'm reasonably certain that this will happen, is amendments to customs regulation. This has been one area where digitization seems to have given a go-by. Huge amount of paperwork, backlog, litigation. It's estimated that about 1,52,000 lakh crores are stuck in customs litigation. And there's a huge backlog out. Can we come back? Can we first of all rationalize our rates? We have 8 rates. Can we sort of put it into a better form? Can we just have 4 rates like we did for GST? Can we do a Vivad se Vishwas sort of a thing under customs? Get a lot of money released. I think that's very, very important, very critical. And actually, I'm reasonably hopeful and expecting that that's what's going to happen this time.
Yeah, and absolutely. And I think very, very important points, Mr. Kanabar, that you made. Sunil, if I can come to you, your sort of, top 2-3 expectations about where you feel there is a real likelihood of something will happen.
Okay, so I think, obviously I entirely agree with what Mr. Kanabar mentioned. Incrementally, I would say that I think the market is expecting a few tweaks in the capital gains tax regime, as well as in the bond market and in the mutual fund. So let me just quickly touch upon all three. I think there is a concern about, STT and the increased long-term and short-term tax rates which were proposed in last year's budget. And there is definitely a rationale to kind of, reduce or eliminate STT or, capital gains tax rate as the case may be. But having said that, of course, I'm conscious of the fact that the government needs to have the fiscal room to actually do that. And I personally think that if government can find the ways, and I'm sure there are ways in which you can collect more revenue, then I think this is a good thing to do. It will boost the overall sentiments of the market. We have been seeing a lot of stress on the FDI investment. Also, we've seen FPIs pulling out the money consistently for last year or so. I think if you focus on some of these aspects, it will be good. The other thing I think we should look at is the bond market.
Right, Sunil. Sorry. Let's just take it, and I'll come to you on the bond market because you have a sort of idea in terms of what should happen there as well. But Mr. Kanabar is with us as well. Mr. Kanabar, you heard Sunil, right? You're smiling, so I think you're. All of us would be happy if these taxes are brought down, but it's about what we want and what perhaps is possible in that sense. So what's your sense on this point, equity taxation?
So I think actually a slightly different point of view, if I could just tell you. There has been this whole going back and forth on tax treaty interpretation. And very recently, we had a Supreme Court judgment in the case of Tiger Global, where the 2 earlier Supreme Court judgments, which was in the Azadi Bachao and Vodafone, have been, so to say, overturned, where the Supreme Court has come back to say, under what circumstances should tax treaty benefits be given? And speaking to the venture capital, the private equity industry, there's a huge amount of concern that what seemed to be a settled situation has suddenly become unsettled.
Okay.
And I know for a fact that the government is concerned about this development. And I'm hoping to see that what sort of a certainty can the finance minister provide with regard to that. I think to expect a reduction in the rate of tax, of course, it's a utopia. It's something which we all the time always want. We want a reduction of STT and we want capital gains tax to go away and we want no taxation on bonds and all of that. But all of that really does not fit within the fiscal framework. There is a merit, of course, to the point which Sunil made about parity in taxation between equity and debt. But leaving that aside, the way I would put it is that government needs to give more certainty rather than look at reduction of rate of tax. That certainty is critical, and believe me, it will give of impetus to the market.
Absolutely. Sunil, that bond market point, quickly, 30 seconds. Just quickly.
No, so bond market point is very simple. I think on the listed bonds, we obviously know there's a parity between listed bonds and the equity. It's only about unlisted bonds, I think, that we're talking about, that they need to be brought at par with the listed bonds.
Fair enough. Actually, even debt indexation for mutual funds was taken, and that's been a negative too. I take your point on debt. But gentlemen, do stay on. We have to go across to Shireen, who has a brilliant panel with her. She has Anand Goenka, the president of FICCI and the vice chairman of the RPG group with her. Shireen.
Well, thanks, Lata. Let's go straight across to Anand Goenka as the markets have moved back into positive territory. Very, very flat at this point in time. Anand, counting down, let me just check the time. We're literally just an hour away from the finance minister presenting her budget. Anand, as a manufacturer now, what is the best case scenario that FICCI's leaders are penciling in? What do you believe the budget is likely to take forward this time around?
But I think it's very important for government to continue to push to make India a manufacturing powerhouse. From FICCI's side, there were a couple of ideas, suggestions that we had. One is to look at particularly creating an ecosystem for EMS sector. Just as in China, we have a complete ecosystem approach as in Shenzhen in terms of a mega electronics IT park. That will get a lot more value addition and cost benefits coming in. The second is an increased defense outlay, which will help the defense manufacturing sector, particularly in light of Sindoor and the uncertainty around the world that is happening. Two areas from the manufacturing side. The second big area that comes in place is infrastructure, whether it is data centers, power transmission and distribution. These are two large areas which will need a shift with AI coming in. And the second part of infrastructure is roads and railways to bring the cost of doing business down.
New schemes that you expect? Any new sectors that are likely to fall under a PLI scheme? Anything on that front, Anand, that industry is expecting? Any incentives for R&D? Is that what you're hoping for?
Yes, I think R&D innovation, clearly we have not punched above our weight here. There's a lot more that can be done. Usually what we've noticed in the budget is that the finance minister has laid out a long-term plan, whether it is giving insight into the R&D and R&D 1 lakh crore scheme or the National Manufacturing Mission. I think there will be more announcements in that nature or setting more clarity on the previous announcements that have been made. I think providing that long-term vision, continuity, will be very useful on areas such as R&D, job creation, focus on MSMEs, and leveraging the FTAs that have recently been signed.
Anand, before I let you go, I'm doing a pulse check. What is the mood within FICCI at this point in time? How many people, when we last spoke, you said that capacity utilization at 80-85%. How many people are looking at adding capacity? How many people are looking at hiring? How many people are looking at, better than average wage growth, which has been between 7 and 8% over the last few years? What's business confidence like?
Right. So post GST 2.0, we had a pre-budget survey, and we found that overall the mood is fairly optimistic. GDP growth rates are expected to be about 7 to 8%. We do expect an increase in private capex because demand has grown up. We are seeing about nearly 15 to 20% growth in the auto sector, as well as other discretionary and consumer product spends. And so as that utilization goes up, the mood is fairly positive in terms of private capex coming back.
Okay, private capex is the hope that industry is going in with, and that's certainly going to be the big wish of the finance minister and the government. Look, they've been saying for the last few years now that we've done our bit. We've given you corporate tax cuts, income tax cuts, GST cuts. What more can we do? Indian industry now needs to start doing the heavy lifting in terms of investment. But Anant, we'll come back with you once the finance minister's speech is over to decode the highlights of Budget 2026. Prashant, back to you.
Thanks very much for that, Shireen. Good chat there. And interested to see what corporates really are looking out for here. 8-point change. So markets are in the green. They're off the lows. Nigel has walked across to the big wall to tell us exactly what's happening in terms of single stocks. Nigel, over to you.
Well, for whoever's trading, Prashant, is looking a little bit better than what it was a few minutes ago, because the Nifty, as you said, has seen a bit of recovery. You have stocks like Sun Pharma actually bursting away from the Nifty pack itself. That's up closer to around 3.5%, and the markets have moved into the green. Let's focus on a couple of big names then. The metal index, that's the big loser this morning, and that index, in fact, is underperforming by a mile. But there are some of these metal-sensitive stocks that are still under pressure, though they've recovered from the lows. You have MCX that should come up for you. That stock, in fact, is still lower. Let's get that stock up for you. That's lower, but that, in fact, has recovered a little bit. As is the case with Muthoot Finance as well. That stock as well, still trading in the red, but that's recovered considerably from the low. I'll tell you what, from the metals pack, if you look at it, you'll pull up a few ferrous names. JSPL, you should pull up a JSW Steel. Both of them actually are on the verge of moving into the green, or they're almost more or less flattish. While the non-ferrous names, whether you look at Vedanta, Hindustan Zinc as well as Hindalco. And from the non-ferrous names, I think Vedanta is standing out because the contribution of silver to the overall SOTP is rather low. And that's the reason why that stock has recovered close to around 7% from the lows of the day, because the contribution of silver is minimum. It's bigger aluminium play more than anything else. A few more names come up for you from the broader markets. Gala Precision, massive volumes out there, stock up 10%. IQ Lighting, that stock as well should come up for you, up close to around 10% as we speak. Big move is what we're seeing on both those two names. And throw in there Euro Pratik as well as Shilpa Medichem. All of them are flying away. So fair bit of action from the broader markets. There are a few names as well that are moving up. If you look at a PNC Infra, that stock, I think it's got beaten out of shape, but that's pulled back a little bit. And you have a divestment hope as well. IDBI Bank, that stock, in fact, is up close to around 3.5% with volumes quite high. So plenty of action actually in the broader markets, guys, though the headline index is just moved into the green. Not so bad times.
Absolutely. Thank you very much for that, Nigel. And, very snapshotty view of what's happening right now. Sajid Chinoy is with us at JP Morgan. Samiran Chakrabarti is with us at Citi. Gentlemen, good morning. Great to have both of you here. Thank you very much for joining us. We, the equity folk, get very excited, and we need... economists to bring us and keep us on an even keel, if I can say so. So thank you very much once again. It's a Sunday morning, and it's good to see both of you. Sajid, let me start with you. I read that report, and I think it's a brilliant way you capture the essence of what to expect, right? 5 questions. And there is so much in there. But, one or two things which is really top of mind as you get ready to hear the finance minister lay out the budget speech.
So, Prashant, I think first and foremost, I can't think of a time in recent years when there's been such a hostile and uncertain global backdrop. Remember, in the COVID year, the budget happened in February, COVID kicked it in March. The next budget was a year later, by which time, we had some sense of how COVID was playing out. This is truly uncharted territory where, the system that we've known for the last 80 years globally is unraveling. That creates both near-term uncertainty and creates concerns about medium-term growth. So I think the challenge before this budget is twofold. That on the one hand, when you've got all this global uncertainty in financial markets, the typical tendency of emerging markets is hunker down, right? Create buffers, create fiscal buffers, create monetary buffers, create external buffers. But, that sometimes comes at the cost of growth. Whereas the other impulse is going to be in such a, environment where, economic heft determines geopolitical heft. The tendency and the temptation will be to be adventurous and to be expansive. And so that, for me, is the central challenge between this budget. How do you simultaneously be conservative and be adventurous? My sense is that the way this will happen is the fiscal math will be conservative. I think, as was just said, a lot of the fiscal action happened last year. Direct tax cuts, GST cuts. with nominal GDP growth expected to be in single digits, there isn't much fiscal space. So I'd expect there'll be fiscal conservatism, which has been the hallmark of this government, to under-promise and over-deliver. I think we'll meet this year's target of 4.4, and there'll be more consolidation next year. So the numbers, I think, will be quite conservative. What everyone is hoping for is, outside the fiscal math, can we get announcements that excite not investment and hopefully attract back capital flows? But it's that mix of conservatism and adventurism, I think, that will be key in today's budget.
Okay. Hi, Sajid and Samiran. Thank you very much for sparing time for us. Samiran, you've read the survey with a fine-tooth comb. Can you help us with what sectors or ideas may get prominence?
So thanks, Lata. I guess there are two broad questions in front of the budget today. One is about allocation of capital, both domestic and foreign. At this point of time, we have less of foreign capital into the country and more of domestic savings coming in. But within domestic savings, there is a preponderance towards equity rather than debt. How do we manage this through effective policy instruments in the short run is one of the challenges that I will be looking out for in the budget. And the second one, as Sajid was mentioning, that in an absolutely hostile global environment, we need to rethink about our broader growth strategies. The survey is indicating that we should push towards manufacturing, not only domestic side, but also manufacturing for exports. We have heard this before, but this time around, what kind of newer strategies the budget throws up to achieve that goal? I think that's also will be very important for me. So both the financial side of the economy through better allocation of capital and the real side of the economy by pushing for manufacturing in a bigger way. I think these two would be top of my mind. Okay,
let me persist with that fiscal math, which Sajid took us through, Samiran. We now have the new how the new CPI series might look. And it looks like the CPI is going to be about 20, 30 basis points. Sonal Verma is saying even 50 basis points higher. Plus, the real GDP is forecast by the survey at 6.8 to 7.2. So do you think that the budget would be well within its rights to work with a nominal GDP as high as 400 trillion? Would the bond markets be upset that the calculation is too aggressive if they did that?
I think about a 10% plus nominal GDP growth in the budget, 10 to 10.5, I think will be treated by market as quite reasonable. But on a slightly different note, I think the challenge in this whole new CPI series is that the more the FY26 numbers are higher in the new series, there's a chance that the FY27 numbers will be lower by an equivalent amount because the base effect will work in the reverse direction then. So what we have written is that while we understand that 40 to 50 basis point is FY26 numbers possibly higher, but at the same time, everything else equal, there's a 25 to 30 basis point downside risk to our FY27 CPI just because of this reallocation of weights.
Okay, fair point. Sajid, what's your sense about any sectoral push? Any read-through from the survey?
A couple of things, Lata, just to finish the discussion on the fiscal math. I think it's important to appreciate that we first have to hit this year's deficit. I have no doubt we will. But just to let you know, gross tax growth, even though December was very strong, April to December is running at about 8.5%.
Lower.
And so you get an asking rate of above 20% in Jan, Feb, March to hit your budget target. There's a sense here that gross taxes could be as high as 0.4% of GDP lower than was budgeted. The good news is that there were always buffers built on the expenditure side, and you've got buffers on non-tax revenues because both PSU and RBI dividends have been very high this year. So my sense is you'll get a rebalancing in the RE number in terms of taxes and non-taxes. Lower gross taxes and lower net taxes, higher non-taxes. Similarly, in the expenditure side, don't be surprised if CapEx actually beats last year's target, but revenue expenditure is much lower. So the first point is just to understand how this year's math plans out. No, I think on going forward, the survey makes a very fervent, passionate argument that India has to prepare for a new world. And in a new world, that's what I began. Geopolitical heft comes from economic heft. Somebody once said very famously many years ago, the best foreign policy India can have is to grow at 10% for a decade, right? And so I think the survey lays out some of the guidelines. I agree with Shaumiran that exports have to be the centerpiece of any such strategy in a world of global value chains. And therefore, what I'm looking for is, you've had a series of reforms the last 6 months. What will be very important to complement it with it is on the import side. The oldest adage in economics is an import tariff is the same as an export tax or as an equivalent import tax. So this will be a wonderful opportunity to clean up the whole customs duty regime, right? Simplify it, clean it up, rationalize the rates, correct duty structures. That seems to be a natural complement to the series of FTAs that we've signed. And I think the survey did talk about how protectionism upstream creates pressures downstream.
Yeah, just one quick point, Sajid. The RBI dividend number, it was 2.7 odd lakh crores last year, right? What could that be meaningfully higher? I mean, at the end of the day, gold, dollar are assets, right? Rupee is a liability. Rupee is depreciated. So could that be, could it be really chunky, bigger?
So I think this year the sense is, the dividend is going to be about 30,000 crores higher, but you're exactly right? The revaluation gains will be higher, next year if the rupee continues to depreciate. So that's one, source that has been reliable over the last few years, and that takes a little bit pressure off tax revenues next year. But again, I want the government to be conservative. I think nominal GDP of 10%, would be par for the course. Anything above could be ambitious. We're in a world with lots of Chinese excess capacity. Yes, you get some technical readjustments from the CPI rebasement, but the fact is goods prices are going to be under pressure for the foreseeable future, given what's happening out of China.
Okay, all right, got that, Sajid. Samiran, let me get you into the discussion then. The rupee weakness is something that has spooked the street, the equity markets as well. Some believe that maybe it's getting stretched on the downside. What do you think?
And what do you expect?
So it's rupees of...
No, what do you expect from the budget? Yeah.
So rupees of function of balance of payment. So what I was mentioning initially was that one of the challenges for us today is that we are not getting as much of capital inflows that we used to get earlier.
Yes.
We are a lot focused on the FPI number, but the big swing factor has been the FDI number. So in a sense, if we can push for manufacturing in a more clearer way through deregulation and all, then there's a chance that the FDI numbers can also increase. If there is more tax certainty, that could be another factor driving that FDI. But somehow to push the FDI thing will, in my view, in the budget, the best support for the rupee currently. The current account is doing just fine. So it's all will boil down to how we manage the capital flow side. I am not really very keen to look for more sources of FPI increase through different kind of tax concessions, etc. That's a very short-term approach to getting capital flows. The real big one is to get the FDI numbers much higher.
Fair point. Sajid, you have written an excellent edit on how the states also have to contribute if we have to come down in terms of debt to GDP. The centre can move the needle only that much. The states have to move much more. It's possible, therefore, that all programs, like we saw in the MNREGS case, will come with more responsibilities for the state. How does it impact CapEx? Is there anything for the markets or for the economy from that kind of a move, which I very strongly expect, more conditions on the state?
Yes. Yeah, my worry, Lata, is that we've had the surge of cash transfers that's proliferated across states. It's now become very fashionable to do so. And as the economic survey also pointed out, these things come at a cost. And the cost has been twofold. One is you're seeing upward pressure on state deficits. We now have the RBI report on state finances. Last year was 3.3% of the deficit, which is not small. It's been widening in recent years. And there is a risk it's even higher this year. Remember, when there's a shortfall of gross taxes at the center of 0.4% of GDP, a lot of that is then shared by the states. So there'll be a shortfall of taxes for states as well, right? Number one. And number two, the other hit has been that we've just begun to see signs the last 6 months that all the spending on cash transfers affecting capital expenditure by the state. So what the center may propose, the states may dispose. So I think the real story in the coming months is going to be state finances, not central finances. And I'll say one quick thing also. Small changes in nominal GDP growth have huge implications for the asking rate for fiscal in the next 5 years. If the nominal GDP growth is 10%, the center can take its deficit from 4.4 to 3.6, most of which will happen by interest to GDP going down and meet its 50% of GDP debt target. If nominal GDP goes to 9%, or is running at 9% for the next 5 years, which is not implausible, then the center's deficit has to go all the way from 4.4 to 3%. And in that environment, if states don't consolidate, debt on a combined basis doesn't move at all.
Sajid and Samiran, thank you very much for joining us. It's a big day. It's one of those days where, I think the markets interface with macros directly, and the big numbers make all the difference. We'll speak to you as soon as the budget speech, of course, ends for your first reactions out there. Let me toss it back to Shireen in Delhi. She's got another star-studded panel. Shireen, over to you.
Sajid, I've got a power-packed lineup here at the CII, and everyone's calling you Professor Chinoy. So thank you, Sajid, for doing a stellar job of putting together the micros and the macros for us here on CNBC TV18. You're getting a tip of the hat here from the folks at CII who've been listening in to your conversation. But let me bring it back here to my conversation with the leaders of industry. Rajiv Memani, 30 minutes to now go. The big ask is there going to be specific measures or at least broad direction as it comes to FPI and FDI? We were chatting about this. You think the likelihood of any tax-related changes is low, but broadly, direction-wise, announcement-wise, what would you expect?
See, if you look at the overall scenario, I think the macroeconomic fundamentals are very strong. The GDP growth numbers are very strong, but we have a very uncertain geopolitical, geoeconomic environment. And we also have tax revenues that'll be lower than what the budgeted estimates are. So if you look at that, my view is, and it appears to me that there is going to be a lot of focus on manufacturing and how do you make manufacturing more competitive in India. So if there are steps around that, that makes manufacturing very clear, identify products, how India can be part of global value chains on some of those products, clear incentives, PLI schemes that are there for some of those products.
More PLI schemes, you think?
Yeah, incentive schemes, PLI schemes, whatever, depending on the product. I'm not saying for everything, but depending on what the product is. I think once you have clarity on that, then I think FDI will flow. Yes, I think from an FDI standpoint, if you were to look at concern, Shireen, the biggest concern is around, tax, legal uncertainty that happens in India. I think if we can clearly lay out whether it's advanced ruling, advanced pricing, settled negotiations, if there have been some judgments that have come up in the past, that there will not be any retrospective changes in that. If we can have those broad level assurances that are there in the budget, that India will be looking at that, then given the GDP growth, given the clear focus on manufacturing that we have, and a clear outlined path, I think FDI will pick up.
You think she will specifically address the Supreme Court order?
I don't think in the budget she will address the Supreme. That's my guess.
In her speech, maybe?
Yeah, I can't speculate on that, but I think at some stage, whether in the budget or outside of that, I think if they can specify, I think that'll be helpful.
Okay, so, lots for the manufacturing sector is what the industry is hoping for, linked to specific products, etc. And of course, that mega park that everyone seems to be betting on to further boost the EMS sector, the electronic manufacturing sector. I think that's one of the big ideas. Again, there is plenty of consensus that we may see that go through. So, Chitra, many thanks for joining us. What are you working with? What are your key expectations now?
I would want to focus again, taking off from Rajiv, manufacturing needs to be the push that we need to get forward. Clusters, tech parks to come around across the country, and also sectoral clusters is what I think we need to do so that we can, the ease of bringing the value chains closer to us is very important. There's no point in, getting things from all across the country. So this focus on sectoral clusters will be very important. The push on manufacturing is very much also there for us in the life sciences industry. And also R&D, the innovation quotient that we have to keep upping as we go forward. The public-private partnerships that are required, because the government does a fabulous job in facilitating projects and collaborations and partnerships between academia, research institutes,
so perhaps more of that.
Yes, private players like us, and
And specifically, as far as some schemes on R&D is what industry is expecting, whether or not we see a return of that, because as you heard our previous guests, the government has had this apprehension that, we give out incentives and we don't get back enough. So whether we're actually going to see a return of R&D linked incentives is the question. Mr. Bucketman is here with us. The last year, it turned out to be a leaky bucket, because what you were hoping for and what you had asked, the actual number delivered was much lower. So you've tempered your expectations this time on capex.
No, I haven't tempered at all. I'm just as aggressive on the ask for infrastructure spend as I always was, because the maths, it's not me saying this should be the budget allocation. It's the maths that suggests itself. Shireen, there is reasonable unanimity across political dispensations that infrastructure spend in this country should be around 7% of GDP. Now, it is also well known as a thumb rule that half of it comes from the union budget. So 3.5 should be on GDP is the infra allocation that keeps pump priming the economy. And therefore, with the expectation of a 400 lakh crore nominal GDP in FY27, 3.5% of 400 is 14 lakh crores. So the maths suggests itself. So I'm only asking for an allocation of 14 lakh crores.
You're only asking for what the math is suggesting at this point.
What the math is saying. So I'm asking for the same thing. But last year, the allocation was virtually flat. And if we were to see 14 over last year, it would be a 27% increase in allocation. And with the current uncertain environment that the world is facing, we still need public expenditure pump priming GDP growth.
Sunil Mathur, you're smiling. A 27% increase in the capex budget. Is that what industry is? I mean, if that happens, that would be a bazooka, right?
Absolutely right. And I think if we do get to the 14 lakh crore amount, that would be a bazooka, because there is no doubt the country needs infrastructure as a foundation for private sector investment as well. And we need to speeden up on railways, we need to speeden up on airports, ports, reduce logistic costs. All of this is absolutely critical.
But what's the reality on the ground? Both in terms of tenders being awarded, tenders being executed on. What are we seeing today on the ground, both from the private sector, but more importantly from the government, because that's what is doing the heavy lifting still?
So I think, to be honest, a lot, the 11 lakh crores, close to that has probably happened. But it still feels slower than what it should be. The pace at which tenders are actually coming out in the last 6 months has actually slowed down. There's a lot in the pipeline, a lot that will happen ostensibly over the next year, but actual tenders with firm dates hitting the ground.
And this is the government and the private sector both?
So this is government. On the private sector, we do see a pickup in the last 3 or 4 months. It started coming. I think it'll take time to pick up over a period of time. I think the next 3 to 6 months will be critical to see whether this is a sustained growth or just a blip on the private sector side. But we are beginning to see bit by bit growth in the private sector as well.
27% higher capex. Where is she going to fund that from?
I'm sorry to
burst his bubble.
Not burst his bubble. I just think that to get 3 lakh crores incremental money, when you have total revenue of 48 lakh crores, to get 8% incremental is going to be a challenge, given the tax buoyancy is not there. And they've given this thing. I think if they can find a way, I mean, my realistic expectation is somewhere between 12 to 13 lakh crores in that vicinity. But if we can find ways to also incentivize private capex, because balance sheets are under leveraged, banks have a lot of money. There's also a lot of cash circulating.
So if we can push, what can they do?
No, I think the government has been doing a lot in terms of reforms. I think that's reflecting in the growth in capex that has happened. And private capex is happening. It's not that private capex is not happening. But I think it can be, hopefully, if we can move on projects faster, if there's greater focus on ease of doing business, clearances come faster. As Suchitra said, availability of land, power cost becomes more competitive. We have a clear glide path on 50 to 60 products that India needs to go after, or 70, 80, or 100, whatever that number is. I think investments will come in. I think we need to get the projects ready, whether it's PPP, whether it's otherwise, and move fast on the approval process.
I
think that is more realistic.
So, Vinayak Chatterjee, there is no consensus even on this panel to go with your number.
I'm not asking for consensus. I'm only saying there is a macroeconomic maths, and the maths suggests this figure. That's all I'm saying. I'm not even asking for consensus.
But I think, just to go on to that, Jireen, it's not only about the funding, and both Rajiv and Vinayak have their perspectives. It's also on the implementability, right? So you can put whatever you want to put, the number you want. It's actually got to be implemented. And the government has got a very good track record of now implementing 80 to 85% of the number that they put out there. So I think it's also important to take that factor in to see how much actually can get in.
It's interesting in terms, there's something I wish to point out as a very interesting change in the conversation that I'm noticing. Traditionally, the budget allocations on infra would be Jal Jeevan Mission, Pradhan Mantri Gram Sadak Yojana, Awas Yojana, NHI, those nice public. See what the language today is. Even pre-budget, we are talking high-speed rail, coal gasification, battery storage, nuclear, semiconductor, hydrogen. So the nature of the incentives and the allocations
and the sectors
we have moved from, I think it's an important shift in the budget lexicon, that we are shifting from traditional public sector driven Aam Aadmi type of stuff to new age infrastructure technologies being incentivized. I wanted to point that out.
No, that's an important shift that you talk about, and I suspect that we are going to see that being reflected in the budget. But Rajiv, of that basket of sectors or items that you spoke of, the top 5 that you believe will get some mention in the budget?
I would say electronics manufacturing for sure. That's been manufacturing for sure. I think semiconductors definitely. I think nuclear is another area. It'll be really good if coal to gas comes in. I think we have to find a way that we unlock our mining resources faster, because that gives a lot of focus on growth. I've not thought about what the top 5 will be, but these comes immediately.
Well, you've given us 4 already.
And some labor-intensive sectors, because I think it's very important that we focus on those as well. So. Because employment generation is a key objective. And AI and data centers will something that will always be there.
That will find a mention. Rajiv Memani, Suchitra, Vinayak and Sunil, many thanks for joining us here at the CNBC TV18 CII Budget Headquarters. We'll have you back to not speculate, but to actually analyze the fine print and whether or not Vinayak gets what he wants and he believes the macro. He's kind of like already like giving up on it. But thanks very much for joining us. That's the mood here at the Confederation of Indian Industry.
Ask for the stars and land in the moon.
Land on the moon. Ask for the stars, land on the moon. That's the mood here in industry. But the Nifty bank almost 200 points higher. Prashant, back to you.
Well, the market mood is the mood amongst corporates in Delhi is keep expectations high here. Okay, market expectation is low. So the bar for being surprised positively, perhaps, but that's market's view, right? We've seen a big turn, Shireen. We were down in 60, we're up 60 on the Nifty, 25,384. But of course, all of this will, diffuse as we go into the budget speech at 11, kind of flattens out, and then the market will hear the speech, and depending on, of course, what comes through, the reaction starts to, sometimes when it's actually late into the speech, even after the speech, the real reaction starts to kick in. The metal index is still down 2. It's off the lows by a little bit. The Sensex is up a third. The Nifty is up about 0.25%. So those are the 3 big kind of indices we're going to talk about. We'll take a quick commercial break here. On the other side, we have Sandeep Bhatia, MD and Head of Equity India, Macquarie Capital joining in. Mahesh Nandurkar of Jefferies is going to be with us. And we also have Ashok Vadra, Group CEO, Ambit joining in. Dinesh Kanabar will be with us as well. Anant Narayan a former SEBI official, is also going to be with us. He's, of course, written a powerful piece which many have cited as a reason why perhaps equity and bond market taxation perhaps needs to be given a relook. So all of that coming up in just a bit. Okay, welcome back. There's 15 minutes to go for the finance minister to start reading out the budget speech. And it's a power-packed panel we have with us here. And so this is last-minute kind of wishes, expectations, high-conviction ideas, whatever you want to call it, right? Sandeep Bhatia is MD and Head of India Equity at Macquarie Capital. Mahesh Nandurkar of Jefferies is with us. We have Anand Narayan who's with us. We have Ashok Vadva, Dinesh Kanabar. So, gentlemen, all of you, good morning. Great to have you guys on a Sunday morning, and it's an important one. Anand, before I took that break, I was saying that you wrote that piece, and I think it's been widely circulated as perhaps, and many people are basing their arguments on the back of what you've said. Well, this should be done. So, just with 15 minutes to go for the speech, just quickly in a minute, tell us 2-3 points what you think should happen. I'm not saying will happen, but which you think can happen.
So very quickly, Prashant, I think there are two areas where our taxation, particularly on long-term capital gains tax, needs to be relooked at. One is with respect to foreign investors, the other with respect to our domestic investors. Globally, the major markets follow the OECD model of applying capital gains tax at the residence of the investor, not at the source where the investment is made. India is an aberration in that we have withholding tax on long-term capital gains on a residence-based model in India. Now, while we have tax treaties and such like, it is still a problem for global investors, A, because it's an aberration, B, because many investors are actually exempt from paying capital gains tax in their home country, and for them, any withholding tax in India is a problem. Third, even if you are liable to pay capital gains tax in your residence, the withholding that we do in India sometimes does not conform with the tax credit regime that they have in their country. And finally, we compute our capital gains in rupees. At a time of rupee depreciation, when the investor might actually be having a loss in dollar or in hard currency terms, this becomes a problem. So all of this, therefore, tells you that we should probably look to moving towards a residence-based taxation model as well, and do away with the need for withholding tax for foreign investors in India. This is not exempting them and penalizing domestic investors. This is merely moving to the global model of ensuring that it's a residence-based taxation. Similarly, for the domestic investors, Prashant, I would argue that we've seen a lot of new investors coming into capital markets, which is great. But if you see the skew of investments, 10 years ago, mutual funds had twice as much assets in fixed income as they had in equities. Today, it's the reverse. You have twice as much in equity than you have in fixed income. Now, if this was entirely because of risk appetite of investors, that's fine. But I would argue that taxation has played a role in this. 5 years ago, you would recall, fixed maturity plans used to be a thing. And today, they don't exist as a product. So I would argue that taxation is actually skewing investor asset allocation choices away from their risk appetite and possibly into riskier assets. Now, if you start taxing fixed income, particularly corporate bond and hybrid investments, at the marginal tax rate of your investors, that actually becomes more like a wealth tax because you're not doing indexation. Then for after paying a marginal tax rate for fixed income returns to beat inflation becomes that much more difficult. And I would argue if you're investing in corporate bonds or in InvITs or REITs, you're taking considerable risk and aiding good quality capital formation as well. So over time, I would love to see our taxation regime move towards an asset agnostic, uniformly low long-term capital gains tax regime. Now, all of this, if this creates problems in terms of tax collections, maybe we could relook at STT. After all, STT was supposed to be in lieu of long-term capital gains tax. But these two things, A, moving to a residence-based taxation for foreign investors, making it easier for them to invest in India, and B, moving to an asset-agnostic, low uniform LTCG regime for Indian investors in India, I think would be great for capital formation and investments in India.
3 cheers to you, Anant, for that. By the way, your analysis on CNBC TV18 has also attracted, I think, record eyeballs on this issue. Quickly, Sandeep, how do you think the market will react? I mean, the ultimate that Anant is saying of, equality of taxation for equity and debt, it ain't happening anytime soon. But even if there is one step towards it, like, continuing with reintroducing indexation, I don't know what they would do. But if there is a step towards it, markets will be happy?
Definitely. I think markets will be happy. But I am actually going to go into this budget very circumspect. I think there are issues on long-term capital gains tax. The thought process has been to raise the long-term capital gains tax level. So Anant is actually saying the right things, but whether the right things get done or whether we move towards higher taxation even on capital gains tax, because there's enough data which can prove that the capital gains tax is paid by the wealthy in India, and therefore the wealthy can be taxed more. So I don't know whether this will mean lower taxes on capital gains tax or actually just moving towards higher taxation, which is currently the bane for debt taxation.
I don't know.
So that's one thing which I'm circumspect on. And the other thing is, I think also gold and silver ETFs could see some more restrictions because these are unproductive investments always. The whole idea behind sovereign bonds was that these should be financialized and used, but then of course the gold prices went up, and therefore then it became
so Sandeep, so import duties go up in gold, silver. I mean, that's if you look at where.
No, that would be very negative. I think it will just help smuggling. I think maybe they will take away the long-term capital gains tax benefits there. Who knows?
Yeah.
I think we should go with very circumspect, because there's definitely pressure to raise revenue. We just saw the GST numbers come in, flash today at 6% for the month of January. So let's hope for the best, but let's not keep hoping too much.
No, I agree. Actually, like you, the market is also going circumspect. We haven't seen any all guns blazing entry into the budget. But let us go more threadbare as to what Anand said, because we have two tax experts over here. Yeah. First to you, Ashok, taking from Anand's point of view, what would be your feasible, ideal tax change?
What Anand says makes sense from a global OECD model perspective. But given our current tax position and the fact that we've only had marginal growth this year, largely because there were tax cuts last year and then GST cuts this year, I don't think we have the headroom to be able to do that. Going forward, perhaps a roadmap that can identify it as an opportunity, sure. But I think the two small steps that we can surely take is, why have AIF on a different tax regime to mutual funds? If you think about it, the wealthy who you want them to come more and more to the market, because at this point of time, our market needs more support. With FPI selling out the way they are selling out, I would like to believe that domestic...
what
Sandeep said, right? He almost made it like it's ideological kind of thing. You can tax the wealthy. Products like AIFs, at the end of the day, the category of investors is different. It's a more HNI and wealthier.
It's only creating an arbitrage.
No, I'm not saying right or wrong.
I'm saying between mutual fund and AIF, you're creating an arbitrage, which is absolutely unnecessary. It's one category versus the other category.
Yeah.
All that I'm saying is that the first step could be to say, okay, we'll harmonize the two and make taxation between AIFs and AIFs were really created as a vehicle to attract more investments into the market. And we've seen the benefit. You've seen how much money AIFs have been able to collect. So I would say the first step would be to try and see whether you can rationalize the two together. And on the other side of FDIs and not taxing, let's at least include insurance companies in investing in infrastructure projects. Today you have sovereign funds that are exempted. You have pension funds that are exempted, but insurance companies, including domestic insurance companies, there's a large pool of capital waiting to invest in long-dated assets. And infrastructure needs that capital. We are calling upon private sector to invest. And here is a large pool of capital sitting with domestic insurance companies that can go in there. So why not include at least insurance companies in investing in data centers and investing in all of the infrastructure projects? I think at least it's a step forward towards attracting a larger pool of capital. And again, a small step forward to what Anand said.
A fresh idea.
Yeah. And then, of course, if you can exempt sovereign funds and insurance companies from any investment, you bring in a new category. Say anybody who's investing for more than 5 years, investments more than 5 years shall be exempted from any capital gains tax in India. I think that would be a fantastic idea.
So you're not kind of sort of flip-flopping?
No, you're keeping your current regime. Yeah. You're just bringing a new category to say any investment made for more than 5 years by any of these investments, doesn't matter whether it's in infrastructure or in any other category of investment, exempted from India.
Mr. Kanabar, similar question.
Just a very quick thing. Unfortunately, while Anand makes a very nice point, which is very attractive, actually the OECD is going in a different direction. They've actually come back to accept that India's approach of taxing on a source base is more appropriate, and more countries are adopting it. So while he's advocating that we need to move away from...
I looked at France, in UK, Germany, all of them have equal debt and equity taxes.
No, that's separate.
No, he's talking about
source versus residence. So OECD has actually in the last 2-3 years done a somersault to come back and say source-based taxation is actually an acceptable thing. I think the point which Anand makes, which are very important and right, is how do you tax notional income when you compute gains on the base of rupees? You can't be doing that. You have to give into account has merit in its own way, and I think I'm aware that it is being actively considered. Whether it will happen in this budget or not, I don't know. But lots of points to do out there. Yes.
Just one quick point: gold and silver, as Sandeep was talking about ETFs, and if you look at the way how prices were trading, markets are betting on. The spreads are locked in. So much of arb trade, etc., has happened.
So as you know, that wherever the government has found that there is a degree of...
Actually, there is one consensus expectation that import duty is coming. That is, I can tell you. At least long term and all, we don't know. But this gold, silver import duty, markets are betting on. Your thoughts?
Wherever there is a betting, actually the withholding taxes goes to highest rate, 30%. And it is quite possible that at least that will happen. Whether import will come or not is, as Sandeep rightly mentioned, an issue of smuggling and whatever else unofficial channels coming. But to say that wherever there is a degree of betting happening, we will tax it. So the race horses, same thing. It's 30% tax. Same thing could happen to some.
So speculative kind of activity without okay, so that's another way to look at this. Mr. K.K. Mistry is also with us. He's, of course, veteran banker, needs no introduction. Mr. Mistry, good morning, sir. Thank you very much for joining us. We don't have to wait very long, 7 minutes to the budget speech beginning. So I guess top 2 or 3 sort of high conviction ideas, bets that you would have, hopes that you would have from the finance minister today.
All right. So I think first focus should be growth in the economy, creation of jobs. We still haven't taken into account the fact that in the next 3-4 years, we'll have a lot of artificial intelligence in India, and that could result in some challenge on jobs. So job creation, further pick up in consumption in some way or the other, because we continue to remain a consumption-driven economy. Manufacturing is critical for us. We are way behind on manufacturing compared to where we need to be. So something like an investment allowance that used to be there, or an accelerated depreciation, or some changes in the PLI scheme is something which could happen. And then capital markets. I was hearing your debate. I fully agree. I think the taxation for debt and equity should really be the same. There should be no difference between equity and debt. And also, I think Ashok said that any capital gains beyond 5 years should be fully taxed.
Mr. Mistry, if you do that, won't banks have a big problem? Or are you saying that for both?
They'll be advantaged.
No, banks will, if you
No, you need to understand that when money moves from one account to another account, or if I buy a share or you sell a share, the money moves from my account to your account.
No, Mr. Mistry, for the banker, it is not equally advantageous. You have to keep a higher HQLA in fast-moving money like mutual funds. And if it's a term deposit, you have to keep almost no HQLA. So they get to spend more, get to loan more, when they get term deposits. So they will complain if it is if interest income is not given a little bit of relief. But anyway, now everyone is asking. It's a big ask.
It's a very, very big one in that sense. But is that something you would wish may happen? But you're not. I mean, it's an idea, Mr. Mistry, right? That's what you're saying.
It's an idea. It's an idea. What I would like to see, which I'm sure is not going to happen, is some change in the individual tax rate. You bring down the maximum marginal tax rate in India. It's not going to happen in this budget, we know, but at some point in future, because that will spur investment, it will spur more confidence in the economy, and more money will come back in long-term investments, which is what we need in the country.
Okay. Well, run out of time. Thank you very much, Mr. Mistry, Anant, Sandeep, Mahesh, and Ashok, and Mr. Dinesh Kanabar. Let me toss to Shireen. She's also waiting with some guests.
Yeah, Lata, very quickly, we've got about 3 minutes to go for the finance minister's speech, but ideas there coming from the tax experts in Mumbai. Mr. Bajaj, at least a harmonization as far as debt and equity is concerned. Do you believe that they will go that far, at least in this budget, or signal the intent to do so in another budget?
I doubt.
You doubt. Even that you don't believe.
So basically on the debt side, I don't know what was being mentioned here. But on the debt side, what they have tried to do is they have tried to limit the arbitrages, because the FTs were always taxed at the marginal rate of tax for each individual. But there was this market debentures.
Right.
So they had a special tax for them. So all that has been corrected in the same tax structure. And it was done only about 2 years ago. Then,
so you don't believe that they'll unsettle that, at least at this point in time?
And then again, this claim happens that the government is not stable in its policies.
In its policy. Fair point. But to the other point, Ashok Wadhwa made a new scheme that if you're going to be investing in India for a period of 5 years or more, no capital gains tax.
I doubt.
You doubt that also?
I doubt.
Why do you believe that may not fly?
No, what I'm saying is I don't know whether this idea ever came to the government of India and the Revenue Department for them to consider.
It didn't come for you at your table.
It never came to my table, and in any case, you shouldn't be creating so many levels of taxation. If you do this, then this is it. This is what the problem with the 1961 Income Tax Act was, that there was a section which had about 50 or 60 provisions.
Right.
You can't understand what it says.
Right.
So you should have.
So Mr. Johri, Prashant is saying the market's consensus is a hike as far as gold and silver import duty is concerned, but you don't believe that that's likely to happen?
I said if it happens, it will be modest.
If it happens, it'll be modest.
It'll be modest.
Okay. And part B, the one or two things that you believe we're likely to see.
Ease of doing business, more of that, I thought. And there's a lot of buzz around an amnesty scheme for customs.
Yeah.
So it may well be in the realm of consideration. So
and I've been hearing that as well, that an amnesty scheme specifically for customs, we've had it on the direct taxes side, but for customs, an amnesty scheme will be a new one if it does come through. And that's the former CBIC chief saying he believes the time may be right for that. Sir, we just had Vinay Chatterjee saying 14 lakh crores capex budget, a 27% increase. Would that be even possible?
We don't have capacity for 14 lakh crores. In fact, last 2-3 years, the capex budget was so high that some of the departments are unable to fully spend it. So expecting a 27% hike may not be practical. It will be modest in terms of 5 to 10% because the infra pipeline, which was set up a few years ago, is almost complete. And many of the practical works have already been taken up. I don't think 14 crores can be a practical figure.
So 5 to 6% is the expectation as far as the capex budget is concerned. Don't expect 15, 20, single digit, low single digit is the expectation that the former budget makers are going with. I think we have about 15 seconds to go for the finance minister to rise in Parliament. And of course, it is likely to be, we'll see that initial burst of the opposition. Whether or not that's going to carry forward is the question. But that's the action coming in from Parliament as we wait by. But Mr. Bajaj, if they were to announce one big idea, do you think it's likely to tie in with this whole AI infrastructure, electronic manufacturing, given the Apple success story and the manufacturing export competitiveness boost?
So I would agree with that. In the last budget also, they've announced this schemes for providing money for science and technology.
The RDIF,
Yeah, RDIF. So I would say that there would definitely be some mention in the FM speech on that.
Yes, and the finance minister rising in Parliament. You see the speaker there setting the house in order. Finance Minister Nirmala Sitharaman will rise to present her 9th consecutive budget, creating history, not just for herself, but history for finance ministers in independent India. My assumption is that this is going to be a longish budget. So let's listen in.
I rise to lay on the table a copy each of the following papers, Hindi and English versions, under Article 281 of the Constitution. Report for 2026 to 2031, Volume 1, Main Report of the 16th Finance Commission. 2. Report for 2026-2031, Volume 2, Annexures of the 16th Finance Commission. Number 3, explanatory memorandum as to the action taken on the recommendations contained in the above report.
Item number 2, माननीय वित्त मंत्री निर्मला सीतारमण जी.
Honorable Speaker, sir, on the sacred occasion of Magh Purnima and the birth anniversary of Guru Ravidas, I present the budget for the year 2026-2027. Since we assumed office 12 years ago, India's economic trajectory has been marked by stability, fiscal discipline, sustained growth, and moderate inflation. This is the result of conscious choices we have made, even in times heightened uncertainty and disruption. Our government, led by Honorable Prime Minister Modi, has decisively and consistently chosen action over ambivalence, reform over rhetoric, and people over populism. We have pursued far-reaching structural reforms, fiscal prudence and monetary stability, whilst maintaining a strong thrust on public investment, keeping Atmanirbharta as a lodestar We have built domestic manufacturing capacity, energy security, and reduced critical import dependencies. Simultaneously, we have ensured that citizens benefit from every action of the government, undertaking reforms to support employment generation, agricultural productivity, household purchasing power, and universal services to people. These measures have delivered a high growth rate of around 7% and helped us make substantial strides in poverty reduction and improvement in the lives of our people. Today, we face an external environment in which trade and multilateralism are imperiled and access to resources and supply chains are disrupted. New technologies are transforming production systems while sharply increasing demands on water, energy, and critical minerals. India will continue to take confident steps towards Vikasit Bharat, balancing ambition with inclusion. As a growing economy with expanding trade and capital needs, India must also remain deeply integrated with global markets, exporting more and attracting stable long-term investment. As I begin part A, I want to express my gratitude to the people for standing firmly with us as we forge our way together towards becoming one of the largest economies of the world. Our aim is to transform aspiration into achievement and potential into performance as we ensure that the dividends of growth reach every farmer, the scheduled caste, the scheduled tribes, the nomads, the youth, the poor, and the women. In Vikasit Bharat Young Leaders Dialogue 2026, several innovative ideas were shared with our Prime Minister, which have inspired many of the proposals, making this a unique Yuva Shakti-driven budget. Our government's sankalp is to focus on our poor, underprivileged, and the disadvantaged. To deliver on this sankalp, and given that this is the first budget prepared in Kartavya Bhavan, we are inspired by three Kartavya. Our first Kartavya is to accelerate and sustain economic growth by enhancing productivity and competitiveness and building resilience to volatile global dynamics. Our second Kartavya is to fulfill aspirations of our people and build their capacity, making them strong partners in India's path to prosperity. Our third Kartavya, aligned with our vision of Sabka Saath, Sabka Vikas, is to ensure that every family, community, region, and sector has access to resources, amenities, and opportunities for meaningful participation. This threefold approach requires a supportive ecosystem. The first requirement is to sustain the momentum of structural reforms, continuous, adaptive, and forward-looking. Second, a robust and resilient financial sector is central to mobilizing savings, allocating capital efficiently, and managing risks. Third, cutting-edge technologies, including AI applications, can serve us as force multipliers for better governance. Reform Express. Our government has undertaken comprehensive reforms towards creating employment, boosting productivity, and accelerating growth. After the Prime Minister's announcement on Independence Day in 2025, over 350 reforms have been rolled out. This includes GST simplification, notification of labor codes, and rationalization of mandatory quality control orders. High-level committees have been formed, and in parallel, the central government is working with the state governments on deregulation and reducing compliance requirements. The Reform Express is well on its way and will maintain its momentum to help us fulfill our kartavya. I now move to specific proposals. Under our first kartavya, to accelerate and sustain economic growth, I propose interventions in 6 areas. 1. Scaling up manufacturing in 7 strategic and frontier sectors. 2. Rejuvenating legacy industrial sectors. 3. Creating champion MSMEs. 4. Delivering a powerful push for infrastructure. 5. Ensuring long-term security and stability. And 6. Developing city economic regions. Scaling up of manufacturing in 7 strategic and frontier sectors. Biopharma Shakti, meaning biopharma strategy for health advancement through knowledge, technology, and innovation. India's disease burden is observed to be shifting towards non-communicable diseases like diabetes, cancer, and autoimmune disorders. Biologic medicines are key to longevity and quality of life at affordable costs. To develop India as a global biopharma manufacturing hub, I propose the Biopharma Shakti with an outlay of 10,000 crores over the next 5 years. This will build the ecosystem for domestic production of biologics and biosimilars. The strategy will include a biopharma-focused network with 3 new national institutes of pharmaceutical education and research, popularly known as NIPERs, and upgrading 7 existing ones. It will also create a network of 1,000 accredited India clinical trials sites. We propose to strengthen the Central Drug Standard Control Organization to meet global standards and approve timeframes through and approval timeframes through a dedicated scientific review cadre and specialists. India's semiconductor mission 1.0 expanded India's semiconductor sector capabilities. Building on this, we will launch ISM 2.0 to produce equipment and materials, design full-stack Indian IP, and fortify supply chains. We will also focus on industry-led research and training centers to develop technology and skilled workforce. The Electronics Components Manufacturing Scheme, launched in April 2025, with an outlay of 22,919 crores, already has investment commitments at double the targets. We propose to increase the outlay to 40,000 crores to capitalize on this momentum. A scheme for rare earth permanent magnets was launched in 2025 November. We now propose to support the mineral-rich states of Odisha, Kerala, Andhra Pradesh, and Tamil Nadu to establish dedicated rare earth corridors to promote mining, processing, research, and manufacturing. To enhance domestic chemical production and reduction import dependency and reduce import dependency, we will launch a scheme to support states in establishing 3 dedicated chemical parks through challenge route on a cluster-based plug-and-play model. Strong capital goods. Strong capital goods capability is a determinant of productivity and quality across different sectors. Towards building this capacity, I propose the following. High-tech tool rooms will be established by central public sector enterprises at 2 locations as digitally enabled automated service bureaus that locally design, test and manufacture high-precision components at scale and at lower cost. 2. A scheme for enhancement of construction and infrastructure equipments will be introduced to strengthen domestic manufacturing of high-value and technologically advanced CIE. This can range from lifts in a multi-storied apartment or firefighting equipment in multiplexes, large or small, and to tunnel boring equipments for building metros and high-altitude roads. I also propose a scheme for container manufacturing to create a globally competitive container manufacturing ecosystem with a budgetary allocation of 10,000 crores over a 5-year period. For the labor-intensive textile sector, I propose an integrated program with 5 subparts. 1. The National Fiber Scheme for self-reliance in natural fibers, such as silk, wool and jute, man-made fibers, and new age fibers. Textile expansion and employment scheme to modernize traditional clusters with capital support for machinery, technology upgradation, and common testing and certification centers. 3. The National Handloom and Handicraft Program to integrate and strengthen existing schemes and ensure targeted support for weavers and artisans. Tex Eco Initiative to promote globally competitive and sustainable textiles and apparels. Samarth 2.0 to modernize the upgrade the textile skilling ecosystem through collaboration with industry and academic institutions. Further, I propose to set up mega textile parks in challenge mode. They can also focus on bringing value addition to technical textiles. I propose to launch the Mahatma Gandhi Gram Swaraj initiative to strengthen khadi, handloom and handicrafts. This will help in global market linkage and branding. It will streamline and support training, skilling, quality of process and production. This will benefit our weavers, village industries, One District, One Product ODOP initiative and also our rural youth. India has the potential to emerge as a global hub for high quality, affordable sports goods. I propose a dedicated initiative for sports goods that will promote manufacturing, research and innovation in equipment design as well as material sciences. Rejuvenation of legacy industrial clusters. I propose to introduce a scheme to revive 200 legacy industrial clusters to improve their cost competitiveness and efficiency through infrastructure and technology upgradation. Creating champion SMEs and supporting micro enterprises. Recognizing MSMEs as a vital engine of growth, I propose a 3-pronged approach to help them grow as champions. Equity support. I propose to introduce a dedicated 10,000 crores SME growth fund to create future champions, incentivizing enterprises based on select criteria. I also propose to top up the Self-Reliant India Fund set up in 2021 with 2,000 crores to continue support to micro enterprises and maintain their access to risk capital. Liquidity support. With TREADS, more than 7 lakh crore has been made available to MSMEs. To leverage its full potential, I propose 4 measures. 1. Mandate TREADS as the transaction settlement platform for all purchases from MSMEs by CPSEs, serving as a benchmark for other corporates. 2. Introduce a credit guarantee support mechanism through CGT MSE for invoice discounting on TREADS platform. 3. Link GEM with TREADS for sharing information with financiers about government purchases from MSMEs, encouraging cheaper and quicker financing. 4. Introduce TREADS receivables as asset-backed securities, helping develop a secondary market, enhancing liquidity and settlement of transactions. Professional support. Government will facilitate professional institutions such as the ICAI, ICSI, ICMAI to design short-term modular courses and practical tools to develop a cadre of corporate mitras, especially in Tier 2 and Tier 3 towns. These accredited para-professionals will help MSMEs meet compliance requirements at affordable costs. Infrastructure. During this past decade, our government has undertaken several initiatives for large-scale enhancement of public infrastructure, including through new financing instruments such as Infrastructure Investment Trust (InvITs) and Real Estate Investment Trust (REITs), and institutions like NIIF and NABFID. We shall continue to focus on developing infrastructure in cities with over 5 lakh population, that is Tier 2, Tier 3 cities, which have expanded to become growth centers. Public capital expenditure has increased manifold from 2 lakh crore in 2014-15 to an allocation of 11.2 lakh crore in BE 25-26. In this coming year, that is financial year 2026-27, I propose to increase it to 12.2 lakh crores to continue the momentum. To strengthen the confidence of private developers regarding risks during infrastructure development and construction phase, I propose to set up an infrastructure risk guarantee fund to provide prudentially calibrated partial credit guarantee to lenders. Over the years, REITs have emerged as a successful instrument for asset monetization. I propose to accelerate recycling of significant real estate assets of the CPSEs through the setting up of dedicated REITs. To promote environmentally sustainable movement of cargo, I propose to 1. Establish new dedicated freight corridors connecting Dankuni in the east to Surat in the west. Operationalize 20 new national waterways over the next 5 years, starting with National Waterways 5 in Orissa to connect mineral-rich areas of Talcher and Angul and industrial centers like Kalinga Nagar to the ports of Paradeep and Dhamra. Training institutes will be set up as regional centers of excellence for development of required manpower for these waterways. This will benefit youth in the entire stretch of the waterways to train and acquire skills. Further, a ship repair ecosystem catering to inland waterways will also be set up at Varanasi and Patna. And C, launch a coastal cargo promotion scheme for incentivizing a modal shift from rail to road to increase the share of inland waterways and coastal shipping from 6% to 12% by 2047. To enhance last mile and remote connectivity and promote tourism, I propose to give incentives to indigenize manufacturing of seaplanes. A seaplane VGF scheme will be also introduced to provide support for operations. Carbon capture, utilization and storage. Aligning with the roadmap launched in December 2025, the carbon capture, utilization and storage technologies at scale will achieve higher readiness and in end-use application across 5 industrial sectors, including power, steel, cement, refineries, and chemicals. An outlay of 20,000 crore is proposed over the next 5 years for this purpose. City economic regions. Cities are India's engines of growth, innovation, and opportunities. We shall now focus on Tier 2, Tier 3 cities, and even temple towns, which need modern infrastructure and basic amenities. This budget aims to further amplify the potential of cities to deliver the economic power of agglomerations by mapping city economic regions based on their specific growth drivers. An allocation of 5,000 crore per CER over 5 years is proposed for implementing their plans through a challenge mode with a reform-cum-result-based financing mechanism. In order to promote environmentally sustainable passenger systems, we will develop 7 high-speed rail corridors between cities as growth connectors, namely Mumbai to Pune, Pune to Hyderabad, Hyderabad to Bengaluru, Hyderabad to Chennai, Chennai to Bengaluru, Delhi to Varanasi, Varanasi to Siliguri. Financial sector. The Indian banking sector today is characterized by strong balance sheet, historic highs in profitability, improved asset quality, and coverage exceeding 98% of villages in the country. At this juncture, we are well placed to futuristically evaluate the measures needed to continue on the path of reform-led growth of this sector. I propose setting up a high-level committee on banking for Vikasit Bharat. High-level committee on banking for Vikasit Bharat to comprehensively review the sector and align it with India's next phase of growth, while safeguarding financial stability, inclusion, and consumer protection. The vision for NBFCs for Vikasit Bharat has been outlined with clear targets for credit disbursement and technology adoption in order to achieve scale and improve efficiency in the public sector NBFCs. As a first step, it is proposed to restructure the Power Finance Corporation and Rural Electrification Corporation. I propose a comprehensive review of the foreign exchange management non-debt instruments rules to create a more contemporary, user-friendly framework for foreign investments consistent with India's evolving economic priorities. Corporate bond market. I propose to introduce a market-making framework with suitable access to funds and derivatives on corporate bond indices. I also propose to introduce total return swaps on corporate bonds. Municipal bonds. To encourage the issuance of municipal bonds of higher value by larger cities, I propose an incentive of 100 crore rupees for a single bond issuance. 100 crore rupees for a single bond issuance of more than 1,000 crore. The current scheme under Amrit which incentivizes issuances up to 200 crores only, will also continue to support smaller and medium towns. That will also continue to support the smaller and medium towns. Ease of doing business. Individual persons resident outside India, PROI, will be permitted to invest in equity instruments of listed Indian companies through the portfolio investment scheme. It is also proposed to increase the investment limit for an individual PROI under the scheme from 5% to 10%, with an overall investment limit for all individual PROIs to 24% from the current 10%. Emerging technologies including AI. 21st century is technology driven. Adoption of technology is for the benefit of all people. Farmers in the field, women in STEM, youth keen to upskill, and Divyangjan to access newer opportunities. The government has taken several steps to support new technologies through AI Mission, National Quantum Mission, Anusandhan National Research Fund, and Research and Development and Innovation Fund. Our second kartavya is to fulfill aspirations and build capacities. Close to 25 crore individuals have come out of multi-dimensional poverty through a decade of our government's sustained and reform-oriented efforts. Our government has therefore decided to place a renewed emphasis on the service sector to provide a pathway to fulfilling aspirations of a youthful India with the following measures. I propose to set up a high-powered education to employment and enterprises standing committee to recommend measures that focus on services sector as a core driver of Vikasit Bharat. This will make us a global leader in services with a 10% global share by 2047. The committee will prioritize areas to optimize the potential for growth, employment, and exports. They will also assess the impact of emerging technologies, including AI, on jobs and skill requirements and propose measures thereof. To create a range of skilled career pathways, a new range of skilled career pathways for our youth, I propose interventions in the following sectors. Health. Existing institutions for allied health professionals will be upgraded and new AHP institutions established in private and government sectors. This will cover 10 selected disciplines, including optometry, radiology, anesthesia, OT technology, applied psychology, and behavioral health, and add 1 lakh AHPs over the next 5 years. A strong care system covering geriatric and allied care services will be built. A variety of NSQF-aligned programs will be developed to train multi-skilled caregivers, combining core care and allied skills such as wellness, yoga, and operation of medical assistive devices. In the coming year, 1.5 lakh caregivers will be trained. Hubs for medical value tourism. To promote India as a hub for medical tourism services, I propose to launch a scheme to support states in establishing 5 regional medical hubs in partnership with the private sector. These hubs will serve as integrated healthcare complexes that combine medical, educational and research facilities. They will have Ayush centers, medical value tourism facilitation centers, and infrastructure for diagnostics, post-care and rehabilitation. These hubs will provide diverse opportunities, job opportunities for health professionals, including doctors and AHPs. Ancient Indian yoga, already respected in several parts of the world, was given a mass global recognition when Honorable Prime Minister took it to the UN. Post-COVID, Ayurveda gained a similar global acceptance and recognition. Exporting quality Ayurveda products helps farmers who grow the herbs and youth who process the products. To meet growing global demand, a few more steps are being taken. I propose to, 1, set up 3 new All India Institutes of Ayurveda. 2, upgrade Ayush pharmacies and drug testing labs for higher standards of certification ecosystem and make available more skilled personnel. 3, upgrade the WHO Global Traditional Medicine Center in Jamnagar to bolster evidence-based research, training and awareness for traditional medicine. Animal husbandry. Livestock contributes to close to 16% of farm income, including of poor and marginal households. To scale up availability of veterinary professionals by more than 20,000, I propose to roll out a loan-linked capital subsidy support scheme for establishment of veterinary and para-veterinary colleges, veterinary hospitals, diagnostic laboratories, and breeding facilities in private sector. Collaboration between Indian and foreign institutions will also be facilitated. Orange economy. India's animation, visual effects, gaming and comics sector, AVGC sector, is a growing industry projected to require 2 million professionals by 2030. I propose to support the Indian Institute of Creative Technologies, Mumbai, in setting up AVGC content creator labs in 15,000 secondary schools all over the country and 500 colleges. The Indian design industry is expanding rapidly, and yet there is a shortage of Indian designers. I propose to establish, through Challenge Route, a new National Institute of Design to boost design education and development in the eastern region of India. Education. Our government will support states through Challenge Route in creating 5 university townships in the vicinity of major industrial and logistics corridors. These planned academic zones will host multiple universities, colleges and research institutions, skill centers and residential complexes. In higher education, STEM institutions, prolonged hours of study and laboratory work pose some challenges for girl students. Through VGF, viability gap funding and capital support, 1 girls' hostel will be established in every district. To promote astrophysics and astronomy via immersive experiences, 4 telescope infrastructure facilities will be set up or upgraded. the National Large Solar Telescope, the National Large Optical Infrared Telescope, the Himalayan Chandra Telescope, and the Cosmos 2 Planetarium. Tourism. The tourism sector has the potential to play a large role in the employment generation, forex earnings, and expanding the local economy. I propose to set up a National Institute of Hospitality by upgrading the existing National Council for Hotel Management and Catering Technology. It will function as a bridge between academia, industry, and government. I also propose a pilot scheme for upskilling 10,000 guides in 20 iconic tourist sites through a standardized, high-quality, 12-week training course in hybrid mode in collaboration with the Indian Institute of Management. A national destination digital knowledge grid will be established to digitally document all places of significance, cultural, spiritual, and heritage. This initiative will create a new ecosystem of jobs for local researchers, historians, content creators, and technology partners. India has the potential and opportunity to offer world-class trekking and hiking experience. We will develop ecologically sustainable mountain trails in Himachal Pradesh, Uttarakhand, and Jammu Kashmir. Also in Araku Valley in the Eastern Ghats and Podigai Malai in the Western Ghats. Turtle trails along key nesting sites in the coastal areas of Odisha, Karnataka, and Kerala. And 3 bird watching trails along the Pulikat Lake in Andhra Pradesh, Tamil Nadu. It's on the border. Under the visionary leadership of Honorable Prime Minister, we established the International Big Cat Alliance in 2024. This year, India is hosting the first ever Global Big Cat Summit, where heads of governments and ministers from 95 range countries will deliberate on collective strategies for conservation. Heritage and culture tourism. I propose to develop 15 archaeological sites, including Lothal, Dolavira, Rakigadi, Adichanallu, Saranath, Hastinapur, and Leh Palace into vibrant experiential cultural destinations. Excavated landscapes will be open to the public through curated walkways. Immersive storytelling skills and technologies will be introduced to help conservation labs, interpretation centers, and guides. The sports sector provides multiple means of employment, skilling, and job opportunities. Taking forward the systematic nurturing of sports talent, which is set in motion through the Khelo India program earlier, I propose to launch a Khelo India mission to transform the sports sector over the next decade. The mission will facilitate an integrated talent development pathway supported by training centers, which are foundational, intermediate, and elite levels. B, systematic development of coaches and support staff. C, integration of sports science and technology. D, competitions and leagues to promote sports culture and provide platforms. And E, development of sports infrastructure for training and competition. Our third Kartavya aligns with our vision of Sabka Saath, Sabka Vikas towards Vikasit Bharat. This requires targeted efforts for 1, increasing farmer incomes through productivity enhancement and entrepreneurship, with special attention to small and marginal farmers. B. Empowering Divyangjan through access to livelihood opportunities, training, and high-quality assistive devices. C. Empowering the vulnerable to access mental health and trauma care. D. Focus on the Purvodaya states and the Northeast region to accelerate development and employment opportunities. Fisheries. We will undertake initiatives for integrated development of 500 reservoirs and Amrit Sarovars. 2. Strengthen the fisheries value chain in coastal areas and enable market linkages involving startups and women-led groups together with fish farmer producer organizations. Animal husbandry. To provide quality employment opportunities in rural and peri-urban areas, we will support the animal husbandry sector in entrepreneurship development through A. A credit-linked subsidy program, B. Scaling up and modernization of livestock enterprises, C. Enhanced creation of livestock, dairy, and poultry Enhanced creation of livestock, dairy, and poultry-focused integrated value chains. And D. Encourage creation of livestock farmer-producer organizations. High-value agriculture. To diversify farm outputs, increase productivity, enhance farmers' incomes, and create new employment opportunities, we will support high-value crops such as coconut, sandalwood, cocoa, cashew in the coastal areas, agar trees in northeast, and nuts such as almonds, walnuts, and pine nuts in our hilly regions. These, all of them, will be supported. India is the world's largest producer of coconuts. About 30 million people, including nearly 10 million farmers, depend on coconuts for their livelihood. To further enhance competitiveness in coconut production, I propose a coconut promotion scheme to increase production and enhance productivity through various interventions, including replacing and non-productive trees with new saplings or plants or varieties in major coconut growing states. A dedicated program is proposed for Indian cashew and cocoa to make India self-reliant in raw cashew and coconut production and processing, enhance export competitiveness, and transform Indian cashew and Indian cocoa into premium global brands by 2030. Sandalwood. Sandalwood is closely linked to India's social and cultural heritage. Our government will partner with state governments to promote focused cultivation and post-harvest processing to restore the glory of the Indian sandalwood ecosystem, to rejuvenate old, low-yielding orchards, and expand high-density cultivation of walnuts, almonds, and pine nuts. We will support a dedicated program to enhance farmer incomes and in bringing value addition by engaging youth. Bharat Vistar, that is virtually integrated system to access agricultural resources. I propose to launch Bharat Vistar, a multilingual AI tool that shall integrate the AgriStack portals and the ICAR package on agricultural practices with AI systems. This will enhance farm productivity, enable better decisions for farmers, and reduce risk by providing customized advisory support. She Marts for rural women-led enterprises. Building on the success of Lakhpati Didi program, I propose to help women take the next step from credit-linked livelihoods to being owners of enterprises. Self-help entrepreneur, She Marts will be set up as community-owned of retail outlets within the cluster level federations through enhanced and innovative financing instruments. Empowering Divyangjan. Divyangjan Kaushal Yojana. Information technology, AVGC sectors, hospitality and food and beverages sectors often offer task-oriented and process-driven roles which are suitable for Divyangjan. We will ensure dignified livelihood opportunities through industry-relevant and customized training specific to each Divyangjan group. Divyang Sahara Yojana. Timely access to high-quality assistive devices for all eligible Divyangjan is a fundamental need. I propose to 1. Support the Artificial Limbs Manufacturing Corporation of India, ALIMCO, to set up and to scale up production of assistive devices, invest in R&D and AI integration, strengthen PM Divyasha Kendras, and support setting up of assistive technology marts as modern retail style centers where Divyangjan and senior citizens can see, try and purchase assistive products. Reaffirming our commitment to mental health and trauma care. There are no national institutes for mental health care in North India. We will therefore set up a NIMHANS 2 and also upgrade national mental health institutes in Ranchi and in Tezpur as regional apex institutions. Emergencies expose families, particularly the poor and vulnerable, to unexpected expenditure. We will strengthen and increase these capacities by 50% in district hospitals by establishing emergency and trauma care centers. Focus on Purvodaya states and northeastern regions. Purvodaya. I propose the development of an integrated East Coast industrial corridor with a well-connected node at Durgapur, creation of 5 tourism destinations in 5 Purvodaya states, and the provision of 4,000 e-buses. Buddhist sites in northeastern region. The northeastern region is a civilizational confluence of Theravada and Mahayana or Vajrayana traditions. I propose to launch a scheme for development of Buddhist circuits in Arunachal Pradesh, Sikkim, Assam, Manipur, Mizoram, and Tripura. The scheme will cover preservation of temples and monasteries, pilgrimage interpretation centers, connectivity, and pilgrim amenities. 16th Finance Commission. On 17th November 2025, the 16th Finance Commission submitted its report to the President. As mandated under Article 281 of the Constitution, the government is to lay the report along with the explanatory memorandum on the action taken report on the recommendations of the Commission in Parliament, which, Sir, Honourable Speaker, you've allowed me to do at the commencement of this session. The government has accepted the recommendation of the Commission to retain the vertical share of devolution at 41%. As recommended by the Commission, I have provided 1.4 lakh crores of rupees to the states for the year 2026-2027 as Finance Commission grants. These include rural and urban local body and disaster management grants. Fiscal consolidation. Government has been delivering on our fiscal commitments consistently without compromising on social needs. To strive towards accepted standards of fiscal management in Budget 25-26, I had indicated that the central government would target reaching a debt to GDP ratio of 50 plus or minus 1% by 2030-31. In line with this, the debt to GDP ratio is estimated to be 55.6% of GDP in BE 26-27, compared to 56.1% of GDP in RE 25-26. A declining debt to GDP ratio will gradually free up resources for priority sector lending and expenditure by reducing the outgo on interest payments. One of the main operational instruments for debt targeting is the fiscal deficit. I am happy to inform this august House that I fulfilled my commitment made in 2021-2022 to reduce fiscal deficit below 4.5% of GDP by 25-26. In RE 25-26, the fiscal deficit has been estimated at par with BE of 2025-26 at 4.4% of GDP. In line with the new fiscal prudence path of debt consolidation, the fiscal deficit in BE 26-27 is estimated to be 4.3% of the GDP. The revised estimates of the non-debt receipts are 34 lakh crore rupees, of which the centre's net tax receipts are 26.7 lakh crore. The revised estimate of the total expenditure is 49.6 lakh crore rupees, of which the capital expenditure is about 11 lakh crores. Budget estimates 2026 to 2027. Coming to 26-27, the non-debt receipts and the total expenditure are estimated as 36.5 lakh crore and 53.5 lakh crore respectively. The centre's net tax receipts are estimated at 28.7 lakh crore rupees. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.7 lakh crore rupees. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 17.2 lakh crore rupees. I'll now move to Part B. Part B, direct taxes. Honorable Speaker, sir, I now present my proposals on direct taxes. New Income Tax Act. In July 2024, I announced a comprehensive review of the Income Tax Act 1961. This was completed in a record time, and the Income Tax Act 2025 will come into effect from 1st April 2026. The simplified income tax rules and forms will be notified shortly, giving adequate time to taxpayers to acquaint themselves with its requirements. The forms have been redesigned such that ordinary citizens can comply without difficulty. Ease of living. I propose that any interest awarded by the Motor Accident Claims Tribunal to a natural person will be exempt from income tax, and any TDS on this account will be done away with. I propose to reduce TCS rate on the sale of overseas tour program package from the current 5% and 20% to 2% without any stipulation of amount. I propose to reduce TCS rate for pursuing education and for medical purposes under the Liberalized Remittance Scheme, popularly known as LRS, from 5% to 2%. Supply of manpower services is proposed to be specifically brought within the ambit of payment to contractors for the purpose of TDS to avoid ambiguity. Thus, TDS on these services will be at the rate of either 1% or 2% only. I propose a scheme for small taxpayers, wherein a rule-based automated process will enable obtaining a lower or nil deduction certificate instead of filing an application with the assessing officer. For the ease of taxpayer holding securities in multiple companies, I propose to enable depositories to accept Form 15G or Form 15H from the investor and provide it directly to various relevant companies. I propose to extend time available for revising returns from 31st December to up to 31st March with the payment of a nominal fee. I also propose to stagger the timeline for filing of tax returns. Individuals with ITR 1 and ITR 2 returns will continue to file till 31st July, and non-audit business cases or trusts are proposed to be allowed time till 31st August. TDS on sale of immovable property by a non-resident is proposed to be deducted and deposited through resident buyers and his or her PAN-based challan instead of requiring a TAN, which is a temporary accounting number. To address practical issues of small taxpayers like students, young professionals, tech employees, relocated NRIs, and such others, I propose to introduce a one-time 6-month foreign asset disclosure scheme for these taxpayers to disclose income or assets below a certain size. This scheme would be applicable for two categories of taxpayers, namely A, who did not disclose their overseas income or assets, and B, who disclosed their overseas income and or paid due tax but could not declare the asset acquired. For category A, the limit of undisclosed income or asset is proposed to be up to 1 crore rupees. They need to pay 30% of fair market value of asset or 30% of undisclosed income as tax and 30% as additional income tax in lieu of penalty, and would thereby get immunity from prosecution. For category B, asset value is proposed to be up to 5 crore rupees. Here, immunity from both penalty and prosecution will be available with a payment of fee of 1 lakh rupees. Rationalizing penalty and prosecution. Multiplicity of proceedings are hindrance to the ease of doing business. I propose to integrate assessment and penalty proceedings by way of a common order for both. There will be no interest liability on the taxpayer on the penalty amount for the period of appeal before the first appellate authority, irrespective of the outcome of appeal process. Further, quantum of prepayment is being reduced from 20% to 10% and will continue to be calculated only on core tax demand. As an additional measure for reducing litigation, I propose to allow taxpayers to update their returns even after reassessment proceedings have been initiated, and an additional 10% tax rate over and above the rate applicable for the relevant year. The assessing officer will then use only this updated return in his proceedings. There is already a framework for immunity from penalty and prosecution in the cases of underreporting. I propose to apply this framework for immunity to misreporting too. However, in such a case, the taxpayer will need to pay 100% of the tax amount as an additional income tax over and above the tax and interest due. Penalties for certain technical defaults, such as failure to get accounts audited, non-furnishing of transfer pricing audit report, and default in furnishing statement for financial transactions are proposed to be converted into fee. propose to rationalize prosecution framework under Income Tax Act while maintaining a careful balance for deterrence in some serious offence. Non-production of books of account and documents and requirement of TDS payment where payment is made in kind are being decriminalized. Further, minor offences will attract fine only. The remaining prosecutions will be graded commensurate with the quantum of offence. They will entail only simple imprisonment with maximum imprisonment reduced to 2 years and power to courts to convert even those into fines. There is no penalty. There is no penalty presently for non-disclosure of non-immovable foreign assets with aggregate value less than 20 lakh rupees. I propose to also provide them with immunity from prosecution with retrospective effect from 1/10/2024. Cooperatives. Deduction is already allowed to a primary cooperative society engaged in supplying milk, oilseeds, fruits or vegetables raised or grown by its members. I propose to extend this deduction to also include supply of cattle feed and cotton seed produced by its members. I propose to allow inter-cooperative society dividend income as deduction under the new tax regime to the extent it is further distributed to its members. I further propose to allow exemption for a period of 3 years to dividend income received by a notified national cooperative federation on their investments made in companies up to 31/1/2026. This exemption would be allowed only for dividends further distributed to its member cooperatives. Supporting IT sector as India's growth engine. India is a global leader in software development services, IT-enabled services, knowledge process outsourcing services, and contract R&D services relating to software development. These businesses and their segments are quite interconnected with each other. All these services are proposed to be clubbed under a single category of information technology services with a common safe harbor margin of 15.5% applicable to all. The threshold for availing safe harbor for IT services is being enhanced substantially from 300 crore rupees to 2,000 crore rupees. Safe harbor for IT services shall be approved by an automated rule-driven process without any need for tax officer to examine and accept the application. Once applied by an IT services company, the same safe harbor can be continued for a period of 5 years at a stretch at its choice. For IT services companies who want to conclude advanced pricing agreement, APA, I propose to fast-track unilateral APA process for IT services and endeavor to conclude it within a period of 2 years. The period of 2 years can be extended by a further period of 6 months on taxpayers' request. I propose to extend the facility of modified returns available to the entity entering APA to its associated entities also. Attracting global business and investment. Recognizing the need to enable critical infrastructure and boost investment in data centers, I propose to provide tax holiday till 2047 to any foreign company that provides cloud services to customers globally by using data center services from India. It will, however, need to provide services to Indian customers through an Indian reseller entity. I also propose to provide a safe harbor of 15% on cost in case the company providing data center services from India is a related entity. To harness the efficiency of just-in-time logistics for electronic manufacturing. I propose to provide safe harbor to non-residents for component warehousing in a bonded warehouse at a profit margin of 2% of the invoice value. The resultant tax of about 0.7% will be much slower than in competing jurisdictions. To provide fillip to toll manufacturing in India, I propose to provide exemption from income tax for 5 years to any non-resident who provides capital goods, equipment, or tooling to any toll manufacturer in a bonded zone. To encourage vast pool of global talent to work in India for a longer period of time, I propose to provide exemption to global, non-India sourced income of a non-resident expert for a stay period of 5 years under notified schemes. I propose to provide exemption from minimum alternate tax, the MAT, to all non-residents who pay tax on presumptive basis. Tax administration. I propose to constitute a joint committee of Ministry of Corporate Affairs and Central Board of Direct Taxes for incorporating the requirements of income computation and disclosure standards, the ICDS, in the Indian Accounting Standards, IND AS itself. Separate accounting requirement based on ICDS will be done away with from the tax year 27-28. To support Prime Minister Modi's vision of homegrown accounting and advisory firms to become global leaders, I propose to rationalize the definition of accountant for the purposes of safe harbor rules. Other tax proposals. Change in taxation of buyback was brought in to address the improper use of buyback route by promoters. In the interest of minority shareholders, I propose to tax buyback for all types of shareholders as capital gains. However, to disincentivize misuse of tax arbitrage, promoters will pay an additional buyback tax. This will make effective tax 22% for corporate promoters. For non-corporate promoters, the effective tax will be 30%. TCS rate for sellers of specific goods, namely alcoholic liquor, scrap, and minerals, will be rationalized to 2%, and that on tendu leaves will be reduced from 5% to 2%. I propose to raise the STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively. We reformed the taxation landscape for corporates in 2019 by providing them a simplified regime with lower tax rate so that they could productively focus on business rather than on claim of deductions and exemptions. To encourage companies to shift to the new regime, set off of brought forward MAT credit, minimum alternate tax credit, is proposed to be allowed to companies only in the new regime. Set off using available MAT credit is proposed to be allowed to an extent of 1/4 of the tax liability in the new regime. MAT is proposed to be made final tax, so there will be no further credit accumulation from 1st April 2026. In line with this change, the rate of final tax is being reduced to 14% from the current MAT rate of 15%. The brought forward MAT credit of taxpayers accumulated till 30th March 2026 will continue to be available to them for set-off as above. Indirect taxes. I shall now take up proposals related to indirect taxes. My proposals for customs and central excise aim to further simplify the tariff structure, support domestic manufacturing, promote export competitiveness, and correct inversion in duty. To continue weeding out long-continuing customs duty exemptions, I propose to remove certain exemptions on items which are being manufactured in India or where the imports are negligible. Similarly, to further simplify the process of ascertaining the rate of duty applicable on a particular item, I propose to incorporate certain effective rates in various customs notifications to the tariff schedule itself. I shall now take up sector-specific proposals. Promotion of exports of marine, leather, and textile products. I propose to increase the limit for duty-free imports of specified inputs used for processing seafoods for export from the current 1% to 3% of FOB value of the previous year's export turnover. I also propose to allow duty-free imports of specified inputs, which is currently available for exports of leather or synthetic footwear, to exports of shoe uppers as well. I propose to extend the time period for export of final product from the existing 6 months to 1 year for exporters of leather or textile garments, leather or synthetic footwear, and other leather products. Energy transition and security. I propose to extend the basic customs duty exemption given to capital goods used for manufacturing lithium-ion cells for batteries to those used for manufacturing lithium-ion cells for battery energy storage systems also. I propose to exempt basic customs duty on import of sodium antimonate for use in manufacture of solar glass. Nuclear power. I propose to extend the existing basic customs duty exemption on imports of goods required for nuclear power projects till the year 2035 and expand it for all nuclear plants irrespective of their capacity. Critical minerals. It is proposed to provide basic customs duty exemption to the import of capital goods required for the processing of critical minerals in India. Biogas blended CNG. I propose to exclude the entire value of biogas while calculating the central excise duty payable on biogas blended CNG. Civil and defense aviation. I propose to exempt basic customs duty on components and parts required for the manufacture of civilian training and other aircrafts. It is proposed to exempt basic customs duty on raw materials imported for the manufacture of parts of aircraft to be used in maintenance, repair, or overall requirements by units in the defense sector. Electronics. To deepen value addition in the consumer electronics sector, I propose to exempt basic customs duty on specified parts used in the manufacture of microwave ovens. Special economic zone. To address the concerns arising about utilization of capacity by manufacturing units in the special economic zones due to global trade disruptions, I propose as a special one-time measure to facilitate sales by eligible manufacturing units in SEZs to the domestic tariff area at concessional rates of duty. The quantity of such sales will be limited to a prescribed proportion of their exports. Necessary regulatory changes will be undertaken to operationalize the measures while ensuring level playing field for the units working in the DTA. Ease of living. To rationalize the customs duty structure for goods imported for personal use, I propose to reduce the tariff rate on all dutiable goods imported for personal use from 20% to 10%. To provide relief to patients, particularly those suffering from cancer, I propose to exempt basic customs duty on 17 drugs or medicines. I propose also to add 7 more rare diseases for the purposes of exempting import duties on personal imports of drugs, medicines, and food for special medical purposes used in their treatment. Customs process. India's role and share in the global trade is poised for a major leap in line with our ambition and journey towards Vikasit Bharat. In this regard, I propose many measures for custom processes to have minimal intervention for smoother and faster movement of goods and greater certainty to the trade. Trust-based systems. I propose to enhance duty deferral period for Tier 2 and Tier 3 authorized economic operators, known as AEOs, from 15 days to 30 days. I propose to provide eligible manufacturer importers the same duty deferral facility. This should encourage them to get themselves accredited as a full-fledged Tier 3 AEO in due course. To provide greater certainty and for better business planning, I propose to extend validity period of advance ruling binding on customs from the present 3 years to 5 years. In the spirit of the whole of government approach, government agencies will be encouraged to leverage AEO accreditation for preferential treatment in clearing their cargo. Regular importers with trusted long-standing supply chains will be recognized in the risk system so that the need for verification of their cargo every time can be minimized. Export cargo using electronic sealing. Export cargo using electronic sealing will be provided through clearance from the factory premises to the ship. For import of goods not needing any compliance, filing of bill of entry by a trusted importer and arrival of goods will automatically notify customs for completing their clearance formalities. This will enable goods to be released immediately on arrival. The customs warehouse framework will be transformed into a warehouse operator-centric system with a self-declarations, electronic tracking, and risk-based audit. These reforms will move away from the current system of officer-dependent approvals and reduce transaction delays and compliance costs. Ease of doing business. Approvals required for cargo clearance from various government agencies will be seamlessly processed through a single and interconnected digital window by the end of the financial year. Processes involved in clearance of food, drugs, plant, and animal and wildlife products, accounting for about 70% of interdicted cargo, will be operationalized on this system by April 2026 itself. For goods not having any compliance requirement, clearance will be done by customs immediately after online registration is completed by the importer, subject to the payment of duty. Customs integrated system will be rolled out in 2 years as a single integrated and scalable platform for all customs processes. Utilization of non-intrusive scanning with advanced imaging and AI technology for risk assessment will be expanded in a phased manner with the objective to scan every container across all the major ports. New export opportunities to support Indian fishermen to fully harness the economic value of marine resources beyond our territorial waters. The following measures will be taken. A. Fish catch by an Indian fishing vessel in exclusive economic zone or on the high seas will be made free of duty. Landing of such fish on foreign port will be treated as export of goods. Safeguards will be put in place to prevent misuse during fish catch, transit or transshipment. To support aspirations of India's small businesses, artisans and startups to access global markets through e-commerce, I am pleased to announce complete removal of the current value cap of 10 lakh rupees per consignment on courier exports. In addition, handling of rejected and returned consignments will be improved with effective use of technology for identifying such consignments. I propose to revise provisions governing baggage clearance during international travel to address genuine concerns of passengers. The revised rules will enhance duty-free allowances in line with the present-day travel realities and provide clarity in temporary carriage of goods brought in or taken out. There are honest taxpayers who are willing to settle disputes by paying all their dues, but they get deterred due to negative connotation associated with penalty. They will now be able to close cases by paying an additional amount in lieu of penalty. Honorable Speaker, sir, with this, I commend the budget to this august House. Jai Hind.
One and a half hours.
आइटम नंबर 3 माननीय वित्त मंत्री जी.
Item number 2, sir.
3.
Sir, with your permission, I rise to lay on the table of the following statements under Section 3(1) of the Fiscal Responsibility and Budget Management Act of 2003. Medium-term fiscal policy, fiscal policy strategy statement, and macroeconomic framework statement.
Item number 4, माननीय वित्त मंत्री जी.
Sir, with your permission, I move for leave to introduce the Finance Bill 2026.
प्रश्न ये कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए. जो सदस्य इस पक्ष में हाँ गए, जो सदस्य विरोध में ना गए, मेरे विचार में निर्णय हाँ वालों के पक्ष में हाँ वालों के पक्ष में अनुमति प्रदान की जाती है. माननीय मंत्री जी, अब विधेयक पुनर्स्थापित करें.
Sir, I introduce the bill.
माननीय सदस्यगण, आपको सूचित किया जाता है कि माननीय वित्त मंत्री जी के बजट भाषण की कॉपी पब्लिकेशन काउंटर पर ली जाती है. बजट भाषण और बजट से संबंधित दस्तावेज आपके मोबाइल फोन और मेंबर पोर्टल्स पर ही उपलब्ध है. सभा की कार्रवाई कल सोमवार दिनांक 2 फरवरी 2026 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है.
Okay, well, markets, of course, taking it hard. You just heard the finance minister with the budget speech. There are two clear things which I think have come through. The net borrowing number for markets is largely in line with expectations, but the gross borrowing number, which has been put out, I think is spooking financial stocks a little bit. The second point, Lata, just 1 minute. On the equity taxation front, I just want to put out, there is a STT increase on options and futures, but the expectation that capital gains, perhaps there will be some kind of a relief, has not come through. Anant Narayan, before the speech, was telling us, well, raise STT in lieu of giving some relief on the capital gains. One has happened, the other has not happened. And I think the market is clearly disappointing. There is a lot of nuts and bolt announcements which have happened, especially on the taxation front. And I think we have experts joining in who will sort of, go through each of them. On the customs side, simplification, easing out of the process of filing, etc., etc. So we'll go through all of that. But I think at a headline level, there is a bit of a disappointment. Can't take away from that fact.
No, I completely take a point on STT, which is clearly, spooked the market. STT has come, but capital gains has not gone down.
I think Samir is with us.
In terms of borrowing, that 17.2 need not worry people, because it's possible that 1 lakh crore will be through a switch or through a buyback, and therefore the effective net borrowing is only 16.2, because the net borrowing has come exactly in line with the market poll that we did at 11.7 lakh crore. So I don't think we should worry. 4.3 fiscal deficit also was as per expectation. Also, sectorally, we were expecting something for chemicals, and some of the chemical stocks are higher. There is some encouragement given to them, as well, some encouragement even given to exporters, textile exporters. But the buyback
is the clear positive. Samir is with us. Samir Arora, founder of Helios. Samir, thanks for joining in. First reaction?
First reaction is that the market will fall much more. I think we have to realize what the issue was. The issue is that we are underperforming like crazy in the world, and the world is not interested, and FIs are not interested. Tomorrow, I'm sure the currency will fall 1% more. There is no story to tell that on a Sunday, our market goes down 2%. Because the first thing is that you can't just do STT increase because maybe options is bad, futures is bad. But you can't go out of line with what the reality is today, that India is getting highlighted as a poor stock market, not so much the real economy or whatever. And in that sense, these other things matter after 2 weeks, 4 weeks, but it's not easy to get back investors at this with this kind of.
Okay, Madhu is with us as well. Madhu, your first reaction?
I think, Prashant, there was budget is in, I would say, more or less in line with what was expected in terms of consolidation and fiscal numbers. The STT increase, as Samir is saying, is a bit disappointing. But I would say at the same time, the buyback tax being cut is a good positive. Lots of companies, I would say, would prefer now the buyback route versus the dividend route. So I think by and large, just it's in continuation of whatever was happening. The only real big highlight from my perspective, a lot of emphasis on long-term employment generation on various schemes. That's the only longer-term positive which I could pick up. But from a market perspective, I think this event will be over in 48 hours.
Yeah. No, would you agree, Madhu? Samir saying markets will fall more. Today there are no FIIs. Rupee perhaps under pressure again. Would you agree with that?
Not be unfortunately.
It may fall not only because of budget or disappointing because of budget. Generally we have been little out of favor.
Okay.
And Prashant, the spate of new issuance which are even planned this year as compared with even last year, that will also suck out a lot of liquidity. So markets are in a way not been very supportive from an India perspective, and that may continue.
How big is the STT increase, Madhu? If your team has been able to tell you on options, and we have those absolute numbers, but how large is the increase?
Prashant, it is not very big because it's not done on a cash market. It's there on the options in the future market. But from more than the number, Prashant, is a sentiment dampener, right? We are already struggling. And this is a kind of a little bit of sentiment dampener. Then it really hurting in that sense.
Samir,
can we just get the buyback explained? Dinesh, Kanabar, buyback is going to be a big positive?
I think it's quite a bit positive. So until now, buyback was taxed in the hands of the recipient as normal income. We now have it being classified as capital gains for other than promoters. For promoters, if the promoter is a corporate, the overall capital gains tax will be 22.5%, and if it is individual, it will be 30%. So that's quite a bit welcome, particularly small shareholders, buyback happening, being liable to capital gains tax is very, very welcome.
I think Madhu or somebody actually mentioned that it's good because otherwise it was being taxed as dividends in the hands of the taxpayers. Now, of course, it will be taxed at a concessional rate, 12.5% for minority and then 22 or 30, depending upon...
the government recognizing, well, what happened was perhaps not...
Yeah, they moved from one length where tax was in the hands of the company. Company used to pay the buyback tax to removing it and saying it's now taxable in the hands of the taxpayer as dividend income. That was extreme. So if you were an owner, what happened to the loss that you were incurring?
So what happened is that there was a tax in the hands of the company. The corporate India represented that make it taxable in the hands of the recipient with an expectation to be capital gain. Be careful what you ask for. It got taxed as normal income. Now it's gone back to capital.
It's very positive.
Let me get in. Samir, I know you've given your, in that sense, your first initial thoughts, but some of this other stuff, buyback, and there's a long, as Madhu was pointing out, long term, I mean, what is being laid out, maybe immediately what market was expecting has not happened. But do you think this kind of allays some of the some of that disappointment?
We're not saying that what was expected has not come. This was unexpected and negative for no reason, because it is clear that we introduce STT in lieu of capital gains tax. Now the STT are increasing more and more, and and in an environment when the environment is clear that India last year underperformed markets by 20-30% in currency terms, even more maybe, and even this year just in like 30 days the currency has depreciated relative to US by 4-5% or something. I mean, in that context, this STT could have been delayed. Other things are broadly okay, but the markets are very sensitive to a few clean things, okay, maybe. But at this time when the market is already showing weakness, to add one more thing is not required. The long term, I agree. And that's why the beginning, the market itself was correctly interpreting the market rally, because the long term things, they pressed all the right buttons in terms of new sectors, new things, education, tourism, and all their, semiconductors, manufacturing, etc. But there's no need to randomly hurt the market at a time when the market is proving to be important, both from a currency point and from the exit of PE guys or whatever, leading to negative overall FDI or
So on
investment
FDI,
at that time was not required at all.
On FDI, there is a positive in terms of those who invest in data centers. They're going to be tax exempt if they sell, data outside up till 2047. Some FDI should come.
Not only that. Sorry, please.
No, that's clearly a positive. I think we had all expected that data centers would be an area where government would, provide an opportunity for long-term investment, and by dating it through till 2047. They're clearly providing clarity and certainty. If data centers were to provide services to overseas users, then income is fully exempted. But they have not kind of limited it to saying only to global. When the original FTZ policies were given, you couldn't sell it to domestic. They've said you can also sell it to domestic through a local subsidiary. So I think that's positive.
Yeah, Prashant Khemka is also with us. Prashant, Samir not holding back. Your thoughts, what's your sense? What he said is interesting, and the way he put it, which is that it is not that what was expected did not come, but I mean what has come was not expected, and that is the reason why markets are down sharply. 400 points now, 450. Prashant.
Sure, Prashant. So I think from a stock market perspective, the STT per se is not that. And Samir also pointed out, it might be more sentimental. The STT on FNO may not be as much of a negative from a cash market perspective. But capital gains tax, there was some hope, even though I don't think that people put a very high probability on it. But if there was ever a time, then investors were expecting, it might be the time that capital gains tax where India, in a way stands out amongst other emerging markets or other markets in general, there could be some hope for chances of bringing it in line with the global market. So that could be partly negative. Otherwise, I think from a stock market, from an investor perspective, there isn't a major negative or a major positive. It is continuation of what was going on in the past. Maybe there were expectations that given what's happening geopolitically, the tariffs,
it'll be tough to do very much. Absolutely, Madhu. Let me come back to you. I know you have a team which is looking at this closely. Anything else which really stands out, which you want to highlight, Madhu?
I'll have to explain. Can't write it.
Prashant, I'll just take Sameer's point.
Yeah.
One has to look at it from an overall balancing perspective. There is a lot which the government has done off budget. Let us say that 4 months back, the GST cut which was off budget, it came today. Along with the STT, it would have been treated as a big bang budget and it would have been considered as a very big positive. So I think a lot has happened even beyond budget. It is slightly disappointing and to that extent may have been avoided given the overall sentiment today. But I don't think this is like a make or break point from Indian market.
No, I don't think that is what Sameer is saying.
And the second thing, if you once will...
Yeah. Go on.
Yeah. That's exactly what I'm also saying. That, it's a knee-jerk reaction because there is some amount of also expectation which was being built up from a long-term capital gains perspective in the market. So that is also kind of discounting today as a reaction. But when we look into details, I think there's a lot which is being done in this budget, I would say, for various sectors, which is really beneficial from a medium long-term perspective. So in my understanding, from market perspective, we are back to basics. Look at individual ideas, do your bottom-up work, and that's the India story.
Okay. Let me look at one more positive, perhaps, Mr. Kanabar. NRIs have been permitted to invest in PMSs, and also the tax has been lowered.
So 2-3 things. First is NRIs have been permitted to invest through PMS and also make direct investment. They were always permitted. That the limit has gone up from 5% to 10% per NRI, and the overall aggregate limit has gone up from 10 to 24. Okay. Practically, I can tell you that we have faced this limitation when we are advising clients, and therefore this will open up an avenue. Okay. So it's quite a positive. Maybe one other thing while we are on this from a tax perspective, there are just too many things, but just one issue is on MAT. So what we are seeing here on minimum alternate taxes, government wants people to move from the old tax regime to the new tax regime. So what they have said is, if you had an accumulated MAT, which was prompting people not to go to the new tax regime, you'll be permitted to transfer, set off in a calibrated manner, and going forward, there is no MAT credit. So people will move to the new tax regime. But lots of other changes on tax side.
Okay. That is the way we have to interpret no MAT credit.
Going forward.
Going forward. Okay. But that's only for companies who are in the old regime.
Okay.
Most of the companies have already migrated to the new regime, and the thing which was prohibiting them, which was accumulated credit, is now permitted, but to be absorbed at a quarter each year.
Got it. So not to worry so much about that. Shireen, you want to come in on any thoughts?
No, Lata, just to sum it up, I think, if you had been listening to my panel of experts here, and these, as I pointed out, are the budget makers. They've been responsible for putting budgets together in the last few years. And they were very clear that don't expect any reversal reduction as far as capital gains was concerned. Don't expect anything on STT. Nobody went as far as to expect a hike as far as STT is concerned, which is what happened. But they were very measured in that expectation of any kind of a reversal, rollback, relief on long-term capital gains tax, short-term capital gains tax, and so on and so forth. But the overarching theme, Lata, as we've been pointing out, and I'm going to get my experts to comment on that, this is a budget that is reacting not just to the here and now. It's a budget that's now laying out the priorities, the focus areas for the next 5 to 10 years. Nuclear power, I told you that we're going to see a mention of that, and that's exactly what the government has done on the electronic manufacturing sector, on AI, on data centers, and so on and so forth. So there is plenty there that is likely to play out in time, but the market, of course, reacting to what the market will react to, which is the here and now. But let me get our panel of experts to get right into it. Mr. Bajaj, you were absolutely clear. Don't expect any relief on LTCG. But were you expecting an STT hike, which is what has come in for futures and options?
So I think that has come basically because there is an attempt, there's a lot of news of people actually losing a lot of money there. So something was done in the intervening period. So I think that is a measure perhaps to control that and not so much as a measure of raising revenues.
Raising revenues, my hunch was they would revive disinvestment, at least the disinvestment target, 80,000 crores versus 33,000 crores. What do you make of that?
So I would say that there are some things which are in the offing. For example, the IDBI disinvestment should happen and the money should come in the financial year 26-27. And also maybe LIC's follow-on issue might happen. So I think 80,000 crores is something which is very reasonable, seeing these two things in context. So I think the government has been very, very conservative on that aspect.
Conservative still, but a higher, much higher target that we've seen in the last few years. Mr. Chakrabarti, you know, from a overarching standpoint, what stood out for you as far as this budget is concerned?
Couple of things. At least my expectation was to retain stability. So if you see across the budget, there has not been a change to radically move from one end to the other. It reflects a government which is very matured now, has been there in power for long. They are continuing with the agenda of infrastructure. If you see, NIIF, Credit Guarantee Scheme for Infrastructure. So those are stability measures. They are provided for all the major steps that has been taken, especially towards technology, data center, and so on and so forth. So there, special impetus has been given. Again, on the infrastructure side for high-speed rails between major cities which are growth center. And those growth center, if you see in the scheme of things, have been recognized.
Yes.
And I also see a major thing. I hope it turns out to really push the economy. Is also this high-level committee on banking for inclusion and for consumer protection. I guess that is the
She also used the words of improve and efficiency and scale for a Viksit Bharat. What is the India banking sector requirement? In that context, do you believe this talk around consolidation, etc., or perhaps even hiking the FDI limit for PSBs? I mean, some of those measures may be part of now what this high-level committee looks at?
This committee, one has to see ultimately its terms of reference. Beyond FDI is already at 75%. Making it 100% will perhaps increase a little bit. It's more important that the consumer confidence is retained. Of late, those digital arrests and all those things had dented it a little bit. And not that the banking itself, however, an overall thing, and FM had referred to it. So I guess referring to consumer as such has been, I see it as a very, very positive step. And also the credit guarantee for infrastructure. And she has also talked about, this is my favorite, the bond market.
Yes, she has talked about the bond market. But Mr. Armani, let me ask you, sir, on the defense side, you know, it's I think gone up to about 5.69 lakh crore rupees. We were hoping that she would talk about it in the budget, but she hasn't. So on balance, your take on defense?
I just got confirmation that overall budget has grown by around 21%.
21%.
And the capex also has grown by 24%. This is huge. As expected, the defense allocations have gone up substantially, and most of it will go into...
And the 21% is BE to BE?
Yeah.
Okay. So just to clarify, the defense allocation is up 21% BE versus BE. So if you do BE versus RE, it will be a different number, but BE versus BE up 21%, which is exactly what you had said.
Yeah. This will certainly boost the preparedness of our military services, and I hope the defense industry will also get a great fillip through this. Apart from the allocations directly, there are other important announcements made today. One is the defense corridors, which will get boost from the 7 sunrise sectors, especially semiconductor sector. They will help the defense production to be seamless. And also supply chain problems will be sorted out because of that.
Okay, so that's the defense corridors is the other announcement. Some disappointment there. You were expecting customs duty rationalization. That doesn't seem to have been announced, but there's a lot of exemptions that have come in for specific sectors, for specific components and so on and so forth.
Yeah, Shireen, so Yes, the big ticket customs rate rationalization has not come through. But part of the reason could be that the government is banking more now on FTAs, which are also providing a huge opportunity to initiatives like China Plus One and others, which other trading partners are looking at. But there are some changes on expected lines also. For example, the change for SEZ units supplying into the RTA, I think that's a good move.
But many caveats attached to that. And what is that time period for that one-time window is something that we require clarity on as well.
We'll need to see the fine print to decipher that. But that's a welcome move in any case. And I think it will help utilize the unutilized infrastructure in SEZs. The other thing which we were expecting, which has come through, is a lot of measures on trade facilitation.
Right.
So the AO scheme has been liberalized, advanced ruling, the duration has been extended. And thirdly, which is also an important move, is that the single window remit has been extended to other border agencies. So I think these are also important in their own right.
And as we speak, gentlemen, the markets are coming off their intraday lows. Before I, get Prashant to give us a quick rundown of what's happening in the markets, let me bring in a quick first comment from Anisha, the CEO of the Mahindra Group. Anisha, plenty there for different sectors. Your first take on Budget 2026.
Shireen, good afternoon. It's an excellent budget. It focuses on sustaining economic growth and manufacturing in particular. For India to grow at a rapid pace, manufacturing has to take center stage. Viksit Bharat talks about manufacturing being 25% of the economy, which means it has to grow 16 times in the next 22 years. And the budget puts in a lot of detail that will help manufacturing, including infrastructure. And that's a huge boost. Atmanirbharta is another key factor in the budget, something that we need given the volatility in the world around us. And specifically, the rare earth corridor is a great step in that direction. And most importantly, I would say, is inclusion. With the focus on SMEs, they have to be an integral part of driving economic growth. The focus on small and marginal farmers, on youth, on capacity building, on women. So overall, Shireen, headlines from our standpoint is just an outstanding budget.
An outstanding budget as per Anisha. But Anish, what does this now mean as far as business is concerned, specifically for the Mahindra Group? You've got companies across those diverse sectors. What does it do? Does it move the needle for you across your businesses?
It helps keep us on the path we are on, because we are on a very rapid growth path. And as we look at India becoming more competitive from a manufacturing standpoint, it allows us to make in India for the world and attracts other companies to come into India as well, which is excellent for the Indian economy. So that is a huge boost. As we talk about taking leadership in hospitality, that augurs very well for a hospitality business. Our logistics business is very well placed. And overall, we see multiple sectors benefiting from this budget.
Okay, Anish, I'll come back to you in just a second. Prashant, what's happening with the markets coming off their lows?
Off the lows by 100, but we were off the lows by 200, and we've given back that 100. So it's a pretty, and budget days are, the range is anything between 1 to 5% over if you look at the last 7 budgets. And I don't think this is turning out to be that big on the extreme end, but this is big enough. That what's, of course, taken a bite out of things is that STT hike, and we put out the actual percentage increase. On futures, the STT hike is 150%, and options, STT hike is 50%. And of course, there is no relief on the capital gains front. It's not as if there was realistically an expectation that capital gains tax will be lowered, but the STT hike was not expected. And I think that is why, we've got this kind of reaction. I think if you just look at names like Angel, BSE, the entire capital market space is down sharply. They all up about 5-6% from the lows, but even then, 8, 9, 10%, depending on what you look at. The capital market index will give you that story at this point in time. So 330 points lower on the Nifty is what you have at this point in time. I think Prashant Khemka is with us still. I'm not sure if Samir and Madhu are there, but Prashant, if you want to just quickly come in with anything else you're picking up, anything else worth highlighting from an investor point of view.
Well, just quickly, I would say to my mind, the STT hike on FNO is not much of a negative for investors, certainly not for us from an overall market perspective. Yes, if you're investors in capital market, but intermediaries, like you mentioned, brokers and all, that segment may get affected. But it's a better way to, regulate participation of retail investors, get some revenues for the exchequer, rather than coming up with other non-revenue generating measures barring such activity. So that, to my mind, is not something that is bothering the market. Yes, the capital gains tax, to some extent, there was expectation. That is bothering. And second is absence of anything, that in light of what's going on the tariff front, there were certain expectations that this budget could have a step function kind of, announcements on a variety of aspects that would boost growth, economic growth, whereas this is more of a continuity budget. What has been policies that have been working for last 10, 11 years, which have given us robust growth of 6% odd. It is continue. It's a stock-taking budget. Okay, we've accomplished this, and these are all policies that have worked well. Let's continue with them.
Yeah, let me bring Sajid into the conversation. And as we do that, let me also give you some more numbers. The railway sector allocation. So if you take a look at the railway budget, up 10% B to B, that is the allocation as far as railways are concerned. RBI dividend at over 3 lakh crore rupees. That is the number there as far as the RBI dividend is concerned. Sajid Chinoy, one other number that we haven't put a lot of attention on is the 16th Finance Commission. As we reported here on CNBC TV18, the devolution staying at 41%. But what about the borrowing number, Sajid? Any concerns there that the market is picking up on?
So I think the market was expecting a smaller borrowing number, but there are two known unknowns here, Shireen. One is whether there'll be a switch by the RBI, which is also what the market was building in, and there is no clarity, and that should bring the number down. Secondly, if you at first glance, if you look at the borrowing breakdown, what you see is, quite a lot of conservatism when it comes to small savings schemes. So, if small savings tend to be higher than what has been budgeted, that creates the possibility that in the second half of the year, there could be lower borrowing. But yes, at first blush, the gross borrowing numbers higher. And I think markets are hoping that there'd be some switch from the RBI. I'll just make one more quick point on the broader math, Shireen. So no real surprises there. Some had expected a deficit of 4.2. We're close to that. We're at 4.3. I think the key is going to be nominal GDP, because this year we're clocking 8. Next year, the assumption is 10. If we do achieve a 10% nominal next year, then the gross tax assumptions at 10.4 are not very ambitious. If nominal GDP is lower, then that will take some doing. One final point I'll make is on CapEx. If the RE numbers are achieved, CapEx growth will be just 4%, because the base last year was higher. And so if you take the budgeted number on the base, it was 4. Next year's number is much higher at 11.5. But a compound annual growth rate over 2 years is closer to 7 to 8%. And I think the bigger message is, that the center has done what it has to on public CapEx. And now it's important that private CapEx pick up to fill in some of that gap.
Yeah, and I think that has been made very clear by the government that it perhaps has reached its peak in terms of being able to enhance that CapEx number, the point that you're making, Sajid. Let me also bring in Debashish Panda, former chairman of the IRDA and also a budget maker. Now Kartavya Bhavan, you can't call it North Block anymore. Mr. Panda, your big headline from Budget 2026.
I think it's an outstanding, excellent budget, particularly when we are navigating through very, very difficult circumstances, uncertainties, challenges. What interests me is that the finance minister mentioned about the structural reforms, which will continue and which are very necessary. The other big thing that she talked about is a stable and a very robust and resilient financial sector. And in that context, she even spoke about, setting up a high-level committee to look at the banking sector in the country and how to take it forward in terms of aligning it with the vision of Viksit Bharat 2047. So I think that itself is a big message and a signal that maybe there'll be a lot of new things we will see in the banking system, bigger banks, more consolidation maybe, or even allow the corporates enhance the FDI. All of that could be possible. And actually, we need a strong banking sector to achieve the larger goal of Viksit Bharat by 2047. And then, the capital expenditure spending on infrastructure, as we all expected and we discussed the other day, has been given the priority. And what she has done is that she has taken care of each and every sector which will benefit. The MSMEs in particular are being given a lot of attention with a variety of interventions. Then, of course, the rare earth corridor, the rail corridor, all of that, again, I think will give a big fillip to also position India as a leader in the global value chain as well.
Yes, many measures there, 10,000 crore rupee fund for SMEs, and of course many linkages to the TREADS platform and so on and so forth in continuation of the earlier measures. But I want to get all of you gentlemen to comment on what the government has attempted to do to try and draw in flows. And Mr. Panda, I'll start by asking you, the changes to the investment limit made for PROIs to be able to invest in Indian equities, and some of the other measures, for instance, capital gains relief for people who want to do data centers and so on and so forth, cloud services till 2047. The long-term strategy of this budget to try and draw in flows and investors. What would you say were the big highlights there? Mr. Panda?
Yeah. So, I thought the question was for Mr. Chenoy, so I lost. Could you please recap the question?
No, I was just saying the measures to try and draw in foreign investors and foreign flows. Does the budget deliver on that?
I think much more needs to be done in terms of, I think the previous speaker spoke about the markets, the stock markets, how capital gain reduction could have actually been a big benefit to the stock markets in terms of attracting more, money into that segment. But having said that, the FDI has recently been opened up in the insurance sector. I think the structural reforms would also look at opening up in other sectors wherever necessary, of course, keeping those safeguards. But clearly a signal towards, attracting more capital, whether it is in the form of FDI or FPI or in the form of equity. So all of that is necessary for us to, for the country to grow at the rate at which the projections have been made.
Interrupting you, sir. My apologies, I'm interrupting you because we have the first government reaction now coming in after the finance minister has delivered the budget. The CEO of the Niti Aayog, BVR Subramaniam, joins us. Mr. Subramaniam, many thanks for joining us. Several sectors being addressed, several measures being taken. Of course, the thread of continuity running through the course of the budget. Your highlights and what you believe the maximum impact is likely to be on account of Budget 26.
This is a budget of a middle-income country. That's the first thing. And this is a budget for Viksit Bharat. And you can see very large elements, and the finance minister laid that out very, very early on. She talked about three kartavyas. The three kartavyas are for economic growth, aspirations, and inclusivity across regions, individuals, communities. And within that, I think if you should see the three budgets of the last year and the year before as a package deal. The budget 2 years ago was all about jobs and employment as the key focus with supportive things. The previous budget was a lot of manufacturing. If there is one big area of focus in this budget, it is services. So if I was to give a name to this budget, it is a services budget and continuing the good work of the previous two budgets, which is manufacturing and jobs and employment.
Let me double down on that. Why do you believe that this is a services budget, sir? Because there was a lot in the budget to also try and push the manufacturing sector more. What specifically makes you believe that this is a services budget?
Okay, just wait for the key highlights of the budget come out. The maximum number of pages are devoted to services, number one. Number two, just let me explain what all are there. First of all, the Prime Minister has announced a high-level standing committee, which is not a one-time committee, a standing committee on services. That is expected to drive a whole host of services reforms. So unlike a manufacturing mission, services actually requires a large number of issues to be tackled over 30, 40 ministries. So she said that she'll be creating a standing committee. 2, look at all the sectors that she's been covering. I mean, in services, she has talked about the entire health sector, 5 medical hubs, medical tourism. In education, she's talked about 5 university cities. What are these university cities? They are education hubs where you have universities, you've got research parks, you've got manufacturing, all in those places. She's given a lot of attention to tourism. She's given a lot of attention to Ayush, 3 All India Institutes of Ayush. She's talked about sports and talked about a Khelo India mission. She's talked about the orange economy and the Indian Institute of Creative Technology and creating and setting up these creativity centers in 50,000 schools and 500 colleges. All this, I think, put together makes this a very, very, very strong budget, pushing the services sector. And it's not that manufacturing doesn't get important. We are building on the work of the previous budget as far as manufacturing is concerned. The National Manufacturing Mission was announced in the previous budget. It is in the final stages and should get operationalized any moment from as we speak. And there you have biopharma, which is an add-on. You have the electronic component scheme, which is a build-up on an earlier scheme which was announced last year. It was hugely successful. She's expanded it from 25,000 crores to 40,000 crores. There is a mention of a container program, huge emphasis on labor-intensive textiles, sports goods, and you can see the manufacturing builds on what was announced last time, and the new emphasis and focus is on services. We are not talking about health, education, etc. for servicing our population alone now. We are talking about making India a global services hub and she gave a very clear target, 10% of global services output to come from India. That's the goal she's laid out.
Yes, and that is why, in your words, this is a services budget. The finance minister laying out that aspiration of 10% of global services to come from India. But on manufacturing specifically, sir, I want you to put on your former Commerce Secretary hat as well. The expectation was that we would see a significant further import duty rationalization. That has not been the case. There are, of course, specific exemptions to specific sectors, for instance, nuclear power, cloud service providers, and so on and so forth. Do you believe that hasn't been done on account of the fact that various FTAs are being inked and are at various stages of being implemented?
Look, we already now have FTAs with almost, 1/3 or more of the world economy. We've got FTA with EU, we have FTAs anyway with Japan, etc. We have FTA with UK. There is a deal in the pipeline with the United States. The FTAs are anyway going around cutting tariffs. The residual tariffs are now left with countries with whom we do not want to or may not want to get into FTAs. Having said that, look at the amount of time she has spent on the indirect taxes part. There's been a lot of tinkering. They're all removing pain points. Take electronic component. For warehouses, she's cut down the tax structure to 2%. She's allowed greater import for a large number of export-intensive sectors like leather, textiles. She's allowed, I think, 5% of their export value to be imported for a lot of other inputs which are there. So I think there's a lot of tinkering that has gone on to help manufacturing as far as inputs are concerned. And on the direct taxes side also, you'll see that a lot of direct taxes are targeting foreign direct investment. People are, the word may or may not appear too often, but you look at the safe harbor rules, the expansion of the safe harbor to companies up to 2,000 crore turnover and fixing the safe harbor at a lower rate of 15% actually is targeting the global capability centers. 1,600 GCCs are going to benefit from that safe harbor provision. They've also decriminalized a lot of income tax provisions in an act which is yet to come into place from 1st of April. So that's actually a very, very forward-looking step she's taken. And then she's also reduced the safe harbor for people who are going to take up presumptive taxation. So I think, and even for SEZ, she's given a one-off relaxation in being able to sell in domestic tariff areas. So rather than, the big things have already been done. What needs to be done is these minor pain points, and she's going around removing it. And the other thing is, she has talked about setting up a committee to look at the forex debt borrowing rules and regulations. So we have so far been focusing only on FPI, which is equity. She's focusing on debt as well. So as that committee comes out with its results, you will see an improvement in the foreign investment flows into the country also.
No, very important points. And I think that point on safe harbor is very well made, Mr. Subramaniam. This has been a point of friction. And I think the finance minister has alluded to some of those concerns and tried to allay them in this budget. But Mr. Subramaniam, there was another mention by the finance minister. And I'm wondering if you have any more clarity on what this restructuring of PFC and RFC could potentially mean, because those were the two companies that she listed out that are going to be up for restructuring. Any idea, sir, on what the plan is?
You see, I think that we will need a bit more clarity as we go along, but the way I look at it is one of the challenges of Viksit Bharat is also going to be sustainability. So there is going to be a lot of retooling of our energy sector, and the retooling of the energy sector requires a lot of green and climate finance. So this green finance, if it has to come through, it has to come through existing financial institutions rather than setting up new institutions. So when she talks about this, the way I would read it is enabling these companies to become the funnels for getting a lot of green finance, climate finance into India, into the energy sector, the transport sector, because climate change in India is going to be resolved largely through electrification of entire energy system. And who are the big financing agencies as far as electrification is concerned? REC and PFC. I think that's the way I would see that. I'd like to draw your attention to one more point, which people may or may not. She talked about city economic regions. This is actually the work of Nifty. Nifty has prepared city economic region plans for Mumbai, Varanasi, for Visakhapatnam, for Surat, and we are going to release one on Bhubaneswar. 7-8 more are in the pipeline. And she said, I will give 5,000 crores for city economic region in a challenge mode. This will then enable these cities to actually compete and become global cities like New York, London. So we can have Bombay becoming a New York, we can have Surat becoming, say, Amsterdam, you can have Visakhapatnam becoming a Singapore. I think that is the intent behind the city economic region announcement. The 7 areas of focus she announced in the beginning had city economic regions as one of them. So if this budget has to be remembered, A, services, removing a lot of pain points in taxation, both for foreign investment flows and promote manufacturing, particularly for exports. And the third is focusing on critical infrastructure in various parts, that is cities as economic regions. She's talked about 7 high-speed rail corridors, which means the bullet trains are going to stay. We're also going to produce bullet trains in the long run in the country. And the third is for Purvodaya, for the eastern region, a large number of announcements, and the most important one, a new dedicated freight corridor. Dankuni, please read it as Calcutta. Dankuni is the point at one end up to Surat. That's east-west. We have Delhi-Mumbai, we have Delhi-Calcutta. She's completing the triangle, Delhi-Calcutta, with a lot of other projects going with that. This is going to give a big boost to industrial and other services growth in eastern India.
No, absolutely. You very comprehensively summed up many of the other important announcements that came in from the finance minister, of course, including things like a 10,000 crore rupee allocation for container building. That is another sector that has been identified. Also for ship repair, another sector that's been identified. Mr. Subramaniam, we will come back to you, sir. As we see that manufacturing competitiveness report finally being made public. But thank you very much for your first reaction here on CNBC TV18 on the big day, the budget day, for comprehensively summing up Finance Minister Nirmala Sitharaman's 9th budget. Thanks very much. Lata, I know you've been waiting by for a quick clarification as far as the borrowing number is concerned.
Yeah, actually, the bank stocks are down and they're all worried that 17.2 lakh crore was not something the market was prepared for. It was outer limit 17, but, our own poll was 16.2 lakh crore, with several people expecting even lower. So that has rattled the market. Now, in the past, when we've had higher small savings, a part of that money has been used, even when it is not announced in the budget, for buybacks later in the year. So if, some 80,000 crores, 1 lakh crore is done by way of buybacks, this 17.2 may not be borrowed and it may be closer to our poll figure of 16.2. The market will rest assured. But at the moment, there's no such guarantee. So when you meet the Revenue Secretary later on, perhaps this kind of a clarification will help. The 17.2 is disturbing the market. But all other numbers are extremely healthy. Only 10% of nominal GDP growth assumed. The market was prepared for 10.5 as well. The GDP will be recast. We may get a larger GDP number. So all those upsides are still left and the bond market need not worry. But at the moment, these points are 17.2 is a bit of a worry, and that's casting a bit of a dampener on bank stocks, NBFC stocks. But there are positives for the rupee not now, but in the longer term FDI flows for data centers and other advantages given. Mr. Kanabar, if you can quickly summarize that.
So, three things. First is the safe harbor, 15.5%. And while it is restricted to those with an income of up to 2,000 crores, it's a very good precedent.
For GCCs.
For GCCs, IT-enabled services, everybody, a good thing. Data center right up to 2047, foreign income totally exempt. If you are rendering services locally, use of Indian subsidiary, let the subsidiary pay tax on their profits, but overall foreign company not liable to tax. And finally, on toll manufacture, tax holiday for 5 years. All three are very, very welcome.
Which explains why ACMS is higher, because it's a tool manufacturing company. We now have Nilesh Shah of Kotak AMC and Navneet Munot, the CEO of HDFC AMC, joining us. Gentlemen, thank you very much for your time. Nilesh, the STT has killed the market's joy for now. 20%. But your first thoughts?
So undoubtedly, let the STT increases beyond expectations of the market. But in some sense, it is the syntax of the market. 9 out of 10 retail investors were losing money. The benefits was mostly going to the HFTs. Undoubtedly, government had to take some step. We can only pay that STT and capital gain. STT was introduced in lieu of capital gain. With increased STT, the Honorable Finance Minister may look to reconsider capital gains taxation. But one important thing of this budget, the proposed capital expenditure at 12,10,000 crore is more than the net market borrowing program of 11,70,000 crore. I think this is first time in my life I am seeing that capital expenditure is more than the net market borrowing. I hope one day we'll be able to see a scenario where capital expenditure is more than net market borrowing as well as small savings.
I just had a question.
Well, even last year, the difference was not very much. I think it was about 10,000 crore. Net market borrowing also was about 11 lakh crore last year. And we had CapEx expenditure above 11 lakh crore. But go ahead.
No, I just want, Mr. Kanabar, there was a question which is coming in. STT hike is only on equities, not commodities, right?
It's only equities.
Only equities.
Only equities.
Yeah, she said futures and options.
Yeah,
no, but
on futures,
future and
commodities have options as well.
Yes. No, it's only on
not on commodities. It is only on equities. So we
also,
should
they've just clarified that any interest that you pay to earn dividend income or mutual fund income will now not be allowed as a deduction.
So they had a 20% expenditure allowed by way of interest on the dividend income. That's gone.
So that's the reason capital markets may be getting a little spooked. Because
actually,
no
I
deduction.
think the correction came from Delhi and we have flashed it. It's not for commodities.
Okay. Sorry, could you just repeat that once again?
So today, if you have dividend income, if you borrow money and invest in a stock and you get dividend income, or you borrow money and invest in a mutual fund, and you get income from the mutual fund, the interest that you pay was allowed as a deduction up to a point.
Up to 20% of the dividend.
Now it's been removed.
Is that a big change?
But for those who are interested in passive income and who borrow to earn passive income, for them it's now no longer a option available.
Okay. Well, to get back to markets, Navneet is waiting by. Thank you, Navneet. Any salve on a slightly wounded stock market sentiment?
It's listed and unlisted both.
Don't go by the immediate reaction. Markets are spooked because of the STT, but I think overall, what she mentioned in the first paragraph, reform over rhetoric, action over ambivalence, and people over populism, I think I would have summarized in a similar manner, but she herself said before presenting the budget. So I'm in a glide path towards lower debt to GDP, continued focus on infrastructure, which includes digital, physical, social, continue to, the ease of doing business, improving the quality of life to make the most of the demographic dividend. I think all of them are structurally positive, and particularly on the buyback, because all of us, Lata, we have been discussing that the cash is getting piled up in the corporate balance sheet. So either they do the capex, which I think some of the tax incentives on data center and few other things should spur that, or you have maybe a way for corporates to use that cash and it comes back into the circulation, which can help the economy. So I'm pretty positive. Of course, I think there were more expectations on capital gains and to support the capital market, but we have to take that in stride.
Yeah, no, I agree with you. Actually, it's quite possible that, the positives are going to flow later. Investment in data centers. This is not going to come overnight, but the negative STT hits now. So, to that extent, the market is a little worried about the short-term negative, and it's quite possible the safe harbor that Mr. Kanabar mentioned on GCCs, all this could mean more services investments flowing into GCCs soon. I'm extremely gratified by the fact that aggressive assumptions have not been made on nominal GDP growth or on taxes. Therefore, perhaps extra borrowing will not happen. The borrowing, if anything, will be lower. Shireen, anything more to add from your guests?
I'm going to get my guests for a quick comment, but I wanted to get Nilesh since we do have him. Nilesh, in the morning when you were with us, you said you were hoping for a Digi Yatra, a frictionless entry for both domestic and foreign investors. Has the finance delivered a Digi Yatra?
I think it is Digi Yatra in initial phase where there will be some glitches and some hiccups. As Navneet mentioned, a lot of proposals have been talked about for investment, but we finally need to get it executed. So let me say this is the first phase of Digi Yatra. There will be some hiccups, but you'll have to persist with it.
No, absolutely. We do have to persist with it. Let me get my wrap-up comments from our budget editors who've been patiently with us through the course of this month. Mr. Bajaj, let me start by asking you, on balance, if you look at the budget math, you look at the budget numbers, this government has delivered on its budget math. So how does it fare on that front? And on the intent and direction of reforms, what would you have to say?
So I would say on the budget numbers, the government has been very careful of giving the right numbers, which was a blame that the media would put on the government a few years back, which is not the case now. And if you see the growth in the total expenditure, the revenues, and even if you look at the fiscal deficit and the ambition that they have shown on debt to GDP is very, very limited. And I think on all these things, the government needs a pat on its back that it has not played around and tried to show in the budget something very nice picture, and at the end of the year, it doesn't come out to be true. I think what it has said, it can only improve from what it has said and not go lesser than that.
And on reforms and the direction, the path forward?
So reforms, I think, is now a continuous process, as the government and the PM has been saying that. So we've had the labor reforms, we've had the nuclear bill going through. I think it is a process which has been mentioned in this budget. For example, these two aspects I like to call out. One is the, which your Bombay guest said, on data centers and GCCs.
Yes.
These were two major demands. They are leading to a lot of employment, a lot of investment into the country. And these things were the real pain points for them. And I think it's a great step on the tax authorities to do that.
Absolutely, a good step there to allay those concerns. Mr. Johri, on balance, your big highlight of what this budget could mean for the economy.
I think on the indirect tax front, I would again call out manufacturing resilience. They've picked up on sectors that were affected by tariff tantrums, particularly labor-intensive ones. You have leather, you have textiles for which relief has been given. Also, futuristic and new age kind of industries where relief has been given, some element of relief for climate change, nuclear energy, for example, has been given, those projects have been given. So overall, I mean, the trust is fine. They've not upset the apple cart. They
haven't upset the apple cart. The final word to you, Mr. Chakrabarti. How do you walk away from our budget headquarters today?
Well, as one sees, it's very realistic budget. It carries on the assumption on the tax front worries me a little bit because it's 7.8% B&B, if the numbers that I see are correct. I guess perhaps that assumes some lower aggregate demand.
Okay.
And as you say, industry instead of heavy lifting is just doing lifting. I wish it does the lifting at least. And the demand on LTCG and STT goes away. Because that leads to, and buyback is also a very good step because that money should actually go by way of dividend if they don't have money to spend, or actually put it in projects. Otherwise, a lot of shareholder money then is taken up by promoters and leads to inequality in the entire setup, which is a major concern, has been addressed. So it's a structural impact that makes on the overall inequality in the system. So in a sense, a very positive and right step. And if you ask me, as I had mentioned before, this high-level committee on banking, on the manufacturing side, on the infrastructure side, capex has been retained up to the level that could possibly be retained. And on debt side, yes, it's been kept within the limit. I always expected a glide path to be sharper. But however, there are real exigencies and expediencies.
But thank you so much, Mr. Chakrabarti, Mr. Johri, and Tarun Bajaj for joining us here on CNBC TV18 through the course of the budget month and for being our budget editors. Appreciate your time. Let's go back to the markets now. Prashant.
Shireen, 170 lower, which means that, yes, there is slowly a bid emerging at lower levels. It has been there. And we've cut our losses in half. We're down 400 plus actually at the day's low, and we're down a lot lesser. Capital market stocks, etc. After the initial shock, after the initial impact, they're also all coming back. But remember, this is only domestic investors today, right? I mean, there is no FII in the market, no FPI in the market. So will that make a difference? In what way? I think there is one viewpoint, Samir Arora earlier telling us that. And of course, there is the other viewpoint that this is going to be a 48-hour thing, like many budgets have been in the past, and then we kind of sort of start to move away. You know, just to Mr. Kanabar, if I can ask you to just summarize, to your mind, right? I mean, directionally, what does this budget tell you, and what will stay with us beyond the 48 hours?
From a pure tax perspective, if I may tell you, Prashant, the new bill has just coming into law from 1st April, and we already have 90 amendments to that. Fortunately, all of them are very, very positive. Lot of simplification. So the TCS rate going down from 5 and 20% to just 2%, very, very welcome. Lower TDS rate to be automatic. You don't need to go to a tax officer and apply. One very interesting thing which was on voluntary disclosure for foreign assets. So most of the software companies have people who go overseas, work there, get ESOPs, come back, and maybe they have not declared those ESOPs inadvertently, whatever. You now have to pay just 30% tax and move on with life. So again, very, very simplification, very welcome.
I mean, this would apply to, say, if you're working in India, say, for example, for a foreign bank, and you get ESOPs of the foreign bank.
No, other way around. Yeah, it could apply to any foreign asset.
But that would be typically declared, right? No, from if you're a working professional.
Okay. That people who go overseas for 2-3 years, and have left something behind. We have seen examples where people have come back and have not declared whatever options they've got overseas. Okay. So those are the ones.
Sorry, Prashant, just to clarify.
The CDMO, I feel that is important because many of the companies are APIs, you said, are in CDMOs. Ashok, you want to clarify which companies could benefit?
Yeah. So, you know, the legislation that seems to have got announced is that toll manufacturing will now get a 5-year tax exemption. So we have lots of companies in chemical, specialty chemical and pharma sectors that actually are now what we call CDMO producers, where they manufacture or develop products really for global companies, whether it is APIs or other products.
Okay.
Currently, they're doing it as a part of their existing entity. I mean, Acom's is just one example of that. But there could be other companies like PI Industries.
Many of them.
Many of them, particularly in the chemical sector, specialty chemical sector. Now, ideally, what they would do is set up a separate subsidiary to do their export toll manufacturing. And if they do that, subject to seeing what the fine print says, then that income will be tax exempt for 5 years. Today, they're paying full tax on that. They're paying 25%
It becomes competitive in that.
It becomes a competitive investment. In some sense, it may be coming out of the tariff imposition and saying, you know, what do we need to do to make our local companies competitive? But it's a very smart suggestion.
Actually, I wanted to toss that to Nilesh. Nilesh, you know, we are seeing some of the pharma companies and the CDMO companies doing well. Is this a hidden positive which the market's not noticing and it'll be positive for them?
Undoubtedly, you can always trust Ashok Bhai to bring out hidden gems. And I'm sure this is something market will notice for the pharma and CDMO space. Anyway, they have a positive momentum, and this will increase the post-tax profit in the hands of shareholders.
Okay. Navneet, any gem you noticed on these lines? I mean, pharma is doing well. Some of the CDMO companies could, if they, differentiate their exports and their domestic sales. You see any positives for any companies? I mean, buyback also has been made a little more attractive.
I think it's one balanced, beautiful budget. The big and I mean, global environment doesn't give us the flexibility to be really big and bold. I think we have to navigate the environment cautiously. But at the same time, I think it's been quite bold in terms of continuing the path of reforms. There's a lot of minutes spent on tourism in various ways, whether it's health tourism, medical tourism, whether the cultural and the spiritual tourism. I think we underestimate the potential of that, even from a job creation perspective. And also, I think the data center, it can really be very big. Data centers require power, land.
Navneet, I just have a question there. I mean, this data center, I was just thinking, right? If you are, say, for example, a Meta or a Google, right? Would you, and everybody's careful about data privacy, etc. Would they store their data in India for global customers?
Of course, I think we need that sovereignty and we need that, over a period of time to get these people and compel them for data localization, whether it's the sovereign or even the private sector. Over a period of time, we need sovereignty on this and must ensure that they put up their data centers here and both the public and private sector keep that data inside.
There's another thing, Nilesh, the announcement that there is going to be a high-level committee for banking reforms. We should read a lot into that, isn't it? Ownership and control, maybe the 26% voting rights, all that could be taken off. I mean, it's a high-level committee. They're laying a great store on building on what is now a very healthy banking system. Your thoughts?
Undoubtedly, to grow, you require investment. To make investments, you require a banking system which can channelize savings to investment. We are also seeing transition where savers are becoming investors. And if our banking system is not ready for future, Viksit Bharat can never happen. I hope and pray this high-level committee on banking, which is a standing committee and not a one-time committee, discusses all these aspects with regulators, with participants, and with market. And we truly lay a foundation for Viksit Bharat, which is enabled by its own banking system, its own savers.
Listening in, and when the data center thing was, you want to add something?
No, I think if you were to ask me before the budget, what were the two big opportunities, I would say GCCs and data centers. I've repeatedly said that. And in many ways, the budget has addressed both those quite adequately. The toll manufacturing is actually an add-on because we were all focusing on services. But I think there is recognition that in view of tariff and everything else, India needs to be more competitive.
This 40,000 crore allocation for electronic components, semiconductors, etc., right? That has been announced.
Yes.
Which is components as well, EMS, PCB assembly, box build, etc. I think meaningful increase in allocation?
Yeah, certainly meaningful increase in allocation, particularly because nobody was expecting this to happen.
But how does it come to the listed companies? We have to wait and see.
We'll have to wait and see.
Okay.
What the conditions are. We need to just see the preconditions that they need to satisfy. But I would argue if I look at the stock market and if some people have read it, then some people like Amber and Keynes seem to have been in the product range where this applies. Dixon had moved up when the initial announcement came and then seems to have corrected downwards. So perhaps their focus on iPhones is not getting the traction.
Mr. Kama, we interrupted you the last word. Quickly, if you want to
just one other small thing. There has been this whole issue on tax litigation where if an officer makes an addition, you got to pay 20% tax before you appeal. That's now gone to 10%. Very, very welcome.
Okay. Well, thank you very much, gentlemen, for throwing light so quickly on so many things. I just want to add that the math of the budget is perfect. Our poll said 10.1% nominal growth. The budget has come with 10%. Our poll said 4.3% fiscal deficit. It's 4.3. Our poll said net borrowing will be 11.76. It has come at 11.7. So budget is not trying to be aggressive in any of the numbers. Back to you, Shri.
All right, thanks very much. The first reaction now from the CII, CNBC TV18 budget headquarters. Rajiv Memani, what did you like from what the finance minister delivered?
I would say that it's very much in continuation of the earlier budget. So you can see a very clear thrust on manufacturing and identifying the 7 sectors that go after. A lot of thrust on infrastructure, MSMEs, on tourism, and also a lot of labor-intensive sectors. Yeah. So I think you saw a focus on manufacturing and others, but we also saw a lot of focus on the labor-intensive sectors like tourism, textiles, and areas like that. And what I liked, Shireen, was that in earlier budgets, you always saw a number. This time, I think a lot of it was ecosystem, a lot of it was skilling. So, they're building those big blocks, and then the benefits that they've given to electronics manufacturing, the tax simplification on IT services and data centers, I think those are all very positive.
Positive. Vinayak Chatterjee, you've got a notebook out now. So in terms of numbers, the big takeaway for you on the CapEx side, high-speed rail, the big announcement coming in there as well, and of course, freight corridors.
So I'm not disappointed on the capex side because, I was looking at a high number, as you well know,
yes,
and others well know, at 14 lakh. And instead of that, we've got 12.2, which is an 11% increase in last year. But I'm not disappointed because as I was walking in, I was briefed that you shouldn't just take 12.2 at face value. Add the grant in aid to states, which is that 50-year free money for infrastructure, and add many of the announcements on social infra, like those 5 university townships and all of that.
Yeah.
And you'll possibly come to a figure which might actually exceed my expectation of 3.5%. So let me do the maths and get back to you in the next few days. But what I liked about the budget was 2 very clear dominant themes in infrastructure. The first was a complete focus on rejuvenation of tier 2 and tier 3 cities of India, which are crumbling. And a lot of measures there. I won't take your time outlining them. And the second thing was a very major transformational agenda for Indian Railways, which is now forcing them to actually look and implement 7 high-speed rail corridors across the country. Now, remember, high-speed rail is just a shade lower than the bullet train. So 7 new high-speed rail corridors will be a transformational agenda for the Indian railway traveling public. And very quickly, there are 4 other sub-themes. Social infrastructure, many issues there. Coastal and inland waterways, once again resurrected. Financial restructuring, PFC, REC. And finally, specific tax benefits for nuclear, biogas and CNG.
Also the municipal bond measure.
Big. 100 crore incentive to a city that does 1,000 crore bond issue is a 10% incentive. I mean, it makes the whole bond issue very viable for the financiers. And it says that the scheme for smaller cities continues to exist under the Amrit scheme. So big fillip to municipal financing.
Okay. CB, the big takeaway for you?
So you heard some of that, but to me, I think India has stayed on the course of fiscal and economic prudence. I think the fiscal deficit, the debt to GDP ratio, these are very, very important global signals in today's world. I think I look at it, the macro picture, a good health of the economy and good prudence. That's one. Second, I think, when we talked about boost to the manufacturing and the SME, that was pretty much there and that was pretty much required. But to look at who will finance it, the banks, and to look at and when we need bank consolidation, etc., etc.
So you believe that is why this committee has been set up, is to essentially look at the whole area of bank consolidation, public sector bank consolidation.
I would imagine so. That was the second big point that I saw. Vinayak spoke about infrastructure, but I see through that infrastructure the cost of doing business, the logistics cost, and therefore our competitiveness to the world getting very well connected. The fourth part is I see sectors called out for which are job creating, and the way the focus on skills and connecting that to tourism, etc. I found that to be good, innovative, and last I would think it is not forgotten about while it talks about health. Again, you see the connectivity to the future of health.
The medical hubs,
tech, the AI,
and medical
all
tourism.
Of that. I find that to be very, very, quite standing out features.
Okay, Mr. Mukundan, what stood out for you for Budget 26?
So firstly, I think it keeps in what I've been highlighting, that this budget must be build-forward budget, not a big bang budget. And it's been a big build-forward budget, and especially focusing on external challenges on the external front. I think what they've done is to integrate even more tightly with the international market. And for that, what they've done, firstly, give a boost to exports, at the same time, get investments from overseas. When it comes to boost to exports, it is not just signing the FTAs, but also backing that up with custom elements. In addition to also the procedures, they focused a lot on procedures to make sure it is done. At the same time, I think this budget highlights 2 other areas which are focused, which is greening If you look at the slew of measures which have been announced, each one of them is towards biogas. When you talk about nuclear power, when you talk about the sodium anti-money for the solar panel, it is so focused on green products that it's very, very sharply towards greening. And lastly, I think Chandrajit already highlighted about skilling. There's a whole
in different sectors.
Not just different sectors. She's actually linking education, employment and entrepreneurship for the first time and bringing a holistic approach to how do we make this work.
Right. No, absolutely. Rajiv Memani, let me, before I know you're tied up, all of you need to be elsewhere, but very quickly on tax, buyback as well as the safe harbor changes that they've made for cloud services. How significant will that be to draw in fresh investment?
No, it's very good. So I think, let me go on the buyback side, it's not so much
fresh investment, but it's to remove the pain,
remove the pain. That was a big demand because it was being taxed as dividend. People wanted capital gains tax. To a certain section, they gave capital gains tax to promoters. I think they kept somewhere between dividends and capital gains tax. Then you come to IT services. The big thing, and they've widened the definition of IT services. It obviously includes capability centers, software development, everything. They never knew what the transfer pricing would be.
Right.
And the earlier safe harbor was restricted to turnover of 300 crores. They've raised that to 2,000 crores. 15.5% is a very fair number. I think they've put that. So I think anyone who sets up a global capability center or anything else, he knows that this is the transfer pricing regime that they're looking at. On data centers, actually, it's not so much safe. I think the entire I don't believe that it will be a 22-year exemption. I find it hard to believe. There must be 15 years within.
Sure.
Yes,
we'll have to look at the fine print.
That's big.
Yeah, that is big. Well, gentlemen, unfortunately, we are out of time for now, but we'll keep coming back to you for more on the fine print. But let's go across to the big man, Amitabh Kant, with us as well. Mr. Kant, your first read of Budget 2026.
Well, I think it's fiscally a very prudent budget, because these are very complex times. We are in the midst of a huge global disruption. There's a lot of geopolitical fragmentation. And for the finance minister to have kept the fiscal deficit at 4.3%, to have kept brought down the debt to GDP ratio and yet pushed the capex spend to 12.2 lakh crore, I think to my mind, it's a very, very sensible, rational, and a very progressive budget to my mind. But the important thing is really that she's given a push to both manufacturing, which was critical, and given a huge push to infrastructure in her budget. And, this focus on providing cities with 5,000 crore per city for economic region and the 7 high-speed rail corridor which will link up the growth connectors, as they call it, should eventually give a huge focus to urbanization in many ways. And if you look at what she had announced last year, which should get implemented this year, is the 1 lakh crore schemes for urban rejuvenation through the challenge route. All that put together should add a big thrust to urbanization as well. So manufacturing, infrastructure, urbanization are really the big focus. But one thing, I think the standout of this entire budget is if you look at investments across the world, 70 to 75% of the investment is getting into artificial intelligence and data centers. So I think the really smart move in this entire budget is the 100% tax exemption to data centers till 2047. It's quite an incredible move to my mind. And this should really push not merely data centers, but AI, the use of Indian data, computing power, all that to India in a very, very big way.
In fact, Rajiv Memani here just commented that he couldn't believe that it is a tax-free period of 22 years, and perhaps there will be something there in the fine print that we'll have to see. But Mr. Kant, the number flashing on our screens is 80,000 crores in disinvestment, and the government is the last few years been very measured on its disinvestment target. The question is, are they factoring in IDBI Bank? Fairfax is one of the front runners. What do you think?
No, they should push for, I'm a great believer that the government should push for disinvestment in a very big way, including IDBI. They should also push for two other banks and an insurance company, which was announced a couple of years back. They should push for asset monetization in a very big way. I'm a great believer in free enterprise. India can't grow at rates of 8 to 9% for 3 decades without the private sector accelerating the pace of growth. And the government needs to get out of some of these areas of growth. So pushing this target of 80,000 crores is good. I think it should be, we should push for many more government companies to be privatized and much more of asset monetization to take place.
Well, yes, that is certainly the hope. But, if I were to ask you whether this budget does enough in the near term, Mr. Kant, to try and draw back both portfolio investors as well as strategic investors, FDI, in the medium to long term, yes, many measures that you spoke of, but does it change sentiment in the near term?
Well, the budget talks about, you need predictability and consistency of policies. That's critical from an investor's viewpoint. So when the FM talks about reform of FEMA, the non-debt instrument rules, she talks about customs reforms and making it trust-based. She talks about rationalization of duties there. And she talks about a high-level committee for financial sector reforms. And she talks about the new Income Tax Act being implemented from the 1st April. So if you put all these together, then you're pushing for you're making for far greater level of easiness and simplicity in the tax regime. I wish she had also announced that the custom slab rates will be brought down to 3 rather than 8 right now. And I wish there was more focus on the cost of competitiveness, because the cost of competitiveness is critical for India in the long run. All these are critical, but she's pushed quite a bit in terms of
we'll chat about some of those. We'll chat about some of those issues left on the agenda. But Ramdev Agarwal waiting by. Prashant, over to you.
Well, okay, I'll take it over from here. Shireen, Ramdev Agarwal, thank you very much for joining us. First thoughts, Ramdev, the market sulking over STT, but after it gets over, are there positives?
Yeah, I think total highlight is the data center tax benefit for next 22 years. That's the key highlight, because data center is the biggest infra build all over the world. Biggest, like running into trillions of dollars. And we were not participating at that force. And now with this, it looks that doors are open for the AI, the impact of AI coming into India. And we want to make India as an AI factory of the world. And hence, this is the first initiative. And I think it's a very laudable one. I remember the software boom happened in India in 90s because of the STP benefit which they gave, where 10 years it was tax-free. So I think it's a very powerful tool to attract the investments. India has the lowest cost of power, lowest cost of infrastructure, and very large AI population. So I think it's a very significant one, and it has a lot of correlations in terms of which are going to be the beneficiary. Because you need a lot of air conditioning, you need a lot of cables, you need a lot of construction, real estate construction. So let's see, how it happens and at what size the data centers start coming up all over the country, wherever there is excess power. So it can fire up massive capex because it's very capital intensive. So it can fire up very large capital spending projects if it is handled well.
Mr. Agar, Ramdevji, good afternoon. The only thing is, I was talking to somebody who works in the field who was saying that this is, and the tax experts told us, it's a data center providing cloud services for foreign companies. For local income is taxed. It is foreign companies. So this consultant who was talking to was saying, how will they, data sovereignty is such a big thing that, like, for example, India wants its own data within its borders. So how is this going to, maybe the policy detail will have something, but Meta is not going to set up a data center to service its American customers, right? Because they want American data in America. So how will this really work or benefit? That's the only question, which was raised to me by somebody.
Yeah, so I think I also don't have any more detail than what I've heard here. But America is not the only country in the world to use AI. Any people.
Any company, any country, any
300 million.
Yeah.
Any country. So we could be supplying to non-American or non-European destinations. For Nepal, Bangladesh, Pakistan, your entire Middle East. I think this is a place where you should have the data center and the services manufactured here. So there are enough geographies where who cannot set up their own data centers would be finding it here to be set up the possibility. But those are different issues, Prashant. Yeah. Right now, the issue is that this is a very big initiative, and whatever changes are to be made in terms of taxation change, I think that will come through.
Yeah.
I mean, I don't see any reason why you tax a data center serving to the foreigners and not to the domestic users.
Yeah, I take your point on that. That is one advantage.
Just one thing, Gokul Das, if you can pull up Gokul Das, I'm not sure there's something, as the day goes by, as always happens, more and more details come through. Gokul Das is up 10%. I mean, it surged to the day's high, above 600 rupees. Just wanted to highlight that. Go on, Lata.
No, I agree with you because she has been speaking about textiles and the advantages they get. So we have to go with a fine-tooth comb to see how Gokul Das may be advantaged. Ramdevji, that's exactly what I wanted to ask you. The companies which do CDMO, kind of completely knocked down and then re-exporting, especially from SEZs, they are getting not a 5-year but a 10-year tax holiday. There are some nuggets like this, and there are companies like Keynes which are doing very well. Likewise, the API companies are doing very well, probably because of this. Can you notice sector-wise any advantages from the budget speech?
No, actually, I got spooked with the capital market proposals, about the STT and the impact of that in the market. So that was one part of it, and the buyback relief for the retail investors.
Yes,
that was one part of it. Third was this. I mean, what I saw about this data center exemption. This is very big, and I think it doves every other proposal of the budget. Okay. This itself is a 1,000-pound gorilla.
Okay. What about NRIs allowed to come into PMSs in India? Would that look very big?
Which one?
NRIs used to buy shares directly. Now they can put money in PMSs in India. What they call PROIs. The NRI word is permanent resident outside India. There seems to be a lot of concessions for them to come through PMS companies. Has that been noticed by your team?
Yeah, we saw that, but they're all at the margin. If markets do well, if the earnings come through, I think these things are going to help, but they're marginal in the sense that I don't think that's going to have that much of an impact in the short run.
Okay.
By the way, this Ramdevji, from your broking business, broking business head and team, etc., any feedback on this STT?
Yeah, so good. One thing is that today is Sunday, all the institutions are closed, local as well as global. And FIs are definitely out of the market today. So real impact of this will be seen tomorrow in terms of how are they thinking about this particular thing, because a lot of marginal trades will become unviable. So the high frequency traders, for them it will be unviable. A lot of it will be unviable. Second, there are a lot of products, arbitrage products, where a lot of money is there. Those will become unviable, and hence there will be a lot of redemption in those products whenever this new regime comes in.
Okay.
So the market will get less leveraged and less liquid. So the impact on the market will be a little more bearish because of this particular provision, because the sheer viability of a lot of trades will not be there. So we'll see the full impact of it tomorrow. Good thing is, I think these things are applicable only from 1st April. So we have some time for the market to adjust.
Ramdevji, FIIs, when they come back tomorrow, will they press the buy button or the sell button?
That is for you to decide.
No.
I don't think this is a buy. Yeah. This measure is not a buy measure. So obviously, one has to figure out how much they sell, how furious they are. Basically, it all depends on. In any case, they were on an exit mode. So will it trigger further exits? Because right now the global market has so many stress points. This is not opportune time to actually give one more headache to them.
Okay.
Did time to keep them at least peaceful at home and not trouble them because they're already suffering from.
And you were saying that this at the margin, and Ramdev, and you're saying at the margin this will trouble them. You're saying how furious they are. We'll have to see. Yeah.
That we'll have to see tomorrow only. I mean, right now, my information is not that much more. I can just speak to some of my traders here because those guys are actually on holiday. Today is Sunday.
No, I get it. Ramdevji, there's one more.
No, only tomorrow. I hope the impact is minimal because we have still got 2 months' time for it to get implemented. So tomorrow itself, they don't have to do anything. But incrementally, I don't think it's a very positive measure for their activities in India.
Okay, just a final question to you, Ramdevji. Excise duty, union excise duty, according to the budget papers, budget at a glance, is rising by 6%. Now, union excise duty is applied only on oil marketing, right? Oil products. So, do you think this is going to look like OMC negative? Usually, the excise duty in a typical year rises by maybe 3%. This is 6%, the total kitty.
Okay, so they might be expecting 5-6% volume growth during the year.
Okay.
At current prices, they might be expecting 5-6% volume growth. Or maybe some mix change or something like that. So 5-6% doesn't look that alarming.
Okay. Well, we've got some more guests joining us. Rajiv Anand, the Managing Director and CEO at IndusInd Bank. Nirmal Jain, founder of IIFL Group. Gentlemen, thank you very much for your time. Rajiv, two things for banks. One, the borrowing number, 17.2 lakh crore. First, your thoughts on that.
I think it's a little higher than expected, but one would imagine that RBI will manage as they have every year through a mix of OMOs and switches. So I don't think, yes, the gross borrowing program is a bit of a concern, but I think if you look at it at a net number, the numbers don't look alarming. I think more importantly, the fiscal math at 10% nominal looks very, very credible. Absolutely. And I think there is a little bit of leeway in terms of non-tax receipts as well. Yes, I think in the very short term, a little negative, but and you will probably see yields going up a little bit on Monday.
Yeah.
But I think that should adjust itself over a period of time.
No, I agree with you completely. The fiscal math is excellent. No aggressive assumptions. And then there is this banking committee they have appointed to suggest reforms ahead. Is that looking like a very big positive? I mean, ownership, voting rights, everything could be up for changes?
I think those are the two big ones, isn't it? I mean, I think there's been a lot of debate around ownership of banks, here in India, and this disconnect between ownership and voting rights. I think that will form the crux of how the banking industry in India will get built over the next 25 years. We've begun to see, the first cut of that. We've seen a couple of transactions where there's been a fundamental shift in the way that the regulator has thought about the SMBC Yes Bank transaction and the Emirates RBL transaction is in a sense showing you the way that the regulator is thinking about these issues.
Ramdevji, if I can come to you, there's one specific thing which is dividends from mutual fund cannot be set off against dividend income cannot be set off against interest paid on borrowings. Is that I was just checking with the tax expert. Is that a big thing? Will that have a big impact?
Within mutual funds?
Dividend from mutual funds, you could have set off up to 20% against interest paid on borrowings. That has gone away. That is what our tax experts, Dinesh Kanabar and Ashok Wadhwa. So I'm just thinking, will this apply to like leverage trades and all? People borrowing to... and this will be largely for investment companies and HNIs, etc. But could it have a big impact?
I think it's very individualistic in the sense that who is doing leverage trade and those kind of guys, they will not get the break against the dividend, what interest they are paying. So you have to pay tax on that. So I think it will be very marginal. For most of the guys, overall aggregate, I don't think it's big.
Okay. Nirmal Jain is with us as well. Nirmal, if you can come in on this particular aspect, interest cannot be offset against dividends you get on mutual funds. Any thoughts here?
I mean, it's a little negative because
20% what was allowed earlier, so it might increase tax liability a little. But I mean, the overall scheme of things, this is not a significant mover or shaker in the market.
Okay. You know, what I'll do is, I have more questions for both Nirmal and Rajiv. Ramdevji, thank you very much for joining us right now. So, and you have a busy day ahead, so we'll see you later. We'll just take a very quick break here. Come right back with Rajiv Anand and Nirmal Jain.
नारी शक्ति का सशक्त प्रतिबिंब झलकता है। महिला वित्त मंत्री के रूप में निर्मला जी ने लगातार 9वीं बार देश का बजट प्रस्तुत करके नया रिकॉर्ड बनाया है। ये बजट अपार अवसरों का राजमार्ग है। ये बजट वर्तमान के सपनों को साकार करता है और भारत के उज्जवल भविष्य की नींव को सशक्त करता है। ये बजट 2047 के विकसित भारत की हमारी ऊंची उड़ान का मजबूत आधार है। साथियों, आज भारत जिस रिफॉर्म एक्सप्रेस पर सवार है, इस बजट से उसे नई ऊर्जा, नई गति मिलेगी। जो पाथ ब्रेकिंग रिफॉर्म्स किए गए हैं, वो एस्पिरेशन से भरे हुए भारत के साहसिक, टैलेंटेड युवाओं को उड़ने के लिए खुला आसमान देते हैं। ये बजट ट्रस्ट बेस्ड गवर्नेंस और ह्यूमन सेंट्रिक अर्थरचना के विजन को साकार करता है। एक ऐसा यूनिक बजट है जिसमें फिस्कल डेफिसिट कम करने, इन्फ्लेशन कंट्रोल करने पर फोकस है और इसके साथ ही बजट में हाई कैपेक्स और हाई ग्रोथ का भी समन्वय है। साथियों, ये बजट भारत की वैश्विक भूमिका को नए सिरे से सशक्त करता है। भारत के 140 करोड़ नागरिक फास्टेस्ट ग्रोइंग इकोनॉमी बनकर ही संतुष्ट नहीं है। हम जल्द से जल्द दुनिया की तीसरी सबसे बड़ी अर्थव्यवस्था बनना चाहते हैं। ये करोड़ों देशवासियों का संकल्प है। दुनिया के एक ट्रस्टेड डेमोक्रेटिक पार्टनर और ट्रस्टेड क्वालिटी सप्लायर के रूप में भारत की भूमिका लगातार बढ़ रही है। हाल में जो बड़ी बड़ी ट्रेड डील्स भारत ने की है, मदर ऑफ ऑल डील्स, उसका मैक्सिमम बेनिफिट भारत के युवाओं को मिले, भारत के लघु और मध्यम उद्योग वालों को मिले। इस दिशा में बजट में बड़े बड़े कदम उठाए गए हैं। साथियों, इस बजट में मेक इन इंडिया और आत्मनिर्भर भारत अभियान को नई रफ्तार के लिए महत्वाकांक्षी रोड मैप प्रस्तुत किया गया है। इस बजट में नई उभरती इंडस्ट्रीज यानी सनराइज सेक्टर्स को जिस मजबूती के साथ समर्थन दिया गया है वह अभूतपूर्व है। बायोफार्मा शक्ति मिशन, सेमीकंडक्टर मिशन 2.0, इलेक्ट्रॉनिक कंपोनेंट मैन्युफैक्चरिंग स्कीम, रेयर अर्थ कॉरिडोर का निर्माण, क्रिटिकल मिनरल्स पर बल, टेक्सटाइल सेक्टर में नई स्कीम, हाईटेक टूल मैन्युफैक्चरिंग को बढ़ावा, चैंपियन एमएसएमईज तैयार करना, ये फ्यूचरिस्टिक है, देश की वर्तमान और भविष्य की आवश्यकताओं का ध्यान रखती है। एमएसएमईज को, हमारे लघु और कुटीर उद्योगों को जो समर्थन इस बजट में मिला है वह उन्हें लोकल से ग्लोबल बनने की नई ताकत देगा। साथियों, बजट में इंफ्रास्ट्रक्चर को मजबूत करने के लिए कई बड़े कदम उठाए गए हैं। डेडिकेटेड फ्रेट कॉरिडोर, देश भर में वाटरवेज का विस्तार, हाई स्पीड रेल कॉरिडोर, टियर 2 और टियर 3 शहरों के विकास पर विशेष ध्यान और शहरों को मजबूत आर्थिक आधार देने के लिए म्युनिसिपल बॉन्ड्स को बढ़ावा। ये सारे कदम विकसित भारत की यात्रा की गति को और तेज करेंगे। साथियों, किसी भी देश की सबसे बड़ी पूंजी उसके नागरिक होते हैं। बीते वर्षों में हमारी सरकार ने देश के नागरिकों के सामर्थ्य को बढ़ाने पर अभूतपूर्व निवेश किया है। हमारा प्रयास स्किल, स्केल और सस्टेनेबिलिटी को निरंतर बल देने का रहा है। जैसा कि आज पार्लियामेंट में निर्मला जी ने कहा है, यह युवा शक्ति बजट है। उसमें युवा की सोच भी है, युवा के सपने भी हैं, युवा का संकल्प भी है और साथ साथ युवा की गति भी है। बजट में जो प्रावधान किए गए हैं उससे अलग अलग सेक्टर्स में लीडर्स, इनोवेटर्स और क्रिएटर्स तैयार होंगे। मेडिकल हब्स के निर्माण से, एलाइड हेल्थ प्रोफेशनल्स के माध्यम से ऑरेंज इकोनॉमी यानी ऑडियो विजुअल गेमिंग को बढ़ावा देकर, पर्यटन को प्रोत्साहन देकर और खेलो इंडिया मिशन के माध्यम से युवाओं के लिए नए अवसरों के द्वार खुलेंगे। भारत को दुनिया का डेटा सेंटर हब बनाने के लिए टैक्स में बड़ी छूट की घोषणा भी की गई है। मैं भारत के युवाओं को विशेष तौर पर इस बजट की बहुत बहुत बधाई देता हूं, क्योंकि इससे एम्प्लॉयमेंट जनरेशन को बड़ा बूस्ट मिलेगा। मुझे बहुत खुशी है कि इस बजट में टूरिज्म और विशेषकर नॉर्थ ईस्ट में टूरिज्म को बढ़ावा देने के लिए भी ठोस कदम उठाए गए हैं। भारत के अलग अलग राज्यों को ताकतवर बनाकर संतुलित विकास की नींव भी इस बजट में मजबूत की गई है। साथियों, हमारे देश में 10 करोड़ से ज्यादा महिलाएं सेल्फ हेल्प ग्रुप से जुड़ी हैं और बड़ा सफल अभियान रहा है। महिलाओं द्वारा निर्मित, महिलाओं द्वारा संचालित सेल्फ हेल्प ग्रुप्स का आधुनिक इकोसिस्टम बने, बजट में इसे प्राथमिकता दी गई है। कोशिश यही है कि हर घर लक्ष्मी जी पधारे। हर जिले में छात्राओं के लिए नए हॉस्टल बनाने का अभियान भी शिक्षा को सुलभ बनाएगा। साथियों, भारत की कृषि, डेयरी सेक्टर, फिशरीज, इन्हें हमारी सरकार ने हमेशा सर्वोच्च प्राथमिकता दी है। इस बजट में भी नारियल, काजू, कोको और चंदन की पैदावार से जुड़े किसानों के लिए अनेक अहम कदम उठाए गए हैं। भारत विस्तार एआई, इस टूल से किसानों को उनकी भाषा में जानकारी मिलने से उन्हें बहुत मदद मिलेगी। फिशरीज और पशुपालन में उद्यमिता, उसको बढ़ावा देने से गांव में ही रोजगार और स्वरोजगार के और ज्यादा अवसर बनेंगे। साथियों, ये बजट एम्बिशियस भी है और ये बजट देश की एस्पिरेशन को भी एड्रेस करता है। मैं एक बार फिर निर्मला जी और उनकी पूरी टीम को इस फ्यूचरिस्टिक बजट के लिए, संवेदनशील बजट के लिए, गांव, गरीब, किसान का कल्याण करने वाले बजट के लिए बहुत बहुत बधाई देता हूं। बहुत बहुत धन्यवाद।
Well, that is the Prime Minister in this, address right after the budget. Every budget, of course, he comes through highlighting what the Finance Minister has announced, and of course, congratulating Finance Minister Nirmala Sitharaman for presenting her 9th budget. It's a record in terms of, as finance ministers go. Rajiv Anand is, of course, been waiting by. Rajiv, good afternoon. Prashant here, and thank you for waiting patiently. Anything else comes to mind? Latha, of course, asked you a few things, but what do you think the net effect of all of what has been announced is going to be on sort of pushing through high rates of credit into the system? That will depend on demand for credit. What do you think this does?
Two things, Prashant. One is, apart from everything that's been said about increased capex and data centers, etc., that we've been hearing all afternoon, I think two things. One is the big focus on MSMEs. The fact that the government will now start to provide capital for MSMEs as well. I mean, typically what happens to MSMEs is capital is raised from internal, friends and family. Now there will be a pool that will be available from the government as well, which is certainly positive. A bigger focus on TREDS I think is a huge positive. One of the things that MSMEs suffer from somewhat is delayed payments from government entities, and therefore choking working capital. And this will, certainly help that as well. So I think, for banks like us who are looking to build out a large MSME franchise, I think all this is very positive, because I think the underlying pool of available borrowers will only increase going forward. And the second is, I think one of the big issues that the markets have been facing is the higher and higher levels of borrowing from state governments. I think the fact that now 41% of devolution based on the Finance Commission is now going to the states, I think to that extent will certainly assuage some of these concerns. So I think those are the two that I've not heard much about, so which is why I wanted to highlight those.
Rajiv, hi. Do you want to comment on the overall gross borrowing number of more than 17 lakh crore? It may lead to yields remaining high, treasury income gets hit. Do you see this as an issue for a bank?
I think, like I mentioned to Lata as well, that I think the gross borrowing program is slightly higher than market expectations. But I think year on year, every year for the last 3-4 years, the RBI has done a fantastic job in managing, that demand supply situation and yields. So I do expect them to come in with OMOs and switches to be able to manage the volatility as far as yields are concerned as a result of this. Remember that the net borrowing program continues to be well contained as per market expectations.
Rajiv, thank you very much for staying with us on this important day. And I'm sure as budgets go, more details, etc., will come through. But I think the bigger thrust you've given us, directionally speaking. Thank you very much for joining us. Pankaj Tibriwal is with us, founder and CIO at Ikagai Asset Managers. Pankaj, I think there are lots of positives, no doubt. As Rajiv is pointing out, others have pointed out as well. But this STT bid is just, I think more than anything else, it's the timing of the thing, right? Which has taken a bite out of the sentiment at this point. Just your first thoughts, first impressions, and then we'll get down to specifics.
So, Prashant, I think market has overreacted on this because of maybe the prevailing sentiment right now. If you look at the ballpark number, it will get about 20-25,000 crore. So one way you can argue that for that 20-25,000 crore, it was not necessary at this point of time because the sentiments were quite fragile, both domestically and globally. And India has been one of the worst performing markets. But you slightly take a medium-term view and look at the past. I think in the near term, there's some volume reaction which may happen at the exchanges and by speculators. But over a 3, 4, 6 months period, history suggests that things starts to get normalized. So I'm not very concerned.
Who's there?
I think market has been, expecting a little bit of tweaking out on long-term capital gains and short-term capital gains. That has not happened. But overall, if you ask me, it's quite a pragmatic budget. You remember, Prashant, always in the past, the first half an hour, 45 minutes, we used to talk about rural, farm, and that used to take a lot of time. If you notice this time, it was all about manufacturing. And the rural part was just a very small mention in the entire speech. So I think the focus clearly reflects that is moving from farm to what means for the actual economy. And a lot of mention about AI, data centers, new age technology, and manufacturing. So I think it's quite a pragmatic budget, if you ask me. It could have been worse on taxation, but nothing, no bad news is good news in my view. So I would take it saying that markets will digest it over the next couple of days and think that it is not as bad as it is made out to be on the screen today.
Okay, Pankaj, stay with us. In the morning, we promised that we will get you both the two big exchanges, right? NSE, we beamed out of in the morning. We rang the bell from the NSE, and now Mangalam is at the BSC covering the full ground. Vikas Khemani is with him. And there are a few other guests as well, including N. Jaykumar. Mangalam, take it away.
That's correct. So we do have with us the three wise men of the market. We have Rahul, we have Vikas, we have Jakes as well. We come to you from the Bombay Stock Exchange after beaming live from the National Stock Exchange this morning. Gentlemen, the overarching reaction so far has been that it is a balanced budget. The only fly in the ointment was the increase that was there in the STT in futures and options. Now that, there has been some analysis done on some of the fine print of the budget as well, the net borrowings, the gross borrowings, etc. What are the actionable ideas and what are your initial thoughts? Vikas?
I think so. This budget has to be seen in the light of the last year's budget when there was a huge income tax rate cut and GST cut happened during the year. So the maneuverability of the finance minister is kind of limited in that sense from a tax collection perspective. And within that, I think she has done a good job. What I like about this budget is, of course, there's a huge focus on the manufacturing side in the EMS, textiles, semiconductors. So I think entire manufacturing space has been addressed with a reasonably good boost, and it comes also in the context of current FTAs with different countries. So I think it's a very, very good initiative they have taken from a manufacturing side. Secondly, if you see our capital expenditure has gone up. Defense expenditure has been, budgeted more than about 18-19%. Railways is up about 10%. Roads. So I think public capex is also a good increase, which is I think positive. Also, first time I think Minister has talked about a big focus on the services industry. Where she has put a vision that how do I attract medical tourism, how do I attract tourists, and overall target 10% of the world services market. That's the kind of vision. So they've kind of given a roadmap in terms of how she wants to achieve that. And few things which have been missed or probably not well appreciated, that they've given tax incentives for data center till zero corporate tax for 2040, still 2047 on data centers. Gift city tax holiday has increased from 10 to 20. So a lot of measurements have been done to do improve the ease of the business. Yes, of course, disappointing factor is, in my opinion, STT increase, which was not required. There's a widespread demand of the industry that long-term capital gain tax and STT both should not coexist because they were alternative to eech other. But today, in reality, we have both of them, and without getting any credit of STT, which is a very, very big dampener. Something was definitely expected on the lines of liquidity improvement in the system, which probably can come outside budget also. But today we are sitting on a poor sentiment from a FI perspective. Some amount of measurement or initiative or discussion could have been kind of welcome on that. But net, I would say it's a good budget, and it's continuation more of same of their past policies, and with a little bit of things which I talked about have been taken care.
Jakes, given the current sentiment, do you think more of the same is good for now, or there could have been a lot more? Do you think it's a missed opportunity?
So I think you could look at it both ways. One is to say that here's a batsman who's got a century there. Can you go for a double 100 by the singles and an occasional boundary, or do you need to be, because you've achieved 100, you've achieved everything? I think the message being given is that there's a long way to go. So all your targets are 2047, 2031, 2035 kind of dates for things to be achieved. I agree with Vikas in that a lot of, should I say, pylons have been put into the ground, to be able to build something on top of it over a period of time. I'm really bullish about this entire digital highway, digital infrastructure that's being sought to be created, which now includes data centers, which includes telecom infrastructure, and the kind of incentives that have been now laid out for people to make investments over a 2-decade period. I think that's the big thing. Two, FIs have been an integral part of the market. So to the extent that their, if you will, grievances have not been addressed, is an ongoing saga. But to my mind, there has to be one or two areas that you need to, to get up from the table and say has not been addressed, because it might be something for the future. Domestic liquidity improvements, RBI continues to do. The fiscal push is coming from the government in that sense. So I'm reasonably okay with it. A couple of flies in the ointment, if you will, which is things like the STT. Because if the idea was that it should be a deterrent rather than, a revenue generating tool, which I'm beginning to understand will be the kind of logic that they will give you, then really there needs to be net worth and other criteria to keep people away. You can't make it accessible to one and all and yet say that, you're going to have a continuing increase in STD charge. That doesn't make sense.
It's like the sale of loose cigarettes and then taxing them, as Vikas earlier pointed out.
So I think the narrative there needs to be more clear. It is a deterrent. We don't want people to come in except through mutual funds, and therefore either contract size, etc., can go up. Other than that, I feel the biopharma initiative, for instance, and if you look at overall, some sectors are hugely benefited from a weakening rupee, etc., which is outside the budget. And they continue to get trust, like the biopharma, as I said, is one, or infrastructure, the data centers, etc., and the attraction of services. So all in all, some repetition to what he said, but this is really the take.
Rahul, tomorrow when the market opens full steam, what would be the 2 or 3 things that you would do given the current budget? What sectors would you deploy in and what sectors would you take the money out of?
So, from a client perspective, correct, like what Jas also said, like Jex also said, that manufacturing and infra has got a good push. So, those are the sectors which someone should look out for. Pharma and hospitals, because there has been medical tourism which has been announced. And also real estate sectors which support data centers from power, etc. I think these are interesting sectors to which you have to look out for. And something which you should get away from, I would say defense versus expectation, which has not been up to the mark, is one thing which you can look out for.
All right, take that point. Thanks a lot, gentlemen, for joining in. Those are the 3 wise men at the BSC. I'll toss it back to you guys in the studio, Nigel, for the markets, with a promise that we will shortly get the leadership at BSC to join and comment on the increase in STT as well. But for now, it's back to you guys in the studio. Nigel.
Well, thanks a lot for that, Mangalam. We'll wait for that chat with the BSC chairman. But for the time being, let's do a quick market check. Well, I think, the motto of today or the takeaway today is keep your expectations low. Because the defense stocks, the expectations are very, very high. To be fair, the sheet actually got what it wanted. But just take a look at the defense index. That's down close to around 4.2%. And whether you're looking at BEL, Bharat Dynamics, HAL, all of them should come up for you on the screen. Well, they are under some pressure in today's trading session. However, the jeweler stocks actually are spiking up because there was a buzz that there could be some duty that will be imposed on gold. So you have Titan that's seeing a bit of a relief rally. Kalyan Jewellers as well, that should come up for you. Expectations were that, maybe we'll see a bit of a hike. That's not come about. So that's why those stocks are seeing a relief rally. The stocks that are getting absolutely hammered is on the back of sentiment getting hit. STT's hike, that's come out of nowhere. You were hoping for some kind of leeway with regard to capital gains tax. That's not happened. In longer term, you'll say, well, it prevents any kind of futures and options trading, but and it'll help in terms of larger amount of money going to mutual funds, but that for another day. For the time being, whether you look at Angel One, BSC, CDSL, all those market players, they're under pressure. The gross market borrowing number, that came in at more than 17 lakh crore. And that seems to have spooked some of those PSU banking names because you have PNB, SBI, both of them are under some pressure. Remember, the yields could move up. And that's why, in fact, you are seeing some kind of selling pressure on those names as well. Moving to the data center plays, they're really the toast of the day. Whether you look at NetWeb, Orion Pro, that stock is up. You have E2E networks as well. All of them, they are in a world of their own, getting anything between 5 to around 7% in today's trading session. Big move is what we're seeing out there. And the EMS companies, they have seen a sharp correction from the top. But the allocation to the component PLI out there, that's been doubled, nearly 2 times to around 40,000 crores, or if I remember that number correctly. So you have a few of these stocks. Dixon is under pressure, but Amber you pull up. That stock's doing quite well in today's trading session, and a few of the other names as well. The sector that's, the IT stocks as well. There's a bit of tweaking that's taken place, and you have the rules for buyback as well. That's, more or less eased out. So because of that, you have a few of those names that are doing quite well. Wipro is doing pretty well in today's trading session, but let's wind it up with a sector that's losing big today, which has actually rallied big time in this month so far. The metal index and those metal plays, whether you're looking at Hindustan Zinc, Muthoot Finance or MCX. Remember, that has CTT, not STT, but all those stocks under some pressure. So plenty of movers, guys, from the broader markets. Some of them gaining, most of them losing. That's sort of a day.
And it's a Sunday. So it's red all across. Nigel, thanks very much for that. Very comprehensive. We'll take a quick commercial break here. We'll come back. By the way, the finance minister is also going to be starting to address the press in a bit from now. And some flashes coming in. I think this is clarification. Because the budgeted number for excise collections was much higher in FY27, there was some fear that this is going to be, this is going to happen through an excise hike on petrol and diesel. And for now, what we understand is there is no change in excise duties on petrol and diesel at this point. As I said, take a break. We have Tarun Garg, MD and CEO of Hyundai Motor India, join us on the other side. Stay tuned.
Welcome back. Markets still down, but you've recovered considerably from the lows of the day. And the stocks that have recovered actually are some of those OMCs, where they're looking at, HPCL, BPCL, as well as IOC. Post that flash that we're putting up for you on the screen, there's no change in the excise duty. We'll have to check out and see how exactly are they coming up with the math to garner such high excise duty, because we know part of it will come from cigarettes, but otherwise, the street was fearing that the rest of it would come from an excise duty hike. For the time being, they say no. We'll try to understand that in greater detail, but all those stocks have recovered from the day's low. Well, let's welcome on the show, we have Tarun Garg, MD and CEO at Hyundai Motor India, who joins us on the show. Hi, Mr. Garg. Thanks a lot for joining in. Well, the finance minister has said what she has to. The longer-term trajectory is what is laid out with regard to the fiscal deficit numbers as well as the debt to GDP numbers. That's good in the longer term, but how would you rate this budget? And, if you had to put a rating on 10, what would it be?
Oh, budget is definitely a 9 for me, and it's clearly a reform-intensive, investment-led budget. It provides stability, it provides structural reforms, of course, fiscal discipline as well. And we have to understand that we have to look at this budget along with the GST 2.0 reforms which had come in. Today, you saw the automobile numbers coming in. All of us are showing record growth. And I think this budget will really position India as a global manufacturing hub and ensure a 7% GDP growth in the long term.
Well, Mr. Garg, some were hoping that there'll be a bigger push. We know the uncertainty in the globe, and there was a hope that maybe, in fact, some kind of slip on the deficit number would be okay, but a greater push to growth. Do you think something more could have been done on that front? Because that push, I think, is lacking a little bit.
Absolutely not. If you see manufacturing, we have all said that manufacturing has to have 25% of the GDP, and I think a clear direction has been set. You can see the electronic manufacturing, semiconductor manufacturing, 40,000 crore outlay has been increased. So this is very good. Tourism, I think we all know that India, probably there is a long way to go before we can actually utilize and leverage India's, such great tourist spots. I think that has really given a lot of hope to tourism, but to mobility as well, focus on logistics sector. So I think, yes, it provides continuity, it provides stability. Of course, everybody is always expecting more, but I'm sure one thing which is very important is also the fiscal discipline. 4.3% fiscal deficit really gave me a lot of hope that, yes, not only will we grow, but we will also grow, responsibly.
Sir, specific to your company, to Hyundai India, can you tell us, is there anything in the budget which is very positive for you? Big picture you spoke about. If India grows, Hyundai does well, etc. But just specific, any nuances that you can share in the budget which is beneficial or something you were hoping for didn't come through?
Look, one thing which is very important is supply chain stability. We all know that what happens when rare earth, material shortage to the auto industry. I think that has been really given a lot of focus here. Electronics, we all know that next 5 years probably electronics is going to be a key component, and manufacturing, focus on electronics is very important. And then ease of doing business, ease of living. Please understand, as car makers, we want citizens to be happy, and you can see that a lot of efforts has been done for that ease of living, ease of taxation. I think all in all, generally people are going to be very happy. Plus, like I said, it's only 4 months since the major reform of GST 2.0 happened. So for us, we are, frankly speaking, very happy. And we believe that this year we could see the car industry coming back to the mid 7-8% growth levels, which we had been clocking. But before the GST 2.0, we had kind of slipped off the radar.
Tarun, we'll leave it there. Thank you very much for joining us. Good speaking with you, and really appreciate your time here on CNBC TV18. Well, I think 274 points lower is what we have, and there is some pressure. If you can line up, I think we have the BSE MD and CEO, Mr. Ramamurthy, who's going to be speaking with Mangalam. And we'd like to play that out for you. BSE is, of course, down sharply on the back of the STT hike of about 7.25% or so. Market breadth is 1,200 up and about 1,800, 1,900 lower. So it is a wide difference. in terms of number of stocks up and down. I mean, in the midst of all of this, what has happened, of course, is what we started with, which is the big correction on underlying commodities. So there is that factor also at play, which was there before 11 o'clock, before the speech began. And then, of course, I mean, the entire commodity pack was selling off before the budget, and after the budget, I think, you've got capital market plays, etc., which are selling off as well. And of course, at the margin, the STT hike, I think, has soured the mood a little bit. We'll take a quick commercial break here. We'll come back, as I said, the BSE MD CEO perhaps with us, hopefully, and the finance minister is going to be addressing a post-budget press conference, so we'll go across to that as well. Okay, welcome back. 270 points lower on the Nifty. Wix is jumping, right? Wix is up about 7% or so. Small cap index, mid cap index, Bank Nifty down. So there is, I mean, lots of clarification. Sovereign gold bonds, for example, right? I mean, okay. I'm being told that Mangalam has the BSE MD and CEO, Mr. Ramamurthy, with him. Mangalam, over to you.
Well, thanks a lot for that. Yes, we do have the first reaction coming in from the MD CEO of the Bombay Stock Exchange, Mr. Ramamurthy, thank you so much for joining in. You know, the street is a little worried about the imposition or increase of STT on futures and options. Now, you get a significant chunk of your revenue from that product. So, what kind of impact do you think will happen on your business and on the capital market stage at large?
Thank you for having me. And before I start replying to your question, let me congratulate the Honorable Minister for Finance and Corporate Affairs for another successful budget proposal to the House of Parliament today. The budget clearly is one another step towards Viksit Bharat by concentrating on capital formation and fiscal discipline,
right,
and main sectors of the economy like manufacturing, services, semiconductors, SMEs,
right,
all have been covered. On the specific question on STT that you have asked, the increase on STT on derivatives, I look at it as a move from the government to oriental and align people towards trading and investing long term in equities.
Got it.
Today, the equity STT will be lower than F&O STT, which encourages them to get into the equities market. That is totally in alignment with the capital formation requirement of Viksit Bharat. The STT increase, this is not the first time it has happened. Every time when it happens, the reaction is exactly like what you said. The market feels worried and concerned whether it will impact volumes, will impact revenues, etc. India is a growing economy and fast growing in a big way. And in that process, what we have always seen is the market growth is so much and the depth of the market grows so much. The initial concerns go away soon, and the market starts developing.
What you're saying is that the medium to long term, this is a step in the right direction towards deploying money into long-term equity investing as against near-term trading. But for businesses like yours, and there are investors that are watching as well, the stock's lower, what could the near-term impact be if you could quantify that?
I don't think it will be possible to quantify. I'll tell you the reason. We are presuming a static thing of a change will have an impact on a dynamic thing. When the market is dynamic and growing, and as you also said, in the mid and long term, it looks like being a good thing to happen. So it will not be possible for us to say that, first of all, there will be a dip, and if there is a dip, it will be so much.
But you do have the benefit of experience, right? You said it's not the first time something like this has happened. The last time this happened, what was the initial impact?
I don't think there has been any dip. The market has taken it and in its stride, and it has grown. So I feel that the same thing will happen. Please understand, India is a growing economy, and in a big way growing economy. And this type of stuff will immediately have some dip to start with as a thought process. And in the coming days, it will go, and people will understand the impact of investing in equities market, and therefore there will be larger scale capital formation.
What do you think the government could have done in this union budget to, attract the FIIs back into the market?
I think there has been already a move in respect of PROIs. And there has been a lot of efforts put on addressing the tariffs, tariffs affected areas, for example, textile, chips, etc. I think that these are all positive things to be looked into.
All right, and we're also speaking at a time when there has been an approval for the NSE's IPO. And typically when a leader lists in the market, we do see a rub-off on all the others as well. So what are your initial reactions on that?
Initial reaction is congratulations NSE, and this has been a great thing. And SEBI, as promised, has delivered within the stipulated time, this NOC. I have shared this even before in CNBC. We are extremely glad and happy, and we are very happy, and we wish all the best to NSE.
All right, and we wish all the best to you, your volumes, and your market share going forward as well. Thank you so much for joining us on this occasion. With that, it's back to you guys in the studio.
Well, thanks very much, Mangalam. For that, 7% lower on BSE, though, for now, there is that impact which is coming through. Mr. Ramamurthy was confident that markets will look through this in terms of increases. This increase itself is significant, right? 50% on options and 150% on futures. Yash is here with some numbers in terms of what this translates into. Yash, run us through that math.
Well, Prashant, if you remember, just yesterday, there was this slight bit of conversation from market participants about, STT on derivatives going up. Of course, yesterday it was only chatter, but today it certainly came through as far as that budget document is concerned. STT on equity options to be hiked to 0.15%. From the current 0.1%, that's a 50% hike, and STT on equity futures hiked to 0.15% from 0.05%. That's about 150% hike on equity futures. Just one important clarification, because this was a bit of confusion amongst market participants, that this STT hike or the securities transaction tax hike only applies on equity transactions and not on commodity transactions. There has been no change as far as commodity transactions are concerned. But as far as numbers are concerned, and the numbers are today reflecting as far as stock prices of the market, capital market companies are concerned. Angel One, as per FY25 revenue, it contributed 44%. This is the contribution of equity derivatives transaction to the revenue. Angel One, it was 44%, BSE, it was 55%, and the National Stock Exchange or NSE, it was 70%. Just yesterday, there was also a tweet from Nitin Kamath on the same issue, saying that the projected STT collection for FY25-26 was about 78,000 crore rupees for the government. The government till January had collected about 45,000 crore rupees. An estimated another 12,000 crore rupees by March would take the government to about 57,000 crore rupees, still giving a shortfall of about 25% to that projected number of 78,000 crore rupees. It wasn't unlikely to be met in the current financial year, and hence that shortfall somehow trying to be made up for as far as the coming financial year with that increase in STT is concerned.
All right, Yash, thank you very much for that. Ramdev Agarwal earlier telling us that, where this makes a difference is basically HFTs, high-frequency traders, etc., who are trading in and out, a million times a day. Then that starts to incrementally hurt. The dampening effect on volumes, etc., and things like market depth. We'll have to see if all that comes through, but these are big increases. With the government, of course, with an eye on the revenue. Data centers, we've heard unambiguously from everyone we've spoken to so far, as the absolute big one. Vinny is here with, and of course, with feedback from companies that she's spoken with in terms of what this would mean and how large this could be. Vinny, take it away.
Hi, so yes, an important announcement that's coming for data centers. Obviously, Nirmala Sitharaman announced that major tax holiday till 2047 for foreign companies, cloud service companies that are providing and using India data centers to serve globally, but they'll also have to provide their Indian entity or any tie-up that they have would have to provide to Indian customers as well. Now, why does this become important? It's because, do not forget, in 2025, we've seen many big players actually come into data centers, whether you look at Reliance, AWS, Adani, Google. We have all these making a total investments, including some other companies, of $63 billion. So obviously these tie-ups become important. They push the data center infrastructure in the country as well. And obviously today we saw all those stocks buzzing in trade, whether you look at an Anantraj. Now that is a company that is into data center for a mainly increasing their capacity. They are into the real estate side. So infrastructure boxes that are made, that is from Anantraj. Then there's E2E Networks, that's a cloud infra company, Netweb Technologies, Orient Pro, all of these are into AI and data center technologies. Now obviously the whole value chain will start benefiting, and we've spoken about this before as well, that value chains, like whether you look at something like these capital good companies or even cable wire companies, all of them come into use. The whole value chain will start seeing benefits coming in. ABB, Siemens, Hitachi Energy, some of the other names, as well as Voltas, are some of the names that would start seeing a benefit, and that's why these stocks become important in the trading session as well.
Okay, all right, Vinny, thank you very much for that. You can see visuals coming through from New Delhi, the finance minister. As always, the post-budget conference, typically the post-budget conference happens after market hours and kicks off, I think, used to be at about 4 o'clock or so. And of course, she's flanked by her secretaries on both sides, Revenue Secretary, Finance Secretary, and I think the other top secretaries of the Government of India very much part on the dais. So they will be, of course, the Finance Minister who will sort of, lay out what the highlights of what was laid out in the budget, kind of sort of give an overview perhaps a secretary or two also chips in, and then there'll be a Q&A session. That's how typically the post-budget press conference will proceed. Our colleague Sapna Das is with us, and we have other colleagues there as well. So that is the post-budget press conference coming through right now. Let's cut across.
The secretaries. You've heard the entire budget being presented in the Parliament. So as opening remarks, I'll just highlight some of the points which we want to draw your attention to. But subsequently, of course, we'll answer all your questions. All the secretaries are here with me. So this budget being the first one, as the Honorable Prime Minister said 2 days ago, this being the first one for the second quarter of this century, also leading towards Vikasit Bharat 2047. We are laying the path and giving a push to the economy to maintain the growth momentum. And for that growth momentum or sustained economic growth, which we want to ensure, primarily we are looking at building the ecosystem with structural reforms which will go on. Reforms have been carried out. We are continuing to do the reform activities. It will continue with an aim to make sure that we create enough environment for improving productivity and making sure employment is generated. Driven by technology. So we will ensure that technology is brought in to benefit the common man, to make sure common man benefits in the sense of ease of doing living, or for his business to prosper, or for farmers for greater productivity or better logistics, whatever. So technology for benefiting every common man. And above all, with all this, inclusive development. Sabka Saath, Sabka Vikas, and that is why you heard me bringing in schemes which have good allocations for bringing better health facilities, creating a cadre of people, not cadre in that sense, but a bulk of people who can come in as health workers, paramedics, and so on. And also making sure we are able to provide dignified opportunities for Divyangjan. Mental health has also received a lot of attention. So these are the side for Vikasit Bharat and making sure Sabka Vikas hoega. But the idea is the advantage and the momentum that we gained since after COVID by increasing public capital expenditure will continue. We've announced that 12.2 lakh crores are coming through public expenditure this time. It is 4.4% of the GDP. I'd like you all to please notice that, which is the highest, at least in the last 10 years. It could even be highest if you were to take data earlier. No increment in capital expenditure, sustained fashion, has happened ever before. This one marking 4.4% of the GDP. Then what are the kind of things which will happen through it? You will have dedicated freight corridors. I've named Dankuni in the east, Surat in the west. Then I've also highlighted that 20 new national waterways, not national highways, national waterways are being planned. And again there, those are going to pass through some of the critical mineral areas. Orissa, where the mineral-rich state, you have the waterways taking it to the port, and the two ports have been identified, Paradip and Dhamra. Similarly, we are also making sure that the coastal cargo movements will be enabled through a cargo route, so that through the coastal area we are able to cut down on cost of movement of goods. City economic regions, developing them is a very big new measure that we are coming up with. And for that, an allocation of 5,000 crore per city economic region. Imagine the amount, 5,000 crores in 5 years, 1,000 crore per year per city is being given, and the emphasis is going to be largely on tier 2, tier 3 cities. And then talking of infrastructure further, with the capital expenditure coming with the big number, you're having also the high-speed rail corridors. 7 of them announced. The destinations are clear, so that they become the bridge for all these economical robust centers. So Those are for making sure that the infrastructure and the capital expenditure are getting tied up, and the country benefits from the ripple effects that these can bring in. The 7 strategic and frontier sectors in which we've highlighted that will increase productivity and also have new investments come in and give emphasis for India's own brand on those things is on the biopharma sector. I think that's going to be a big change in the way in which we are looking at giving capacity for those who are able to research, who are able to undertake research and development. So 10,000 crore initiative again over five years for domestic biologics and biosimilar production. This is a clear message and backed with enough substance that India's lead in the pharmaceutical sector should be kept intact, but at the same time bring in newer ways of helping the pharma sector, and also because it has an impact on human health. Semiconductor mission had 2 major announcements that will improve the India stack and also the IP related matters. Electronic components manufacturing scheme for 40,000 crores is a major encouragement for electronics to become self-sufficient. We have also announced establishing rare earth corridors so that India can face and be able to meet its own requirements with its materials. So once we identify and are able to explore these minerals and process them, make them available for us, our dependency on external sources for bringing in the rare earths will be lesser. And we've identified the states where we want to establish this rare earth corridors. They are going to be in Orissa, Kerala, Andhra Pradesh, and Tamil Nadu. So these are very important developments, and they are going to have multiple decadal impact on the Indian economy. Our dependence on magnets and rare earths will be brought down. 3 dedicated chemical parks, again for reducing our import dependence. High-tech tool rooms for research. That will be set up in 2 locations. Very important thing is about the construction equipment being imported. That could be for building tunnels or metros or high energy and also heavy duty equipments which we are relying on imports. We want to manufacture them in India. And that is why I said, how does it affect a common man? It affects because firefighters today have novel, new, big ticket and small, very small firefighting tools and weapons or equipments. We don't have them in this country. That's why if there is a fire accident in some very congested area, our equipments are not able to reach those points. Whereas there are equipments which today are produced abroad, which can navigate those small corridors and go save people's lives. Whether they or huge ones, all of which we want to make sure that we will have production in this country itself, whether they are tunnel boring or anything else, from small to big, we want to bring in those very impactful infrastructure into India. So we'll support domestic manufacturing. Then container manufacturing is another, which we'll support. I think I've gone in detail talking about the textile support in various forms. One very important announcement was made, Mahatma Gandhi Gram Swaraj initiative, which will make sure khadi, handloom, handicrafts will all be brought in, and one district, one product will all be brought in this initiative, and we'll be able to support rural artisans, rural workers, and handloom weavers in those areas. Legacy industrial corridors have got saturated. Manufacturing happening there is now very constricted because they are not able to bring in newer robotics and others. So we want to upgrade these legacy industrial clusters so that they become cost competitive and efficiency comes into these places. Even more important is the champion MSMEs, small and medium industries, entrepreneurs, MSMEs, who are going to be given all the support, and 3-pronged approach is being taken up there. We are giving equity support, We are giving also liquidity support, above all professional support for them, so that MSMEs, the equity support is supported by a 10,000 crore SME fund, growth fund. Above all, we are also topping up the Self-Reliant India Fund with 2,000 crores. So MSMEs should not feel any dearth of resources for equity. Similarly, they shouldn't feel any difficulty for liquidity in their hands, because the TREDS platform will now be treated almost as a backed up, security backed up instrument with which they'll be able to discount and get their monies. For professional support, we're working with the Chartered Accountant and Cost Accountant Institutes so that they can create corporate mitras who can help these MSMEs in filing their returns, doing their accounts, and so on. Above all, for youth and training, there's so much. You've heard the speech, so I won't want to take your time on it. High-powered education to employment enterprise, standing committees being formed so that they can recommend measures for service sector as a core driver of Vikasit Bharat. Part B concentrated a lot on tax and related concessions that are being offered. More importantly is the process simplification which has been announced. So elaborate measures have been taken. You will be able to also seek clarification if you want. New export opportunities for fishermen who can go into the economic India's zones, high seas, and also assess and access the global markets. The one very touching, and I really was moved by this proposal, is where we have identified 17 drugs or medicines which are going to be basic custom duty exempt, which are important for cancer patients. Similarly, 7 more rare diseases are added to the import exemption list of the import duties. Baggage clearance and personal items which you bring in when you travel are all being given enhanced duty-free allowance. Besides that, there are quite a few direct tax and indirect tax proposals. Decriminalizing the penalty proceedings and support to the IT sector are some of the high points. As an opening remark, I'll conclude here. I'm sure you'll be able to ask questions and seek clarification. Thank you for coming.
Thank you, ma'am. I'll start this question, taking the questions. First question is 17.
Good afternoon, ma'am. Shishir here from Hindu Business Line. Ma'am, my question is that under the miscellaneous capital receipt, the provision is 80,000 crore rupees. And last year, the provision was 47,000 crore, which has been reduced to 37,000 crore rupees now. Does this mean that there will be more equity monetization this year, or there will be more focus on the asset monetization of CPSEs?
So you've got it rightly. The intent is that we will have a very strong asset monetization plan in place. Last year, ma'am had announced in the budget that there will be a pipeline prepared, which is being done. So we hope to reap the dividends from that.
238.
Ma'am, Timsi Jaipuria, this side from CNBC TV18. I just wanted to know the rationale behind the hike in STT in futures and options.
So, first of all, I believe some confusion. In fact, the question that you have asked rightly reflects the announcement itself, that the only change made in STT is in the future and options. All the other STT rates remain the same. The primary objective of raising the tax rates on STT has been that it is felt that when you look at the volume of transactions in futures and options, whether you compare it to the size of GDP or size of the underlying securities market, it is largely in the realm of heavy speculation, which results in losses to small, retail, unsophisticated investors. And the government's intention is to discourage speculative tendencies, and the increase in rate is essentially in that direction. So it is meant to essentially handle the systemic risk in derivative markets. Even after this increase, however, the rates of STT will remain modest compared to the volume of the transactions that is happening there. This is the reason.
54.
मैम तरुण शर्मा फ्रॉम जी बिजनेस। मैम आपने पूरा बजट जो है वो न्यू एमर्जिंग सेक्टर पे बड़ा फोकस रखा है। मैम मेरा सवाल आपसे दो हैं यदि आप अलाउ करें। एक मैम आपने जो एक्साइज ड्यूटी का कैलकुलेशन किया है वो पिछले बजट एस्टिमेट से इस बजट एस्टिमेट में तकरीबन 22% की ग्रोथ देखने को मिली है। दूसरा मैम जो आपने एमएसएमई के लिए कहा कि जो ट्रांजैक्शंस होंगे उसके लिए आप एक्सचेंज प्लेटफॉर्म का यूज़ करना होगा, तो क्या मैम ये सीपीएससीज के लिए कंपलसरी होगा जो डिस्काउंट ट्रेडिंग की जो बात है? थैंक यू।
I'll take the second question, ma'am. So, हाँ, ये CPSCs के लिए मैंडेटरी होगा कि डिस्काउंटिंग एज वेल एज नॉन डिस्काउंटेड बिल्स दोनों को ही ट्रेड्स पे करना होगा ताकि वो 45 दिन में भुगतान MSME को कर पाएँ, और ये हर तरह से चेक कर लिया गया है कि ये हो सकता है। So, we want to make CPSCs as pioneers. We hope, like ma'am has said in her speech also, that other corporates will also follow.
On excise?
Increased by 22%, sir, from last year B to this year.
Because there is from 1st of February, all the tobacco products have come back into excise, and all those revenues will account for the increase of the next year.
209.
Ma'am, Prakash Priyadarshi from ET now. The budget has announced restructuring of PFC and REC. What will this restructuring look like? And does this also mean that these NBFC will be merged going forward?
What is the later part of your question? That these NBFCs are not going to?
Will be merged going forward?
Yeah, I've said we are rationalizing it. You'll get to know as we go forward. We want to streamline it, and therefore we'll be taking some steps. We'll let you know the moment we decide how to go about it.
234.
Hello, ma'am. Harsh Kumar from Business Standard. Ma'am, two questions. One is, you said that a high-level committee will be formed on the banking reforms in order to 2047. Are we going further for any kind of merger or something? Since government is continuously saying that we need at least two of the big banks, in at least of the top 20 banks. So are we going towards that?
No, first of all, when I say that it's going to be a high-level committee which is going to look into it, the terms of reference will be prepared, and we are looking at committee to go into the entire expanse of the banking sector so that they come up with recommendations which help us to plan for banking for 2047. We need, by the time we become a Vikasit Bharat, 2047 is our goal. We need to understand what are the other steps that we need to take in the banking area, and based on the recommendations, we'll go forward. But we have the Secretary, Department of Financial Services. We'll ask him to also give us, please.
Ma'am, I think you have rightly responded. There are a large number of aspects relating to the banking requirement. For example, the credit to the GDP, and what kind of procedures currently we have that is impeding both the deposits as well as credit. All those aspects will be looked at by an expert panel, a committee. And well, we will definitely have TOR, and then also consult the all the stakeholders. And the government will take a view on how to lay strong foundation for 2047 Viksit Bharat.
Ma'am, one more question.
229.
Okay, well, that is the finance minister and the secretaries with her in terms of the press conference which is underway. We'll go back to it and get you more. 400 lower on the Nifty now. Amit Jeswani is with us to run us through what he made of things. Amit, there are, good afternoon, there are positives and allocations, data center, and there is buyback taxation, and there is stuff there, right? But this STT thing has kind of thrown cold water. And it's only local investors today. Foreigners will come back tomorrow. I spoke to Ramdev Agarwal. He said, well, we'll have to, and I'm quoting him, he said, we'll have to see how furious FIRs are when they come. Now, I don't know. What's your sense, Amit?
Hi, Prashant. Good afternoon. Thank you so much for having me on your show. Prashant, it's a tough budget, to be honest, and it's a tough day on the street as well. Let's be honest, this hike in STT was not expected. And we are seeing our portfolios being down 2%, and that's the case with Nifty as well. So broadly, it's a tough budget. There was no green shoots in this budget, nothing to write back home. See, the small 2-3% here and there moves is good for newspapers, but it doesn't move the markets, right? We are stock market people. And the thing is that there are no trends. That's the problem right now, because gold and silver volatility has increased a lot. And now you have a budget STT hike. So we need to find newer trends. That's the whole game. That once your risk management phase ends this time, we will have to see can we allocate the incremental capital, and which are the trends. See, it's earnings season. We will get good opportunities. For us, it's all about where do we see incremental growth, and that's where we'll keep adding our weights.
Okay, all right. Hi, Amit. Good to see you in. Well, markets a shade of red itself. The last time around, you were talking about MEGA. Make India great again. The markets have underperformed actually in the last 1 year. Do you think there's no reason for us to actually outperform from here on? Earnings growth could come about. We're not cheap. And this budget, at least for the equity markets, has been a bit of a dampener. Go ahead.
So Nigel, even before the budget, the stocks that were doing well were basically commodities and somewhat gold-related counters, and some PSU banks, because of value being the theme. If commodities have already fallen 20-30% from stocks have fallen 20-30% from last time I came here, that was like a week ago. Of course, even gold-related stocks have fallen 10-12%. So that trade is right now is going to consolidate. That's what you need. If you're going to sell these things now, you need somewhere to put in your capital. And the markets are going to stay flat till we don't have a new leader. See, every bull market needs a leader. 78% of global returns in the last 1 year have come in AI or semicon related stocks in the world. So market needs a bull market leader. There's no leader. Where do we go? That's a problem that most portfolio managers will face.
Amit, I'm trying to clutch on for some kind of positives for the equity market. Do you think the kind of meltdown that we saw in precious metals, gold, silver, that actually could be some kind of a blessing for equity investors? Because otherwise there was some money that was moving towards those asset classes. Now there's a shakeout over there after a while. Everyone's woken up again. You'd rather allocate a higher proportion equities. Do you think that's the way to go? Could that be a bit of a blessing that precious metals actually have seen some kind of a jitter or some kind of a shakeout?
Actually, the guys who are putting money in precious metals were stock market investors only.
Yeah, that's what I'm saying. So now they come back, right?
They will come back. They've lost money. Actually, they've lost confidence. And see, losing capital is okay. Losing confidence is not okay at all. In bear markets, bull markets, do not lose capital. Even if you've lost some money in gold, silver, I think gold will make a comeback once it stabilizes. Silver, God knows. But don't worry, gold will, till Trump is there, you have a hedge. Gold is a great hedge. Not that I have positions, but gold is a great hedge. And in this dip, maybe a good buying opportunity. It's a Trump put, right? You always had Fed puts, but gold will act as a Trump put all the time. And at lower levels, at $4,500 or lower, I would say gold becomes super interesting because it will act like an uncorrelated asset to equities, and it will hedge your, you don't have to look at Truth Social every morning.
Yeah. The market, the old joke, right? Not an old joke, new. Market falls 2%, the truth will change. That is also true. But anyway, we should put this out. what the DEA secretary, the pain point for market is STT. The DEA secretary has said STT increased because of high speculation in the F&O market. High speculation in F&O market resulting in losses for retail investors. And despite increase in F&O STT rates, the hike is modest, and this is modest as compared to volumes which are traded. We should actually put this out at the bottom of the screen in terms of those flashes. We were talking about commodities, right? Now, Amit, STT on equity has been increased, but CTT on commodities has not been increased. Now, that is another googly.
So it's only God and Nirmala ji can tell you. I don't know what logics work out there. So I don't know what to say.
No, actually, it is a signal that aap equity mein dekhe, commodity, So all these high frequency chaps will move to commodity now. I don't know. There are options in commodities.
See, commodity, actually, there's no open interest. Even if you look at silver open interest, yesterday I was looking at silver open interest. Silver open interest was 8,000 lots. That was worth 2,000 crores. So actually in MCX, there's no large open interest that happens. It's just a lot of speculation that happens, and a lot of guys who want to hedge between this and COMEX, and dwellers who are there, they keep hedging. That's the only kind of
there is no open. But Amit, total open interest in options in MCX is quite large, isn't it?
No, I was speaking about futures, not options.
No, I'm talking about options.
Futures was 8,000 lots.
I see. No, I'm talking, okay. Okay.
That's not a lot, that's 2,000 crores. So that's not a large number that people got disrupted, etc. Just look at open interest of F&O. That is how I look at it.
Okay. Now,
so it's not like,
sorry. You own MCX, Amit, I know. So, you still own it?
See, I would be buying or selling MCX today, so I can't speak about MCX today. I can't say what I'm doing.
Okay, all right, no problem. I won't press you. Anything else you've done today? You've been net reduction, net addition to put.
There's no addition to the portfolio today. Mostly it's just managing risk. See, we have to manage risk. We're risk managers. So we have to manage some risk on the portfolio, but no large addition today. We need to rethink, it's been a long day, to be honest, and our portfolios are down 2% today. So we need to rethink what the next strategy will be. But rethink will happen once 3:30 happens. I'm waiting for 3:30 on a Sunday.
All right, just one final question then. Any new trends? You said that you're waiting for the new trend to emerge, what the next leader of the market could be. Do you want to give us some ideas here?
No, so we don't know new trends yet. There has to be earnings growth. See, auto numbers today were really good. All auto numbers are good in general. M&M was 25%, TVS was 29%. I'm just giving you random names. Some we may have vested interest. Me, my clients, my family have vested interest in whatever I speak. But auto numbers look okay. GST collection looks okay. See, there are no new trends right now. Right now, the whole game is how to protect my portfolio. That's the only thing which is going on in my mind.
Okay. Amit, a couple of sectors, though, are in the green. The EMS space, those stocks have got hit. There's been an allocation increase out there, so those stocks in the green. Data centers as well, that's another theme that's playing out today. Anything you like from there?
So there is no stock to buy in the data center space. What they did is very good till 2047, no taxes. But in India, there are no listed plays. A real estate company saying it's a data center company doesn't make it a data center company, right? And the other companies are just too expensive. So there are only 2 plays or 3 plays here. And none of them are like, see, you get Microsoft or, those kind of names at 30p. And here we're paying a lot higher for not great growth. So I wouldn't, there are no places to play. I love the theme. I wish I could, but there is no place to play there. There's no place to play in the data center.
Data center and EMS?
EMS, no, we don't have any exposure towards EMS right now. We cut all our positions in EMS before this, not before, I would say during the meltdown that happened. Right now, growth expectations for all EMS, while a few numbers were good, but growth expectation and valuations have corrected across, and it will take some time for EMS companies to go back to new highs. I don't think, see, they were the leaders of the previous bull market. Let the consolidation happen and then they'll lead the next bull market. I'm not bearish right now on these levels because they've already fallen like 40%, but I'm not hyper bullish. I don't think they will lead the bull market. A bull market needs a surprise, something that people are not expecting and starts growing at 50%, 40%, 60%. Actually, numbers were very good for the second largest exchange. They were looking super good. The month of Jan has been super good for option volumes, etc. But this is going to be a sentiment change. I don't think the long-term trend changes for options.
So
but we still have to think again. Like, it's just 2 hours to this news, and we will have to rethink how we look about our portfolio.
Okay, Amit, we request you to join in again. For the time being, you're waiting for 3:30, but sounding a little bit cautious, and that pleasant surprise really eluded us today. If at all, someone was hoping that Finance Minister will deliver that for the equity markets in particular. Thanks a lot, Amit, for joining in. Enjoy the rest of the day. Let's welcome Gurmeet Chadha back on the show. Gurmeet, good afternoon. We spoke this morning. You were gunning for some kind of positive news. Doesn't seem to be the case. Finance Minister has gone ahead and increased STT, which may not be a very, very big factor, but for sentiment, it's definitely dented sentiment. Forget about any kind of leeway on STCG or LTCG. What have you all done today?
So haven't done much, Nigel. We've added a little bit in BFSI because the credit growth continues to be strong. Some of the names have really become cheap, like some of the HFCs like Bajaj Housing. The bank credit growth has been pretty solid at almost 14.5%. So added some names there. We are now, just dissecting more on this data center tax holiday. We are also looking at the ISM 2.0. And one of the big beneficiaries of data center is also the ancillaries and the ecosystem around it, which is, let's say, specialized battery makers, the energy players and the energy ancillary players. Also, defense capital outlay has gone up. So while the defense budget overall may look optically, a certain modest increase, but within the budget, the capital outlay part is the highest. And anyways, government has been doing emergency purchase there as well. So any weakness there, we'll probably see if we can do some funding. But overall, I think the sentiment needed a bit of an uplift, and it's just worked the other way. I think somewhere we are missing the point on interlinkage between capital markets, currency, sentiment, and investments. So I think that interlinkage is missing. We are taking ad hoc decisions, and somewhere, every year some change in taxation, STT or, buyback or something or the other is hurting it. And I think we need more stability. We need more predictability. We need more simplicity. Too many changes almost every year.
And even in the buyback, there are different rates for a minority shareholder who will be now taxed at the LTCG, for promoters, for corporates, etc. So there is a tiered system now which comes into play for buyback. But it's been a tough day, no doubt, Gurmeet. This is the biggest budget day fall that we've seen in the last 6 years. Specifically about data centers, since you said that you are analyzing it, while you like the ancillary play here, but what about the stocks which are reacting now? E2E, Orion Pro, and Anantraj. Does it really move the needle for these stocks?
A little early to say, Rima, but as I said, something like, let's say, an HBL, which is into specialized batteries for data center, also into Railway Kavach, which is the security program. We are looking at that. It had a bit of a knock because, one of the order got cancelled, and then another one came yesterday. Something related to energy, because the overall big beneficiary of this entire data center AI play is energy. It needs tons of energy. So that's something we are looking at, both in terms of power equipments, PCB makers, other power equipments as well. And something I think which I found interesting was, these chemical parks and textile stuff. I think these two spaces have been very badly beaten down, especially chemicals. And we need to probably analyze and see. A lot of them are available at 8, 9, 10 times earnings. Some of them are actually available at 6, 7 times free cash flow. So lot of price damage there. And not today. I mean, I'm talking about last 2, 3 years. So we are dissecting that. So it's very focused, this budget, semiconductors, EMS, chemical parks, textiles. So you got to then, analyze more details and blueprint. But overall, I think, as I said, if you are discouraging short-term speculation, you need to encourage long-term investing also. That is how the balancing act is done. I think that the budget has missed the trick.
Gurmeet, we were just wondering why STT on equity derivatives are higher and not on commodity derivatives. Any thoughts? Any reason?
Don't know, Prashant. Maybe it will come next. Once the volume pick up, so if you see there is a pattern here. They went after Dream 11, online.
मैं viewers को बता दूं, हम लोग हंस रहे हैं, but अभी जो क्या बोलते हैं?
Government is sending a clear signal.
जो नहीं, there is a what is that song? जो मुस्कुरा रहे हो, क्या गम है जो छुपा रहे हो? हाँ, गुरमीत?
हाँ. So I was telling somebody कि भगवान का दिया सब कुछ है, बस equity taxation नहीं है. So.
The government wants everyone to focus on productive things. Cigarettes, the duty has gone up 40%. Dream 11, all those, real-time games, that's stopped. No FNO trading. Reformation.
Look at the market, guys, by the way.
Yeah, days low.
Wow, it's a plunge which has happened, and there's no other way to put it. 550 points down. So there is a swift kind of fall which is taking place. By the way, the day's low is 24,571, and we are at 750. Basically, we are about, the fall was so sharp in the morning. How much would we fall, guys, in the morning? 700 points?
Yes, 750 points.
Wow, 750 points at the day's low, which means that's the only reason why we are still about 200 points off the day's lowest level at this stage. But this is a very sharp cut which is materializing once again.
And without the full participation of the foreign investors.
Nigel, my sense is at some level this could be, people could be,
preempting,
shorting, thinking tomorrow FIs are going to come. As Ramdeshi said, how furious will they be?
Yeah.
Right? How angry will they be? Will they be sellers? So, I mean, it's possible people are kind of trying to preempt that move. The positioning data, etc., will tell us that a little later. Nifty Bank maybe as well.
It's down 1,300 points.
Wow.
Smash.
So 2% lower, and I think the Nifty mid cap and small cap indices is also selling off hard. 2.4. The low was so the intraday sell-off was so large that on all these indices they're still 1.5% away from the day's low. But these are large enough cuts in any case. Almost 600 gone now on the Nifty. So it's a poor Sunday for equity market.
Not such a special super Sunday, right?
Who said in the morning? Somebody said. The color, or so the guest who said that. At the NSE, you were at the NSE, and someone said that I hope it's not going to be.
And today's low actually is coinciding with the September 30th low. We went down on September 30th to 24,587, and from there we did see a bit of a bounce. The problem is now there's no real trigger, to get very, very excited about the markets. Hopefully earnings pick up, but otherwise that that important trigger is missing. That reason to go ahead and buy. And just one more point, Prashant, you're making with regard to positioning. The factor that we track in terms of technicals is also the PCR. That's come down to 0.61. So normally we've seen it base out. Yeah, but we'll have to see. Tomorrow's going to be a rough morning, and then maybe some kind of stability is what we're looking forward to. But the PCR is moving towards that oversold level at around 0.61 as we speak.
Yeah. Mitesh is with us. Mitesh, sorry, you've been hearing and I didn't come to you earlier, but anything you'd recommend viewers do? Anything out there? Trades?
Couple of things, Prashant. One, I think, 24,950, 25,000 zone is taken out. But what is remaining is the Bank Nifty 58,200, 58,100 zone. If that goes, I would expect the Bank Nifty to head further lower, possibly till about 57,600 to begin with, and then 57,000, which means that in turn could put further pressure on the Nifty. So I think for the time being, the directional bias remains on the downside. We have maintained that we have had some put option spreads on the Nifty. I think we're holding on to them. And that apart, on the stock side, I have a sell on KFin Tech with a stop at about 910 for targets of 940. That's one trading call. And the other one is also a sell call, which is on MCX. It's come off the base low, but the structure is extremely weak. So if you want to sell now, keep a stop at about 2270. Look for targets of around 2120.
6 Nifty stocks which are managing to close up in the green: Max Healthcare, TCS, Wipro, Kotak Mahindra Bank and Sun Pharma. That's the only space where you can see green on the screen. Mitesh, any trades here? There seems to be a flight to safety when it comes to IT this morning, this trade.
So, IT, I still don't want to look into it, but I was listening to the conversation which you had earlier, and a couple of these data center names are showing some signs of reversal. I was looking at the charts of E2E. That's looking very good in the short term. I think the stock climbed from 3,800 all the way down to about sub 2,000 and is now giving you first signs of reversals. I think it could possibly, if you can keep a stop just below 2,200, maybe about 10-15 points further lower, I think the first target could be around 2,600, and in a good case scenario, even 2,800 on the upside could happen.
Yeah, absolutely. Gurmeet, anything else you want to add? It's a poor day, what can one say? But 600 points now.
So we wait for tomorrow now, Prashant, because the full FI participation would probably come in tomorrow. Let's see. I think there will be very sharp moves, and I think till such time, I think it's good to preserve some cash. Fortunately, we have some. But let's see. We were hoping to deploy today, but the market has taken all of us by surprise. But as I said, few things will stand out eventually once things settle, because there's not much incremental damage as far as things at the economy or market level is concerned. So maybe BFSI, auto, wherever the trends are positive, economic momentum is good, might present some opportunities. But good to wait for some time. Also, this metal meltdown, margin calls getting triggered will have some impact. So that may actually work to your favor in some time. May not be immediately, but maybe with a lag.
Market breadth is completely swung, 2:1 on the other side. So 1,000 stocks are higher, some 2,100 stocks on the NSE are lower right now. And it's, Hindustan Copper, just the big volume-led losers, right? I mean, I think I can count at least, it's a long list of 10% losers today. Hindustan Copper, MCX, BSE, Hindustan Zinc, Nalco, Garden Reach, Mazgaon, BDL, that big rally in defense, all sold into. And this is something we were talking about earlier as well. Angel One, the gold ETFs, Muthoot Finance, Silver Bees, Bank of India, Nuvama, Paras Defense, Indian Bank, IIFL down 10. And that's just, I guess, half the list, because it's a really long list of just severe amount of selling pressure which came through and showed up in terms of trade today, guys.
Well, that's right. A lot of selling is what we've seen across the board actually in today's trading session. Rima, you want to highlight a few more names?
Well, on the way down, it's mostly related to the commodity names. Hindustan Copper, MCX, many of the ETFs, Nippon India Silver ETF. Defense stocks corrected sharply. There was anticipation of a bigger increase, but there was disappointment visible on Bharat Dynamics, BEL, PSU banks under pressure, Bank of India. In the frontline pack, we had Hindalco, ONGC, SBI. These are stocks with cuts in excess of more than 5%. On the way up, I think IT goes home as the only sectoral index which managed to close in the green.
Well, on that note, though, we'll wrap up on our special coverage. More news and updates continue right here on CNBC TV18. Stay with us.
Hello and welcome to this budget special. I am Rima. With me is Nigel, and markets crashed on budget day. The key indices were down 2%. The Nifty at that 24,800 mark. The Sensex selling off nearly 1,500 points. And of course, the biggest culprit was the sentiment dampener was the increase in STT on the derivatives market.
Well, that's right, Rima. Let's do a quick wrap, though, of what took place in today's trading session. Yes, as you said, the Nifty was down, and you did have the Nifty Bank as well that was under pressure in today's trading session. A very, very difficult day of trade. As you can see, all the indices, the Nifty ending down close to around 500 points. At one point of time, we were down close to around 700 points. The biggest hit really today came in terms of sentiment. No one was factoring in, or at least the buzz was not very, very loud, that an STT hike could come about. That's precisely what the finance minister did announce. And because of that, you had all these market players, whether you're looking at Angel One, BSE, CDSL, all of them took a sharp knock in today's trading session. There was an expectation that the defense-related names, they'll see a higher allocation. To be fair, actually, the allocation is quite high. However, those stocks had already run up in anticipation, and that's why those stocks had come in for profit-taking. BEL, Bharat Dynamics, as well as HAL, all of them sharply lower in today's trading session. Bharat Dynamics, in fact, had put on a good amount of weight getting into this event, and all that got sold into, so those stocks were under pressure. The other problem was the gross market borrowing. That number came higher than expected at around 17 lakh crore, or the street was bracing for a number of around 16 to around 16.5 lakh crore. And because of that, the PSU banking names, after seeing a good run up in the last few trading sessions, they did come in for profit taking. Even Big Boy, SBI did see some selling. PNB as well did end lower in today's trade. The other couple of names, though, did pretty well. So let's highlight a couple of winners. Data center plays. There was a bit of a booster shot that came in for them. So Anant Raj, E2E Networks. Remember, these are stocks that have already seen a sharp correction. You have NetWeb Technologies as well. That was higher. Let's get some of those stocks running for you on the screen. And Orient Pro, some kind of play with regard to data center. We'll have to see how it actually plays out. For the time being, though, these stocks did pretty well. Precious metal stocks, though, they did correct over the weekend. And today, some of those stocks that are direct play in terms of precious metals, they came in for profit taking. MCX was down close to around 10% in trade. You had Muthoot Finance as well. That was lower because, that in the entire up move that we saw on gold, Muthoot Finance as well did play out. And Hindustan Zinc, Vedanta just sold a % stake in the company at much higher levels. And today, post that correction that we saw on silver, well, those stocks, in fact, were lower. The AMS companies, though, there was a hike in terms of the PLI component. And because of that, those stocks did well. So Amber, Keynes, both of them, they outperformed in today's trading session. Moving to some of those IT sector names, there was some kind of relief that came because of the harbor turnover threshold for IT services. That was increased. Some kind of booster shot coming in with simplification of buyback rules as well. That's what pushed these stocks up. So you had Wipro that was higher in today's trading session. Finally, there was a fear that there's going to be a hike in gold import duty. Didn't come about, so you had the jewelers that actually did pretty well. Titan came off the highs, though that stock was trading in the green. And in today's market, a stock trading in the green actually was a bit of a rarity. And Kalyan Jewelers as well, after the kind of selling that we've seen, that stock as well moved up. The other space that actually did see some kind of a bounce from the lows was the OMCs, because the excise duty hike on oil hasn't really been announced. We'll have to see how the arithmetic works. But HPCL, after CNBC TV18, got some clarification on that front. That stock as well ended higher. But Rima, what a day of trade, right? No one would have thought. Came in with some optimism that maybe there'll be something that'll be done to spur sentiment, to get the FIs back. That didn't come about. The STT hike, that's something that's prolonged the pain, actually, from an equity market perspective.
Completely spooked the market, and this is the biggest single-day fall that we've seen on a budget day in the last 6 years. In fact, let's go across to Yash to talk about what is the biggest overhang on the market, this increase in the STT on derivatives. Yash.
Well, Rima, just yesterday there were certain counters from where there was a very faint noise around STT increase which was being heard. Of course, yesterday it was only a chatter. And today it played out exactly as per the script. The government, through its budget, hiking the securities transaction tax or STT on equity options to 0.15% from 0.1%. That's a hike of about 50% in STT on equity options, and on equity futures, STT being hiked from 0.15% to 0.15% from 0.05%. That's a 150% hike in STT on equity futures. Now, an important clarification where the market was into some bit of confusion in the early announcement time, and that was that this STT is only on equity options and futures and not on commodity transactions. So that is an important clarification which came about from experts as the day went, but indeed a very steep hike when it comes to the securities transaction tax, which is expected to hit very hard as far as those high frequency trade, those multiple transactions are concerned as far as futures and options is concerned. From the listed player point of view, of course, there are certain players on the market which are severely impacted, and that showed in the stock price as well. For Angel One, FNO transactions contribute about 44% of their revenue. BSE, it contributes about 55% of their revenue. NSE, it contributes about 70% of their revenue. These numbers are as on FY25, and the change in taxation is expected to impact this side of the revenue directly. There was a very interesting tweet which came from Nitin Kamath, I'm sorry, and that was projected STT collection for FY25-26 was 78,000 crores. The government was falling short by about 25%. This coming about will take care of that deficit, hopefully, in the coming financial year.
Okay, all right. Thanks a lot for that. Yash, well, let's focus on the other sector, defense. That was on the offensive of the last few trading sessions. Today, they actually got what they wanted, but the stocks did sell off. Ria joins in to break down the numbers for us. Ria, take it away.
Well, yes, the government this time around has announced a total defense budget of 7.85 lakh crores. Now, compare this to last year's budget of 6.81 lakh crores. It's an increase of roughly 15%. So, the expectations on this front range from 10 to 15%. So, this is at the top end of the expectations. The defense expenditure has been announced at 5.95 lakh crore rupees for the year, up 21% compared to last year's budget. Defense capital allocation has also been announced at 2.31 lakh crores versus 1.92 lakh crores in FY26, and this is also an increase of roughly 20% compared to last year, also in line with the expectations that the street was working with. There has also been a 24% increase in the budget for defense modernization, which is a bit positive. Apart from this, they have also allocated roughly rupees 63,734 crores for aircraft and aero engines for defense, which is a 31% increase compared to last year's outlay. Now, in terms of the market reaction, the Nifty Defense Index ended roughly 5.4% lower today, recovering from its lows of 7 to 8%. And in fact, at one point of the trading session earlier before the budget was announced, it was up by roughly 2% earlier in the session. Now, the street seems to be disappointed by the fact that there were no separate announcements or schemes that were announced for certain segments like drones, UAVs, electronic warfare, defense electronics, missiles, even for arms and ammunition or for indigenization as a whole. So that is where the street seems to be disappointed. But overall, this was a very healthy increase in the capital allocation as well as for the overall defense budget.
Thank you very much for that. It's over to Ekta now for more on what came out on the biopharma.
Well, yes, I'll start with, Biopharma Shakti, which was announced. So it's around a 10,000 crore biopharma scheme which was launched, which is aimed to make India a biopharma hub, build domestic biologics manufacturing. So there are 3 new NIPER institutes which are planned, 7 existing NIPER institutes which will be upgraded, and 1,000 plus accredited clinical trial sites which are proposed as well. It is a sentiment positive for the sector. Biocon, Dr. Reddy, Sun Pharma, Lupin, Glenmark, just to name a few. In terms of hospitals and diagnostics, medical tourism push. So 5 regional medical hubs are planned. It will be a public-private partnership model. Integrated healthcare complexes are proposed as well. Listed beneficiaries include the likes of Apollo, Fortis, Max Healthcare, Dr. Lal's, Metropolis, all of these stocks in focus. But remember, while this is a positive, the execution will be something that the street will be watching for in terms of all of these announcements and the material impact eventually on the earnings as well.
Okay, got it. Thanks, Ekta, for that. Hopping across to Upasana, she brings us some good news with regard to a few of those companies from the EMS space that actually did well. Upasana, tell us.
Well, under the ECMS scheme, the investment outlay has been increased from 22,919 crore to 40,000 crore. Mind you that the ECMS scheme was first notified in April 2025 with a budget outlay of 22,919 crore for a period of 6 years, with the aim to build $500 billion electronic manufacturing ecosystem by 2030-31. Now, we are assessing a positive impact on EMS players given the high allocation, which means more approvals for the companies. Now, if you look at the latest development in October 2025, MEIT has approved the first batch of 7 projects under ECMS involving manufacturing of copper-clad PCBs and even camera modules. Now, the approved players so far include Keynes Tech, which has received approvals in all the categories that they have applied. Syrma SGS and Amber have also got approvals for multi-layer board. And now lastly, coming to Dixon, the approvals for display application and even optical transceiver is awaited in the upcoming tranches of ECMS approvals. So all in all, certainly a positive news for EMS space.
Thank you very much for that. And on that note, we'll slip into a short break. On the other side, Feroz Aziz of Anand Rathi Wealth and Rajashri Sabnavis of Grant Thornton Advisory will be joining in. Hello and welcome. You're still tuned into this special budget programming on CNBC TV18. A lot of announcements and taxation, of course, that is one important aspect to discuss. What it means for you as an investor, how does it impact your profits, how does it impact you on a daily basis? Let's get to that and understand more on the impact. Joining us today are Feroz Aziz of Anand Rathi Wealth, and we also have Rajshri Sabnavis joining us. She's from Grant Thornton, Bharat. Feroz and Rajshri, thank you so much for joining in. Of course, we've been talking about that hike in securities transaction tax, the change in buyback taxes. Before we discuss those in greater detail, what stood out for you in the budget when it comes to personal finance and personal taxes? Rajshri, let me begin with you, and then I'll come across to you, Feroz.
Sure. Thanks. Thanks for having me on this panel. I think if one were to look at from a market standpoint, I would segregate into small investors, small and retail investors, and large corporates and the traders. Every effort has been made in this budget to essentially protect the small shareholders, and you've seen some of the announcements. In fact, they go to the fundamental. The second is, when we talk about investors, I think the serious investors would clearly look at the actual fundamental growth and the growth trajectory that we as a country are at. And some of the announcements that has been made, keeping in mind the global uncertainty and the headwind, tailwind, whatever you may refer to, I think that's something which we should be considering. And from a tax standpoint, the promise was made in terms of not too many changes, simplifying and ensuring that the smaller taxpayers face less compliance burden. I think every effort has been made in this budget to walk the talk.
Okay, take that
so
point.
If you want examples, I can quickly touch upon it, but I guess it's up to you.
No, of course. I'll come back to you on that example quickly. Rajshri, let me go across to Feroz. Feroz, what stood out for you in the budget from a personal tax perspective? We did see securities transaction tax on F&O getting hiked. Do you think that would impact arbitrage funds and ultimately the returns for an investor there?
Yes, Sonal. First, let me touch upon the direct tax. I think one thing, if you're a viewer and if you're watching, if you're in the old tax regime, it is apparent to naked eye that you should not swim against the tide. There are about 74%, 73% of them have now moved to the new tax regime. If you are a part of the 26%, I think this budget is the last nail in the coffin for the old tax regime. And you should try and move to the new one at ASAP and not get into these small deductions, because there was no tampering there. And the new tax regime is so lucrative that you shouldn't miss it out. That's point one. Point two, when it comes to STT, I think there are large implications, different kinds of implication of the STT. One is there's a key message. That's not just an STT change. If you read the para in the proposed bill, you will see it as we are trying to discourage the futures and options trading platform and the higher volumes which are there. It's not just about tax collection. How much tax do we collect in STD? 48,000 crores, if I'm not wrong. That will not materially change because of this tax change. It is a message that we don't want trading mindset capital market like the US. We want a more investor-friendly market than a trader-friendly market. That's why you see the traders are spoofed and they want to quit today and bring down Nifty by about 600 points. So it is investor-friendly, trader-unfriendly. That's one message. The second thing, if you see the nuance or the fine print, says that interest expense will not be allowed to set off against the dividend if you have borrowed to invest in the market. Again, leveraged market positions are also discouraged. So that's where I would like to stop. But there are larger implications to the futures and options on the derivative side. Since I manage a derivative treasury for a couple of decades, I probably touch upon a little greater detail at that point.
Okay, I'll come to you on that in just a bit. Rajshri, you wanted to give an example on how smaller changes have been made that could have a bigger impact. If you can touch upon that in a greater detail, and the buyback tax that has been changed. Can you explain that to us? How does it change for retail investors? Because for corporate promoters and non-corporate promoters, we have different rates. What does it mean for a retail investor?
Sure. I guess, until last year, what they had said is when buyback tax was introduced, of course, and when the change was brought in, they had said it would be taxed as dividend income. okay, in the hands of the investor. They have in fact cleared that, and they've made it uniform and said everything will now be subject to tax as capital gains. The only differentiation that they made is because the promoters are in a position to influence these decisions, there is an attempt, and there is clearly, that's what the announcement is, which said that the promoters will not only, there is an additional tax that is applicable to promoters as well. Now, of course, the rate of tax would differ depending on whether the promoter is an individual or corporate, and accordingly, there is an additional tax that has been imposed. That's one. Second, if you see, for the first time, if you see again the small shareholders. So here again, my smaller shareholders, very clear, it's capital gains. Second attempt has been made in terms of filing of these Form 15F and 15G. This is again small shareholders, mind you. Earlier, you would have to run to every bank, every company and submit these forms. Now what they're saying is all these smaller shareholders have to do is submit it to the depository, and the depository will then in turn submit it to the company. So here, cost of compliance and the headache of going across to so many companies is kind of cut down to a large extent. So that is a second move. Third, again, there is an attempt to, from a tax standpoint, if you are a small shareholder, again, there are certain filings which you can make. They have kind of made changes to the timelines within which you can actually go and revise a return. If you want to declare certain foreign assets, again, there is a revision that's been made. So all in all, it is more bringing in stability and also looking at the small retail shareholders and trying to protect, in a way, from the market vagaries, which if a few months ago, the entire STT, I'm not surprised, with the rate increase, because there was data that was available in the public domain, which showed how much of money the retail investors had lost on account of trading in futures and options.
9 out of 10 investors, or traders, I would say the word, had lost money in F&O trading. Take that point, and that is something that the ministry had also alluded to, the particular study. Firoz, you wanted to touch upon the derivatives bit, also wanted to understand some of the exemptions or the TCS rate cuts which have come by on LRS payments that are made. I just wanted to understand, how are some of these factors going to affect your personal finances? You did mention it's time to move to new tax regime. Anything else that you think was a big takeaway from the budget this time?
Yes, so let's see. First, let me touch upon that 15H and 15G submission to depositories. Is of course something which is very good, but I was surprised when I read the fine print that it's applicable from financial year 27-28 and not the one which is coming by. So that's one thing which you should keep a note of. The relief to small shareholders and senior citizens with that form submitting to depositories is not applicable for the subsequent financial year, but 1 year later. That was surprising. That's one thing I thought fine print should be highlighted. Coming to the question of, from a personal tax standpoint, what stands out is certainly the fact that the buyback tax, I personally think it is beyond the point which I'm going to make is a nuanced point and not visible to naked eye. It is not about tax coming down for a retail shareholder alone. If the tax comes down from dividend tax, which was a flat rate, to 12.5% in the hands of the tax owner, there are two things which happen. One is the frequency with which buybacks were happening had become near zero. Now, when buybacks happen in the market, there's a kind of a market buoyancy which happens. Now, for example, if I'm a listed company, if I'm making profits like if my company's profits projected are 375 crores for this year, and if with God's grace, if I'm able to meet that guidance, the first question which the board will ask is how much to be paid back and by what form. If it is dividend, it does not impact market prices, but if it is buyback, it creates a buoyancy to the price. That company is extinguishing their shares by buying it back, increasing the promoter stake if it does not participate. So it is a great, positive, buoyant sentiment for the NSE small cap 250 companies, especially because today the balance sheets are reasonably large. The reserves are too many. And that's why I think is the most important impact. Not the tax, but the frequency of buybacks, creating market liquidity for an FII, for a retail guy, tax efficiently.
Got it. I take that point. I have a lot more questions. We are completely out of time, so we'll take this forward some other day, I would say tomorrow, because we have a working day, a Monday tomorrow. But thank you so much for your initial thoughts, Feroz and Rajshri. It was a pleasure speaking with you. And with that, we'll take your leave on this edition of Budget Programming. But of course, more will continue on the other side.
माननीय वित्त मंत्री श्रीमती निर्मला सीतारमन जी.
We are inspired by three kartavya. Our first kartavya is to accelerate and sustain economic growth. Our second kartavya is to fulfill aspirations of our people and build their capacity, making them strong partners in India's path to prosperity. Our third kartavya, aligned with our vision of Sabka Saath, Sabka Vikas.
Good evening and thank you for joining this CNBC TV18 special broadcast on Budget Day. I'm Ritu Singh and here are the headlines. Finance Minister Nirmala Sitharaman's 9th budget keeps an eye on the fiscal deficit glide path, even as it focuses on driving growth by increasing exports and attracting stable long-term investments. Promises to sustain the momentum of structural reforms, strengthen the financial sector and support building cutting-edge technologies at home. In a surprise move, the finance minister proposes hiking securities transaction taxes on equity futures and options contracts. STT on futures is to be hiked by 150% and by 50% on options. The move rattles the stock markets. The Sensex and Nifty reverse early gains to post the biggest budget day decline in 6 years. Finance Minister projects nominal GDP to grow at 10% in the next fiscal, hikes capital expenditure outlay by 9% to 12.2 lakh crore rupees. Documents show the government missed last year's target by 3%. Finance Minister looks to spend more to shore up India's defence capabilities. The budget proposes hiking defence capex outlay by 21% to 5.9 lakh crore rupees. The budget for defence modernisation is up 24%. The government sticks to the path of fiscal consolidation. Fiscal deficit target for the fiscal is projected at 4.4%. The FY27 target stands at 4.3%. The debt to GDP ratio is projected to decline from 56.1% to 55.6%. A sharp hike in government borrowing. The budget projects gross borrowing of 17.2 lakh crore rupees. This is 18% higher than the current fiscal year's estimate of 14.6 lakh crore rupees. The government projects net tax collections at 28.6 lakh crore rupees. This is slightly lower than budget estimates last year. Collections in FY26 missed the budget estimate by 1.6 lakh crore rupees. The government accepts the recommendations of the 16th Finance Commission. States will continue to get a 41% share of overall tax revenues. As expected, there are no changes to personal income tax, but the budget proposes measures to ease compliance and cut down on litigation, like more time to revise tax returns without penalties. Also proposes lowering tax collected as source on foreign travel to a flat 2%, TCS on money sent abroad for educational or medical expenses to also be at 2%. The Finance Minister moves to further curtail any improper use of buybacks, proposes to tax buyback for all types of shareholders as capital gains, also proposes introducing an additional buyback tax on promoters to disincentivize the misuse of tax arbitrage, says the tax will make the effective tax rate 22% for corporate promoters and 30% for non-corporate promoters. Finance Minister looks to help the government companies raise funds. Budget proposes accelerating the recycling of significant real estate assets of CPSEs through dedicated REITs. The Finance Minister moves to offset the impact of 50% US tariffs, allocates 40,000 crore rupees to boost electronic manufacturing, announces 10,000 crores dedicated fund for MSMEs, and also plans to set up mega textile parks, eases export norms for seafood and leather sectors. The Finance Minister looks to tap more foreign investment for India's AI ecosystem. The budget proposes a 20-year tax holiday to any foreign company that provides cloud services using data centers in India, but the holiday can be availed only if this is done through an Indian reseller entity. Also proposes providing a safe harbor of 15% on the cost of the company providing the service is a related entity. The Finance Minister acknowledges the role of emerging orange economy in nation building. Budget 2026 proposes supporting the Indian Institute of Creative Technologies in Mumbai to nurture talent in India's fast-growing animation, visual effects, and gaming comics industries. Also proposes setting up content creator labs across 15,000 secondary schools and 500 colleges. A modest capex hike, more firepower for India's defence arsenal, and a tax shocker for the stock markets. Finance Minister Nirmala Sitharaman's 9th consecutive budget is aimed at providing a thrust to manufacturing and offset the impact of 50% US tariffs. Let's quickly take you through some of the top highlights. First of all, the stock markets were rattled after the Finance Minister proposed hiking the Securities Transaction Tax or STT on equity futures and option contracts. The market saw their biggest budget day fall in 6 years. The Finance Minister added more firepower to India's defence arsenal. Defence allocation has been hiked by 21% to 5.9 lakh crore rupees. The budget for defence modernisation is up 24% overall. Capex also saw a modest growth of 9%. As expected, there are no changes to personal income tax, but the budget did propose measures to ease compliance and cut down on litigation, like more time to revise tax returns without penalties. Here are the key snippets of the Finance Minister's minute budget speech.
In the interest of minority shareholders, I propose to tax buyback for all types of shareholders as capital gains. However, to disincentivize misuse of tax arbitrage, promoters will pay an additional buyback tax. This will make effective tax 22% for corporate promoters. For non-corporate promoters, the effective tax will be 30%. I propose to raise the STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively.
ये बजट भारत की वैश्विक भूमिका को नए सिरे से सशक्त करता है। भारत के 140 करोड़ नागरिक फास्टेस्ट ग्रोइंग इकोनॉमी बनकर ही संतुष्ट नहीं है। हम जल्द से जल्द दुनिया की तीसरी सबसे बड़ी अर्थव्यवस्था बनना चाहते हैं।
All right, let's go across to Shireen Bhan, who's in conversation with some special guests to decode Budget 2026. Shireen, over to you.
Well, thanks very much. Yes, those are some of the key budget highlights that we're presenting to you here on CNBC TV18, your budget headquarters. Let's bring in more big voices. As we've been pointing out, while the focus and the attention has been on the union budget, another very important document being tabled today, and that is the report of the 16th Finance Commission. Joining us now is a member of the 16th Finance Commission, Mr. Manoj Panda. The chairman, of course, of the Finance Commission is Dr. Arvind Panagaria. Also with us, former member of the CBDT, Akhilesh Ranjan. Mr. Panda and Mr. Ranjan, many thanks for joining us. Mr. Panda, to you first. The big headline, of course, is that devolution number, status quo there, 41%, as was expected. But take us through the rationale behind that and some of the other important measures that the Finance Commission has proposed in its recommendations. Mr. Panda, can you hear? Well, we'll come to that in just a second, but let's go across to Jyotiraditya Scindia in conversation with my colleague Ashpit Kumar. Here's the Minister of Telecom.
To get an understanding, to help us unpack what that translates into, I have with me the Honourable Minister, Mr. Jyotiraditya Scindia. Mr. Scindia, thank you so much for taking our time. Firstly, the big message that the Finance Minister is looking to send out via this message, there was a very clear thrust towards infrastructure spend. There was a very clear thrust towards newer technologies. Your key takeaways?
So, the Prime Minister and the Finance Minister both have set the tone for Viksit Bharat 2047. There has been a tremendous amount of momentum over the last 12 years from 2014-15 till date. The economy is on a very, very strong footing. With that in mind, setting ourselves up for ensuring greater momentum on our route to 2047. The years that we're talking about. We're talking about sustained economic growth. Sure. We're talking about a Vikas model that looks at assimilation of every single citizen and unlocks their potential to contribute to that growth, and a concept of fulfilling aspirations of people. And if you look at the sustained thrust on capital expenditure as well as infrastructure, in addition to that, a couple of the main themes that are coming out. The first, ease of doing business for every single person across this country. Second, to be able to unlock new potential sectors for India, whether that's the orange economy, whether that is AI, whether that is urbanization, whether that is tourism, across the board. And I'm very glad to note that there has been a very important stress on fiscal performance. Fiscal deficit is now under control. We are looking at 4.4% for this year, 4.3% for the next year. We have maintained a very tight grip on inflation. For the 3 quarters, it's at only 1.7%. And along with that, for my 2 ministries, both for telecom and for donor, a very healthy increase in capex capability, both for telecom and for donor. The Northeast has got special emphasis in this budget, both from a urbanization point of view and the 4,000 e-buses to the...
Well, that is the Telecom Minister Jyotiraditya Scindia in conversation with Ashmit Kumar. Let's go across to the former CBDT member Akhilesh Ranjan. Mr. Ranjan, many thanks for joining us here. As expected, no changes on personal income tax, but what was not expected was that STT hike. What you had said very clearly was you didn't anticipate any changes on LTCG, none of that coming through. Changes on safe harbor, specifically for IT services. On balance, on the tax side, Mr. Ranjan, how would you rate the budget and the measures taken?
Shri, thanks for having me here. Well, the STT was a bit of a shocker. There are some very good things which have been announced. You remember I was talking about preventing litigation from happening. And I think the measures that have been announced for safe harbor and transfer pricing, various other things on the APA program, advanced pricing agreement, these are steps which are very, very, very welcome. And I'm sure they will cut down on the litigation to a large extent. There are also a host of measures which are building trust and confidence in the taxpayers, the decriminalizing provisions, the provisions where where tax defaults are now not criminal really offenses in that sense. I think that's a very, very good move. So those are very well received. The only thing is I'm a bit surprised at the STT increase. As I had said on that day, I think the STT is no longer a legitimate tax. So and then to increase it is a bit of very strange. I'm told that the reason is to curb excessive speculation. I'm not so sure whether this sort of an increase in STT does anything to curb speculation amongst the investors. It might just hit the margins of large players who are active in the futures and options market. But let's see, I'm not an expert on this, so it doesn't really impact the market to that extent.
Yes, the market is going to have to live with that. But Mr. Ranjan, a couple of other issues that I want to point out to you. And we've seen a lot of actually in the fine print, a lot of retrospective a lot of amendments coming in to retrospectively react to court orders, especially when it comes to the DIN amendment and so on and so forth. What do you make of that?
Well, actually, I think we should view that in a positive light. I think there are attempts to try and resolve issues which are creating a lot of uncertainty in the minds of taxpayers. Both of these major retrospective amendments you're talking about, they concern an issue which is going on in the courts for a very long time. And it's not a very substantive issue. It's a technical issue, but it is throwing the whole system into confusion. So I think it's good that that the view has been made clear, that the law has been clarified and resolved, and I think we should be viewed in that light, not as a retrospective, as something coming as a surprise, but something done to really remove ambiguities and to prevent litigation from happening or stop the litigation from happening. So I think that we should look at it in that way.
That's a welcome move, you're saying. I'll come back to you in just a second, but let me get Mr. Manoj Panda in, member of the 16th Finance Commission. As I was pointing out, the budget, of course, in itself a big event, but it's also the 16th Finance Commission's recommendations that have been tabled today and accepted by the government. Mr. Panda, many thanks for joining us. The headline that we've got, of course, is on the devolution, which stays at 41%, and that is the formula that the Finance Commission has stuck with. But if I could ask you to explain to us the rationale behind sticking with that number and some of the key recommendations that the Finance Commission has made this time around.
Yeah, thank you. Basically, the 41-42% has continued for the last two commissions. And particularly during the 14th commission, there was a big rise in the devolution from 32 to 42. 15th broadly continued that, except for some adjustment for Jammu and Kashmir being made union territories. So, and our overall assessment is that the central financial position is as good or as bad as that of those of the states. And when we talk of a developed India or movement towards that, the center cannot be made fiscally weak. They have to be fiscally as strong as those of the states. The responsibility of a developed India contributing more towards GDP lies both with the center as well as with the states. So because of that, we decided that it is not the time to change the 41%. We should stick to it, and center should feel as much comfortable as in the past couple of years.
Right. Mr. Panda, some of the other key recommendations, to do with grants, to do perhaps with centrally sponsored schemes, etc. We haven't been able to go through the fine print of the Finance Commission's recommendations yet. We've been busy with the budget. If you can take us through some of the key recommendations you've made.
Yeah, no, the centrally sponsored schemes, that doesn't come under the purview of the Finance Commission. But what also comes apart from the 41% is how the 41% will be divided among each of the states. And that's a major part of the recommendation. What we have done this time is basically introduce a new variable called contribution to GDP. And it is given 10% weight by taking out some weight from area, some from the forest, and also tax effort. Now, the rationale for that is the states must be nudged towards their own contributions to GDP. If we see the states' developments, some of them are developing fairly well, but some of them are not able to catch up. They must be nudged to catch up with the rest, at least to some minimum level. And that is the major reason why we have gone for contributions to GDP. Along with that,
which means what? Mr. Panda, just for the benefit of all our viewers, which means that the states that are doing better, what is the impact on them, and the states that are contributing less to GDP, what is the impact on them?
Oh, I think the overall impact will be, as a percentage of devolution, it will not be large. It will be only 0.2, 0.3% of the total. For most of the states, for one or two states, it might go to 0.4%. But the developed states were always complaining that they are being penalized for their contributions to national growth, contributions to national revenue. And that is the reason why we thought it is time to change the direction, at least nominally, so that even if there is a small change, that will send a message. The other major...
So the finance... yeah, go ahead, sir.
Yeah, the other major recommendation is, earlier where states were being given quite large revenue deficit grants to begin with, and they were being asked to reduce it substantially or even eliminate by the end of the Finance Commission's recommendation period at the end of the 5th year. Now, our analysis says that the normative assessment that the Finance Commissions used to do and the actual revenue deficit that actually took place, they are very widely different. And a cycle of high deficit slowly going down to low deficit by the 5th year and again coming back to high deficit, that cycle continued for last 3-4 commissions. And last year, the 15th Finance Commission's last year recommendation, it brought it down to as low as 13,000 crores only for 6 or 7 states. All other states, they did not get any revenue deficit. We have decided to recommend that no state should get any revenue deficit during our award period. Now it is for the government to take a decision on that. I think two other recommendations
recommended that no state should have a revenue deficit. What does that mean, sir? How do you ensure that?
No, we didn't. We recommended that no states should get it.
Okay.
The 15th Finance Commission, they had awarded to 6 states 13,000 crores, bringing it down from more than 1 lakh crores. Then we thought it is almost negligible now. It is time to eliminate the deficit altogether. And revenue deficit, if it is eliminated, then that will give incentive for investment. And in the process, again, states can contribute towards GDP.
Well, Mr. Panda, we will have to go through the fine print of your recommendations and then perhaps have a more nuanced conversation with you. But thanks so much for joining us with your first take on the recommendations made by the Finance Commission. Mr. Ranjan, a quick final word from you on the proposal for that tax-free proposal that the Finance Minister has announced for data centers to be able to service foreign companies out of India. 22-year tax-free period. What do you make of that?
Yes, actually, this is in view of the new data center policy, which is coming out from the Ministry of Information Technology. It is an attempt really to assuage the apprehensions of the foreign companies which are going to spend billions of dollars in setting up these data centers. One apprehension of these companies was that since they are using a server installed in India, their income that they earn out overseas might become taxable in India to some extent, and I think this exemption, this outright exemption, it is not something that would have been very clear in the law. The taxability itself was in doubt, but then there was an apprehension, and I think the government has tried to just remove that apprehension very clearly by giving a very blanket sort of exemption. The only condition being that if you are earning income by providing services to Indian residents, then that must go through an Indian company, and the server must be under the control of the Indian company. I think it's a measure which is trying to give tax certainty again. So one more measure in the area of certainty, which I think is quite welcome.
A welcome move there, Mr. Ranjan. We will, of course, continue to speak with you through the course of the next few days as we unravel more of the fine print. But don't go anywhere, sir. Don't go anywhere to our viewers. So thank you, Mr. Ranjan, for joining us. We're going to take a quick break and return with a lot more. Stay tuned to CNBC TV18. We're back in a moment. Reform, not rhetoric. Ambition, not ambivalence. With that, Finance Minister Nirmala Sitharaman rose to present her record-breaking 9th budget, holding out hope for India in the medium to long term and ensuring that some of the pain points, some of the friction areas are addressed, be it on taxation or predictability and certainty. What didn't go down well was the hike as far as the STT on options and futures were concerned. That weighed on market sentiment, but that apart, there is plenty of continuity that Finance Minister Nirmala Sitharaman has stuck to, whether it is on the fiscal glide path or it is on the reform agenda. Joining me now is the top team from FICCI to take us through what they make of Budget 2026. With us, Anand Goenka, Puneet Dalmia, Harshpati Singhania, Shubhrakant Panda and Sandeep Samani. Gentlemen, many thanks for joining us. Ananta, I'll start by talking to you. The big focus you expected was manufacturing. There's plenty there for manufacturing, but equally, there is plenty there for services. In fact, the Niti Aayog CEO BVR Subramaniam telling me this is a services budget. Your take on Budget 2026?
I think the budget focuses on growth, inclusivity and youth. I think the most exciting part is that it is a budget of continuity and stability, and the focus on Reform Express continues, focus on infrastructure has continued and only increased, and finally on the manufacturing side, a very good balance of future industries where we need to be indispensable and present industries which are very employment focused, such as textiles, leather, apparel. So a very well balanced budget which takes into account a macroeconomic or a macro view into the future, as well as the micros of taking care of the initial challenges that we are seeing.
Puneet Dalmia, capex number is now out 12.2 lakh crore rupees, and it goes in line with what the government has been saying, that look, we can't keep doing double-digit kind of capex numbers year after year. On balance, what do you take away from what the government has said on capex, the larger infrastructure thrust in the budget?
Well, I think I think India is the most credible large economy growth story in the world today, and it is because it offers certainty in an era of unprecedented global chaos and uncertainty. I think this is driven by the fact that there is continuity on infrastructure spend, as you said, 12 lakh crores. I think there is also a very stable tax regime, and there is also more ease of compliance on regulation. So I think we are seeing all of this play out as a larger vision of how to create a Viksit Bharat by 2047 and an Atmanirbhar Bharat. So I think the building blocks keep getting put in place every year, and it strengthens the foundation to create a vision, and we move forward one step every year. So there's a 9th budget for the Honorable Finance Minister, which is a record, and it's the first budget from the Kartavya Bhavan. And as I was saying, that it's from a bhav of kartavya, which is good intentions, lead to good policies, will lead to good outcomes. And I think they've also said that it will be a budget which will continue growth, 7% GDP growth, build capacity for the future to fulfill aspirations of India. And also, finally, it is Sabka Saath, Sabka Vikas for all families, for all communities and for all regions. So apart from the big picture, there is a lot of micro detailing on which sectors, which areas, what is their strengths, and it allocates capital very thoughtfully to ensure that we can leverage strengths of each area and each community to further the vision that the Honorable Prime Minister has created.
Yes, absolutely. To take forward the point that you were making, whether it was MSMEs, whether it's a 10,000 crore rupee outlay, the electronic component manufacturing scheme, where the outlay has now been enhanced to 40,000 crores, or it is benefits, basic customs duty benefits to the nuclear power sector, and so on and so forth. Mr. Singhania, if you were to look at the fine print and the minutiae, what stands out for you in terms of impact?
I think it's a very important budget from the point of view that we are operating from a space where our debt to GDP ratio is coming down continuously. So there is certainty, there is clarity in the direction, and that is very important. In today's turmoil globally, there are very few large economies and those particularly, I mean, nobody is growing at the rate that we are growing, which have these kinds of numbers. So this is very important, and as the finance minister herself said, this provides fiscal space. So this is extremely important to look at. Along with this, the finance minister has also talked about trying to invite foreign investments into India, be they through the data centers, be they through even people of Indian origin living overseas, because I think the rupee depreciation is also predicated on the fact that we are seeing large capital outflows. So besides looking at the domestic side growth alone, we are trying to invite foreign capital, which to me is a welcome move.
Shubhakant Panda, plenty there for the medical space, medical hubs for high-speed rail, defense corridors, and of course tourism as well. But on balance, what do you believe the budget is likely to deliver on in the near term? The medium to long term is a different story altogether.
Well, I would expect that, the focus as always has to be on execution because announcements are great, but in all fairness, I must also mention that this government and this finance minister has had a sharp focus on execution, as has been seen from previous budgets. Shireen, the point I wanted to add here is I think what stood out for me was the multiple references to ease of living and many proposals which were connected, to that concept. So I think it's a citizen-centric budget which is very welcome. And also from an inclusivity point of view, not just as Puneet mentioned about, opportunities and resources for all sections of society, but the fact that, even within the emphasis on manufacturing, there is also, specific schemes and support for MSMEs, which is very important because that's the real job creation machine in the country, in any economy for that matter. And I think that focus will stand us in very good stead.
Okay, yes, whole bunch of sectors there being mentioned by the finance minister. And the defense, while she didn't talk about it in her speech, the defense allocation has seen an increase B2B of about 21%. So that's been a significant change there and a significant capital allocation for the government as well. But Anand Goenka, coming back to you now, specifically, for the electronic manufacturing sector, because that was something that you had spoken about. She didn't announce a park, but, the component manufacturing scheme has got a significant uptick. There was a park announcement, but that was more to do with textiles and technical textiles to be specific. But, the point that you were making that continue to accelerate growth for that sector, enough done?
Yes, so on the electronic manufacturing scheme, she has only increased the outlay, which is exemplifies enough focus on EMS. She has also added the semiconductor mission to continue with ISM 2.0. So both put together, there's a fair amount of focus on semiconductor sector.
Yes, and ISM 2.0, the allocation was not provided in the budget, and that's probably because it is waiting for cabinet approval. So we'll probably see an allocation coming in for ISM 2.0 later. But Puneet, coming back to you, high-speed rail, freight corridors, container shipping, an allocation for that as well, ship repair, civil aviation sector, components being exempt from basic customs duty. So a lot in the infrastructure and allied infrastructure spaces linked to manufacturing also being mentioned there by the finance minister.
Look, India is building massive physical infrastructure and digital infrastructure, and this is intended to create inclusion and to boost productivity. And I think we are moving from a, just a domestic growth economy to being globally more competitive as an economy. So I think this will ensure all this investment in infrastructure will ensure that our logistics costs come down, mobility increases, people are more connected, and it just unlocks productivity across the people across various segments of society. So I think this is a very welcome move, and the beauty is it's done with a long-term vision. And the execution momentum just continues every year. So, and it's also done very thoughtfully. So the capital allocation is not, done, it's done with a lot of micro detailing. which cities should be connected where, what hubs should be created depending upon the strength of that area. So I think the capital allocation is also very thoughtful. And lastly, some of the investments in softer aspects of infrastructure like healthcare, education, tourism, etc. is being done on a challenge basis. So they are also very mindful of, getting states to compete with each other so that efficiencies can be unlocked. So I think I really like the fact that this will create global competitiveness for India and create inclusion because more people can get connected and be more mobile.
Right. Sandeep Samani, let me get your take on what you liked in the budget, the big highlights for you.
So I think for industry, the downside is always when there is a policy change suddenly. And I think this finance minister laid out a roadmap a few years ago, and she has stuck to the roadmap, improving on the roadmap year on year. So there is no unpleasant surprise. Focus continues to be on making India more competitive, which was one of her opening statements. And also I think the important thing is continued focus on infrastructure. Infrastructure will help us, better infrastructure will always help India improve its logistics costs, where we are higher than the rest of the world, therefore improving competitiveness. Also a lot of focus on capital goods, SOPs being given to various industries to promote capital goods manufacturing in India. Labor-intensive industries being given SOPs, textiles, fisheries, shoes, leather. So I think focus in the right areas to use the money in a more efficient manner that the government has allocated. I was pleased to see the disinvestment budget being significantly raised to some 80,000 crores. So all the right focuses, including MSMEs, which are job creating. First time the government has said that they will create a 10,000 crore fund to actually invest equity in MSMEs, and I think that's a very bold step and a very good step. It improves in scaling up and giving the financial muscle to MSMEs that can really grow into larger companies. So overall, I think a good, directionally very good budget in terms of hitting all the sweet spots and making sure that we continue to focus on growth in India in a very volatile environment. Global environment is extremely volatile and uncertain. So India is I would say an island of paradise in a very turbulent world.
It is a turbulent world, and it's turbulent for our stock markets today as well. We've seen the markets being very volatile through the course of the budget day. But gentlemen, we will of course continue to speak with you over the course of the next few weeks and months as many of these announcements come to fruition by way of execution. But today, for your first reactions post the Finance Minister's budget, thanks very much for joining us here on CNBC TV18. We're going to take a quick break. There's plenty more that's coming up as we highlight the fine print of Budget 2026. Stay with us.
Welcome back to this special broadcast on Budget 2026. Now, markets reversed their early gains to post the biggest budget day decline that we've seen in 6 years. Nigel D'Souza has all the market action and is joining in now. Nigel, what a tough Sunday for the markets it's been.
A very, very difficult day of trade. As you can see, all the indices, the Nifty ending down close to around 500 points. At one point of time, we were down close to around 700 points. The biggest hit really today came in terms of sentiment. No one was factoring in, or at least the buzz was not very, very loud, that an STT hike could come about. That's precisely what the finance minister did announce. And because of that, you had all these market players, whether you're looking at Angel One, BSE, CDSL, all of them took a sharp knock in today's trading session. There was an expectation that the defense-related names, they'll see a higher allocation. To be fair, actually, the allocation is quite high. However, those stocks had already run up in anticipation, and that's why those stocks had come in for profit-taking. BEL, Bharat Dynamics, as well as HAL, all of them sharply lower in today's trading session. Bharat Dynamics, in fact, had put on a good amount of weight getting into this event, and all that got sold into, so those stocks were under pressure. The other problem was the gross market borrowing. That number came higher than expected at around 17 lakh crore, or the street was bracing for a number of around 16 to around 16.5 lakh crore. And because of that, the PSU banking names, after seeing a good run up in the last few trading sessions, they did come in for profit taking. Even Big Boy, SBI did see some selling. PNB as well did end lower in today's trade. The other couple of names, though, did pretty well. So let's highlight a couple of winners. Data center plays. There was a bit of a booster shot that came in for them. So Anant Raj, E2E Networks. Remember, these are stocks that have already seen a sharp correction. You have NetWeb Technologies as well. That was higher. Let's get some of those stocks running for you on the screen. And Orient Pro, some kind of play with regard to data center. We'll have to see how it actually plays out. For the time being, though, these stocks did pretty well. Precious metal stocks, though, they did correct over the weekend. And today, some of those stocks that are direct play in terms of precious metals, they came in for profit taking. MCX was down close to around 10% in trade. You had Muthoot Finance as well. That was lower because, that in the entire up move that we saw on gold, Muthoot Finance as well did play out. And Hindustan Zinc, Vedanta just sold a % stake in the company at much higher levels. And today, post that correction that we saw on silver, well, those stocks, in fact, were lower. The AMS companies, though, there was a hike in terms of the PLI component, and because of that, those stocks did well. So Amber, Keynes, both of them, they outperformed in today's trading session. Moving to some of those IT sector names, there was some kind of relief that came because of the harbor turnover threshold for IT services. That was increased. Some kind of booster shot coming in with simplification of buyback rules as well. That's what pushed these stocks up. So you had Wipro that was higher in today's trading session.
Nigel, thanks very much for taking us through that action. Now, in what was a surprise move, the finance minister proposed hiking the securities transaction tax, or STT, on equity futures and option contracts. Now, the STT on futures will be hiked by 150% and by 50% on options. Here's what market experts made of that surprising move.
STT increases beyond expectations of the market, but in some sense, it is the syntax of the market. 9 out of 10 retail investors were losing money. The benefits was mostly going to the HFTs. Undoubtedly, government had to take some step. We can only pay that STT and capital gain. STT was introduced in lieu of capital gain. With increased STT, the Honorable Finance Minister may look to reconsider capital gains taxation.
Don't go by the immediate reaction. Markets are spooked because of the STT, but I think overall, what she mentioned in the first paragraph, reform over rhetoric, action over ambivalence, and people over populism, I think I would have summarized in a similar manner, but she herself said before presenting the budget. So I mean, a glide path towards lower debt to GDP, continued focus on infrastructure, which includes digital, physical, social, continue to, the ease of doing business, improving the quality of life to make the most of the demographic dividend. I think all of them are structurally positive, and particularly on the buyback, because all of us, we have been discussing that the cash is getting piled up in the corporate balance sheet. So either they do the capex, which I think some of the tax incentives on data center and few other things should spur that.
FIs are definitely out of the market today. So real impact of this will be seen tomorrow in terms of how are they thinking about this particular thing, because a lot of marginal trades will become unviable. So the high frequency traders, for them it will be unviable, a lot of it will be unviable. Second, there are a lot of products, arbitrage products, where a lot of money is there. Those will become unviable, and hence there will be a lot of redemption in those products whenever this new regime comes in. So the market will get less leveraged and less liquid. So the impact on the market will be a little more bearish because of this particular provision.
The increase on SGT on derivatives, I look at it as a move from the government to oriental and align people towards trading and investing long term in equities. Today the equity SGT will be lower than F&O SGT, which encourages them to get into the equities market. That is totally in alignment with the capital formation requirement of Viksit Bharat. The SGT increase, this is not the first time it has happened. Every time when it happens, the reaction is exactly like what you said. The market feels worried and concerned whether it will impact volumes, will impact revenues, etc. India is a growing economy and fast growing in a big way. And in that process, what we have always seen is the market growth is so much, and the depth of the market grows so much. The initial concerns go away soon, and the market starts developing.
Now, Budget 2026 has also proposed a 20-year tax holiday to any foreign company that is providing cloud services using data centers in India. Rachna Dhanrajani is here with the details of that and the significance of this move. Rachna?
That's right. Budget 2026 puts data centers firmly in focus with clear tax incentives aimed at pulling global cloud companies into India. The finance minister has announced a tax holiday till 2047 for foreign companies offering global cloud services from data centers located in India. Any services sold to Indian businesses, however, will be routed through an Indian reseller and they will be taxed locally. But to reduce tax uncertainty, the government has fixed a 15% safe harbor margin for related party data center services. This is a move aimed at cutting long-running transfer pricing disputes for global cloud firms. But there's also a supply chain push on a 2% profit margin, translating into an effective tax of about 0.7%. So who benefits globally? Well, large cloud providers running global workloads from India stand to gain definitely. This includes Amazon Web Services, Microsoft Azure, and Google Cloud. Now, global electronics manufacturers using bonded warehousing in India also benefit, as do the multinational tech firms looking for long-term tax certainty till 2047. On the Indian side, however, several companies are positioned as key partners given that they have a joint venture. First up is Adani Enterprises, who's in a joint venture with EdgeConneX under Adani Connex. There's Reliance Industries, who's building large hyperscale data centers, campuses in partnership with Brookfield and Digital Realty. Then there's Bharti Airtel. Through Nextra Data, this works with global cloud and enterprise clients. Then there's also Tata Communications that's providing data centers and cloud infrastructure to global enterprises while being located in India. And then there's ST Telemedia Global Data Centers that runs a large India presence and is backed by the parent company that also has ownership from KKR. So put together, these measures show how the budget is using tax certainty, lower logistics costs and clear rules to position India as a base for global cloud and data center operations. Back to you.
All right, Rachna, thanks very much for taking us through that. Now we'll move on because the budget also saw a slew of initiatives to boost the textile and the seafood industries. But are these measures going to help offset the impact of US tariffs? That's the question we're asking, and Shilpa Ranipeta has the answer. Shilpa, are these measures enough to offset a 50% potential tariff hike?
Well, that's the hope. But let's look at what the announcements were. Now, the government has announced a series of relief measures for India's textile, leather and seafood industries. All labor-intensive sectors, all currently under pressure due to high US tariffs and weak global demand. Now, starting with seafood. Now, seafood, the duty-free import limit for inputs used in seafood processing, that's been raised from 1% to 3% of last year's export value. This means that exporters can now import more essential materials without paying customs duty, helping them cut costs. Now, in another big move, fish caught by Indian vessels in India's EEZ and on high seas will now be duty-free. And if that fish is landed at a foreign port, that will be treated as an export, allowing fishermen and companies to legally sell abroad and access export benefits. Now, the government also says that safeguards will be put in place to prevent misuse of this. Next, leather and footwear exporters. Now, the duty-free import benefit, earlier available only for full footwear exports, has now also been extended to the shoe upper exports. That's the upper layer of the shoe as well, and this lowers costs for a key segment of the supply chain. Also, exporters of leather goods, garments and footwear will now get 1 full year to ship their products, up from earlier 6-month deadline, and that gives them more breathing room as orders slow down amid delays because of the entire tariff situation. Now, on the textile front, the government has announced an integrated push. This includes new schemes covering fiber, self-reliance, cluster modernization, job creation, handlooms and handicrafts, sustainable textiles and a lot more, including mega textile parks and a new initiative that aims to strengthen khadi, handloom and village industries. Now, with a focus on branded training and global market access is also there. Now, why this support now? Because US tariff shock has been hitting these sectors hard. The US accounts for nearly 30% of India's apparel and textile exports, and these after a 50% tariff, have been in a difficult place, especially places like Tirupur. They have been warning of factory shutdowns as shipments to the US have fallen by over 50% in Q3. CRISIL, in fact, has also said that it expects the US tariffs to result in India's leather industry's revenue falling by about 10 to 12% in FY26. And in the seafood industry, US makes up about 35% of exports, and shipments have already fallen 25%, with new orders in the future completely drying up. In short, the government is trying to ease costs, extend timelines and protect jobs as export-heavy sectors navigate one of their toughest global trade environments in years. Back to you.
All right, Shilpa, thanks very much. Plenty in the budget to tackle that 50% potential tariff. Thanks very much for that. Now, the budget also had some announcements for the states that are heading to elections this year. Sandhya Gora has more on that. Sandhya, from Assam to West Bengal, Tamil Nadu to Kerala, all of them found a mention in the budget.
Yes, and as anticipated by political experts, like past instances, this year's budget also focused on poll-bound states. Like earlier years, the budget combined both symbolism and policy announcements. Finance Minister Nirmala Sitharaman presented her 9th union budget today. This time, she wore a traditional Kanjivaram sari. In 2021, when West Bengal, Tamil Nadu, Assam and Kerala along with Budgetary went to the polls, the Finance Minister quoted Rabindranath Tagore in her budget speech and wore West Bengal's Lal Pad sari. In 2025, the Bihar election year, she wore a Madhubani sari from the state, and this time a Kanjivaram sari from Tamil Nadu. Like 2021, 2023, 2024, 2025, this year too is electorally crucial, with assembly elections due in West Bengal, Tamil Nadu, Kerala, Assam and Puducherry. The BJP has been keen to expand its footprint in these states, particularly West Bengal, Tamil Nadu and Kerala. Against this backdrop, FM Nirmala Sitharaman made multiple announcements today, ranging from special infrastructure development in Tier 2 and Tier 3 cities, including temple towns, to a tourism push and a strong focus on the textile sector. In her 9th budget speech today, the Finance Minister proposed support for mineral-rich states such as Odisha, Kerala and Tamil Nadu to promote the mining of rare earths and to develop a dedicated rare earth corridor in these states. She laid particular emphasis on the textile sector, announcing Samarth 2.0 to upgrade textile skilling. She also proposed an integrated program for textile sector, including a national fiber scheme, a textile employment scheme, a national handloom and handicraft scheme, and the setting up of mega textile parks. Tamil Nadu contributes over 26% to India's overall textile exports, while West Bengal exports around 12% of its handloom and textile products. The Finance Minister also announced an outlay of 20,000 crore rupees for urban infrastructure development in Tier 2 and Tier 3 cities, including temple towns. Poll-bound Tamil Nadu and Assam, both known for their historic and culturally significant temples, are expected to benefit from this push. She further announced trekking and hiking trails, bird watching and turtle trails, as well as special wildlife tourism trails in multiple states, including Assam, Tamil Nadu and Kerala. The Finance Minister also announced high-speed train corridors on 7 routes, including Hyderabad to Chennai, Chennai to Bengaluru and Varanasi to Siliguri.
All right, interesting there. Kanjivaram finds, to be the pick of the finance minister over a Mekla, over a Kasav. Thanks very much, Sandhya, for putting that interesting thought into perspective. On that note, we're going to wrap up this special broadcast. But stay with us. More news and updates will continue right here on CNBC TV18.
माननीय वित्त मंत्री श्रीमती निर्मला सीतारमन जी.
We are inspired by three kartavya. Our first kartavya is to accelerate and sustain economic growth. Our second kartavya is to fulfill aspirations of our people and build their capacity, making them strong partners in India's path to prosperity. Our third kartavya, aligned with our vision of Sabka Saath, Sabka Vikas.
Item number 1.
Good evening and thanks for joining CNBC TV18's special broadcast on Budget Day. I am Archana Solanki. Here are the headlines we're tracking. Finance Minister Nirmala Sitharaman's ninth budget keeps an eye on the fiscal deficit glide path, even as it focuses on driving growth by increasing exports and attracting stable long-term investments. Promises to sustain the momentum of structural reforms, strengthen the financial sector and support building cutting-edge technology at home. In a surprise move, the finance minister proposes hiking securities transaction taxes on equity futures and options contracts. STT on futures is to be hiked by 150% and by 50% on options. The move rattles the stock market. Sensex and Nifty reverse early gains to post the biggest budget day decline in 6 years. Finance Minister projects a nominal GDP to grow at 10% in the next fiscal, hikes capital expenditure outlay by 9% to 12.2 lakh crore rupees. Documents show the government missed last year's target by 3%. Finance Minister looks to spend more to shore up India's defence capabilities. Budget proposes hiking defence capex outlay by 21% to 5.9 lakh crore rupees. The budget for defence modernisation is up 24%. Government sticks to the path of fiscal consolidation. Fiscal deficit target for this fiscal projected at 4.4%. FY27 target stands at 4.3%. The debt to GDP ratio projected to decline from 56.1% to 55.6%. A sharp hike in government borrowing. Budget projects gross borrowing of 17.2 lakh crore rupees. This is 18% higher the current fiscal year's estimate of 14.6 lakh crores. Government projects a net tax collections at 28.6 lakh crore rupees. This is slightly lower than the budget estimates last year. Collections in FY26 missed the budget estimate by 1.6 lakh crore rupees. Government accepts the recommendation of the 16th Finance Commission. States will continue to get a 41% share of overall tax revenues. As expected, there are no changes to personal income tax, but the budget proposes measures to ease compliance and cut down on litigation, like more time to revise tax returns without penalties. Also proposes lowering tax collected at source on foreign travel to a flat 2%, TCS on money sent abroad for education or medical expenses to be also cut to 2%. The Finance Minister moves to further curtail any improper use of buybacks, proposes to tax buyback for all types of shareholders as capital gains, also proposes introducing an additional buyback tax on promoters to disincentivize the misuse of tax arbitrage. Says the tax will make the effective tax rate 22% for corporate promoters and 30% for non-corporate promoters. All right, a modest capex hike, more firepower for India's defence arsenal and a tax shocker for the stock markets. Finance Minister Nirmala Sitharaman's ninth consecutive budget is aimed at providing a thrust to manufacturing and offset the impact of the 50% US tariffs. Let's quickly take you through the top highlights. First, the stock markets were rattled after the finance minister proposed hiking securities transaction taxes on equity futures and options contracts. The market saw its biggest budget day fall in 6 years. The finance minister also added more firepower to India's defence arsenal. Defence allocation has been hiked by 21% to 5.9 lakh crores. Overall capex saw a modest growth of 9%. As expected, there are no changes to personal income tax, but the budget proposed measures to ease compliance and cut down on litigation, like more time to revise tax returns without penalties. Here are the key snippets of the finance minister's 85-minute long budget speech.
I propose to raise the STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively. I propose interventions in 6 areas. 1. Scaling up manufacturing in 7 strategic and frontier sectors. 2. Rejuvenating legacy industrial sectors. 3. Creating champion MSMEs. 4. Delivering a powerful push for infrastructure. 5. Ensuring long-term security and stability. And 6. Developing city economic regions.
ये बजट भारत की वैश्विक भूमिका को नए सिरे से सशक्त करता है। भारत के 140 करोड़ नागरिक फास्टेस्ट ग्रोइंग इकोनॉमी बनकर ही संतुष्ट नहीं है। हम जल्द से जल्द दुनिया की तीसरी सबसे बड़ी अर्थव्यवस्था बनना चाहते हैं।
Well, the budget also announced a slew of tax changes. Sonal Bhutra is here with more.
Basically, if you're going abroad to study for medical purposes or for leisure travel, you will have to deduct less TCS on the amount that you're paying there. It has been reduced from 5 to 2% for education and medical purposes, and reduced from 5 and 20% to 2% if you are taking a group package for traveling abroad. Of course, this amount can be set off while you're filing your return, but it created liquidity issues for investors or individuals, and that is something which seems to be getting solved by this particular change. On sovereign gold bonds, now remember, after the rally that we saw in gold, a lot of people were buying sovereign gold bonds in secondary market. There is a clarification which has come in that from April 2026, the gains on this will not be exempt from capital gains tax. Only people who have bought it from the primary market from the start to the end will not have to pay capital gains tax, but if you bought it from the secondary market, there will be no exemption that will be available. Now, the fifth one is that if you are paying interest, basically borrowing money to buy mutual funds, this interest that you pay will not be allowed as a deduction from any of the dividends that you are earning from mutual funds. So this provision is done away with. There are a lot of relaxations in terms of compliances as well for return filing. Let's now talk about the 6-month foreign asset disclosure scheme for 2 categories. First is those who have not disclosed the foreign income or assets, and those who have actually disclosed it, but they have not declared the asset which was acquired. So there are some provisions for that as well. Now let's talk about the corporate taxes, because there are changes in safe harbor rules, because this was a long ask from the industry as well. The threshold for availing safe harbor rules for the IT industry has been increased from 300 crore rupees to 2,000 crore rupees. So that's a positive which has come by. There are some exemptions on data centers as well. There is also exemption for income for a period of 5 years to any non-resident who is providing capital goods, equipment or tooling in a bonded zone. So basically the Make in India factor is working in case of a lot of tax exemptions which have been provided to some of these industries. The last one is now MAT, the minimum alternate tax is proposed to be made final tax. No further credit accumulation from 1st April of 2026, and the rate has been reduced from 15% to 14%. They've brought forward MAT credit that is available in your books as on 31st March 2026 will be available to set it off against any other liabilities that you have. But these are some of the major changes which have been announced in the budget this time around.
Right, thank you Sonal for that. Shifting focus now, the budget also announced an initiative aimed at positioning India as a global biopharma hub with a proposed outlay of 10,000 crore rupees over 5 years. The finance minister also announced a slew of measures to boost medical tourism. Ekta Batra is standing by with the details. Ekta.
Well, yes, I'll start with, Biopharma Shakti, which was announced. So it's around a 10,000 crore biopharma scheme which was launched, which is aimed to make India a biopharma hub, build domestic biologics manufacturing. So there are 3 new NIPER institutes which are planned, 7 existing NIPER institutes which will be upgraded, and 1,000 plus accredited clinical trial sites which are proposed as well. It is a sentiment positive for the sector. Biocon, Dr. Reddy, Sun Pharma, Lupin, Glenmark, just to name a few. In terms of hospitals and diagnostics, medical tourism push, so 5 regional medical hubs are planned. It will be a public-private partnership model. Integrated healthcare complexes are proposed as well. Listed beneficiaries include the likes of Apollo, Fortis, Max Healthcare, Dr. Lal's, Metropolis, all of these stocks in focus. But remember, while this is a positive, the execution will be something that the street will be watching for in terms of all of these announcements and the material impact eventually on the earnings as well.
All right, thank you, Ekta. Now, the budget also proposed hiking defence capex outlay by 21% to 5.9 lakh crore rupees. Ria Bhatia has more. Ria.
Well, yes, the government this time around has announced a total defence budget of 7.85 lakh crores. Now, compare this to last year's budget of 6.81 lakh crores. It's an increase of roughly 15%. So, the expectations on this front range from 10 to 15%. So, this is at the top end of the expectations. The defence expenditure has been announced at 5.95 lakh crore rupees for the year, up 21% compared to last year's budget. Defence capital allocation has also been announced at 2.31 lakh crores versus 1.92 lakh crores in FY26, and this is also an increase of roughly 20% compared to last year, also in line with the expectations that the street was working with. There has also been a 24% increase in the budget for defence modernisation, which is a bit positive. Apart from this, they have also allocated roughly rupees 63,734 crores for aircraft and aero engines for defence, which is a 31% increase compared to last year's outlay. Now, in terms of the market reaction, the Nifty Defence Index ended roughly 5.4% lower today, recovering from its lows of 7 to 8%. And in fact, at one point of the trading session earlier before the budget was announced, it was up by roughly 2% earlier in the session. Now, the street seems to be disappointed by the fact that there were no separate announcements or schemes that were announced for certain segments like drones, UAVs, electronic warfare, defense electronics, missiles, even for arms and ammunition or for indigenization as a whole. So that is where the street seems to be disappointed. But overall, this was a very healthy increase in the capital allocation as well as for the overall defense budget.
ऑपरेशन सिंदूर की ऐतिहासिक सफलता के बाद आए इस बजट ने देश की रक्षा व्यवस्था को और मजबूत बनाने की हमारे संकल्प को सुदृढ़ किया है। यह आवंटन पिछले वर्ष की तुलना में 15% से भी अधिक है, यानी इस बार भी केंद्रीय बजट का सबसे बड़ा हिस्सा रक्षा मंत्रालय को मिला है।
All right, so what did the budget have for the startup ecosystem? My colleague Shruti is joining us on the broadcast. Shruti, over to you.
Well, thanks for that. Budget 2026 sends a clear signal to India's startup ecosystem. This is no longer just about creating startups, it's about helping them scale. Here are the key takeaways. First, deep tech and manufacturing. The launch of India Semiconductor Mission 2.0 is a major push for hardware, chip design and advanced manufacturing startups. The focus is on building full-stack domestic capabilities, from equipment and materials to design and supply chains. This is backed by a 40,000 crore rupee allocation for electronic components aimed at easing supply bottlenecks. Alongside this, the development of critical mineral and rare earth value chains brings deep tech startups in electronics, EVs, defense, and clean energy into focus. Second takeaway is growth capital for MSMEs and scaling startups. The government has announced a 10,000 crore rupee SME growth fund, along with a 2,000 crore rupee top-up to the Self-Reliant India Fund. The emphasis is on patient capital to help small businesses and startups scale. Liquidity support through mechanisms like TREDS and credit guarantees is expected to ease cash flow pressures. Third, easing operational friction. Budget 2026 addresses a key pain point with the rollout of corporate mitras in Tier 2 and Tier 3 cities, aimed at providing affordable compliance and professional support, helping startups scale beyond metros. Fourth is women-led entrepreneurship. The proposal to set up self-help entrepreneurs or she
V-Marts is a significant step. These community-owned retail outlets are designed to help women move from credit-linked livelihoods to enterprise ownership. And finally, AI and innovation. Fresh allocations for AI capacity, building missions, and the operationalization of the Anusandhan National Research Fund underline a push towards indigenous research, workforce readiness, and long-term innovation, critical enablers for India's startup ecosystem. Overall, Budget 2026 lays out a clear framework, capital support, manufacturing depth, and technology capability. The real test now will be execution. Back to you.
Right, thank you, Shruti, for that. The budget also saw a slew of initiatives to boost the textile and seafood industries. So, will these measures help offset the impact of America's tariffs? Shilpa Ranipeta has more. Shilpa.
Well, that's the hope. But let's look at what the announcements were. Now, the government has announced a series of relief measures for India's textile, leather and seafood industries. All labor-intensive sectors, all currently under pressure due to high US tariffs and weak global demand. Now, starting with seafood. Now, seafood, the duty-free import limit for inputs used in seafood processing, that's been raised from 1% to 3% of last year's export value. This means that exporters can now import more essential materials without paying customs duty, helping them cut costs. Now, in another big move, fish caught by Indian vessels in India's EEZ and on high seas will now be duty-free. And if that fish is landed at a foreign port, that will be treated as an export, allowing fishermen and companies to legally sell abroad and access export benefits. Now, the government also says that safeguards will be put in place to prevent misuse of this. Next, leather and footwear exporters. Now, the duty-free import benefit, earlier available only for full footwear exports, has now also been extended to the shoe upper exports. That's the upper layer of the shoe as well. And this lowers costs for a key segment of the supply chain. Also, exporters of leather goods, garments and footwear will now get 1 full year to ship their products, up from earlier 6-month deadline, and that gives them more breathing room as orders slow down amid delays because of the entire tariff situation. Now, on the textile front, the government has announced an integrated push. This includes new schemes covering fiber, self-reliance, cluster modernization, job creation, handlooms and handicrafts, sustainable textiles, and a lot more, including mega textile parks and a new initiative that aims to strengthen khadi, handloom, and village industries. Now, with a focus on branded training and global market access is also there. Now, why this support now? Because US tariff shock has been hitting these sectors hard. The US accounts for nearly 30% of India's apparel and textile exports, and these after a 50% tariff, have been in a difficult place, especially places like Tirupur. They have been warning of factory shutdowns as shipments to the US have fallen by over 50% in Q3. CRISIL, in fact, has also said that it expects the US tariffs to result in India's leather industry's revenue falling by about 10 to 12% in FY26. And in the seafood industry, US makes up about 35% of exports, and shipments have already fallen 25%, with new orders in the future completely drying up. In short, the government is trying to ease costs, extend timelines, and protect jobs as export-heavy sectors navigate one of their toughest global trade environments in years. Back to you.
Right, thank you, Shilpa. Now, Budget 2026 has also proposed a 20-year tax holiday to any foreign company that provides cloud services using data centers in India. Rachna Dhanrajani is here with the details. The government giving tax incentives. Rachna, over to you.
That's right. Budget 2026 puts data centers firmly in focus with clear tax incentives aimed at pulling global cloud companies into India. The finance minister has announced a tax holiday till 2047 for foreign companies offering global cloud services from data centers located in India. Any services sold to Indian businesses, however, will be routed through an Indian reseller and they will be taxed locally. But to reduce tax uncertainty, the government has fixed a 15% safe harbor margin for related party data center services. This is a move aimed at cutting long-running transfer pricing disputes for global cloud firms. But there's also a supply chain push. Non-residents warehousing electronic components in bonded warehouses will be taxed on a 2% profit margin, translating into an effective tax of about 0.7%. So who benefits globally? Well, large cloud providers running global workloads from India stand to gain definitely. This includes Amazon Web Services, Microsoft Azure, and Google Cloud. Now, global electronics manufacturers using bonded warehousing in India also benefit, as do the multinational tech firms looking for long-term tax certainty till 2047. On the Indian side, however, several companies are positioned as key partners given that they have a joint venture. First up is Adani Enterprises, who's in a joint venture with EdgeConneX under Adani Connex. There's Reliance Industries, who's building large hyperscale data centers, campuses in partnership with Brookfield and Digital Realty. Then there's Bharti Airtel. Through Nextra Data, this works with global cloud and enterprise clients. Then there's also Tata Communications that's providing data centers and cloud infrastructure to global enterprises while being located in India. And then there's ST Telemedia Global Data Centers that runs a large India presence and is backed by the parent company that also has ownership from KKR. So put together, these measures show how the budget is using tax certainty, lower logistics costs and clear rules to position India as a base for global cloud and data center operations. Back to you.
Right. Thank you, Rachna, for that. Commerce Minister Piyush Goyal is in conversation with Parikshit Luthra. Let's cut across.
Safeguarding Indian exports amid global uncertainties was a key theme of the Union Budget 2026. Joining us right now is Union Commerce Minister Piyush Goyal. Minister Goyal, thank you very much for joining us. You're just emerging from successfully concluding talks with the European Union. How does the FTA push that we see from the Commerce Ministry and now the Union Budget complement each other in supporting India's export story?
Well, I think this is a fabulous budget. It's a budget which reflects a future-ready Bharat. It takes forward Honorable Prime Minister's Reform Express full stream ahead, covers a very wide span of businesses and sections of society, women, youth, MSMEs, the manufacturing sector, equally the services sector. Technology has been given a big thrust. We see education and skilling getting a focused attention. So much so that a new National Institute of Design has also been proposed to be set up. Inland waterways being expanded, 7 high-speed rail corridors coming up, 12,20,000 crores being invested in infrastructure. And the speed at which we are developing infrastructure has become a surprise for the entire world today. If one looks carefully at this budget, it's very holistic, very forward-looking, preparing 140 crore Indians to speed up our journey towards Viksit Bharat.
Let me ask you about one major measure that has been taken by the Commerce Ministry, and that is for SEZs, one-time relief for manufacturing units in SEZs to sell a limited portion of their output in domestic markets at concessional rates. This was important because of the strain on manufacturers right now. Could you give us the contours of this scheme?
Broadly, the idea is that existing units in SEZs are today required to pay duty as if the goods are being imported into India if they supply to the domestic market. Many of them have surplus capacities, and the same goods are being imported duty-free from other geographies. The idea is that these existing units can use their surplus capacity and some proportion of their production, obviously less than what they are exporting, may be allowed to be sold in the domestic market in such manner that it doesn't hurt other domestic manufacturers. So we equalize or make a common level playing field for both by reducing the duty burden on the SEZ unit, but reduce it to such an extent that they are at the same level as other domestic manufacturers.
So what will be the duty level? What sectors
will
it
will depend on sector to sector. There would be some sectors where we may not give this benefit, things like refining crude, petrol and diesel. Probably there it may not be proper to allow this. It may be to a big disadvantage to the other refiners. So it will have to be seen sectorally, and we will have to calibrate the approach so that SEZs also benefit, SEZ units get an opportunity to serve Indian needs, and we save foreign exchange.
Right. There's been a lot of focus also on labor-intensive exports from India, textiles, leather, footwear, especially rationalizing customs duty on the import costs. Give us a sense of the targeted measures that you've taken and the kind of sectors you want to support with the budget.
Well, if you look at the budget, it is looking at labor-intensive sectors, it is looking at technology-intensive sectors, it is looking at traditional sectors, it is looking at futuristic sectors. I mean, the expanse is phenomenal. Textiles. It adds new textile parks, mega parks. At the same time, the thrust is on man-made textiles, because 2/3 of global trade today is on man-made textiles. It gives a thrust to the leather industry and sports goods and sportswear and sports shoes. Idea being that there's a large market out there which we can service very well, because we have low labor costs. Marine fishing, it opens up avenues in the EEZ so that we can expand our marine exports also. It will also help us provide nutritious foodstuff for our domestic consumption. Animal husbandry and poultry has also been given a thrust. So wherever there is farmer or animal husbandry or fishery involved, we continue to support them to increase their incomes. All labor-oriented sectors, and for that matter, infrastructure also is a highly labor-intensive sector, are being given a thrust. Look at the data centers. Duty tax-free until 2047, 22 years from now. Can you imagine the huge thrust that this will give foreign companies who wish to invest in India to set up data centers and provide cloud services internationally? And look at the benefits for India. We get the material, we get investment into India. We sell material for construction, provide jobs to people to set up these data centers in terms of the infrastructure required. It needs tons and lots of power and lots of power redundancy. So it will promote investment in energy sector. By and large, these data centers prefer renewable energy. So it will give a thrust for nuclear energy, for green hydrogen, green ammonia. It will give a thrust for solar, hydro, battery storage, pump storage. It opens up avenues in a very holistic way, all of which lead to jobs, all of it lead to investment, all of it lead to economic activity, taxes. So the budget, I find, is an economically and fundamentally very strong budget, which gives an impetus to our growth story.
Are there certain sectors which are going to get more relief in the coming days, maybe leather for that matter?
We are looking at a scheme which may help to promote the leather industry in a big way, and are trying to draw up the contours of that.
On services exports, there was a substantial amount of time spent by the finance minister on boosting the services industry, including the IT industry. How does this safeguard the interests of our services sector, services exports?
We have tried to simplify processes and improvise on the safe harbor rules on most of the services, also clubbing all the IT-related services into one. There's a committee going to be set up to look at the services sector holistically, because we find that's an area of strength of our country. It's an area where we are growing already very rapidly, and we see tremendous potential to increase our share in global trade and services to at least 10% of the global trade. And by the way, that is a big amount. Just the European Union alone, with which we've opened up 144 services subsectors through the free trade agreement, imports 2.7 or 2.8 trillion worth of services every year. Currently, we export only 46 billion. If we can target at 10% over there, we're looking at nearly a $270 to $300 billion services export to European Union. That's the potential. So I think this is a budget which meets the aspirations of New India, which meets the aspirations of Young India, which provides wings to the dreams of New India.
Speaking about the FTA with the European Union, give us a sense of how this is going to safeguard our export growth story and what kind of growth numbers do you expect once this FTA comes into effect, and possibly even a timeline if you could share with us. Your colleague, your counterpart, Maros Sefcovic, said hopefully early next year.
Probably even earlier. Subsequent to that, we've had discussions at the highest level. We are looking at speeding up the legal scrub. We are looking at using artificial intelligence to get us the first cut of the 24 languages it needs to be translated into. And then, of course, the human beings can look at it. We are looking at the European Parliament fast-tracking approval, particularly since this is one agreement where no sensitive sector has been touched. So unlike the other agreement, Mercosur agreement, which from 19 to 26 took 6 years to approve, in this sector, all the 27 member states have welcomed it and are actually requesting that this should be fast-tracked. The German Chancellor yesterday said that this agreement, the India FTA, should be fast-tracked and implemented at the earliest.
So how much do you expect it to add to our growth story?
Our guess estimate or first cut estimate, both on the European side and Indian side, reflects that we should be able to double our bilateral trade in the next 5 to 6 years after it comes into effect.
What about the situation with the United States? Are there certain differences right now in trade talks? Have some new issues come up? Any sense on the timeline?
You heard the Honorable President of the United States of America this morning about Air Force One. And I think we are making good progress and working in the spirit of friendship.
Right. Just a word on what Jamieson Greer had to say. Just last year, he had said that India has given the best possible deal ever. Now, in his latest remarks, he said that India needs to do more when it comes to reducing Russian oil purchase.
I can assure you we are in regular touch. My good friend Jamieson and I, we've known each other since Trump won. And I have absolutely no doubt that between him and me or between both our teams, the synergy is very good. The understanding is very positive. And we'll be able to finalize very quickly.
So would it be a matter of a few weeks or months?
That we will have to wait and see. You know, we never do any trade deal with deadlines.
To what extent have you tried to address global uncertainties, the trade volatility with the US in the budget to safeguard India's interests?
I think this is a budget for the next 25 years. This is a budget for the future of India. It's a budget which prepares India to take rapid strides towards Viksit Bharat 2047. So I don't think the budget is ever formulated based on just a particular situation or a particular uncertainty. Budgets are always made for a long-term vision of the country.
Right. On quality control orders, you've done a lot in terms of eliminating QCOs. The survey said that more can be done. Are we looking at a greater review of QCOs?
It'll be a calibrated approach. If we find that the QCO can be deferred or might be even eliminated and that it is, we already are producing good quality production in India and even the imports into India are of good quality. We are not getting substandard goods. We will always be open to amending or even eliminating QCOs. Right. We are a listening government. This government is open to inputs and open to ideas. At the same time, we have to make sure that vested interests may not try to once again bring in substandard quality production in India. As you're aware, the Honorable Prime Minister has focused very strongly on quality since 2014 when he introduced the concept of zero effect, zero defect, Z. He spoke about it in his Mann Ki Baat last Sunday. He spoke about it on the first day of Parliament. He spoke about it today when reflecting on the budget. So I think this is very dear to the Honorable Prime Minister. It's very important when India plans to become a developed nation to also focus on quality in a big way.
Right. What is the message that you'd like to send out to global investors with the budget, sir? FI outflows have been a concern. It's been about $23 billion. The drop in FDI has been questioned by experts as well. So what do you think is the message that India is trying to send out with this budget to both domestic investors and global investors?
Well, I think being the fastest growing large economy, with fiscal prudence at the core of our thinking. You can continue to see fiscal consolidation in this budget also. With the fact that massive investments are going into infrastructure and new opportunities are being created for investments in manufacturing and promoting services, we have set the roadmap for the next 2 decades, powering the economy on towards Viksit Bharat, a developed and prosperous India by 2047. I think those who will miss the bus today will regret it.
Any rethink on the press note 3 on China?
We have been receiving requests from many quarters that there could be a de minimis, so that the larger funds, which may have a very small element of some 1 or 2 Chinese investors having 1 or 2, 5% Chinese investment in a larger pooled capital or a fund, may be considered for exemption, because that's not really an opportunistic takeover that could be planned. It's just a financial investment which comes in through the form of funds. It is certainly something which has been brought to our notice and is under consideration.
Mr. Goyal, thank you very much for joining us to give us the sum and substance of the union budget and the message it sends out to our exporters and the global investor community. Thank you so much. Thank you. I'll just do a quick Hindi one.
All right. Thank you, Parikshit, for that conversation with the Commerce Minister. On that note, what we'll do is we'll take a short break, but don't go away. News and updates continue right here on CNBC TV18.
Finance Minister Nirmala Sitharaman has delivered the budget 2026 with an eye on resilience, with an eye on future technologies, with an eye on ease of compliance. Also, we've seen a high capex allocation for infrastructure and the defense. These are all-time high allocations that we're looking at. Joining us right now to break down the budget maths is Cyril Shroff, Chair of the FICCI Corporate Governance and Corporate Laws Committee and Managing Partner Cyril Amarchand Mangaldas. We also have Nirmal Jain, Chair of the FICCI NBFC Committee and Founder IFL Group and Managing Director IFL. We're also joined by Rashesh Shah, Past President FICCI and Chairman Edelweiss Group. Thank you very much, gentlemen, for joining us. Mr. Shroff, how do you think this budget delivers in terms of making India more attractive for a place which can attract durable FDI and foreign institutional investors?
So, whilst this is not a big bang budget in that sense, there are a lot of solid pieces in it. And when you look at it in the context of continuity of number of policies that were announced in the last 2 years and see this as a continuum, there is a lot of good stuff there. And there are a lot of hidden gems also inside the budget as well. So I think it has got a lot of solidity in it in terms of infrastructure, defense, financial services as well. There's a new committee that has been announced. So I think the overall impact in terms of driving growth, creating stability, especially in this very uncertain geopolitical environment, it has got a lot of solid pieces about it, and I am quite hopeful. One should not get influenced by some temporary reactions on a Sunday from the stock market. I think it will take a couple of days for it to settle. But I'm quite hopeful, and I think that there are significant pieces of reform that have been put in, including, say, for example, on technology, data centers. These are not insignificant at all. So I'll stop there.
Absolutely. Absolutely. Let me also get in Nirmal Jain at this point. Mr. Jain, we saw the finance minister announcing a high-level committee on the banking sector. This was to suggest recommendations for a Viksit Bharat. How do you see the developments, announcements in the union budget from the purview of the NBFC sector?
I think it's a very significant development because government is committed to make sure that our financial sector comes to the global level. I mean, it becomes the world class. And if you really look at it, Indian banks' asset quality has been best in, if you compare with any other country, even developed countries, is far better. And coming to NBFC, to your specific question, if you would have noted in last 1 year, I think finance minister as well as the RBI, they recognize that NBFCs are essentially complement the work being done by banks because India is a very vast country and there are large sections of population and geographies which are unbanked and underbanked, and they need to be done in a manner which is cost effective and also certain skill set which NBFCs develop for underwriting in niche segments. And I think the new co-lending guidelines are also an impetus to banks and NBFCs working together. So for Viksit Bharat, I don't have any doubt that banks and NBFCs are, they complement and they'll have to work together, and there's a lot of work to be done. And I think that policymakers also recognize that.
Right. Let me go across to Mr. Rashesh Shah. Mr. Shah, how do you see announcements in the union budget? Let me begin by what's happened at Gift City. The tax holiday period has been increased from 10 years to 20 years. We've also seen the investment limit for PROIs being increased. So how do the budget announcements augur well for the stock markets, for the mutual fund sector?
See, overall, I think, as you said, Gift City is a very important, institution in India because it is the hub where capital will flow into India and capital will flow out of India. We have Indian capital which also needs to be invested outside. There is a lot of outward FDI now happening. We have international capital which will keep on coming to India, and the Gift City will become a hub. So I think this growth of the Gift City as an institution which is part of Indian economy and part of Indian capital market is actually very important, and I'm very happy to see all the announcements on that. But I think overall, if you see a lot of the focus, as you know, we spoke earlier, it has a lot of small things for a wide sector of the economy, which is a good thing. There is no one big bang. It's more business as usual on the fiscal consolidation, everything else. The one thing that I'm very encouraged by is the bond market. The entire credit flow in the economy needs to be smoothened out. Because, for an economy to do well, we need equity flow and credit flow. Equity flow has been going very well. We had almost, 8 lakh crore from household savings coming into equity markets onshore in the last year. We need credit market from banks, NBFCs, AIFs, InvITs, REITs, bond market, all of that to start coming of age also, the way our equity markets are there. So I think the announcements on that, the focus on that, including state bonds and municipal bonds, all these are good ones. I'm actually pretty encouraged by that.
Right. Do you feel, even though there was a lot of expectation on STT and LTCG, that has not happened? STT has been hiked marginally. Would you call that a dampener?
Yeah, I think the market is not prepared for that. And you know how the stock market is, it always has a knee-jerk reaction. And I think every year it happens that, people build expectation. There are rumors on the WhatsApp that they're going to cut because the market has been more consolidating. It's not been a market that has been going up. So a lot of the equity market thought it is very important for the government that the equity markets go up. So there will be some immediate short-term reforms. But that is not how government, actually the entire process works. I think STT on FNO is, to me, it is a non-issue for the equity markets as a whole, because we have seen last couple of years, the rampant growth in FNO has also been a concerning area for Reserve Bank, for SEBI, for government. So we should expect that curbing FNO will be an ongoing effort, increasing cost in FNO will be an ongoing effort. I don't think the equity markets do get affected by what happens in the FNO market. The equity markets currently are waiting for growth. And I think corporate earnings growth, corporate capex, credit growth to pick up, all those are the real growth indicators that we would want to look at. And only when that starts, I hope that some growth has started in the last quarter, green shoots have happened. I think we are maybe a couple of quarters away from corporate earnings growth becoming really visible to all of us. And when that happens, I think the equity markets will start becoming optimistic again.
Okay, let me now go back to Mr. Cyril Shroff. Mr. Shroff, we have always seen that India has not been able to significantly increase manufacturing as a share of GDP. How does this budget do in terms of increasing India's manufacturing capacity, increasing our manufacturing exports to the world, investments in key areas such as electronic components, biopharma, container manufacturing, and even rare earths? So how does this do in terms of increasing manufacturing as a percentage of GDP, and also manufacturing of critical components, including rare earth, in India?
No, absolutely. And I think your question kind of answers itself in terms of the focus on all these sectors, whether it's on biopharma, biologics, rare earths. I think this continues a pre-existing theme of focusing on manufacturing, and this is what India needs for creating jobs. But the other thing which might have been missed out in terms of the narrative is services. I think this is also a very big services budget in terms of tourism, in terms of medical tourism, in terms of education, the six university centers that have been created. So you add all of that, I think it's a good balance between manufacturing and services as well. In fact, I thought the services exposure was even more so as well, which will create both jobs and prosperity. So I think it has been a very smart move in terms of balancing both. So manufacturing is a pre-existing theme, and it got stronger with a special focus, but the new addition at scale is is services.
Right. Do you feel that the kind of announcements we've seen on services, that is going to really complement the FTAs that will come into effect this year? EFTA is already in effect. We will see the UK and the European Union FTAs coming into effect later this year, early next year. So combined with the FTA push and the push for services, do you think services exports could see a good increase in calendar year 2027?
I think so, because I think we've moved away, thanks to everything that's happening outside, from a multilateral system, and it's now, I think India has also chosen to have many FTAs individually with major economies as well. So I think that is the modus operandi that India has chosen, and it's quite powerful. I think services will be a very important part of it. So for example, let's take the EU, which has been recently signed. I think the services and movement of personnel is going to be a very big part of it, and I think it's going to help both markets significantly after we go through the process. So I think that's a big one.
one theme that everybody was looking out for was resilience amid turbulent times. And that's what Nirmala Sitharaman also referred to, that we're looking at a lot of global volatility. And therefore, the concentration, the emphasis on manufacturing and also customs duty reduction, an extension of customs duty exemption on several critical areas, including capital goods in certain sectors. How do you see that push? And do you think this focus on exports and FTAs while rejigging customs duties, extending customs duty exemptions, that's going to help the export growth?
Yeah, these are very positive steps. And at this point in time, India needs to narrow the trade deficit and focus on currency. And also, capital goods and infrastructure, they always need support. They will create jobs, they will create long-term growth, they will sustain long-term growth. And I think there's a very welcome focus on semiconductors, for which 40,000 crore rupees have been allocated, the 20,000 crores for carbon-free and tourism. So these are very positive steps from the economy's point of view. I think, and as you said, customs duty exemption time extension, this is also very positive, very welcome, and was expected by the industry. So from the manufacturing point of view, although see today manufacturing contributes relatively small part of the economy. So I think 2/3 of the economy is now services, and manufacturing is just about 1/6. But it's still important to create jobs, that is one. And more importantly, we really can't compete in manufacturing of the traditional goods like, say, durables or, the household things. But the manufacturing focus now has to shift to semiconductors and also services as important, including tourism, data center. So all these policy initiatives are, I think, they are steps in the right direction, and they will help the economic growth to sustain. As you know that we are the fastest growing economy among the large economies in the world. And I think in that sweet spot, we need these kind of impetus to sustain the growth and also the jobs.
Right. Mr. Rashesh Shah, we've seen how the market's sentiment over the last few months, as a result of not having certainty or clarity over the US trade deal, that has been a little low. The sentiment has been a little low. Do you think this budget addresses certain fundamentals of the economy very well, which will perhaps maybe nullify or address the sentiment, maybe not today, but over the next few months?
I would think so. In India, there are 1,000 things to do because we are a very broad, very complex, very heterogeneous economy. So we need to do things on manufacturing, on services, on agriculture. We need to do things for MSME, for exporters, in the new age economy, data center, AI investment. So India, there are so many needs and so much to be done, like in the bond market, municipal bond, state bond. So I think the FM has picked as wide a range of things that she can do that is possible, and actually done incremental improvement, ensured that the right focus is given to the right for MSMEs, for exporters, for everybody. So in a way, it's a very broad swath of things that she has attempted to do and announce in this, which is in a way a good thing. It's very balanced in that sense. There is no hyper focus on only one particular part of the economy because we can't afford that. We are not a small Asian country which can do only exports and do well, and you can only focus on export sector and do well. We have to do hundreds of things for the economy to really go along in a balanced manner. And I think that is what she has achieved. I do think that honestly, having seen how the actual policy making works, I don't think the immediate need for them is to have a stock market on steroids or to say, what can we do in the budget to make the stock market feel good? I think the stock market is an animal by itself. There are knee-jerk reaction. It's also Sunday where a lot of the institutional investors are not very active. So the real impact on how the stock market assesses the impact of this on the economy as a whole, on the growth as a whole, on not just on the stock market itself, will take at least another couple of weeks. And that is how it has been. So we'll all read, we'll study, we'll speak to our clients and see how it impacts them. But I do think on the whole, from what we see now, she has tried a wide swath of things to do to make sure there was enough focus on everything.
Right. Let me go across to Mr. Nirmal Jain. Mr. Jain, in terms of ease of banking, ease of doing business, we've seen how many of the prosecutions and penalties related to taxation, they've either been combined together or they have been reduced or scrapped. How do you see these moves from a point of view of investor confidence?
No, they are very positive steps, and I think the intent and efforts have been in the right direction over the last few years. But what this government has inherited and the legacy of the tax structure that has evolved over the last 7-8 decades is fairly complex and a long way to go still. And I'm sure Mr. Sroff probably is a practitioner and can comment more on this. But there are many steps taken, and there's an intent which is absolutely in the right direction, that we need to remove prosecution, we need to do a lot of things to make sure that there's ease of doing business. And in fact, the business has become a lot easier in the last 10-12 years. There's no doubt about it. But if you compare with global peers, we compare with the best in the world, then there's still a long way to go.
Right. Mr. Shah, one point that we missed was about the defense sector. Highest ever allocation, 21% increase in overall capex, 24% allocated for defense modernization. I saw almost a 30% increase in allocation for defense aero engines and aircraft engines as well. So possibly we're going to look at some big orders in this calendar year and next financial year as well. But how do you see this major push for the defense sector, and how will this translate into the performance of defense stocks, PSUs, some of our major defense listed companies in the private sector over the next few years?
Yeah.
The reasons.
Good.
Oh, I don't. Sorry. The reasons for this allocation, I think, is obvious. We had Operation Sindoor last year, and I think we are living in a very uncertain world. So I think the short answer to your question on how do you see the impact of this on defense stocks and just the defense industry, I think the answer is very positive. It was a need of the hour. Just the entire security environment around the world is becoming fairly uncertain, and we have no choice but to be Atmanirbhar. But Rasesh Bhai, over to you.
No, I was just going to add that absolutely it was expected, because the way all the things in the world are, the way the geopolitics is after Operation Sindoor, so this was expected. I don't think the Indian defense industry currently is starved for business. I think there is a lot of business, more business will come. In fact, I believe that India will become an exporter of arms and armament in the next 5 to 10 years. I think it is moving at a fairly rapid pace, and every government in the world is actually arming itself up, and there'll be all kinds of equipment that India can make where we can cater to the world at large. So I do think defense is a big theme for a lot of investors. That will continue to be. The budget has only highlighted that, has only underscored that. But I think whether it's defense or whether it's MSME or services, I think the one big focus required, as Nirmal was saying, was ease of doing business. But it's not just the central government or the finance minister can do that. Ease of doing business is all the ministries in the government. Ease of doing business is also at the state government level, at the municipal level. And that is one thing. I mean, reducing bureaucracy, reducing regulation, that will be a big impact. The government has set up a commission to deregulate. I think if that can move fast enough, that will have a very, very deep impact, even beyond anything else, on the economic growth.
All right, we've run out of time, but thank you very much, Mr. Rasesh Shah, Mr. Nirmal Jain, and Cyril Shroff for joining us with your outlook on Budget 2026 and how this will impact the financial sector, the stock markets, infrastructure, and investor mood towards India.
Well, you've heard many big voices, but I think the biggest among them all is the country's biggest banker. Joining me now is Mr. C.S. Sethi, Chairman, State Bank of India. Mr. Sethi, thank you very much. You've had some time to ruminate over the budget. It has been put forth as a services budget and as one to encourage manufacturing. Are you more confident about your credit growth after looking at it, more confident of the rate of growth of GDP after listening to the budget?
Absolutely, Lata. First of all, thank you very much for having me on your show. I think this budget, I've been, off and on listening to the conversations on your channel. I think most of you have brought out the essence of this budget, and it was very clearly presented by several people that is services and manufacturing, which are focus areas, and rightly so. And services, both in terms of contributing to the domestic economy as well as contributing to the exports, have been playing a very significant role. And manufacturing, both from the Atmanirbhar point of view as well as job creation point of view. I think this manufacturing also has been very critical. So these two are critically focused in the budget. And what we have seen is that overall, as we have given the guidance earlier also, there have been an uptick on the corporate credit. And I assume that the announcements, the next fiscal also will contribute to significant addition in the credit growth, both in terms of the large corporate, because most of the sunrise sectors which have been focused attract capital from the large corporates. And the projects will be mostly taken up by them. And MSME, growth fund and micro fund, which have been announced, would spur the growth of MSME credit too.
Okay. No, there's no taking away from the fact that the government has touched all the right sectors which need a push, even the advanced cutting edge ones and the bottom of the pyramid where vulnerability is high. There's no taking away from that. So, but there is, there are those small fears, or some of them even large. For instance, cost of credit, 17.2 trillion gross borrowing, the market was not prepared for that. My poll threw up 16.2 trillion as a likely expectation. Some went up to 16.5, but 17.2 is an outlier number. That will push the cost of credit for everyone. Is that a worry?
So my information from my team says that we need to wait for the buyback, which is outside the budget announcement. If you see last year also, we almost had 80,000 crores buyback, which is outside the budget announcement. So I think the number need to be adjusted for potential buybacks, and that could be a modest number. And the another thing, what we have also seen that most of the numbers, both on the revenue side and as also the borrowing side, seem to be conservative. That means on the revenue side, the estimates seem to be conservative. On the borrowing side, on the higher side, the conservatism is shown. So the uptick is also coming from the T-bill. And we have seen many a time T-bill announcements are made, but T-bill was not actually utilized. So it is too early. I think let us digest these numbers and also hear from the policymakers tomorrow. I think most of them will come back onto the public forum, and we will hear more details on them. I'm not rushing towards any conclusion in terms of either yields moving up or in terms of the crowding out impact of the public debt.
No, you're absolutely right, sir. It's quite possible on February 6th, the RBI comes and says that they're going to be more generous with OMOs, or, they could even announce, as you say, about switches and buybacks. That is there. But as of now, the few bond market participants who came on the channel are expecting yields to go up by about 5 basis points tomorrow, from 6.7 to 6.7.
Yes, in the near term, till we get the clarity, probably there would be some moment on the yield side. Yes.
Would you worry, therefore, that Q4 results can be kind of burnt by, frayed by, mark-to-market losses?
I don't think so. I don't think so, unless there is a very high unusual moment in the bond yields.
Okay.
If it is only 4 to 5 basis points, what you are mentioning, or the bond experts are mentioning, there need not be any real worry on the MTM losses.
Okay. I want to ask you about the mother of all questions, the banking committee. But before that, a word on the rupee. Because of the incessant fall, there were expectations that the FPIs would be given some let-off on taxes. There were various things expected. What has come are for data centers. That doesn't come today. That's a longer-term thing. So would you worry about the currency?
So the near term, there could be some additional pressure on rupee, but we believe that as you mentioned again, a lot of measures, starting with your permanent residents outside India.
Yes.
To the various fiscal incentives which are given for the infrastructure investments by data centers and all, would attract, I think, the flows. They are medium to long term. That also, the outlook for the rupee shifts from completely negative to neutral to positive, in my view.
Fair point. Sir, now that big question. The banking committee, it's called a high-level committee. So what are you expecting? That the PSU banking law, what is it called? Nationalization and Takeover of Banking Companies Act, under which banks were nationalized, that itself will be recast? Are you, is it a big, brave thing that you can expect from this recast in terms of ownership, control, etc.?
So currently we have no clue what exactly this high-level committee is going to look at. But if I read from the FM's announcement, it was mainly in terms of preparing the banking sector, predominantly the public banking sector, of course, is for next. Today, if you see the robustness of public sector banks, both in terms of the profitability or in terms of the asset quality, calls for, how do we prepare the next stage of the public sector banks, without losing the focus on the customer protection, financial inclusion, and stability. And I think somewhere she also mentioned in terms of technology development in the public sector banks. My view is that it would be more in terms of the structural reforms encompassing some of these areas. I don't know whether this committee also will look into mergers or the potential consolidation in the public sector banks. I think we need to wait for the terms of reference, Lata. I think it's too early to rush into,
No, I agree with you. We don't have the terms of reference. We don't have the members of the committee. But I'm sure whoever are the members, you will be one of the persons called in terms of consultation and Q&A by that group. We will touch base with you on that issue sometime later. Thank you very much, Mr. Sethi, for sparing time for us today.
Thank you, Lata. Thank you.
Okay, now with that, let's go across to Shireen Bhan, who has one of the biggest and most important ministers, Ashwini Vaishnav, with her.
The prioritization of AI, of IT services, of global capability centers. I mean, never before have we heard of a 22-year tax holiday. In fact, most people believe it's too good to be true. Mr. Vaishnav, can you outline for us what we should now realistically expect on that front? What will the next steps be, sir?
In the last decade, electronics manufacturing, IT services, AI today, it has become a major employment generator. If you look at it, electronics manufacturing is today employing about 25 lakh people, GCCs are employing about 15 lakh people, and the IT services are employing more than 55 lakh people. Together, the IT and electronics sector is employing more than 1 crore people, if you look at the other sectors which are connected to it. With this kind of growth and with this kind of employment potential, the budget today has brought a major boost to this sector through 4 major announcements. First announcement is electronics component manufacturing program will now be expanded to 40,000 crore rupees. Second, the Semicon 2.0 will be set up very soon after the great success of the first version of Semicon mission. And third, the IT services will get a safe harbor. They'll get a defined margin of 15.5%. There will be accelerated APAs and a very clear roadmap on the tax front. And the biggest announcement is regarding the data centers, a 22-year tax holiday till 2047. This means the 70 billion or 90 billion dollar investment which we have seen already in the country till now will probably go to $200 billion investment in the coming days and months. So this will create huge amount of employment for youth, and this will make India one of the largest AI services hub for the entire world. This will also bring huge productivity gains for every sector in our economy, whether it is agriculture, healthcare, education, manufacturing, transportation, everywhere technology and especially AI-enabled solutions will be used to bring about productivity gains.
Right, Mr. Vaishnav, you comprehensively articulated for us the 4 measures that have been taken for IT services and for the electronic manufacturing sector. Let me pick up on that 22-year window that you spoke about that's been given to investors who want to set up data centers in India. Now, how should we understand this to be operationalized? Are there any caveats or conditionalities that will be linked to being able to avail of that 22-year tax-free period, sir?
Already we are seeing huge investment and very significant interest from every global major as well as Indian corporates. If you look at all the IT services providers, whether the big 4, Infy, TCS, Wipro, Tech Mahindra, whether it's them or whether it's the infra service providers, all of them are making plans for investments on a very large scale in the data center economy. And the way the talent pool in India is available, we are the 2nd largest AI talent pool in the world as far as the Stanford study and Stanford index goes. So this kind of talent pool can provide AI services to the entire world. So that's why this huge interest in setting up data centers. I would also like to point out the multiplier impact of these data centers. Already with the announcement of about $90 billion investments in data centers, we are seeing huge interest in manufacturing data center servers and the ATMP services for the chips and customizing silicon for utilizing in our data centers. That also is coming as a real possibility now with the Semicon 2.0. That will also become a major part of our growth. So you can very clearly see the country, our country, India, emerging as a major electronics, IT, AI services, data center and semiconductor hub in the coming times.
So, you talked about Semicon 2.0, as did the finance minister in her speech. There isn't an allocation that has been provided for it yet. If you can lay out for us how much we should realistically expect over Semicon 1, what the needs will be, what the needs are likely to be, sir.
See, the semiconductor industry will be developed over a period of 20 years. It's a long-term growth plan that we have with us. And the first version made sure that we get some key marquee investors and we start developing the ecosystem. The second version of Semicon will be putting a huge focus on capital equipment which go into manufacturing semiconductors. And these are very, very complex equipment. I recently visited the ASML plant in Netherlands and requested them to look at India as a hub for the manufacturing. They haven't gone anywhere outside the Netherlands and they showed huge interest. They are sending a large delegation to India very shortly. Applied Materials, Lam Research, Tokyo Electron, Nikon, they are all looking at setting up their bases in India because of the large talent pool available and the clear policy framework of our government. So all these things combined will lead us to become a major semiconductor nation. In the Semicon 2.0, we'll also have a major focus on developing a design ecosystem which will set up the potential for large fabless companies coming out of India, large design companies coming out of India. We will be focusing on 6 major systems: the compute system, the RF system, the power management system, the network system, and the way the entire system on chip can be put in a complete package. So that kind of philosophy will help us create the building blocks by which any system, any electronics board, any electronics module, whether it goes into a missile or it goes into a ship or it goes into a train or in a refrigerator, all that can be manufactured in India. That's a very comprehensive thought process that we have.
Okay. You talked about that allocation of 40,000 crores for the electronic component scheme, sir, and I wanted to understand what that money is likely to now be used for. We already have the scheme in place. How do you intend to now deploy this capital for larger returns?
The response to the electronics component manufacturing scheme is huge. We were anticipating just about 50 or 55 applications to come. We have 149 applications, and we are seeing many of the components. India will not only meet its entire demand, it will also become a major global producer for these components. For example, PCB assembly, for example, capacitors, for example, the connectors, for example, photoelectronics. For many of the components, India will become a global supplier, and a large investment is coming in the components which go into mobile manufacturing, laptop manufacturing, server manufacturing, for example, battery packs. Battery packs, with the manufacturing that we already have received the applications, we'll be doing about 60% of our demand will be met out of India only. So with this kind of response and this huge response, humongous response we have received, it's time to match the funds with the response that we have. That's why the allocation has been increased from 22,000 crore rupees to 40,000 crore rupees, so that the 25 lakh employment that we have in electronics manufacturing can substantially grow in the coming days.
Okay, let me now move to railways, Mr. Vaishnav, because that was another area the finance minister prioritized. 7 high-speed railway routes identified and presented to the public today by Finance Minister Nirmala Sitharaman. Again, I want to understand from you if you can give us a roadmap of what the next steps will be to operationalize this announcement, sir.
Absolutely. The success of Mumbai-Ahmedabad high-speed corridor is evident. The progress is very good. Next year we'll start the commercial operation. With this progress, the Chennai-Bangalore, Bangalore-Hyderabad and Chennai-Hyderabad, this southern triangle will create a huge economic impetus in the South Indian states of Karnataka, Telangana, Andhra, Tamil Nadu, Puducherry and Kerala. So this will be a major boost. Chennai-Bangalore will become 1 hour and 13 minutes only. Bangalore-Hyderabad will become 2 hours only. Chennai-Hyderabad will become a journey of just 2 hours and 55 minutes. So this will be substantial change in the transportation, in people's lives and in the economic activity in the South Indian states. Then comes the Mumbai-Pune corridor. That will merge the two cities practically. It will be a 48 minutes journey between Mumbai and Pune. And from Pune to Hyderabad, it will be a journey of mere 1 hour and 55 minutes. So that means Mumbai, Pune, Hyderabad will become another hugely successful economic corridor. And in North India, Delhi, Varanasi will be just 3 hours and 50 minutes. So that means entire Uttar Pradesh, Delhi, cities like Lucknow, Agra, they'll all basically become one major economy in the coming years, and people will be able to seamlessly travel. Then Varanasi, Patna, Siliguri, that will be just 2 hours and 55 minutes. So that means the entire northern corridor from Delhi to Varanasi to Siliguri via Patna, Lucknow and many major cities, this will give a huge economic, tourism, education, healthcare boost to the entire citizens living in these areas. And overall these 7 corridors will basically attract about 16 lakh crore rupees of investment in 4,000 kilometers of high-speed corridors. So this is going to be a major game changer for our economy. Our Prime Minister has
But when will it become a game changer, sir? When will we start to see the execution? Sir, when will we start to see the execution on this front, sir?
We are already seeing the execution today itself. When we see the progress of the Mumbai-Ahmedabad, the trains are getting designed, the signaling system is getting rolled out, the entire construction is moving at a fast pace. So DPRs of all these projects will immediately start, and we'll see the progress at the same pace, at a very rapid pace that we have seen in the Mumbai-Ahmedabad corridor. Today our industry is also getting ready for this kind of large-scale projects, and the quality systems, the new construction methodologies, all these are getting set in our country with the progress of the first corridor.
Sir, one quick question on the railway capex, higher 10% in this budget over the previous one. If you can also lay out for us what the operating ratios look like as far as the railways are concerned, and what the expectation is on that front.
So the railway budget is one of the actually the record number now, 2,78,000 crore rupees, and there will be a substantial amount going on to safety, where we have so far with all the efforts that have been put in, we have been able to increase safety by 95%, and this will significantly improve the safety, comfort. New generation of trains will come with about 135,000 kilometers tracks constructed in the last decade. That will substantially increase with this capex budget, and a new dedicated freight corridor will be started between Bengal and Gujarat. Dankuni and Bengal will be the point where the corridor starts. Dankuni, so Bengal, Odisha, Chhattisgarh, Madhya Pradesh, Maharashtra, and Gujarat. That will be the path of this 2,052 kilometer long new freight corridor, dedicated freight corridor. Both the eastern and the western freight corridors are already saturated. They are running at full capacity now. 400 trains per day they are taking, and India has become already the second largest freight carrying railway in the entire world, surpassing US at 1.6 billion tons per annum. So all these factors, and we are now bringing the railways back to profitability. So last 4 years we have had consistent, very small but consistent profit, and that kind of thing should continue going forward with a healthy operating ratio and healthy capex and huge focus on safety and maintenance. Very, very significant focus on safety and maintenance. That will bring about a major change in the lives of the people who use railways, especially the middle classes and the low income families.
Mr. Vaishnav, let me end by asking you. I would have continued, sir, but I know that we're short on time today and you have a lot more to do. But let me end by asking you about the data center issue. One of the concerns that's being raised is that since this involves foreign companies getting, companies getting tax breaks to be able to service foreign companies, data localization norms across different jurisdictions differ and vary, and in some cases are quite stringent. Do you see that as being a deterrent?
Absolutely not. Our DPDP Act is appreciated throughout the world. In fact, so many people in Davos have already said it so many times that this should
not
be.
Ours, sir.
This should be. No, I'm saying.
No, I'm not talking about our localization norms.
Because of this. No, Shireen, your question is about the trust in our data policy, right?
No, I'm saying the data policies of other nations, will that perhaps come in the way of foreign companies wanting to set up data centers to do business for foreign companies out of India?
Precisely. That is why I was answering that our DPDP has set up a very, very strong and robust framework which is appreciated all over the world today. With that kind of legal framework in our country, every other country is very comfortable working in India. They trust our architecture, they trust our legal system, and that is why this huge interest which is already visible, as I said, $70 billion investment already committed and started going into the construction phase. 90 billion is the total number which is already visible, and that number might go significantly more after today's announcement. Because one, India is trusted, two, its legal regime is very well understood, highly appreciated, and three, because the talent pipeline is here.
Mr. Vaishnav, we would love to speak more with you, sir, and I hope that you will give us time, post the budget frenzy, because there's plenty more to talk about as we talk about the nuts and bolts of each of these very significant decisions that the Finance Minister has made in the budget. But truly appreciate you joining us here today for a very comprehensive look ahead, look forward into what these policies will mean on the ground. Appreciate your time. Finance Minister Nirmala Sitharaman delivering her 9th consecutive budget, creating a record. And of course, as we've been highlighting here on CNBC TV18, many measures that will deliver for the economy and for India at large in the medium to long term. In the short term, the markets have not liked the fact that the government has hiked the STT on futures and options. Remember, there is no change as far as commodities are concerned. To help us understand the revenue direction, the rationale and the reasoning behind many of the decisions taken and what we can expect now as far as the road ahead is concerned, the Revenue Secretary, Mr. Srivastava, as well as Arunesh Chawla, the DPAM Secretary. Gentlemen, appreciate you joining us here on the program. Revenue Secretary, let me start by asking you, that's the number one question. As far as the stock market is concerned, why the decision to hike the STT on futures and options? In fact, the recommendation or the ask was that there should be a reversal on the long-term capital gains tax because the Indian stock market has underperformed in the last 12 months. Why did you feel the need to hike STT on F&O at this point in time?
See, this, first of all, as you rightly pointed out, that STT has been hiked only on futures and options. Quite naturally, it needs to be distinguished from the STT on the others, and that have not been touched at all. The understanding is that both, if you look at the volume of the F&O, if you compare it to the underlying securities market volume itself, or the size of the GDP for that matter, it is too large for it to be considered desirable. It looks to be fairly speculative, which is not a good way to take it forward. So in some way, this increase is essentially meant to address that kind of, possible risks that may be involved in this highly speculative side of the market. And thus the raise of tax, even today, even after this increase in terms of its share of the total volume, it is very low. So the idea was to touch a specific segment. The idea is because there is a fair amount of speculation there, and that may require some kind of course correction. Quite naturally, tax policy by itself will not achieve that goal. It needs to be also looked at by the market regulator in its own way.
Which means that you believe that more measures are required to further put curbs as far as F&O is concerned? Because many measures were already taken.
Yes, so I'm not saying anything is required further. It's beyond my domain. I'm only saying it supplements what otherwise the market regulator is doing. So what we have done is what I am telling you about. I have nothing to do with what market regulator has done.
So you're saying it was not a revenue mobilization attempt, it was really an attempt to try and curb speculative activity. But what kind of revenues do you believe that this is going to net for you?
If you look at it obviously is a trade-off. At the end of the day, the raise in this rate would result in some impact on the volume itself. With no impact in the volume, if the volume remains the same, put together it may fetch us around 15,000 crores or so. But quite naturally that dynamics will play out because the rates...
Depending on the volumes.
Volumes also.
But otherwise you're estimating about 15,000 crores by way of the hike in STT on F&O. Let me ask you an overarching picture as far as revenue is concerned. There has been a concern as far as your tax numbers are concerned for this year. You're going with a 1.14 buoyancy for the next year, if my memory holds me right. There's been a lot of numbers to deal with. How confident do you feel about the tax numbers?
We are very confident and that we'll be able to achieve that. The buoyancy in taxes, in fact, post-reforms, the improvement in buoyancy is very apparent. You can see the GST numbers flowing in too. So we are quite confident that it will do well in the next year.
On GST, today we saw the number coming out just short of 2 lakh crores at 1.96 lakh crore rupees. What is the run rate that you believe, the monthly run rate that you believe we should be now focusing on, that we should be aspiring for, given the fact that the rate cuts are behind us?
You mean to say, in the sense, run rate?
The GST collections.
No, run rate would mean the growth month on month?
The growth, yes.
See, the growth, as currently it is touching 6.5% or so. We expect it to rise more. As I said, there is a lot of this GST rate, the whole structure rationalization will also be changing a lot of things, the consumption patterns, the way things are produced and sold. So we do see this buoyancy to be improving as you go further up in the future.
Okay, I'll come back to you in just a second. Let me get the DPAM secretary in. After a long time, Mr. Chawla, we've seen a biggish number there. The market was hoping for an even bigger number, but 80,000 crores is the number as far as disinvestment is concerned. Now, what will this include? What will this entail? What about IDBI Bank? Has that been accounted for, not been accounted for?
Okay. The number is big, and this is a composite asset monetization target. This is miscellaneous capital receipts. It includes disinvestment receipts through various modes. It includes asset monetization of other types. It includes the new securitized innovative instruments. You heard, as you know, for example, the public InvIT was approved in December, and we are hoping to launch the first public InvIT, before the end of the current financial year. It includes also certain other asset monetizations that are contemplated, including the land monetization. And you also know the Honorable FM announced the REITs facility for the public sector banks, for the public sector enterprises. And for us, all these are very happy developments, because if you look at the InvITs, they have not only matured as a source of revenue and capital resource, but launch of public InvIT takes it to a new dimension.
Okay.
It is the capital market equivalent of the risk capital. The present value of the user fee being monetized and deployed for creation of capital assets. So these are all happy developments. As you know, we do not have split targets for these because we do not want to make the markets nervous or speculate, nor do we want to create a price overhang.
Right.
The idea is that this is the overall number, and through a number of these innovative capital instruments and the traditional ones, including disinvestment receipts that we have evolved over time, we will achieve this.
But, IDBI Bank, if you can give us an update, is it likely to close in this financial year, or is that now looking increasingly difficult?
The strategic disinvestment of IDBI Bank has reached stage 3, which essentially means that technical and financial bids have been invited. I will not be able to give transaction-specific details, but I would only say that be patient. Before the end of the current financial year, in March, you will hear more from us.
We will hear more from you. There was a lot of expectation, again, Mr. Srivastava, on the back of what we heard in the economic survey, that perhaps the government would take a bolder bet on disinvestment. The economic survey went as far as to say that you could even amend the Companies Act definition of a company and bring down shareholding down to even 26% while retaining government control. Is that something that you believe that, you intend to or would like to take forward in any form or fashion? Let me get both of you to comment on that. And Mr. Chawla, I'll start with you. Okay.
Let me expand on that a bit. You see, one part of it got reported. But if you read the economic survey carefully, it mentions alternatives.
Yes.
Economic survey is an ideation document. It says one alternative is that you change the definition of a government company and bring down the 51 limit to 26. The other alternative is that you move strategically below 51 with a clear direction or a clear aim in mind. And those possibilities are very exciting. They could be strategic partnership model frameworks. They could be joint venture frameworks. They could be frameworks where the resulting entity is not a government company, but it is still a public or a government-controlled company indirectly. All these possibilities are on the table. What Economic Survey was trying to do was alluding to all these alternatives. These will be deliberated in the policy domain. And consistent with the new Atmanirbhar Bharat policy for the CPSEs, which was announced in 21-22. We will see how to weave it in, what is the best step forward, and under what conditions, under what situations.
Okay, so that's still open-ended and a work in progress, and no decision either way has been taken. Mr. Srivastava, let me ask you this. Under the dividends receipts, you've got 3.91 trillion penciled in. How much is the RBI dividend on account of this?
That's for DA to tell.
Okay. We'll put that question to the DA secretary as well. But the trade-offs that you were making while putting this budget together, it is a fairly fragmented geopolitical climate as well at this point in time. The measures, for instance, of giving tax exemptions. Nobody's heard of a 22-year tax exemption in this country so far, but for data centers and so on and so forth. What were some of the considerations that you were weighing as trade-offs as you put your budget together?
Sure, let me explain that point. What is that business model like? That's a business model under which a global cloud service provider, which is a resident somewhere else, utilizes the services of data services center across the globe to deliver final services to the consumers. So it's a model which is very cross-national. It is not in any one place. That entity will be a resident of some country. But while delivering the service, it will be making use of services of data centers in many places. Now, if such a global entity wants to make use of data services of India, suppose it expands itself and sets up data service centers in India, then the risk they have is that their global income will start getting taxed in India. So this exemption is not for any economic activity which is happening here. This is to attract a leg of that economic activity into India. So the global entity continues to remain taxed where it is getting taxed. It puts its footprint in India in the form of a data service center. That data service center will get taxed as a normal entity. In case the data service center is a related party, we are giving a safe harbor of 15%. So 15% of the turnover will be the margin on which it will pay the tax. The second rule is the global entity, while delivering service to India, must deliver it through a reseller entity. So the revenues it is earning from the consumers in India will be at that stage taxed at the hand of the reseller entity.
Which will be an Indian entity.
Which will be an Indian entity. Both the data service center provider and the reseller entity are Indian resident entities. And both of them are going to get taxed. These two are getting connected through a global cloud-based service provider, which is making use of this data service center like many others and providing the service. That is the entity who is being exempt, because that entity, because the work or the business that it is doing in India is getting taxed at these two ends. The end of using the data service, so whatever is the income of data service center, it gets taxed. Whatever is the earning from selling the services to consumers, that gets taxed. All that we are exempting is the global entity which is delivering this service and its global income, which might get taxed in entirety or as a proportion, just because of the reason that it is using the data service centers in India. So let us take a case of something which is on the cloud and say a Netflix kind of a model, where there could be maybe 20, 25 data centers all across the world, which are ultimately, when I as a user sitting in India am accessing that service, it may be coming out from various places in the world. So linking that one-on-one is not going to be possible. So what we have done is data service centers in India will get taxed. The consumers who are buying the service, that revenue will get taxed. The entity which is connecting it all is getting taxed in any case in the jurisdiction where it is a resident. And that is the one which is exempt.
That is the one that is exempt. Now, can it or should it apply to people who have already committed? For instance, Google is committed $15 billion to be set up in the state of Andhra Pradesh. Can they benefit from this, or whatever has been done is off the table?
We have said that the data service centers will have to be as per a notified once by METI. So METI will have to indicate to us which are those data service centers which satisfy these requirements. And it is important to say that the services are ultimately on the cloud. The data service center services which are being used here have to be of a certain physical infrastructure services, and the rest of the services are in a cloud. So the model of that, as well as which entity, and the fact that there should be a reseller entity in India to sell, All these things will have to be looked into, and MeitY will have to help us to notify those such data service.
So this is one of the many measures that I would imagine the budget is put together with the hope of attracting long-term foreign capital and also stimulating long-term domestic capital. Now, with the currency depreciation, I would imagine that there were many conversations that happened within the finance ministry on whether any quick fixes could be put in place to try and draw in more foreign capital. How much of a concern is the currency depreciation for you? How much of a concern is the outflow of FPI money from India for you today?
So probably that answer could be better replied by Secretary DA.
Let me get your point of view as well.
Yes, so on the tax side, what we have done here is, on the side of, let's say, we look at the residents who are doing a transactional business with a related party elsewhere. So the entire IT services, which constitutes close to 1/4 of the total number of such entities, almost 11,000-12,000 entities, we have given them a safe harbor framework. The investment from outside, which is expected to come in areas like data centers, electronics manufacturing, even expertise which may come from outside, we are giving them a tax certain framework. So in many ways, as far as the tax is concerned, we are trying to make it an enabler and not be a discouragement for somebody who wants to come in, without harming our tax base, but giving them a certainty and a rational kind of taxation which enables them or encourages them to do the business here, which in my view will obviously help to attract, for example, electronic manufacturing. Now we have created an arrangement under which a safe harbor, which will be just about 0.7%. It is, I think the rate of tax would be around 1% in Vietnam. So the safe harbor will help them to do just-in-time manufacturing of electronics, which is definitely going to attract more of such businesses in India. So tax is essentially being used as a tool to ensure that it becomes an enabler rather than a discouragement.
But how concerned are you about flows, inflows as well as outflows today, foreign inflows and foreign outflows?
This answer
I'll leave to the Economic Affairs Secretary, but Mr. Chawla, let me ask you about one of the announcements that came in from the Finance Minister, the restructuring of PFC and REC. Now, what does restructuring mean exactly? Is it pivoting its business model, or is it pivoting the way that these companies operate? It could be bringing these companies together. Is it privatizing these companies? I mean, what are we talking about?
You will have to wait for it to evolve. Budget speech is an announcement of intent. The purpose, the concept behind the intent is that we need a central agency for financing of the power utilities, the power distribution companies, the generation companies at both center and state level. The central utility, the central financing facility is an NBFC regulated by the RBI. It acts as a lead financer. And when it moves forward for a particular project, the rest of the banking sector, the financial institutions are crowded in. The idea is to achieve economies of scale at the central level so that you have a more integrated, unified agency doing this job in a more productive, efficient and scaled manner. To be able to crowd in. The exact precise model will evolve with time.
So if I were to read between the lines of what you're saying, you're saying that you need scale. So would it be fair to assume that you're actually looking at a combination, a merger perhaps?
See, this is a decision which will be taken by the respective boards and the respective ministry. They are considering all options, but the statement of intent is clear.
Restructuring is the statement of intent. What direction or shape or form that will take, we're not sure at this point in time.
It is for the respective entities, their governance, their boards and the ministry to decide.
Fair enough. We'll leave it at that. But OFS's IPOs, what should we now expect realistically from you, Mr. Chawla?
This year or next year? Or both?
Both.
I would say we always keep 3 to 4 transactions live at any given point of time. And seeing the market conditions, we move forward one step at a time. You will see 3-4 more transactions, good transactions happening within the current financial year.
Okay.
And maybe double that amount in the next year.
Okay. The risks that you see as far as your revenue projections are concerned, Mr. Srivastava, before I let you go.
The risks that I see, the risks quite naturally, revenue will be eventually a result of the way economy does. So I wouldn't say it as a risk, but that is one parameter on which it will depend.
Around 7% means what? 6.8, closer to 7, 6.8. Is that the number that you're working with as well for growth?
For the GDP growth?
Yes.
Yeah, the GDP growth nominally has been taken at 10%.
Yeah.
So we go with that.
Okay, go with that. Well, thank you very much, Mr. Srivastava and Mr. Chawla, for joining us here on CNBC TV18. Appreciate your time. We will, of course, pore over the fine print and come back to you with more questions on the CNBC TV18 budget verdict. But for this evening, we wish you both the very best of luck and thank you very much for joining us.